Good morning.
Good
Welcome
morning,
back.
sir. How are you?
It's Thursday. I'm doing well. Halfway through the month of May.
How about it?
I'm excited.
Are you? What do you got? What makes you so excited halfway through May?
It is going to be 86 degrees out today. I've got on my summer colors, my summer polo.
Are you swinging the racket?
Ooh, yeah. Actually, haven't done that yet. Need to get my tennis rackets strung.
Strong. You restring every year.
No, I haven't restrung in maybe 3 years. So, it's kind of emasculating. It's a sensitive topic because I really should be breaking my strings with the power that I use.
The great gift is every afternoon you play and beat Frank, he comes in angry, and that's just a joy for me. So.
Yeah, but what is it for me? It's like walking on eggshells. But yeah, need to get back to playing tennis. Are you pickleballing or anything?
No, not a big one. So now, does the missus play tennis?
She wants me to teach her how to be better at tennis. So
very good.
It's fun to get out there.
That's a team building exercise.
Fantastic.
What do you guys have planned for the weekend then?
Oh gosh, we might see that movie Sinners tomorrow. New horror film.
Okay.
From Ryan, whatever his name is, Coogler.
Okay.
Director. And then she wants to go to a concert at North Shore Beach. I'm not sure. I don't know. Sounds fun.
It's gonna be a nice weekend. Perfect.
I think so.
Music sounds good.
Yeah. What
Look
about
at
you?
you.
What are you doing? Something crazy?
I don't know actually.
How's your fountain? You got your fountain up?
Fountain's all squared away.
Oh, nice.
Yeah, it looks great. Actually, the guys came back and actually put a stone under it so it stays nice and level. So all's good in my world, my simple world of projects.
Barbecue
exciting.
up and functioning as well?
All good. Yeah.
Used it for Mother's Day?
What's that? Yeah, we did.
All
so
right.
it was nice. Yeah, it was nice. Kids came out and cooked and everything, so it was really good. So, yeah, I don't think we have a lot planned for this weekend, which is nice. So we'll see.
That is good.
Yeah,
and then
we're traveling next week, but that's it.
where are you going?
New York.
All right.
Yeah.
Big city.
Yeah.
Yeah, I'm going to start using all my vacation days pretty soon. So my month-long trip to Skokie.
Yeah, because I think we're looking at in the next fiscal year actually giving you vacation days, so that will be an exciting
Looking forward to it.
add to the. Now, how many? You've got to have a lot left.
I have I think 12 left this year.
Okay.
So I'm taking next Friday off. If that's all right. Make it a nice 4-day weekend for Memorial Day.
I think I don't know. Honestly, I think you're going to be able to count on one hand or two hands how many people are going to be here on Friday. So,
so I didn't even have to take it off? Dang it.
No, I think that's great. Have a nice long weekend.
Oh yeah. But yeah, we've still got stuff going on today. If we want to hop into the platform, because yesterday we were expecting it to be kind of the lightest day of the week,
Right.
Coming in from tariff news over the weekend. Got our CPI on Tuesday, and yesterday not much, but some good two-way price action. Today, what do we got? We got
Retail sales starting at 7:30.
retail sales, and we've got PPI.
Yeah, and then I think the Grandma of the Fed speaks at some point.
Oh, nice.
Yes.
Oh wow, right after. That's early for him. I feel
Economic
like usually
summary.
He's an afternoon guy.
Yeah, he is. So.
Hopefully we get a purple tie. Go Cats.
Oh God. We'll see. It'll be interesting to see what's the. I mean, we've had 7 up days in a row, I think, in equities.
It's pretty good.
NASDAQ SPOOs were down early this morning. Walmart came out with good earnings. They kind of have that loss, which really isn't much of a pullback. Dollar a little bit stronger. Mixed messages. I think that they were ignored for the most part from the White House, whether or not they actually do want a strong dollar or a weak dollar that appears strong, possibly.
That's good. It's all posturing. Oh, you think we're weak? You think we're strong? I don't know. A lot to keep up with. This PPI number. Is this part of the inflation spotlight? You think it'll have a lot of? I mean, we're looking at we were down month over month in the negative territory. Now looking to bounce back.
I think this will be interesting to see if it validates what CPI did, which is they had the same look to it of much high. Oh, this is the month tariffs impacted. We didn't see that play through CPI. So I think PPI is often, again, producer price index. It's the price of goods in process, not finished goods. All of them backward looking, tweaked. It's the value of them in a particular month is less than valuable, but I think this one will be looked at a little bit more closely just to see that disconnect between what everyone expected and the fact that it came in lower. It'll be scrutinized a little bit more. So
Gotcha.
We'll see. So we've got retail sales that'll tangle up with that a little bit too. So 7:30 we'll get some movement. It'll be interesting to see what actually moves.
Early mover today, dollar yen.
Yep.
Yeah, pretty wild week for the dollar. I mean, now we're sitting kind of around in this dollar yen market where we closed, where we opened this week after a huge run up, huge fall, a pretty strong, consistent comeback throughout the U.S. session yesterday, but taking it all back overnight. Is there any Japan side of the story, or just trying to figure out how strong or weak this dollar is?
I think, again, that Monday 2 o'clock announcement, 2 o'clock in the morning announcement when we saw the big spike, they've just basically, it took them 2.5 days, but they took it all out. We're back to right where almost where we opened or closed last Friday. So we're on the verge of almost an unchanged week, which speaks to, I think we're in the mode right now that the word tariff is not going to elicit us moves to new highs of the range or new lows of the range. It may get us somewhere to the upper or lower ends of it. So I think it becomes a little bit more challenging here in terms of if you felt the move from 142 to 148 was too far, too fast, you got paid for being short that. Looking for a resumption back up is a little bit more of a challenge here. So in terms of, usually I would look at this and say, well, this is really clear. This gives you this setup. You're buying, you're leaning against 45 and a half. So I'm going to buy the gap lower there, which is, again, going back to a little bit we talked about charting and technical analysis, that the market closes gaps. Yeah, sure. Sometimes it does. Sometimes it doesn't. But that 145 and a half level would be an interesting level because if you look at that, you've pulled back the entire amount. It probably is an interesting level if you want to look for a resumption of trend.
So you're saying so this is the gap you're talking about from Friday, closing Friday under 145,
right?
Opening above around 146. So now, are you saying that this move early this morning didn't quite do it?
See, okay. This is where.
Well, that's why I'm asking.
The rule book says no. It's got to close it.
So there's a chance that it could still close the gap, and then is that a confirmation that it will in theory bounce back or continue?
That's what quote unquote the book says. That's what technical analysis theory says, that if the gap is completely closed, the market then resumes.
If the gap closes and doesn't trade straight through it.
Well, that's how it. From a technician standpoint, you're buying that gap level from Friday's close.
Gotcha. Okay.
If it continues to blow through it, then you've got an issue, and that's where.
Okay.
It's an interesting. It's actually an interesting level because you do have a reasonable get out spot, 30 pips lower. That if it keeps going, what that tells me is they took that entire movement out. Anyone who was dip buying during the week is wrong right now. I think that puts a little bit stress on yen longs. So if I was to play the technician's gap closing theory or process, I would use a very tight leash.
Gotcha. Well, yeah, that's an interesting kind of a little tidbit of technical analysis you don't get to use all the time because, I mean, we've got a pretty good gap here. One thing I am surprised about is this euro-dollar piece that...
Yeah, so there was a case, they had the gap.
They
filled the gap, and then they resumed the downtrend.
Why didn't you tell me this yesterday at 6 a.m.? What the heck?
It doesn't always, again, out of all the lines and charts like that, we can go back and find 3 spots where they just blew right through it. It speaks to natural location. Okay, so everybody, I mean, really, everybody who was short this week, the fact that we rejected that level gives you a little bit more comfort on the short side of the market. I think we're actually, we're in kind of a congestive range here. So I think you're going to have to expect less and be able to manage a little bit more aggressively. It'll be interesting to see. We will get all the macro events, retail sales PPI out. Powell will speak out, and then I think we're going to get some frenetic back and forth. But then maybe we see it's Thursday. Is there a resumption of the downtrend, which threatens all those longs between 115.5 and 111? Or is there a little base building here because we've had a nice 400-point pullback? You can make either case right here. I'd rather see tape action after all the noise of the news and see if the reaction is we get a hot retail sales number and we print lower and we don't spend much time there, then I think structure holds and maybe we bounce a little bit. But if it stays there and then starts to weaken a little bit, I think you're going to have a hard time being long. So I think for me, there are times where you get a little bit more conviction around it. I don't have the same strong conviction around this. So we'll see how this works out a little bit. Let's take a look at Aussie, because Aussie actually had, again, we were right back up to 65 cents. And
just touched it. And had a pretty good pullback. I mean, 100 pips in Aussie was a pretty good pullback. Still at the upper quartile of its longer-term range, medium-term range, I should say. This is an interesting one, too. We were able to build some energy during the week after the initial, and this reacted differently. It's funny, when that Monday 2 a.m. news came out, Aussie's original reaction was to rally. Yep, here you go.
No tariffs, good thing. And then the overriding concept was dollar strong, and they sold Aussie.
For the first time in kind of these trade developments, where U.S. dollar across the board taking over against this kind of risk-on Australian dollar. Yeah.
So, and I mean, all in all, yes, we're off 100 points off the high, but this is a market that looks very different than Euro's nowhere near 114. We've had a good sell-off here from the highs again. 65 cents was rejected. It's a little bit of a cluttered landscape right now, so a little bit more challenging to, if you go back and we tighten this up and look at the daily, you are getting, again, you're not getting an uptrend here.
Yeah.
It's holding the upper end of the range, which is, 63.5 cents. I think for me, I want to be a little bit more patient around levels before I determine what I want to do. It seems like it's holding on to this level to eventually challenge 65 and 66. But I don't know. If we end up getting some movement lower, especially as we go into the last half of Thursday and into the end of the week, we may drift down to the middle of that lower end of the range. So we'll see how this plays out. This is really dependent on, I don't care what retail sales is. I don't care. They will move the market. How the market reacts to it is what I'm interested in. So I think we need to have a little bit more.
And it's nice, contrary to where we were sitting Tuesday morning, right now getting some more prices overnight ahead of this number instead of, some congestion. So maybe not as anticipated as that CPI number, but definitely a binary event around 7:30.
Yeah,
here.
and traditionally PPI moves markets half as much as CPI does. But
Gotcha.
this one may be a little bit different.
Right.
You may get a little bit more bang for your buck.
Especially because a lot of people were so certain.
Caught off guard. That it was definitely going to be a higher print.
Exactly. Well, I do have some slides.
Well, let's get to them. You always bring your A game.
Sometimes. We'll see. But if we want to cut over to the slides, just wanted to, I thought after this recent China development that this would be a good time to check in on U.S. dollar story as a whole, and kind of where we're sitting year to date. I mean, we're practically 6 months in, which is crazy. But wondering if the dollar slump is finally over, and what could possibly help this U.S. dollar recover, because 2025 not quite the year of the dollar.
Right.
Last year definitely was. But here, just looking at the euro dollar to date, we're still up 8%. We're as high as around 10%. Swiss franc also hit a 10-year high not too long ago. But when you're looking at this chart, I mean, we've just had 2 or 3 considerable legs higher.
We've had a great couple of months of FX trading. 30-year average movement in FX majors is 2.2%. 8% in the first 3 months, 10% in its
It's a lot more.
Is incredible. So there is, and while volatility has come in a little bit, ranges come in a little bit, we're still sitting at levels we haven't seen for a long time, above 110. So there is certainly, I don't think we've settled on certainty that this is the new range. So I think there's going to be a lot more interesting pieces for us to unpack here. But it's good to talk about around scope here. So you're right. We've had a huge move, a substantial pullback.
And this is one that I'm actually surprised about anecdotally, that this China trade tariff pause over the weekend didn't lead to a stickier U.S. dollar move, because when we think about what set this euro dollar up so well through a series of 2 or 3 moves was kind of just weekend news,
right.
That in the market's mind just considerably changed what this exchange rate should be. So a little surprised that this week wasn't as...
It's always never just one thing, but you can run through the list of, you can read as much macro as you want, and it is the dollar less attractive over the medium term because of policy uncertainty, and collectively, it's been part of whether you're a sovereign wealth fund or a nation holding dollars as a reserve currency. Is there a thought that maybe we shouldn't hold so many of these moving forward? And I'm not making a comment on anybody's agenda. Is that letting us actually hold on to more of this rally than otherwise, irrespective of the short-term trade noise?
Because those are, the biggest players in this space.
I mean, gold's come off. We're at 3,100, not 3,500, appreciable down move. But I still look at that as we spent a lot of time at 1,800, 1,600. It took us 2 years, but we doubled that. So this pullback, while substantial, 12%, we haven't eaten into sub $3,000 levels. Bitcoin's well above 100,000 again. Whatever you think about it, it seems like there is a little bit of more rebalancing of, and then you can make the real macro argument that if there's going to be less trade with the U.S., there's less demand for dollars.
This is true.
All very kind of theoretical pieces that really, sure, you can have that conversation. Do those thoughts ever figure in to my daily trade setups? Absolutely not.
Right. But as you mentioned, I mean, it's looking. I know you and Frank talked yesterday about the head and shoulders pattern in the U.S. in the euro dollar.
Yeah, we're going to have to work on his drawing skills. It's a work in progress.
It looks like, at least so far, that the top is in that market for the time being. And here we've just got some of the U.S. assets. We've got the S&P 500, TLT, long bonds, and the dollar index. And our good friend Chris Vecchio sent in a chat the other day that this has been a boring year so far. I
Yeah.
mean, S&P is right where it started, and bonds are right where it started. And so U.S. dollar really the laggard here, as we have approached now, made up all those losses in the stock market and back at lows in bonds.
It's a good point. And I think this is actually tradable context, is that bonds are back to, I mean, we plumbed 112 yesterday. We were up a little bit, but let's just call it 114. We're right back to the start. SPOs are really close. It's still down a little bit on the year, I think, but tiny. The dollar, as you mentioned, 8% different. Now, how do I take that big picture context and make a tradable opportunity out of it? I think we go back to what we talked about the first half of the show. Market structure, euro's still high, but it is kind of having a hard time staging another rally here. So is Aussie a little bit, even though it's at a lower part of its range. If we see a rollover towards the end of the month, is that, or end of this week or month, is that the alignment that we're seeing? Could that be a drag on short dollar positions paying you? And that'll be an interesting thing. That kind of alignment, this is a piece that you definitely park in the back of your mind and watch how structure unwinds. And if we are threatening and substantially trade close to 110, that puts everybody who has been building longs over the last 4 weeks in a difficult position.
Agreed. And one of the major news items we get now are just trade announcements. And I feel like when we started this exercise of
this is really interesting,
shaking out what these trade announcements will actually do for the market. It's now, in my mind, as we've learned from kind of how our relations with China have gone, it's not really about who wins in the market size right now, who comes out on top in any of these trade deals. It's just a certainty or less certainty picture because, as you called out earlier, with the move in gold, which here we have the British pound against the dollar versus the gold correlation over 3 months. Now, back to highs dating back multiple years.
Right.
As I took pound because Eurodollar has a lot of liquidity and is highly reactive. Pound hasn't been as reactive, slightly more kind of drifting with the euro and against the dollar. But this was very interesting to me that now it's every trade announcement, it's adjudicated just on, do we have a clearer picture of how the next 6 months will be, or does this shake things up even more?
Interesting correlation. I wouldn't have thought it was that high. So
agreed, and we'll see. If it breaks down as things start to settle in.
But it's interesting. That old thing. All the correlations go to zero. Here's another example of during the times of stress. Anything. And for me, what's interesting is yes, we're at the upper end of the range. Historically, I wouldn't have thought we had that correlation to moving forward. So.
And then just finishing up here is what dollar pair do we look at? I mean, we talk about structure and what opportunity there could be in Eurodollar, Australian dollar. But to me, it's interesting that this dollar yen is really lagging so far this year to date, down 7% now. And when we talked about the S&P 500 being back to where it is, bonds being back to where it is. This is a pair that typically moves with uncertainty, has gotten a lot of bid on uncertainty, and a lot with U.S. rates. Now U.S. rates looking to stay higher for longer, and a lot of that uncertainty coming out of the market. So what's really holding back this dollar yen from going back above 150? Not a lot of Japanese yen news, not a lot out of Japan. So this one is one to watch for me. What are your thoughts here in the dollar yen?
I think you summed it up wonderfully. Throughout the month here, May, and the last half of April, we put in that very clear bottom at 140. We've built a lot of energy off of it, and structure-wise, we're seeing higher highs and higher lows. So the pullbacks are always a little bit less than they were last time. you know, long-term $145 yen is really high.
Right.
As I told you, I traded yen at 78 cents and 162. So long-term dollar yen is still awfully high, but
is that relevant? Yeah.
I don't know.
Yeah.
Honestly, day to day, absolutely not. It's just, and I'll tell you, that is actually to my detriment because I look at 146 and it keeps just screaming at me. I don't want to buy these because I've seen this dramatically lower. Yeah, that was 20 years ago. So it's really it's a great observation. It's absolutely not relevant to our decision making. I think, and we always say we take market structure as it's given to us. And right now, this is starting to get some constructive structure, whether it's that interest rate different. If volatility around uncertainty is normalizing, interest rates become much more a driver of FX, which means there could be energy behind this move to the upside. So you're absolutely right. It's a good way to break it down and think about it and clear out the noise. Go back to, okay, if we're seeing normalization, as you mentioned, and I think that graph of where everything is, everything's unchanged. That means interest rates come back into play as a driver of FX. If that's the case, the message from Japan is there's no message at all.
Right.
And if we keep getting stronger growth numbers in the U.S., we're not going to see rates fall.
Right.
How much they rise, we're not sure, but they're not going to fall, which should be long-term bullish for dollar yen.
There you have it. We'll see what's next for the U.S. dollar, if it is on the road to recovery or if another collapse is in store. That's all we got for us today on Thursday's episode of Forex Focus. A lot more left in the day, a lot of data releases, and more Tasty Live coming up. So stay tuned for Tom, Tony, and Vanetta up next. Thanks, guys.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knucklehead. Happy Thursday to just you, my friend. Vanetta is out gallivanting around where I have no idea, but you know what, Saz?
I know where she is.
You know where she is?
Uh-huh.
Spill the tea, as the kids say.
Can't tell you. She made me swear. I am.
What is she worried about? That somebody would take a picture with her and possibly send it to me, bad@tastylive.com, and I would send them valuable swag?
I have I've taken a vow of silence, and I've put.
Did you see? I did a little survey on like what we should call you as your Pope name on Twitter. Did you see that? Pope Shlomo is trending very good right now.
I'm going to tell you right now, the whole reason. I mean, there's a lot of reasons I'm probably not on Twitter because I haven't been on in 15
Pope
years.
Sosnovsky. There's a few of them.
But you personally, single-handedly, have ruined Twitter for me because I refuse.
Well, it's called X now anyway, so you don't have to worry about it.
But multiple people have said, Tom, do you read what he writes about you? I go, no, I don't. I swear to God I don't. And he doesn't say anything to me, and I don't care. He can do whatever he wants. That's his own little world. I mean, he's very comfortable.
Pope Theta Shorto. Oh, I can't say this one. It's a bad word. Pope Sas Grande sounds the best. Nah, I don't think so, Jack. I think you make a problem mistake there.
No.
Pope Shlomo was my favorite. Did not win.
Shlomo?
Sosnophus. Sosnophus. That was the one that won the West. That was the one that was the best.
That's a mouthful.
It is a mouthful. So's Tom.
I'm telling you, the Pope and his two brothers, they should do a show. Like, they should stream a live show because it's too freaking good. It's too good.
Yeah.
It's too good. I also think that the Pope needs to throw out the first ball at a White Sox game to turn around that franchise. Like, I mean, I think he would feel honored, and I think that, listen, the White Sox aren't going to sell out even.
Who would be against it?
Nobody.
Right.
And the White Sox,
maybe
White
somebody
Sox
else in their division, but no.
The best
who here
best they're going to do all year is when the Yankees come to town, right? And they'll maybe get 3/4 of the stadium full. The Pope is throwing out the first ball. The tickets would be going for every ticket would be upper deck, be sold, scalped. It'd be great for Chicago.
It'd be great.
Throw it out.
Yeah, why not?
Go ahead, dude. Throw it out the first ball.
Who would be opposed, I guess?
Absolutely nobody.
Just like trading side. If you don't think about the positive thing, but think about what could go wrong. That's what you try to think about.
And then I think we could do
positive will take care of itself.
I think we could do a 2-for-1. If they really want to go the whole religious God thing, we can do the Pope can throw out the first ball, and behind the catcher's mound, we can have Sister Jean from Loyola. I think she's about 103 right now. She's still alive, and we can have her because she's a local favorite, and I think the combination of those two would be the best.
That'd be nice.
Yeah. So, and that's what I'm hoping for. That's the only thing that can save the White Sox. Although they have one.
Yeah, I don't know if there's even that could save the White Sox.
They have won like 2 in a row.
Sox are 4-1 since Leo became Pope. Might be working already.
Yeah, they are actually. Yeah. It's listen. It's the best thing. It's the best chance I got. I watched the Florida game last night.
Like I said on the show, I asked you who you liked last night, and so that the audience could know who to put the kibosh on. You had both losers, and not only that, you said Montreal was gonna dominate the game. It was completely the opposite for the Panthers. The Panthers dominated the game.
I had the Panthers. I said I love Florida.
Did you?
Yes, I was all over Florida, and you laughed at me. I said I liked Florida and Boston last night.
You mean you got it right?
I got it right.
No way.
No, I was.
You still got it, boss. You're the best. Let me change my tune.
No,
You're the best.
I will never fade the Panthers because they are the team. They're the team that's got like that. They got that killer mentality that you don't see in sports all the time anymore. They legit have.
They're a little bit more old school hockey than the teams that are left in there. Yeah, 100%.
They have a killer mentality. They have a killer coach.
I told you when they had that line that they got the three animals on one line. It's unbelievable.
They have a killer mentality.
Marshawn, Bennett. It's unbelievable.
Marshawn.
You hate him, but you'd like him to play for you, not against you.
100%.
Yeah.
If I'm Toronto, I hate that guy worse than I hated Bill Lambier.
Yeah.
If you're a Toronto fan and Brad Marchand's out there, you're like, God, I hate that guy.
Oh, is he still around?
He's like
nobody's killed him yet.
He's like 100 in every freaking year.
That game got ugly, and even at the end of the game when they started fighting, it was getting ugly.
Yeah, well, that guy, till he retires, which probably never. Because he can just play the playoffs.
He is one of the best in the playoffs. There's no doubt about it.
That was good. And I didn't watch the Knicks game, but I saw that they kind of got killed in the second half.
I didn't watch it.
That's why Boston was a 4.5-point favorite. Everybody was like, how can they be a favorite? Well, that's why.
Yeah.
I don't know. The Knicks will probably win the next game, but who knows?
Yeah.
Goes back to the Garden, and the Garden will probably be crazy, but we'll see. It's going to be unbelievable that the NBA Finals is going to be either New York or Indiana, and then Minnesota. Well, OKC had the best team in basketball this year, so that shouldn't be a surprise.
Yeah.
But
anything can happen in the playoffs, just like anything.
Those aren't exactly the big markets.
Mm-hmm.
But if Florida wins, Florida against Carolina, it's going to be an unbelievable series.
And Carolina's good too.
They're young, they're fast. They hit hard. They're good.
You're just throwing Dallas out then, right?
I would say Dallas is probably the worst of all the teams that are left. But I don't know. I don't know. It's good.
That's what's good. That's what's good about playoff hockey, man.
Yeah.
Anything can happen.
Yeah.
Anything can happen.
Yeah. So the big news is that
there's big news.
There's big news. In case you didn't know, we're playing golf this weekend.
We are. I got the nod, everybody. That's right. I got a phone call. Saz called in the lefty. What other three people dropped out?
Oh, there was like 10.
No, you had your three. You had Slappy. You have yourself, and you've got the player to be named later there. Who was going to be your fourth who dropped out? And I know there were some alternates you already went to before you got to me.
Oh, you want me to show you the list? It's long. It's long. There's a lot. But
I'm getting ready, Saz. I was getting ready. I was getting ready for you. I feel a little stiff, but I think I'll be all right.
Well,
are you gonna pick me up?
This is not an easy golf course, just so you know. But they give you
I know, but your days of I'll take my 9-iron and my putter and beat you days are way over.
They're over.
I have.
They're over. My days
last time we played, which was a couple of years ago, I beat you. I have the card here somewhere.
I don't think so. I think you're like.
I have the card here somewhere. I had the card here somewhere.
You're delirious, but
actually Slappy was there, who we're playing with again.
Yeah, sure.
Josh couldn't play. That's why you asked me. Got it.
Yeah, but it's going to be fun. But my.
Oh, you're already starting with your BS. What's hurting you that you can't? Your hand. Your hand looks good now.
I know. Back.
Yeah.
Yeah. Back.
What was it?
What?
What was it?
Our leading story.
I don't know. I don't know exactly what it was, but I'm back.
You're good. You're good to go.
Yeah, and they give you a bucket of balls, so you can hit a bucket of balls before. Yeah.
I don't think I'll be there that early. 8:10.
8:10.
8:10 on a Sunday. I got my beauty rest and stuff like that to do.
I'll be up at 4:30.
4:55 is the time I usually.
8:10 Sunday. We'll be done by 12:30.
Slappy's playing. Slappy has to talk to, and be with every ball he hits. You know that. He's not a get it. Like, I'm a get up there and hit it kind of guy.
Oh no, he's slow as hell.
Right.
And he's slow.
Been playing well though, I heard.
and he's got to smoke a cigarette in every hole. And so he's.
I'm going to take up smoking then. Slow down the game a little bit, drive you nuts.
Yeah. You could get a.
We going to throw up balls to see what the teams are?
Yeah.
We have handicaps?
No.
The team that gets me is going to be handicapped, that's for sure.
For sure. But.
Sadnov, nobody ever loses on my team, okay? They don't lose because of me. Just remember that. You know it.
They do, but we feel so sorry for you that we just wave. Like anybody that loses you, we don't tell you. Like we just wave it. Yeah. So
Sure.
no, it's gonna be fun. It's gonna be fun. I'm looking forward to it. And if, if I suck this round, it'll be my last round of the year.
Promise?
No,
I didn't think so. Well, I had a bad night last night.
What happened?
Because my daughter had a bad night last night. She's traveling. She's going to South Africa. Remember I told you?
So she's on her way already?
She's on her way. Yes, she was on her way yesterday. She flew into Newark.
Why?
Because that was a month ago when she made her plans.
Oh, so you go from Newark direct to South Africa?
Yeah.
Okay, that makes sense.
Yeah. But Newark's having a whole lot of problems.
Oh, yeah, Newark's problems, right.
Yeah, and then they said this was a mechanical problem on the plane, so she was 2 hours delayed getting there. And then
Did she miss her flight?
Yeah.
Oh, no.
Yeah.
Oh, no.
Yeah.
So what happens now?
Oh, I pity that United Airlines agent, because she was texting me and calling Chris. She doesn't call me for this because, you know me, I would come up with a different solution for her. She's
now, if she was on American,
not happy.
She was on American. I'm concierge level.
I know.
I could have helped her.
I know.
United. I don't have any Yank.
I know.
Oh my God. Is there a flight leaving today?
Possibly. Yeah. And if she doesn't make that connection, then she misses her tour in Africa. And yeah.
Somebody's not going to be happy.
No.
You're going to have to go to Africa with her.
Right. And then there was one flight that they could get her on, but they wanted to charge her $2,000 to go on it. Why would I have to pay to go on? It's a mechanical. It's your problem. I did everything I had to do, blah, blah, blah. Everything was logical. I mean, I don't think many
this is a different airline. Most people who fly to South Africa, I always thought they fly to...
Kennedy, I would have thought.
No, to Atlanta and then fly...
I don't know.
Okay. Yeah, if it's United, you got to fly to Newark.
I was just sitting quiet.
You better shut up. You better not open your mouth.
I did, and he's probably watching, Shark, I did volunteer your services. You know, I said, listen, if you need a place to stay or another, or another, adult, to help you, a family.
You're not helping things, okay?
I don't know what you think he can do for me. Like, well,
I don't know what you're thinking, okay, but that's not exactly.
Well, I volunteered Shark, so just in case you get somebody with a suitcase on you. And that was another good thing. She only packed, what she was taking with her, so at least she has her suitcase. But I don't know. It's a disaster.
Oh,
yeah, not happy. And I texted her this morning an hour and a half ago. Still haven't heard from her. I don't think she really wants to talk to me right now.
Well, hopefully she's not watching the show.
Hey, you did what I did yesterday. I wore something like that yesterday, and it was 75 to 80 degrees in Chicago. Today it's going to be 85 degrees, and you're ready for the winter.
This in here because this office is 55 degrees.
No, it's actually hot in here right now.
Now it is, but by the time the show's over, it will be 55 degrees in here and 50 degrees out there. On this side of the office, it's 50 degrees. You can't even have a T-shirt. I have a T-shirt nowadays.
Mm-hmm.
I may strip down to my T-shirt.
Please, baby, please.
Omaha.
But you can't in this office. It's too damn hot. I mean, it's too damn cold.
What is it? One of the two.
Too damn cold. So.
Yes.
No, I'm just looking at different markets this morning.
Don't worry. Nothing's really moved, Saznoff. Even the S&Ps are hanging out down 26 and change. That's where they've been for most of the night. 67 is the low, about 15 handles lower than this. NASDAQ down 127. Russell down 220. Dow down 149. Volatility, we talked about it all day yesterday, staying a little bit bid. It's bid again today, up 25 cents to 20.05.
Yeah.
Bonds are up 2 ticks. Most emails I got last night was about Dick's and Foot Locker. Did you get those emails?
No. Every single email I got last night was on UNH. I mean, Dick's and Foot Locker, I don't have a position on either of those. I guess they won. Well, Foot Locker closed at under $13. What's the price? They're making a $2.4 billion. So what price is that?
Almost $25, double 23. It's
really
23 and a half right now.
Boy, I figured you'd get Foot Locker a lot cheaper than that. What's Dick's doing this morning?
Dick's is down to 186, I think. Yeah, 187. I closed at 209.
But they don't love that deal.
Yeah, it doesn't sound like they love that deal too much.
No. I mean, I was watching UNH because I decided after Nikki, I'm not going to name names, but after Nikki got me involved in UNH yesterday, I already had a position on there. Then at the end of the day, I decided to get very bold.
Yeah,
and I sold.
UNH is a bigger disaster waiting for another bigger disaster to happen.
Well, I sold 1 million put spreads in there this afternoon. I'm very upset.
At least your spread. Ivy Rank was phenomenal in there.
Ivy Rank was 100
last couple of days. If you did both sides, I think you'll be okay if you stay mechanical.
I didn't do both
Catching
sides.
a falling knife like I have, you're going to be in trouble.
Oh no, I'm in trouble.
Yeah, that's what they say.
I did not do both sides, and
I did both sides, but I had a little bit of long delta to it.
I didn't do both sides. I just sold a bunch of put spreads, and I sold some naked puts, and I've already short
down 20.
I know, and already short some naked puts, and so that's going to be an absolute disaster for me this morning. And I think there's other people as well. Foot Locker, no, I don't have
I don't have a position.
Last time I traded Foot Locker was about, I don't know, a couple of years ago, and it was pretty illiquid. But I love shopping at Foot Locker. I get most of my stuff there.
I bet you couldn't even name where a Foot Locker is in your neighborhood.
In my neighborhood?
No, in your mother's neighborhood. Yeah, in your neighborhood.
I don't think there is a Foot Locker. There's no standalone Foot Lockers anymore. They're mostly in malls, aren't they?
Yeah, in malls. Yeah, right.
Somebody paid $2 billion for them. I don't know why.
2.4.
2.4. I mean, well, obviously the street doesn't think it's that accretive, but I wouldn't touch that. Wouldn't touch that deal today. Let's see. Don't trade Foot Locker today. That's for sure.
Foot Locker prior to the little takeover here at nickel wide markets. I guess it was okay.
Yeah, we haven't traded it in a couple of years. I don't trade Dick's Sporting Goods very often either.
Mm-hmm. You've traded once or twice for earnings. That's about it.
Yeah, I got a pretty decent size bond position on this morning, hoping for a rally in bonds and notes. Sold a couple of notes, a little bit of notes.
Bonds are up 3 ticks, but 112.15 doesn't feel like that's up, Thomas.
It sure doesn't. I need 114 minimum.
That was a $2,000 move if you get to 114. Notes are trading 109.26.
Well, based on my UNH move, I need bonds to trade 123
to make up for it.
Yes, because there's not much else I can do in there.
Mm-hmm.
People wrote me. They said, "What are you going to do in UNH?" I'm like, "Well, the defined risk positions, I'm not going to do anything. I'm just going to ride it out, hopefully. And the undefined risk positions, I'm kind of trapped like a rat. I'm not sure what I'm going to do yet."
Mm-hmm.
I did buy a couple of gold contracts in this morning, but I'm still short a bunch of gold.
Gold down $5.90. Doesn't seem like that's down either. After trading down
about 35.
31.23 as a low.
Yeah, I saw it down about 35 last night.
More than that, about 60 handles lower than where it is right now. About down around 65 or so.
Yeah, I didn't see that. So
a lot of things you don't see, Saj. You're getting old these days. It's hard for you to see.
No, I'm just not up all night long.
Not anymore? What happened? You taking something?
At some point, I decided it's, maybe I got to sleep for a few hours.
You're going to try? You're going to try sleeping for a while?
Yeah.
Fair enough.
Yeah.
Silver they're doing the same, down 17 cents. Kind of a quiet market yesterday with a little bit of two-sided action.
It was a crappy day yesterday.
Crappy day, but some big movements inside those on individual stocks.
What did we get killed in yesterday?
What did we get killed in yesterday?
Or was that the day before?
No, that was that was the day before. Was UNH, and then UNH was helping us yesterday.
Right. So what was the bad thing? There was something bad yesterday. Just the volatility expansion.
Mm-hmm. Yep. Right. Across the board, and you're gonna get a little bit more of that today. Although it's up 25 cents, not that big of a deal, but 20 and change.
Well, I need the 730 number to work in our favor today. I'm a buyer of bonds in the 111 handle. I'm a seller in the 114 handle, and if they rally up, I'll sell some notes, but that's about it.
Very good, sir.
All right. That's all.
Let's take a quick 90-second break so we can chop this up. We'll come back. We've got confirm and send next. You listen to Tasty Live. Even the S&P is down 25.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live for confirm and send. Can I do a little public service announcement? I know you hate public service announcements, but the diamonds have a dividend. I know you don't trade a lot of diamonds, not that widely traded, but they trade a lot of it in Europe.
Is tomorrow expiration?
It's tomorrow expiration.
Should be.
Yeah.
So
third
funny.
Friday of the month for the last 1979 until now is expiration.
So I got the actual numbers for May expiration because I may have been a little off yesterday afternoon.
Oh, so you were misinformation again.
The massive misinformation. May expiration, the settlement in 2021 up 19 handles. The settlement in 2022 up 37 handles. The settlement in 2023 up 10 handles. The settlement in 2024 up 16 handles. So the last 4 years, the move from Thursday night to Friday morning has been up 19, 37, 10, and 16. So 4 consecutive up moves. That gives it a little bit of bias to the upside. The number of down moves in the last 27 years.
But now this is just for expiration. We're not.
This is just tonight for tomorrow.
Right. So one
The number of down moves for SPX expiration the last 27 years, 10. Number of up, 17. The average down move, $10, 10 handles. The average up move, 7 handles. And the average move total is about 852. We'll take a look in later and see what the expected move is tomorrow on the opening. It's only been 852 for the last 27 years, but I'm guessing it's probably going to be 25 or 30 where volatility is right now, maybe higher. But we'll take a look later today. But anyway, those are the actual statistics.
Very good.
I thought it was more evenly matched, but I was incorrect. And there you go. We have a little confirm and send. These are emails that came into us overnight from viewers all over. And we have a few extra ones today because Vanetta is in parts unknown on vacation.
But you know, but you're not telling us.
Parts unknown, but I know. I know. But if you guess, I'll give you one guess a day.
I know where she is.
Oh, you know where she is?
Yeah, she said it on the break. But I mean, you know.
Oh, okay.
Be cool, guys. Be cool.
I go by the mafia code. You know what I mean? I'm not a rat or anything like that. No. You know what I mean? I make believe I don't know. You know?
Tell Tony, tell the world, but I would not tell you. But see, I was protecting. Okay. All right. It is Thursday, May 15th, middle of the month. Let's do this.
Ready.
First email. How do you calculate the expected move? I've noticed that it's different on different platforms. Got this question a bunch over the years. I've also noticed that it isn't always the 16 delta strike. I thought the 16 delta was supposed to be equal to a 1 standard deviation move.
I mean, it is just about 16-ish delta. I mean, if you're just back of the envelope looking at it. And every platform uses a little bit of a different formula for expected move. And that's why you get a little bit of a discrepancy. But it's all in the same area.
Yeah. Expected move is a funky term that we came up with about 25 years ago and added them to retail platforms. The first one we built it on was the Thinkorswim platform, and we called it the market maker move, MMM. But we've since changed that to expected move. When we built it into TOS, 25 years ago, we essentially took the at the money straddle and the at the money strangle, added them together, divided by 2, and kind of gave you kind of a rough, interpretation of the front month straddle, and that used that as expected move. Over time, as we built Tasty, we got a little bit. We decided to clean that up a little bit and make it a little bit tighter, a little bit more accurate. So what we do now is we take 60% of the front month straddle, 30% of the next nearest strangle, and then 10% of the next nearest strangle. And so we basically smooth the skew over 3 different strikes, and then give you, whatever that number, the average, whatever that number comes out to. It's a little bit, it's probably a little closer to, it's a little more accurate. Now, the reason the 16 delta doesn't work perfectly is because sometimes the 16 delta could be skewed based on implied volatility per strike and things like that. But like Tony said, it's close enough.
Yeah, it's
no hero stuff here, okay? Generally speaking, the 16 delta is your expected move. But if you want to, you can always use what's on the platform on Tasty. I think we have kind of the most accurate formulas built into this platform because it's the newest. So
new and improved.
And we're constantly updating them to make them even better. So yeah, that's how it works. So the next person writes
in and says, the font gets a little bit smaller, yeah, right?
Actually, here it is.
Want these?
No.
You sure you don't need them? Probably you could see. You got
no, but the number just came out.
Even the S&Ps haven't moved. They're down 26. Bonds are up 8 ticks. That's moved 4 or 5 ticks there. 112.20.
No, but I'm going to.
Gold is unchanged, actually up $1. That's you're moving there. Volatility in by 5 or 6 cents. It looks like a
I am
muted
going
move.
to sell out my notes.
Notes are up 7.5 ticks, trading near their highs for the day.
Yeah, I just sold some at 31. I'm offering some more. We bought them last night at 20 and 21. So it's a little kind of an okay trade. Bonds really didn't move much. They're up 2 ticks. They were just up 9 ticks. I probably should have been a little more aggressive.
Everything is hindsight.
Everything is hindsight. But, that's the kind of thing. Who knew? So I'm offering some more at 31. We'll take that little profit if we get it. And you're right, gold. I had this bad feeling about gold this morning. That's why I bought in a few contracts, but I don't know.
Gold basically unchanged after being down around 60, 65.
Yeah. Sorry, Beth. Let's go back to the next slide. So I've been following the Unlucky Investor's Guide to Option Trading for constructing my portfolio this year. That is the book that Julia Spina wrote. Julia is one of our researchers / data scientists / physicists. She's the jack of a lot of trades. It was all great until the sell-off a couple months ago. I was using 30 to 45% of my capital, but my naked options grew teeth, and I ended up selling all of my core positions and stock positions. I'm finding it difficult to get back in the saddle. Any guidance on portfolio management during sell-offs?
This is on entry, 30 to 45%. How do you mitigate problems? You do that on entry by trading small. Now, 30 to 45% of your capital it is at the higher end of the range, but I'm okay with that. And you said you had to sell out of your core positions and stock positions. I don't know why you had to. You felt like you wanted to. So I guess how do you make it more tradable? Or what guidance can you use? If you're talking about core positions here, I'm surprised that you changed course here. So I don't get.
Well,
I know if you get a strangle and you pick up deltas somewhere, and you roll down and you get taken out of a position, I get that. But if a core position, I'm a little confused.
Well, they just got nervous.
Okay.
Like they saw something that they had never seen before.
Sure.
A lot of us haven't rarely seen moves like that.
Yeah. But it's certainly not used to it. That's for sure.
We're out of our 10-year notes from yesterday.
Beautiful.
Winner, chicken dinner. Oh, by the way, I hate to interrupt this, but I forgot with the earnings plays last night. I didn't look. Baba was one of them. It looks like it's down $7.
Baba is down $7. 127.
6.5.
Change, maybe 6.5 to 7.
And what was the other one? Oh, Walmart.
Walmart, WMT. It was
Sprawlmart.
changed a moment ago.
Unchanged.
It's still unchanged.
Think it's come out?
I believe so.
Sprawlmart unchanged. Baba
Walmart
down.
definitely came out.
It came out?
Yeah.
Okay. Anyway, so Walmart unchanged and Baba down $7, which 6.5, which I think is inside the expected move.
It is. Even
Okay,
the
sorry,
S&P
Beth.
Down 16.
What?
Even the S&P is down 16, catching a little bit of a.
Yeah, they were out a little bit. The bonds are back to. We sold out of our notes at 31, and the bonds are back to up 8 or 9.
Mm-hmm.
They're 120.20. Like I said, I need 114. So let's go next slide. So anyway, no, go back. So I completely understand. You're following along. Everything's going great.
But we talked about this. Like, let's say you had a covered call on and it went too far and you were uncomfortable with the position, but it was still kind of a core-ish position. Close the covered call, use a lot more buying power. Maybe you get into a vertical spread. You don't make back the money that you lost from the covered call, but you're in the game. I would look to take less risk if I'm doing something like that.
So everything's going along swimmingly. And then all of a sudden, the market does something that it doesn't usually do, which happens once
you didn't
every.
Anticipate, sure, whatever.
Which happens once every 7 years, 10 years, whatever it is. and you get some kind of a really volatility explosion, and you get a huge down move way outside of the expected move, and it throws you off, and you're like, damn, everything was so good, and now now this costs me. And so you get frustrated and you get nervous, so you blow out your position, which is not that you're not alone. Let's put it that way. Mm-hmm. Most people will try to fight it. I try to fight it. Tony fights it. But if you've never fought it before, I can understand. You're like, listen, I'm better off just starting over. I get that. It is difficult to get back in the saddle. But what you have to tell yourself is what we just experienced does not happen very often. And what you were experiencing before that, which was probably a reasonable amount of success, does happen more than not. And there are going to be some losses along the way, but these volatility explosions like you saw, those are going to be pretty rare. So, I mean, that's what you're going to be challenged with, explaining to yourself and kind of trying to rationalize. I'm not sure that there's much. I'm not sure there's much else we can do because, the markets are totally random, and we are challenged by the exact same move. It wasn't like when that market dropped in early April, it wasn't like we were sitting back going, man, we called this, because nobody did. Let's go to the next slide. I'm confused about when to recenter, buy the guts and sell the wings. When do you do that? Do you do that in the same month that you're currently in, or do you roll out in time?
Yeah, you can do it all. I mean, let's just take today as an example. If you were facing this dilemma today, June, which I would expect that's where you had your original position, that's 36 days. We typically roll at 21 days. So you got 15 days before you're really going to roll. So for me, I would not be looking to go to July with 64 days. I'd be doing it in this month of June. So I'd be buying the guts in June and selling the wings for a debit in June. Now, that leaves me with a short strangle and positive theta decay, which is what I originally wanted, and which I am happy to have. If we were closer to 21 days, maybe 30 days, 26 days, something like that, I'd say you'd be doing the same thing, but I would be buying the June options that are closer at the money and selling the July options that are further out of the money. Put myself into a strangle again, if that's the position I have.
We used to say that you should recenter, that you should consider recentering when maybe when the strike was breached, or when the strike was challenged, or when you go inverted, any of those times. We're more aggressive now because we found
research has supported it.
We found that that if you're trading liquid underlyings, it's just as easy to get filled, on all four legs as just two legs. So I'm a little more aggressive now. So my answer to this question is, you recenter whenever you're uncomfortable. Just recenter. As soon as you get uncomfortable, just recenter. Yep. As long as the underlying's liquid, just whenever you want. Just all four legs. Buy the guts, sell the wings. Boom, boom, boom. I do it all day long. Never hesitate. I've already done it this morning in commodity options, probably on four different underlines. So do you do it in the same month? Yes. 95% of the time you do it in the same month. Do you do it?
It's a big number, but okay.
Do you roll out in time? Sometimes, if you get near 21 days, we may roll out in time and buy the guts and then recenter in the next month. But I would say that mostly all the time, 9 out of 10 at least, are in the same month.
Big number, but okay.
Okay. I mean, it's just my own, maybe yours is different. So
it's bigger. Go ahead. What? I just saw your May 9th piece on Ultimate Guide to Strangles and Iron Condors. But how do you pick your underlings? Do you pick by IVR or minimum price or something else?
Can I tell you a pet peeve of mine? No, this is not what you think. What?
Underlings?
Underlines.
I know, I'm just teasing you.
Underlings is a pet peeve because for some reason it always comes up as that's not a word.
Is it not a word?
Type it in. Type it in. And I guarantee spell check is going to tell you that it's not a word.
Oh, man. This is off with their head, whoever wrote this.
It bothers me. It's been bothering me for 20 straight years.
Underlying?
Underlying's a word. Underlines.
Yeah, no, I don't see it. No, I don't see it with the S.
Yes,
you're right.
Bothers me. So all of a sudden, as soon as you have with an S, it's considered a misspelling. I don't like that.
Yes, underlings can be considered a word.
Underlying.
It's the plural form of the adjective underlying,
underlings.
meaning something that you asked me, and I said
Underlyings.
no. I said, is underlings a word?
It's not underlying.
I know, underlying's a word. I said that. Yes, underlyings can be considered a word. It's plural form of the adjective underlying, meaning something that is situated beneath or forms a bias for something else.
Well, then somebody needs to tell Microsoft. You need to explain that to Microsoft.
I got it here on Google.
Because that pisses me off.
Mm-hmm.
So we did a piece called The Ultimate Guide to Strangles and Iron Condors. But how do you actually pick your underlyings? Do you pick by IVR, by minimum price, or by something else?
Yeah, IVR is the first. I mean, listen, first I go to the high option volume list. You can go to any list you want, NASDAQ list. You can go to a list of stocks that you like to follow. It doesn't matter to me what list you go to, but I typically go to high option volume list, and then I rate or rank by IVR, highest ones, and I throw out earnings. And then I look for there. And then I just kind of, cancel and replace which one I want to trade and not trade for whatever reason.
There are lots of different ways that people pick.
Sometimes you get a phone call or an email. I mean, we do it twice a week where, viewers will call in with an assumption. I never traded this stock before. I look at it and it has good IVR. It has decent tight markets. Okay, I'll make an assumption on this one just because of the math.
Sometimes when your friends tell you to do something,
you do the opposite.
You do the exact opposite because that's probably the best thing you can do.
Or what if you don't have any friends, Sal? What if you're more of a person
if your mom tells you something?
Or your mom tells you
and you do the opposite.
Right. Or what's that Selma's son tells you to do something. What do you do then?
Right. The opposite. You always do the opposite.
Always do the opposite.
But how do you pick your underlyings? The reality is we pick them based on a combination of multiple things. We pick them based on IVR, based on liquidity, and based on it's not necessarily a minimum price, but it could be based on price. In other words, like we might not trade something that's $7 and we might not trade something that's $700, but we also choose things based on our own interpretation of price extreme, which means nothing to anybody else other than it's a personal opinion about price extreme. I mean, at the end of the day yesterday, I sold some NVIDIA stock because I thought NVIDIA was at the high end of its range. Mm-hmm. I sold some Tesla stock because I thought Tesla was at the high end of its range. There's nothing that actually tells you if that's the case. It's just a gut feeling,
It's an assumption, right? And then you try to pick out a high probability trade to fit that assumption based on the IV rank in liquid markets.
I mean, I bought some UNH because I thought, hey, we're on the low end of the range, and now it's down $20 this morning. So, I mean,
now it's at a lower end of the range.
Right. But I'm saying you just don't know, sold some Tesla. It was down $10 this morning. Bought some UNH, was down 20. So you just don't know.
Mm-hmm.
That's kind of what trading is.
Yep.
But IVR, price extreme, liquidity, that's what you have.
Mm-hmm.
I mean, you got lots of choices too. Could be things you like, don't like, anything. That's the great thing about the markets. You're not you just don't have to bet on one baseball team or one football team.
Oh, and it's ever evolving too.
Let's go to the next slide, Beth. Did you stop carrying 200, 300 short deltas past 100K in net lick that you used to talk about all the time? Do you now take more of a delta neutral stance? When did you start doing this?
I think you have, yeah, and I think it's something that I know you can speak about it more because they're asking you in your position, but I think you have, yes, especially after the little bit of a down move. We actually picked up some long delta in there. Some of it was good, some of it you had to wait on a lot longer than you wanted to.
When you're in the midst of a decade-long bull market, you're going to repeat the phrase many times. Yeah, I'm leaning with a little short delta here to protect my premium, my short premium. But we always said during that period of time that if the market ever sells off, you're going to see us probably be a little bit long delta. We're not married to being short delta, short premium. If the market sells off a lot, we might be long delta, short premium. And I think that's the case. Now we kind of feel like, I feel like the market went from being very overbought to being very oversold, of which we were definitely long at the bottom, and to being very fairly priced where it is right now. Like I don't have a huge market opinion here. I mean, for the day, I might be a little bit bearish, but for the near term, I'm not much of anything. I'm kind of like I think we're going to stay range bound, and I'm not overly bearish. I'm not overly bullish. So why would I be short a certain number of deltas? You know, that's how we used to be on the way up when we were rallying for multiple years consecutively. I was worried about a pullback. Now, after a huge sell-off, I'm not worried about a pullback as much, and I think we're going to be range bound, so I'm pretty neutral. So we started doing this, you know, I guess, you know, you could say after we started selling off.
Very good.
I mean, it's a little bit of common sense. Let the market take you to wherever you want your position to be. That's kind of how we approach this. Let's go to the next slide. And by the way, the bonds are down now, down 4 ticks.
Bonds are down 4 ticks, 112.08, about 4 ticks off of the lows. Even the S&P is down 20.
Notes are up 3 ticks.
Mm-hmm. Better.
What's the reasoning? What's the reason or reasoning behind rolling? If I understand correctly, rolling means that you realized a profit or a loss on an existing position and you're now opening a new position. Why not simply close your position and move on with new positions with higher probabilities versus defending an existing position by pushing it out in time with a lower probability of profit?
I think there's a couple of hidden kind of in between the questions here that need to be cleared up, and you're basically saying exactly what we're doing in the end. Let me kind of explain here a little bit. Each night when the market closes, your P&L reflects your position. So you may think that you're closing a position when you buy back the guts, meaning the closer out of the money options, and selling the wings and opening a new position. But that P&L has already been reflected in your account. End of story. Each day, mark to market. Each moment, mark to market. So whether you close it or not is irrelevant. I'm not an accountant. It's not, each day you're not mark to market and then you have a tax bill for it. It is what it is on that day or intraday as you're trading. So all you're doing when you buy the guts and sell the wings is reducing your delta risk or reducing your gamma risk on the trade that you have here, both of them at the same time. So whether you close it and open a new position in the same month or back month is only kind of the reason you would do that was if the IV rank in that stock still supported. So let's assume that it has a high IV rank. You had a strangle on that was further out of the money with an 80, 85, 75% pop. Now you got a 50-50 shot. You have to say to yourself, do I want this 50-50 shot of keeping the guts on, or do I want to buy that back and roll out to have less delta risk? And that's typically what we do. So we're not defending the existing position. We're actually closing that position, as you said there, and opening a new position, because that's what it is. Whether you think in your mind you're defending it or you're closing and opening it, it's basically the same exact thing.
Yeah, I mean, I'm going to second what Tony said. Everything you wrote here is totally fine. The reason that we feel like sometimes rolling a position is better for us is because we're in the position already and we've been watching it, so we feel comfortable in it. Rather than having to close both sides, we're only just rolling up one of the sides. So, or rolling down one of the sides. So I feel like it's an easier adjustment than it is to close and reopen a new trade. I feel like there's much less slippage in there. And usually when the IV rank stays high, there is a reason we're in the trade to start with. It's probably a liquid underlying. There's probably, some kind of an assumption. So yeah, I mean, that's the reason for doing it. Bonds in the 111 handle, Mr. Batista.
Didn't think I was going to see that today, Sadloff. 111.31 just traded down to 29.
Yes, I just bought some at
112.04. Why would you do that, Sal? No, but it takes higher than where it is right now. And
I don't know.
That was only a minute ago.
I panicked.
Evidently.
Yeah, I think I'm going to try to buy some 29s.
Even the S&P down 25.
I don't like this. I don't like this tape action in the bonds. Not at all, Sam. I am. Very, very strange, aggressive, very bearish tape action in there. I don't know. How come nobody talks about raising rates?
Because it goes against the
I understand.
narrative.
I understand, but at what point?
Why hasn't anybody talked about this rally being one of the quickest, swiftest rallies?
I'm talking about
month.
bonds.
Tell me, maybe they didn't go to either drawer to the newscast.
I'm just talking about bonds. Because the bond prices, that's where interest rates are trading. At what point does the narrative switch from lowering rates to raising rates? How does that?
I think it's already switched. I just don't think anybody's talked about it.
It's weird that nobody's talked about it. All right, let's go to the next slide, Beth. So this person writes, just wondering, why are the Mag 7 stocks trading like meme stocks lately? They're moving up and down by a huge percentage daily. I don't get it.
You said it yesterday that those popular Mag 7 stocks were trading like meme stocks. And
yeah, they did. They felt like it.
Yeah, they did. But I don't have an answer why. I'd like to say that people are trying to catch up to the class or the chalk of the market, but I don't think that's the reason. It might seem like, and I think you kind of traded it yesterday from that point of view as like a blow off kind of top type of thing. The market didn't warrant that kind of exuberance in those stocks. We had volatility expanding, we had market going nowhere. It wasn't like people were trying to chase the market itself. It actually seemed a little bit heavy yesterday, but what do I know?
Yeah, the reason I think that the Mag 7 stocks were trading the way they have been lately is just because they have the depth and the liquidity to support a lot of buying. So maybe more so than other stocks that could be, that just can't absorb that kind of liquidity. So I think one of the reasons is there's just been, a huge capital flow playing catch up, and those are the stocks that can handle it. That's the only answer I've got. There's a lot of money managers playing catch up. Let's go next slide, Beth. This person writes, I have 10K in a cash account and I trade stocks in. I have 10K in a separate margin account for options because I just started trading options a few months ago. Should I combine these accounts so that I can do more undefined strategies to possibly have better results?
I don't have separate accounts like this. I have IRA accounts and margin accounts. I don't have any other type of accounts. I don't separate them from one or the other. So for me, I would probably say, yeah, I'd be looking to combine these accounts. Or if you want to keep them separate, in my mind, I would mentally look at them as one account.
I think that I think you should put them together. It doesn't make any sense to me. Of course, you can keep them separate.
Yeah, do whatever you want.
Do whatever you want. Keep them separate. If you're trading in a cash account, I just sold out, scratched those bonds at 04 because it didn't seem
lucky you, man. I was really worried. I was really worried for you.
Didn't seem like a good buy to me. Now I'll reload if they go back down to 30.
You don't want to hear that ding.
In a cash account, you're not subject to pattern day trading rules, so that's the good thing about a cash account. But other than that, there is no good thing. You can borrow
But he
money.
has 10K in a separate margin account. I was assuming that was over 25,000. I just thought it was excess money.
It says
So
10K.
just a $10,000 account.
Okay, yeah. So the only I see no real reason why you would keep this money separately, because you want to trade stock and then trade options against it. You want to borrow some money, whatever it is, just to be able to do certain things. I would be reluctant to have two separate accounts trying to trade one for stocks and one for options. I don't like it at all. Let's go to the last slide. I think it's the last slide. It is. Is selling cash secured puts ever a worthwhile strategy when trading in an IRA account with no margin? It seems to me that the premium received isn't enough of a return on the capital tied up, nor enough to cover the risk reward.
Yeah, I mean, I think you're stating the obvious here. You could give up pennies by buying a further out of the money put and put on a wide put spread that might be $15, $20, $30, $35 wide, $40, $50, $60 wide on a $200-$300 stock. That would give you a lot bigger bang for your buck. Return on capital is what you're calling it here. I like, when I'm thinking about trading an IRA account, which is very similar to a cash secured account or anything else like that, I like to try to mimic what the buying power would be in a margin account. So if a buying power in a margin account on that naked put would be $5,000, I like to put on a spread in my IRA account that uses around $5,000 to $7,000 and mimics a naked put in a margin account. So I'm on the same page with you here, and I'm glad you're kind of noticing it.
Is selling cash securities ever a worthwhile strategy? An IRA account with no margin? Sure.
I mean, you get 1% a month pretty much. I mean, I'm just ballparking.
Sure.
Right?
Yeah. I mean, sure. I mean, of course. How would we ever say anything but that? Of course. It seems that the premium received isn't enough. Well, the premium received is what it is. If volatility is high, the premium is going to be higher. If volatility is low, the premium is going to be lower. But when you say not enough to cover the risk reward, it reduces the risk reward. It lowers your risk and it improves your reward. I don't accept that as a
the trade itself versus stock is what you're asking. Right?
I understand that.
Yeah, but they're
saying
that.
If you're worried about limiting your upside,
if I'm going to use $30,000 to sell a $2.50 put, is that a good risk reward? Or I'll do it this way: $3 to sell, and I'm going to use $30,000 worth of buying power. So I can make that 1%. That's all I'm trying to do. Is that good, or would it be better to use $1,500 or $2,000 and only get $250? I mean, I don't know. That's you guys.
I don't know, but your return is always in line with your risk. And so for me, any strategy that has a high probability of success, which this does, I'm okay with. And if it's only 1% a month, but that's assuming the principal doesn't move. The principal moves, you make more. So yeah, sure, I'm fine with this. 100%.
I don't think you answered the question, but you know what? It's the last question. You're probably tired. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What we got come out next? Trades from the research team. Sound off. We'll be back in 90 seconds. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day in my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for the research team. Before we do, E-mini S&P's down 19. Bonds, 112.14, Sadnov. You had them 10 ticks lower. You got paper hands. You had to cover them. It took you
I had too many. I thought I was going to get them cheaper. I know. I'm pissed at myself. I'm mad. Okay, you don't have to rub it in. Let's not
what
make
I do here, haven't you?
Let's not make it one of those days, because
what do we got coming up first?
I'm going to have way bigger problems today than bonds.
Oh, that music can mean only one thing. It's that sharp dressed man. Yeah. How are you, my friend? You are always good. Always happy, Sosnoff. You could take a little lesson from him. Like you were just moaning and groaning about your bond position, which you want bonds to go higher, by the way. So to sacrifice
I'm a
the
happy
scratch
idiot.
would be.
I'm a happy idiot.
You are.
Happy.
I'm just an idiot. You told me that yesterday. Right. You're a happy idiot. That is correct. Dad is always happy.
Yeah, always happy.
Yeah.
Yeah. I think you are. You're generally a happy person.
Yeah.
I think most people here. Hill's always pretty happy.
The other people aren't in the room yet because they're not on camera. So
Hi.
They don't.
Well, Dada's a little tight. He's not.
Dad could be a little with the Dad is like weather in Chicago.
Yeah.
You know, subject to change.
Yeah,
Subject to change. Yeah.
Yeah. I mean, Julia, she's always happy. I think it's just Dada.
Yeah.
And
we'll have to have him killed.
And I'm starting teaching Sahil how to spend his time.
What do you got for us today?
So I got Adobe.
Adobe. What, do they have earnings coming up or something?
Yeah, but it's like in 20 days from now, I guess.
Adobe, Sosnoff. How are your positions?
I suck at Photoshop.
Adobe, $399. Hasn't had an uptick in quite some time, although it has.
Adobe? I thought this stock was like $600.
No, it's.
Oh, what do you mean? It hasn't had a downtick in like.
Well, it had. I said since April, it's had an up. It's been moving.
IV rank of 70.
70. Yeah.
Like you said, this was a $600 stock, or even.
And it's not an expensive
year,
stock.
It was a $500 stock.
Yeah, and it's not expensive. It's 400. So.
Iron Condor, you can handle this, Sosnoff.
What are you doing? Which strikes?
So, 360, 350.
That would be $10 wide, Sosnoff.
Yeah, $10.
What about the call strikes?
445, 455. It'll be the skew, I guess.
Now, the markets are a little bit wide in Adobe. Mid price might be a little subject to change.
I got 333. What do you have up there? 319. Okay, you're probably closer.
Mm-hmm.
I'll put it a little above the market, and then we'll
adjust.
We will adjust, sir. Thank you so much.
Okay.
Adobe.
Yeah, Adobe.
We have no position.
So you're going to put it in a little bit higher, even than the price that's on the screen, maybe even higher than the mid price. And
my mid price came up at 333. His came up at 318.
18, yeah.
Yeah. So I don't know what's right. So I put it in at 345. And we'll see what happens.
And then you walk it down.
Right? Yeah. I'll walk it down after the opening.
Good. Good. That sounds good. Yeah.
Beautiful. Who is our next researcher? That's right, Jaws. Sahil, don't go to Australia right now as a shark. There's some algae there that's killing a lot of the sharks in the area and actually squid and some other things. So don't
I'll
go
keep
there.
that in mind, Tony.
Keep that in mind. Keep that in mind. What do you got for us? It's just some algae. It happens. It's nature.
Kid just got back from India. You think he's going to Australia? Like, I mean, that's
India with his dad, right? Didn't you go with your dad?
Yeah, India with my dad. Yeah.
And you go straight to heaven for doing that, right? Yeah.
My mom's sister, so my aunt lives there in Australia. Yeah.
So you go from India to Australia is not too bad.
So yeah. So sometimes we have visited, but like not in a while. So we should go back, but
far.
Yeah. Because there's no direct flights. You have to stop in California or something, and then.
You have to fly from L.A. or San Francisco.
Yeah. Mm-hmm.
Yeah. If depending where you're going, at Melbourne or Sydney. If you're going to Perth, just forget it. If you're going to Perth. Anybody that goes to Perth from Chicago, just stay there for a year.
Yeah. It's like literally the opposite side, almost, from us, right?
Well, when you fly to Australia, then you got, what is it, another 8 hours to Perth or something?
Yeah.
You're asking me? I don't even get to go to Atlanta. Hey, I am getting to go to Atlanta. Taking me out.
Yes, if you haven't signed up yet for Atlanta, by the way, please do. It's almost sold out. So
awesome city. If you're not driving.
Yeah, you went to school there.
If you're not driving.
Should we do a pilgrimage and visit the old stomping ground?
Yeah.
I've never been to Emory.
Never? Well, yeah, Georgia Tech or University of Georgia are bigger schools.
I've seen Georgia Tech, Georgia State.
Yeah.
Georgia Tech, Georgia State. Never been to Emory, but I saw the other school that we went to last year. I told you about it, remember? The small liberal arts school that we gave a speech at in Georgia, in Atlanta.
Okay, there's a lot of small liberal arts.
Oh, really?
Schools, so yeah.
This was
absolutely be able to read minds.
Emory is also classified as a small liberal arts school. So
Emory was much bigger. This is a really beautiful school.
Okay, so it's like 2,000 kids or 1,000 kids or something.
Yeah, but oh my God, I can't believe I can't think of the name right off the top of my head. I will think of it.
It happens with age.
No.
This is why older people are not happy. They're losing their memory.
What else you got?
Good job. Good job.
No.
Like voices
Oglethorpe.
from above.
You all right?
Oglethorpe.
Okay. I do remember you told me about that. Yeah.
Oglethorpe.
Okay. I've heard
really
of it.
Beautiful school in like in Atlanta suburb. It was great. We had a really good time. Amazing business team. It's great.
You can check out Emory not just for me, but for Jai-Jun as well. I'm sure he can tell you all the stories about the PhD life over there. So,
yes.
Yeah.
All right. What do we got?
Reddit. Something is.
What are you doing in Reddit?
Iron Condor too in Reddit.
Tom will probably do a strangle in this because it's 2,500 or 3,000 buying power for a strangle, so it's a little bit too much for me. But I think Tom will be fine with that. I think it's $2 or $2.50 down pre-market right now. I didn't adjust it yet. For this trade.
Reddit's had just a wild, an absolutely wild run. Which strikes you doing?
$12.
105.95 on the puts and 150.
You're doing 105.95.
Yeah, and 150, 160 on the calls. But I didn't adjust it for the move this morning, so you might have to adjust it a little bit. I put down $3.18 in credit. That's what it was showing yesterday, so it might be a little high, but.
Yeah, I'm thinking this stock. Yeah, I mean Reddit's a little like Adobe. The markets are like a little bit wide, but do you know that Reddit's been pretty much our biggest winner this year? It's unbelievable.
I wouldn't have thought it, but you know what?
We've done really good in Reddit. That's one of the good ones.
Southern by Taiwanese sources just confirmed it was Oglethorpe.
I said.
I know, but sometimes you just say things to say things because you're stuck in a
beautiful
rabbit hole.
Beautiful school. I don't know anybody that's ever gone there.
Blaine's been there. That's wrote me.
Blaine?
Yeah.
I think he came the night we were there.
That's why he said Oglethorpe.
Yeah.
Man, you are SMRT. Thank you so much there, my friend, for your trade. Who is our next researcher?
Zach Scanner.
Got the best music, but I don't think it's fitting for you. You need a much more calmer kind of thing.
No, I think it's good.
Yeah,
All right.
You like it?
What do you think?
I like it.
Hey,
jazz, piano, classical?
Yeah, something like that. Hey. Kai, what's up, my man?
Bonds up 10.
I know you stink, Sosno.
I'll take it.
I know you will. You're long bond.
What up, Kai?
Not much. All right, so my trade is PLTR, strangle, at the top.
At the top. I've heard that before.
Yeah, because the IVR is still high if you're looking through
Yeah. Don't worry. We're trading it.
Yeah.
We're all over PLT.
Volatility is going to expand when these stocks go up, kind of the opposite of what happens.
Right, for a lot of high flying.
Today, I don't know why I have the feeling that today we might see market down, vol down.
Market is already down.
What strikes you got?
105, 155. So a little bit skewed to the downside. A little bit.
I am currently in the 115, 140.
That's close.
Yes.
Oh, 140. So you have like a 30 delta on the call side.
Oh, yeah.
Okay.
All right, we'll do this. I might change the call strikes because I already have a lot of short delta in there.
Okay.
I might change the call strikes to 160.
60. So it's a very neutral one standard deviation.
Yep. There you go. Ciao for now.
Beautiful.
Beautiful. Well, don't sell past the close, Kai. That was pretty good out of you. The fastest on the team so far. Who's our next researcher? There he is.
Hey, guys.
Happy as can be.
Yeah.
How are you, Dada?
Doing well.
I upset him by saying he wasn't the
I
happiest.
think you did.
Yeah. That kind of hurt me. I just hold myself to a very high standard. That's all.
We are aware.
Yes.
Uh-huh.
So Oglethorpe, the famous alumni,
Shaq's daughter.
Joseph Brown, class of 1872, the governor of Georgia.
There you go.
There you go. I don't even know who you're talking about.
Joseph Brown.
Oh,
the governor of
Joseph
Georgia.
Brown. Joseph McKay Brown.
What'd he do?
He was the governor of Georgia.
All I know is when I got there, they told me that's where Shaq's daughter went. Like, okay.
Well, she wasn't on the alumni list from Wikipedia.
Right.
So that's what
It's a really beautiful school. That's all I say.
So today I got silver. I got a mullet trade. Short the front, long the back on this one here. So
is that your new trade, the mullet trade?
Yeah. That's what we used to call it.
Okay.
The mullet trade. It's a poor man's covered call is what this would be.
Okay.
This is long the one in the back, which is 92 days away, August 15th, 28 and a half. Now, and then short the front, which is 36 days away. I'm selling this one for 90 cents, so doing it for about $1.05 debit. That's what it's going to require. So the reason why I was doing this is that yesterday, and one is IV rank is really quite low, and the back month does not have a lot of extrinsic value in it. And yesterday it was actually quite a bit lower. In the past few days, the back months were actually lower in implied volatility than the front. So kind of an interesting reason for doing a poor man's covered call.
I don't hate it, except I'm already long too much silver.
Oh yeah, okay.
We're short
I have no
gold.
positions in it.
I'm short gold, long silver.
Okay.
And so far, no bueno.
Okay. Yeah.
So,
I think /SI is a big product, and silver SLV, the ETF, is a little bit smaller.
No, I understand that. I'm just saying that I'm already.
SIL is the
I know,
smaller
but
futures
before
product.
the middle of my sentence got in the beginning of your sentence, I was going to say, and probably more suitable for the retail investor.
Mm-hmm. SI is
Tough crowd here, man. Tough crowd. Okay. Are we done with Mr. Happy?
I'm done.
Always happy. Always.
Beautiful. Who is our next researcher? That black cat herself, Julia. How are you, Julia?
I'm purring away. How are you guys?
I'm with Tom.
I'm sorry. I'm sorry to both of you guys.
What up?
It is.
What up?
Oh, surviving. How are you? Got my coffee. Got my cat is actually freaking out in the other room, so you might hear her.
No, we're good. We're all good so far this morning. No, I'm good for about 11 more minutes until the market opens. Then I got some problems.
Yeah, it's a Diet Coke kind of day, huh?
Right now, I'm avoiding all my issues.
Denial.
Yeah.
I'm in pure denial.
Pure denial.
So I don't have to
Hey,
see.
denial can get you very far.
Oh my God, you kidding me? We've lived by that. I mean, I have two wives that way. For
I'm the king of
Number
denial.
one philosophy, yeah.
Yeah.
Yeah. So what you got
King
for
of
us
denial.
today?
Well, one is silver and the other is gold, and gold is really moving. So these strikes need to be adjusted a little bit by like $1 or $2 is maybe how I'd move them right now. But I'm going with gold. Yeah. IV rank 42. Now it actually jumped to 48.9. I'm seeing on my platform. So yeah, nice high IV rank. It's up a bit this morning. And yeah, I wanted to do a condor because it is actually within a range right now, even though it's having a nice green day before the open. So these strikes are the 279, 312 short strikes, went $10 wide on these. But I'd probably move these up about $2 to adjust for the move because it's kind of been, drifting up all morning.
I have too many short strangles on already in gold. I'm short strangles in GLD. I'm short strangles in GC. I'm short gold up the wazoo. Whatever. I don't think that's
a single
eligible.
wing.
I don't know that's an eligible word on Wordle, but wazoo. Don't you think it's cool that the Pope plays Wordle every day with his brother?
Sure, a little friendly competition. Sure,
I know, but I kind of like.
Yes,
I highly
wazoo
recommend
is a slang
adding a
word in American
tradle to the
English.
rotation.
You want to add
If you've
what?
never done a tradle before, OEC has a tradle that you can do. You get the export distribution of a country, and you have to guess which country it is. So adding that to your Wordle connections tradle rotation,
Tradle,
very fun.
That does not sound like fun to me.
I don't know. I think it's up your alley. I think it's pretty fun.
Oh, I thought you were going to say something else there for a minute. I thought Julia went wrong. Alley, up your alley. Shut the front door. I thought you were going to say something different.
There's nothing wrong with up your alley.
No, nothing wrong with wazoo.
I see Julia as a alley shopper. Do you remember the store, The Alley?
I do remember the store, The
Is it
Alley. I got some of my
closed?
first earrings there. And
Oh,
also, you can put
oh, it's
wazoo
closed.
into tradle. I just checked it.
What?
You can put wazoo into tradle.
Into Tradle. Huh.
Sorry, Wordle, yeah.
The alley's still...
Is it still open?
I think it relocated.
Yeah, it's still
relocated.
open. It opens at 12 this afternoon.
Let's
Sign
go.
off.
Let's go.
You guys are going to get some, like leather
Still
spikes.
get
you're gonna
killer
get some
deals.
piercings,
That's right.
There you go.
leather boots.
Hmm?
Great earring selection. Highly recommend for people with as many piercings or gauges. Definitely that crowd.
All right. Thank you. I already have enough strangles on in there, so I'm going to pass on the GLD Iron Condor just because I have GLD strangles and I don't need any more. It's been a thorn in my side.
And
Not a
there,
single
unlike
wing.
silver, I think /GC is a viable tradable product for retail investors.
It's better than GLD.
Yeah, I agree with you.
Yeah.
On a day like today, yeah.
It's better.
Like those gold
It's
futures.
better than, but neither have been good to the good kids. So we'll see what happens. All right. Thanks, Julia.
That's all I got. Thanks, guys.
Thanks, Julia. Appreciate all your time. And you know what? It's time to take a quick 90-second break because we've got the opening bell next. You have something you want to say, son? If you're leaning forward like you want to look at the screens, you sure? We'll be back in 90 seconds. This is Tasty Live. Opening bell next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
How many positions do you currently have open? How many positions do you have open currently? How many positions do you currently have? How many positions do you have open right now in total? How many positions do you currently have?
And I've got to say, I'm
gonna say probably.
probably around like 30 to 40 positions. I've got a lot of positions, a lot of put spreads, a lot of iron condors, some naked puts, some futures. I got a little bit of everything on right now, but when volatility pops like this, I'm looking for new opportunities. So I took advantage of that over the last couple weeks here.
20. 4. Yeah, I think 4.
Maybe 10, maybe like 10 or 11, something like that, yeah.
Off the top of my head, maybe about 15 to 20 positions right now. Most of them are short put spreads. Quite a few positions, and I'm just trying to take advantage of all these different moves and these big ranges we're getting in the markets.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Veneto was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. And you know what that means? Time for a little more Tasty Live at the opening bell. Even the S&P is down $20.25. NASDAQ down 99. NASDAQ the leader in the clubhouse to the downside with the Dow down 191. But really pretty much an unchanged market. I say unchanged market because the expected move for the even the S&Ps over the day today is around 54. We're just inside that, right in the middle of its range. Volatility up by 15 cents, 19.95. It is off of its highs by about 15 or 20 cents. Bonds up 8, 112.20 after trading under 112. Surprisingly, under 112 this morning, back over 112.20. Bitcoin down $650. Was around a 104 or so the last few days. It's now under 103, just under 103. Let's call it mid-range for its most recent tight move over the last week or so. Oil down $1.51 after catching a bid the last week or so, has sold off the last 2 or 3 days, down $1.51. That's a big move, 2.5%, just under.
Yeah, but it just rallied back about. Wasn't it down like 250 earlier?
It was flirting with 60. It's 61.16. Yeah. So yes, it has rallied back a little bit. Volatility, IV ranking there, 49, still elevated, still good. Gold up $9.40, also was lower by about 60 or 70 bucks this morning. You can see right here as it made that big move lower this morning. Silver.
I had a bad feeling about gold today. That's why I bought some in, but I didn't buy enough.
No, that's always the case. I mean, you're looking to reduce delta by half.
I know.
When it goes the other direction, you want more. And it doesn't.
I know.
Sad enough. You remember this 1972 movie, Walking Tall?
Yeah, sure.
Joe Don Baker passed, 89 years old, a man who was walking tall. Bill Caddy favorite.
Good
Walk
movie.
softly and carry a big stick, son. He told me that.
Good movie.
It was in 1972. It was the movie. Yeah, for sure. Walk softly and carry.
Good movie. Yeah. They were. That was a pretty violent movie.
It was based on a true story. In Tennessee, some sheriff or something like that. Anyway, yep.
Hillbilly sheriff, Tennessee.
Yes.
Don't at me. I'll be in Tennessee next week.
Hey, there you go. Good job. That's right. You will be in Tennessee next week. Driving there, you're going to get your Bucky swim shorts, right? Because you're going to wear them in London.
Getting everything at Bucky's. I'm pack up the whole.
I have Bucky's pajamas. I should tweet that out.
Packing up the whole freaking car. Bucky's everything.
You're going to get a breakfast. I think that, do they make the breakfast burrito 24 hours? I don't know, but I'm sure somebody will write in and let me know.
I don't really want the burrito. I want the brisket sandwich.
Yeah, but that's what they make. They put the brisket.
Yeah, I know. I understand how the game's played. It's the same damn brisket.
Really?
Yeah, I got how the things works.
Uh-huh.
Yeah, I can figure it out. Don't you worry.
You're going to enjoy it.
I will, but I'm going to be with the wrong person to enjoy it with.
She's no longer a carnivore. She used to be a carnivore.
No, she's not a carnivore. She doesn't eat meat. No. So she's going to ruin everything. Yeah. Listen. I'm fully aware.
Poor thing.
I know.
Yeah, you'll have fun. Sadnov, low D over there out of you. You have low D. I mean, that's low ding. That's right. Oh, there's your gold spread. You just got filled on something you rolled up in gold. Some putties?
What?
What?
What? Oh, yeah, I just rolled up some puts.
Yeah, it's right there. It's mid-price. Mid-price. $4.50, $5.50.
Yeah, no.
$5.
Anyway, looking at my plays, earnings plays, Bobalicious not open yet. Or
Baba is open. It's down $8. What Tom is trying to say is the options are not open yet, and you can see that by knowing that the options are all white. Baba is open, though, but the options are still closed. Sadnov, it's only 44 seconds into the day. Give them a break.
There we go. Spin it out of the turn. Now we got some options open.
That's right, Sadnov. You can see that the options are now green and red, signifying that they are open and trading. Markets are about 45 cents wide.
Let's see.
On those Baba options. Walmart was the other one for earnings, Sadnov. WMT down $3.27.
What do you think the expected move was in Baba?
Baba is probably, I think this is $9, I would say, is outside the expected move. It seemed like everything was around 5% or so, 5-6%.
Yeah, I think you're right.
Just given that, it's right.
It looks
there,
like
6.5%.
It looks like the strangle in Baba is basically unchanged.
Oh, there you go, Sadnov.
It is
wins again.
It is a non-freaking event. Strangle's up a little bit. Naked puts are down a little bit. I don't know. What do you think about Baba here? Hang in there, or
you love trading Baba. It's not my thing. It's in the middle of its range here. IV rank of 43 is pretty good. That's going to contract after earnings. I would give it a little time before I place the trade in there, maybe a half an hour or so. See what IV rank does.
Okay, it's fair. I'm gonna put my orders in to.
Speaking of volatility, IV rank, it's only up 7 cents now. Cancel crash. I don't know.
Well, the problem children just opened, and that would be UNH.
I was hoping to avoid that conversation with you. Down 37, 270. It was 290, 280.
293 this morning.
Pre-market. It's exactly what I was going to say.
268 is a lot worse than I thought it was going to be. I mean, literally, when it was trading this morning, I was thinking, should I just buy it here at 280? I mean, I did not think we would see
down another $40. Yeah, this is a debacle.
266 is a legit debacle. I'm short 260 puts. I'm short the 280, 290 call spread, and I'm short some 320 and 330 puts.
Yeah, IV rank 104 means it's even higher volatility than yesterday because remember, the IV rank has fences on it at the end of the day. So let's just say, for argument's sake, that UNH's monthly implied volatility, white guess when I can tell you, is 56 right now. It was lower than that yesterday because the IV rank is 106 today. So those fences will be taken away intraday. Volatility IV rank can go over 100.
I am not sure what to do with this market today. And
markets are about $1 or $2 wide in UNH too. Not really.
Well, use limit orders, please.
Sorry?
Use limit orders.
Yes. Yeah, use limit orders. Good call there, Saz.
It's a pretty good size.
I think you would be the voice of reason. That's pretty good.
Pretty good size debacle in there. Okay, let's see what else we got going on. What else had earnings? Walmart. Sprawl Mart, down $4. I thought it was unchanged.
It was. You didn't act fast enough against us. Snooze, you lose. UNH, the big move of the downside, down 41. Dick's down 23 on its takeover of Foot Locker. Let's see what Foot Locker is doing. I won't make the list here of high option volumes, but up $10.70. That's an 83% chance. 83% change, Sadnov. Coin down $11. I think there was some hacking going on in Coin. I guess some employees or something of Coin.
I thought it got so out of control yesterday afternoon.
To the upside?
Yeah.
It's still, it's down $11. Remember, 2 days ago or 48 hours ago it was $2.10. It's $2.52 right now. Let's see what else is moving to the downside. CRWD down $9. You already mentioned Baba down 8.5. Tesla down $6. That's caught a bid the last couple of days, selling off a little bit. Reddit down $4, Walmart down $4, Amazon down $4. Some of the Chinese stocks you already mentioned, BABA PDD down $3.60, Meta down $3, Baidu down $2.70. Let's see what's helping this market sound off. Lilly up $8 and change, Netflix up $5, Boeing up $3 and change, JP Morgan, the evil empire, up $1.90, Palo Alto Network up $1. Sound off, another kind of funky day. We have a little bit of, well, Russell just turned green for a second, but you got a little bit of weakness across the market, yet it seems like the downside is really, stocks moving a lot bigger to the downside than the upside. Apple, I think, is down about 80 cents too, at least it was a minute ago, down 71.
Very, very strange day. And not a good day for the good kids, because I got a
volatility upticking again.
I got a little too long
in UNH.
I mean, that would be an understatement. A little too long in UNH.
I mean, anything is going to be too long. Stock that's down $40 on top of a $40 move, on top of a $100 move, on top of a $200 move prior to that.
Yeah, agreed. Taking a look at just the trades from the research team, we're very close in PLTR.
We're on the April 15th, UNH, $580. May 15th, $265, and no floor in sight.
Probably a little oversold, as they say.
I would have said that yesterday too. I mean, I'm not going to be that trader that sees a stock down.
We just
like
got
you,
filled.
Sees a stock down 15%, now says it's.
We just got filled in Reddit.
Oversold. You did $3.26.
And I think we're about to get filled.
What'd you do in Walmart? You bought back your.
Covered the strangle. It was a non-event.
What'd you do in Tesla? Buy back your short stock?
I went home short some stock in Tesla.
And in Nvidia?
Went home some short some stock. Just covered it.
And what
small
are you doing in
gains.
UNH? That's an opening position.
Yeah, I bought some stock.
Supporting the good team.
I bought some stock at 65 and change. Stock's down 45. At this point, where's it going to go? Down 55? I don't know. Down 85?
It kind of looks that way. Yeah.
I mean, it looks like crap.
Yeah.
I mean, it's weird. All night it was trading. I was watching it, and all night it was trading like, 293, 292. And then I don't know where the sellers came in this morning, but they came out of the woodwork.
They did, and they came out with a vengeance too.
Yeah. No, I thought I would buy a little stock this morning, hoping to get like maybe a, five handle rally. Did not happen.
UNH trading near its lows, down 49.
Yeah. No, it's ugly. So I've got to roll calls down in there, and I don't even know where you start.
Sad. But I have a similar position, man.
I sold some 260 puts yesterday for $455, thinking I was a genius. They're $24 right now.
It's going to be buy the gut, sell the wings, or buy the gut, sell a at the money put, or something like that. I mean, I have long delta in there too.
Yeah, I mean, I'm not adjusting yet, but at this point,
so the 200 puts are trading for $475.
I know. Well, at this point, doesn't, of course. Calls are still really expensive too, of course.
Of course.
I mean, I'm going to hate myself in the morning for selling 290s, but I think we're going to have to. But stock's 256 right now. It's going to be a bad day.
I reduced my delta in half yesterday. Took off a 1x2 put ratio spread. I made it a more neutral trade, an at the money or just in the money, small long delta strangle. Reduced my delta from.
I was having a nothing day in there, and then Nikki came in here to do the show, and then he talked.
So you're blaming a Batista again?
100%.
No, at least you have somebody.
You always said, "Hey, can you remind me when I actually make a bad trade?"
We're going to take a quick 90-second break and come back. Sad enough. What do we come back with? Immediately following these messages? That's right. Hear me out. You thought your day wasn't getting any better. It's getting better. Sad enough. Victor Jones next. Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you. because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Sosnoff, that sweet music can mean only one thing. It's that silky voice, Victor Jones. And hear me out, Victor. What's up, my friend?
Oh, yeah. Tom, Tony, Tasty Nation. How you doing? Ear-to-ear smile for my man, Tom Sosnoff, which means he's super happy to hear from me this morning, and that gives me an ear-to-ear smile. Tom, how you doing? Tony, how are you?
I've never been better, except I have a couple of bad positions.
Hey, same for me. Same for me. Things are going terrific, aren't they, Tom? Little inside joke. Thomas, I'm curious. I know I haven't. I don't know for certain, but UNH is trading at 260 right now.
Yeah.
What are you doing with it? You wearing a bunch now already?
The only trade I've made there today is I bought some stock at 265, and I'm choking on it at the moment. But I sold way too many puts in there yesterday, so I'm not having a good day. I mean, the IV rank. The IV rank was over 100. It was the only thing that was rich as hell. I think it's a piece of shit. I don't like the company to start with, but what are you going to do?
Price is all.
It was price. It was all price.
That's irrelevant.
It was all price.
I looked at it yesterday. I looked at it yesterday after the close, and I go, "What? The 250 puts are $3. I don't even care why this. I
did the exact same thing. I'm in. I did the exact same thing, except I sold the 260 puts for $455. So right on the close. I literally on the freaking bell.
I didn't look at them until after close, so now I bought them in extended hours. You got FOMO if you're buying stock in the pre-market, thinking I got to get in.
For sure.
Oh no! I was thinking this morning, as Tony and I were talking this morning on air. I was sitting here thinking to myself, you know what? This is so stupid. I'm not buying stock at 285 because I thought at 285 because all night it was trading, kept going back up to 292. So I thought there was 5 points in there, but I didn't do it.
I can't figure out whether I'm an American hero for buying United Health right now or whether I'm part of the problem.
Part of the problem. I'm there too.
That's a good question. I have no idea either.
Huh? What do you think, man? Are we doing the world a service by providing liquidity and normalizing market function, or are we
don't
on
confuse
Luigi's hit list?
Don't confuse your role in life, okay? You are not a giver because you're adding liquidity to the you're not doing God's work right now, okay?
Oh, you're the little piece of rationalization for what I do. You've just taken away from me, man. Don't do that.
Yes.
Give me a little bit of something.
Adding liquidity to UNH is not God's work. Yeah.
You're
better than that,
unfortunately. All right, gentlemen, I want to talk about the story no one wants to talk about. I want to talk about the story of the retail trader, the story that media will not tell. I don't know, that seems like a cliche argument at this point, a cliche line, but April 4th, I'm going to read you a quote off of Twitter. Retail investors bought $4.7 billion of stock yesterday, the largest level over the past decade. That comes from JP Morgan. Bloomberg wrote an article, I think it was 2 days ago, about retail buying the dip. So at the time, in early April, all you saw was these articles about retail buying the dip. You saw articles about retail buying triple leveraged ETFs and piling into these things. And the framing was how stupid the retail trader was, how bad this was going to work out for the retail trader. Here we are, 1,000 points later. I want to read a little excerpt from a Bloomberg article real quickly. And then I want to just get your thoughts about how this happened. Retail investors have won again when trade tensions flared in early April and about $6.6 trillion in market value vanished from U.S. stocks in just 2 business days, the 5th worst 2-day drop since the S&P's 500's creation in 1957. They didn't panic. Instead, they did what they've learned to do over the last 15 years. They bought the dip. 6 weeks later, the U.S. stock benchmark has not only recovered, but surpassed its pre-tariff levels. Tom, I know this game never ends, right? So we could be in 30 days, 60 days, 90 days talking about a very different story. I'm just curious, how do you think about the way that retail responded through a 30-day period of volatility? And how would you frame it up if you had the opportunity to talk about what retail did, how they responded through this 30-day period relative to how institutions performed? They were the sellers in this period. They were, unfortunately, the losers, and retail were the gainers in this situation.
Well, I don't think this is something that's necessarily new. I think it's been this way for this entire, for the last couple of decades. I mean, we've argued since after the down move in 2000, 2001, 2002, that retail has been, everybody in retail is, by kind of human nature, suggests you're a contrarian. And I think that I don't think retail was ever behind the 8 ball. I think the technology was. And so it wasn't until the really the growth of online trading that retail was able to, you got to remember, there is no such thing as retail when you have to call your broker and have them do whatever it is you want to do, or you have to let somebody else manage your money because you can't afford to do whatever it is you want to do because the rates are so crazy. So there was no such thing as retail. I mean, to be fair, it was like Daytech and TD Ameritrade kind of, changed the landscape back in the late 90s. And then firms like, Thinkorswim and Options Express and other firms took the interactive brokers, kind of took that kind of momentum and turned it into something, I think, very special. But it gave individual investors an opportunity to do whatever it is that they wanted to do, which is something that didn't exist before that. And ever since then, I think retail investors have been out in front. I don't think this is something new. I think they bought the dip in 2008, just didn't turn around fast enough. They bought the dip in 2015, 18, and 2020. I mean, they're contrarians. They buy dips. I don't think this is new, Vic. I think this is what you're going to see forever. That's why, people.
So they're always net buyers, but that's just the nature of the beast.
Yeah, but that's why
a gold fund has to buy gold.
For the last 15 years, every single sell-off in the market has been met with buying. Every single sell-off for 15 years. What do you think that is?
Mm-hmm.
That's basically retail stepping up. And that's been global. That's not just in the US. That's because people have access. People are natural buyers. You want a long bias naturally. And you're smart enough to buy things that are, that you perceive to be cheaper. So I think that those articles are a little out of context, because I think this has been the trend for 2 straight decades. And we've argued on this show that institutions have been the dummies. We've done research on it to prove it since we started the show in 2011. And I think there's a lot of research to back it up. And listen, they're just chasing the trends. It's always been that. It's always been the way they trade. I love when people say, you know what, you're so disadvantaged to the professionals. Are you really? Not a chance.
That retail is disadvantaged.
Yeah, you're not disadvantaged. They're disadvantaged because they have to always just chase. They have to chase benchmarks, and you don't.
Totally agree. There's somebody tapping you on your shoulder when vol's blowing up, when bonds are spiking to 5%, going, hey, you're out of your risk limits. You need to puke your position. Whereas the retail trader can sit back and go, I think he's bluffing.
Yeah,
I'm going to buy him.
Right.
You used to say that my generation, we weren't risk takers. You said that
no, your generation,
we are, but we're not really risk takers. We're risk averse. I'm curious.
Yeah.
Do you still think that?
It's worse than just your generation. It's like it's your generation, it's the generation after you, and it's the generation after them. Yeah, I think that is the case. We've been
How
watching.
can you say that? How can you say that when you just said retail traders are the ones buying the dip? They're not afraid. It's institutions puking, retailers stepping up. So you think it's only the boomer pajama traders that are buying the dip? It's no one in my generation. It's not the Zoomers.
No, your generation's cowering in the corner, peeing on themselves. It's my generation that's buying stocks.
Are you kidding? Are you kidding, bro? No. You were pulling out your hair 4 weeks ago.
No, not at all.
It was the end.
Not
it was
at all.
The end.
It's your
generation. The end of democracy for you.
The only dips your generation buys is dips in Bitcoin. That's all they buy. Okay, they don't buy dips.
The most volatile asset of all time. Yeah, you're right. That's what my generation does.
The only dips they buy is Bitcoin and ETH. That's it. And then generation after you, same thing. No, it's a gutless.
With all due respect,
it's a gutless.
With all due respect, you're out of your mind.
It's
my generation.
It's a gutless generation.
My generation.
It's a disappointing / gutless generation.
No, man. We've been through the Patriot Act. They make us take off our shoes at the airport. Meanwhile, the NSA used the Patriot Act to get into our phones and read our emails and read our text messages.
Oh my God! Don't go paranoia on me. Hold on. Don't go full 100% paranoia.
Bro, the great financial crisis, a 1 in 100-year pandemic. Our government locked us in our homes 2 weeks to slow the spread. We didn't come out for like a year. The yen carry trade, the tariffs are going to create a 1930s depression. My generation, they tried to scare my generation for the last 20 years.
And you guys were so smart, all you could do is buy GameStop. I got it. Your solution was to buy GameStop and BlackBerry. What was the third stock? What was
You
the
are
other?
savage.
What was the other one?
Yeah,
Other than
hey, maybe we should have done what your
AMC.
generation
AMC.
did. Just sit
Oh, yeah,
on a
yeah,
bunch
your
of
genius-
Oh my God, I
stocks
can't believe
and
I can
get
read your
murdered
mind.
by
Your
United
genius
Healthcare.
generation bought AMC and GameStop. That was your big answer to the question. Come on, man.
You know what? Hey, innovation, necessity is the mother of invention. You guys bought all the properties, okay? You have
All
you
of
have
it,
90%
all of
of you have 90% of the equity wealth, okay?
Yes.
So you know what we did? We found a way to make some money. Necessity is the mother of invention.
Yes,
If that
yes,
means
you
going
did.
to GameStop and creating meme stocks,
Yeah,
we
yeah,
did
yeah.
it.
That's
if it
what
means
you did.
creating new
You
money,
created- you
new
created-
money. Bitcoin, we
you
did it.
created
And we
meme
found a way to
coins.
monetize it while you guys sat on all the actual assets in the world.
Yeah, you created meme stocks and meme coins to generate your own cash, so you can create a Ponzi scheme and then eat your own children.
This
That's
is my
essentially
problem
what
with
you
you.
did.
Bro, what isn't a Ponzi scheme? The whole monetary system is a giant Ponzi scheme. Real estate is a Ponzi scheme. The fact that you're calling Bitcoin a Ponzi scheme
I didn't call
is
it
the pot
Bitcoin.
calling the kettle
Hey,
black.
stop. I didn't call Bitcoin a Ponzi scheme. I called your meme stock revolution and your memes and your meme coins as a Ponzi scheme. Yes.
Okay, so just to be clear,
Yeah.
you are saying that my generation is a riskless and gutless generation. That's what you're calling us?
Yes. Your generation, and I'm not saying.
Well, we own the reservoir, so
I mean, you're just disappointing. You know, like we expected
God, you're
more.
bad, Thomas.
You expected more.
Yeah, I expected.
Bro, I listen. What are you saying? At least we can turn
You're
on
gonna
the
make
news.
Nick
At least
Batista run in here any minute, okay? This is just to support.
We're talking the same generation, right? That's it. No, I'm just saying in general.
At least we can turn on the news. At least we can turn on the news and go, Jake Tapper's lying his ass off, and turn it off, and go look for something that actually helps us to understand what's happening in the world. You'll sit there and go, I'm glad I'm informed. Terrific program, Jake Tapper. Turn it off and go parrot all the propaganda you just watched for the last 60 minutes.
You know, I have so much to say about that, but I don't want to let this degrade into something that, you know, I'm going to feel bad about. But don't get me started in that direction. But I'm going to take the high road, because that's what we do in our generation. We take the high road.
Oh yeah, when they go low, you go high.
That's
Thomas
right.
Sosnoff, the guy who takes the high road in all the debates. Let me say
exactly
this
right.
to all the millennials out there.
I love
They
millennials.
took your houses.
I love millennials.
Let me say this. They took your houses. They stole all your tax money. They stole your kids' tax money. They stole your grandchildren's tax money, and it's hiding in their bank accounts. And they don't care. They're looking at you and they're telling you to work harder. Hold on, I'm not done. They're looking at you and they're saying you need to work harder. You are going to compete against super intelligence AI, something they didn't have to worry about at all. You know, they competed in a world where they didn't even have to compete against Excel spreadsheets. You're competing against superhuman intelligence right now. You went through a pandemic. You went through a great financial crisis. You went through 1 in 100 years, like crazy outlier events, and you're still here. And you deserve a round of applause.
You know, your
And you don't get fearful.
AI is our computers. Remember, your AI was our microwave, for crying out loud. I mean, your AI is no different than any other thing that everybody
funny
else.
about your whole little.
You guys serious?
You know,
you
what's
are comparing competing against superhuman intelligence to a microwave.
computer.
Are you serious?
A computer. You compete against a computer. Remember, there was no computer. You can't even comprehend the idea that there was no computer. Computers make AI. It's just another form of the same thing. You'll overcome. Believe me. Everything is an opportunity.
You know what I love about your generation? There's a couple
What do
things.
you love, Tom?
What I love about your generation is, like, for a long time, the biggest challenge was just figuring out how to get you guys up before 8 o'clock. Like, to me, and now you're talking about, oh my God, you know, I mean, just to compare it, it's not, listen, I've been trying to motivate millennials and Gen Zers and Gen Xers and who's the new one, Gen Ns, whatever they are. I've been trying to motivate this and to take risks, to do things. And I'm actually happy that there was a meme stock, that there was a meme stock. I'm happy that there was, to a certain extent, there was, digital assets and stuff that could fully engage some of you, because most of your generation, spends, the closest thing you got to technology was video games. I mean, it wasn't embraced.
What are
it was
you
just
saying? We are slanging zero DTEs to pay the rent. If there was ever a generation that was risk tolerant, it is my generation. What are you talking about?
We watch all the numbers.
You had to search far and wide. And when you were my age, you had to search far and wide to talk to anybody who traded an option. In my world, everybody I know is speculating on the UFC fight this weekend. They're betting on the football game over the weekend. They are betting on zero DTEs.
Hey,
You're crazy, man. We're betting on everything.
I love this because when I was your age, I didn't have to go very far. I just had to tap Tony on my shoulder. And then I didn't have to go very far at all because only people I knew were traders. And if it wasn't for us, we built all the technology that you use.
That's going to kill you with AI.
We
That's
built
right.
all the technology today and created the products that you're talking about. Zero DTs don't exist if it's not for us. Trading, being able to trade any product doesn't exist if it's not for us. Sports betting doesn't exist if it's not for us. This is all the stuff we built.
What's the average age of your customer?
Mid-50s. I mean,
And
the
you
average
think
age of our customers' average age is, it's probably weird. We're broke down between, we're about a third between 20 to 35, 35 to 50, and over 50. But the amount of business generated from over 50 is about 80% compared to what you millennials
because you guys
trade.
stole all the assets. You guys
Yeah, I
stole.
know.
You're like,
So-
you ever play checkers with somebody, Tony, that never moves the back row? That's like the boomers in life.
You guys.
Oh my God.
They won't.
Send in the Irish. Arrows cost money.
Hey, listen, you and your, you know what? The way I will define millennials is fractional shares.
Oh my God.
You're fractional
Well,
share. You're the fractional share generation. You're the generation
Here's
that
how I'll define you.
You're the
You know how I
generation
define
that
your
woke up one
generation?
morning and said,
I
"We
don't know
need
why you
fractional
woke
shares."
up and wanted to pick vengeance and
I didn't.
violence.
You started it. I'm
You-
just saying.
You know what you are? You're the private equity robber baron generation. You're the guy who bought all the good businesses with your cheap money because you figured out how the capitalist system works. You bought all of our good businesses. You leased the
What do
real
you mean?
estate back
Stop,
to the
stop,
company.
Stop. What do you mean all your good businesses? Like, what does that mean? Like, what did a millennial ever create?
Society. I'm talking about society.
Society,
as in
okay.
The good people, the good functioning people who want just a productive society and don't just want all the resources for themselves. That's what I mean by our. You were defined as the private equity robber baron generation.
That's not.
That's what I'm
but you know
nicknaming
that's unfair to say to me because I have been only an advocate for the retail investor. That's all I've ever done.
Sure, you can't. You got to give them.
I mean, you could say that to somebody else.
You are, but you can't have it both ways.
I
You
don't
can't
have it both ways.
and
I'm
say
an advocate for
you're
the
an advocate
retail
for the
investor.
retail
That's
trader,
all I
and
ever
then you
do.
Talk to the millennial retail trader.
I
and
love the
you tell me
millennials.
that my generation.
I love the
doesn't
millennials.
take
I just
risks.
wish
You're
they'd
crazy.
step up.
Victor, you could. I mean, I've known you for a long time, and I think you can understand. We just worked harder than you do, so don't hate us for it.
Seriously,
Just
we're
because
not
we
we're
put
not
in the
any
time.
smarter than your generation.
Here's what you guys did. You exported all of our jobs overseas, and you said we're going to move up the value chain. Okay, so then when everyone becomes a
Says
content
the guy
creator,
that
you
moved
look.
to
Hold on,
Singapore.
hold on.
And the guy who moved
You
to
go,
Singapore.
We're going to move. We're going to move
Tom's
up
right.
the value chain, and all you guys are going to do service jobs. You're not going to work in the factories like we did.
A trophy
Now-
husband, for crying out loud,
you
is
look at all
telling
the
us.
people
that.
on
Work in the
TikTok.
factories like we did. Like, what are you?
look at all-
You're living in a freaking dream world.
I worked 5 at night till 6 in the morning pumping gas to realize I didn't want to do that anymore.
Hey, Vic.
Now all your kids are working on TikTok or OnlyFans or both, and now you're like, you guys don't work hard enough. You made this world, bro. You made the incentives. Why are you angry at us?
I'm not angry. I love just the way you guys think.
Listen, I'm going to die. You'll be able to buy my business for some
all
exaggerated
the things,
price. It's all right.
Everything that you don't know about, like what got us here. You don't know that for almost 20 straight years, We went into an exchange and lied on the floor at 4:30 in the morning, just waiting for the doors to open so that we can make markets.
Lied on the floor, sleeping.
Like your generation gets up at 9 o'clock so that you can order Starbucks.
In my day, I walked to school
Delivered to
both
them.
ways,
Delivered.
no shoes
Delivered. You
on,
can't even walk
in
to
the
get Starbucks.
snow.
You
My God, I'm
delivered.
jumping in this.
I've heard that story a million
Listen,
times.
listen,
Give me
listen.
a break.
I feel for you. I know.
You watched numbers go up and down your whole life. Don't act like you've been a carpenter roofing in the hot summers or in the cornfields of Iowa. Okay.
I didn't say I was. I'm just saying. We're not any smarter.
No, I took everything I had and risked it all every day.
Hey, we're not any smarter.
I wasn't in the hot sun.
Nobody in my generation is any smarter than anybody in your generation. It's just legit. We work harder.
I'm out of here. I'm done with you guys.
I'm out of here. I'm going to go take a break. I'm going to take a quick 90-second break. I'm going to let Victor go for the rest of the day. We'll be back in 90 seconds. We got more Tasty Live after this. Peace, Vic. Market measure next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I started to disrupt my trading career like really early on, probably, 4 or 5 years into it. I started thinking there's got to be more than just this. Thinkorswim we built in 1999, 2000 when the market was crashing. And Tasty was in the middle of 2010, 2011 when markets were kind of in turmoil. So yeah, it's always best to start things when it's worse. When I speak in front of a large crowd, I usually say right up front, I'm going to try to give you a takeaway every 15 minutes because I think it's important. You came out for a reason, and we respect that, and it's humbling in its own sense. So we have to deliver our part. Like, you can't just give somebody, hey, here's a one-liner, and you take it home, and then you try to figure out what to do with a one-liner. You have to challenge people to think.
If the VIX is over 40, we'd like to see an allocation of about 50%. The reason you allocate more when the VIX is higher is because when you have a higher VIX, you have the opportunity to make more money.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
running snow leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the. It must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with a market measure. Even the S&Ps, let's do a little bit of an update here, Sal. If they're down 15 handles, we've had a very tight range all day. Even the S&Ps down around 20-ish to down into the teens. They're down 1450 right now. NASDAQ down 95. Russell down 8. Dow down 112. Volatility up by 16 cents, hanging steady. Bonds probably the biggest, best two-sided action of the day. Up 10 or 11 ticks, trading 5 ticks off of their highs. 112.23 after trading under 112 and flirting with 113. That's $1,000 move, almost $1,000 move from top to bottom. I wish I was a millennial and UNH side of trading fractional shares. It's down 49. I have a little bit of long delta in there. I'm sucking a little wind. You really know how to poke them. He's DMing me now still. I mean, you got in his head.
Oh, I'm deleting him as for my contacts. I'm Tom Sosnoff. He's Tony Batista.
Talking about Victor Jones and that.
Yeah, we're
last
talking about
segment.
Victor
If
Jones.
you didn't catch it, hear me out. Watch it on the replay. Victor.
Like millennials when they get all bent out of shape.
Mm-hmm.
They're, you know what? They're the
stop yourself.
They're the most damaged. Damaged generation. They
Every past generation said the new generation is.
Yeah, but they're the millennials are the most damaged. I don't know what happened to you guys, Beth. Are you a millennial? Do you count?
Yes, remember I'm an elderly millennial.
Oh, aging millennial, not elderly. Aging millennial.
Anyway, before we do this piece here, quick little reminder: Tony and I are going to be on the road in just is it 2 weeks from tomorrow?
Friday, yeah, we'll be doing the show.
Yeah, 2 weeks from tomorrow, the Bat and I will be on the road. We'll be the first official road show of 2025. It kicks off a huge
whirlwind tour, they like to call it, Sosnoff.
It kicks off a massive schedule on the road. At Work by 11 with Tony and myself, the whiteboard tour with Mike, Nick, and Katie, and sometimes Ryan Grace, and Options Crash Course with Dr. Jim. But all told, it's close to 20 different road events. Not even all of them are on here. There's a bunch more. And we are so looking forward to it. We kick it off. We kick off in Atlanta, Georgia, 2 weeks from today. 2 weeks from tomorrow, I'm sorry, on May 30th. Doors open at 8 o'clock in the morning. Show starts promptly at 9. It will be over at 10:30. It'll be at work by 11. And if you want to take Tony to work with you, is this bring a kid to work? Bring a trader to work day?
Not take Tony to work day.
It's take Tony to work day. Sure, we can let him go. If you hire him, we'll pay extra. But
I come with a stipend.
Yeah. So anyway, we hope to see everybody in Atlanta. Atlanta is one of our, favorite cities in America. We've been going there, trying to go there every single year since we started Tasty, and
because they have a Buc-ee's not too far. That's why it's
because they have a Buc-ee's not too far. Yeah, that's it. No, because they have a little Waffle House. We could do all the things that we don't get to do here in Chicago.
But you're gonna take me on the road to bring me to Waffle House? I could do my own thing. I don't need you to take me on the road then.
You should be lucky if I take you on the road to go to a Waffle House.
My name's not TP. TP you can buy with a Waffle House. I'm gonna a little bit more of a fancier hoe.
Anyway, we'll be in Atlanta 2 weeks from tomorrow. You can sign up at tastylive.com/events. There are
still seats available. Love to see you. Let's
only
sell
a
it
few
out.
seats left for this one, so it's almost all filled up. We should have a great time. It's going to be the Bat, myself. We've got Craig from the CME going with us. We have I'm not sure. I think if Vince is going or Andy going from the SIBO. So we're going to have two experts there, exchange experts, along with the gang. David will be there giving software demos, but the show is very fast paced. We'll be using we're making real trades, using real money, and taking real risk. We'll start trading pre-market, and hopefully we won't be coming in with any of the with any UNH positions that morning. So we should be in good shape.
I'm going to be, but sure.
But anyway, we'll see you guys 2 weeks from tomorrow morning in Atlanta. If you haven't signed up yet, tastylive.com/events. Next show after that is in London on June 20th. That's Triple Witching. That's a Friday night. And show starts at 6, doors open at 5, and we'll be at Earth. And then the following Monday after that, June 21st, we'll be in Milan at Fabrique for our first show ever in Italy. And it'll be myself, Rich McDonald, and Dylan Radigan. And that's going to be a fun one.
It is, because you're going to see who gets the promise ring, whether it be Dylan or Rich. It's going to be good.
There will be interpreters in the house. We are looking forward to doing this show in Italy. There's a huge, huge group of Italian option traders, and we've been doing webinars with them.
Well, it is Italy, Sosnoff. I would imagine that would be the prominent nationality there.
We've been doing webinars with them for years. Happy to finally get there. Can't wait. It should be a shit show of sorts and a lot of fun, because the nice thing about these shows in Europe, we serve alcohol.
Beautiful.
You didn't
We're
know
not
that.
doing that for breakfast in Atlanta?
Breakfast in Atlanta, you don't get any alcohol.
Oh, bummer.
Breakfast in Atlanta, you get a donut.
Oh, all right.
Donut and coffee.
Okay, all
But if you
right.
come to the nighttime show in
Pizza sharp stick in the eye.
London or Italy, yeah, we serve beer.
Nice.
Think. Bunch of stuff. Who knows? Anyway, we'll see you guys. That's the only shows you can show up for. After 60 days before every event, you can sign up for it. All right, let's do it.
50 days before.
60 days.
Oh, 60 days before, not after.
Prior to.
Yes. Don't listen
All right.
to what he's saying. Listen to what he's thinking, ladies and gentlemen. That's
Zero DTE trades today, brought to you by a really dynamic generation, millennials, who thought of this. I like how Vic says.
Oh my God, you're not going to let this.
I like how Vic
die.
says, the millennials, just so you know, just so everybody knows this, zero DT trades and the daily trades and the weekly trades, all the creation of the guys in this room, along with TP and a few others, we presented those products to the exchange. We helped to develop those products, and we get no royalties from them. But it was our presentation.
You should have been that guy Kevin from Shark Tank and asked for royalties. That's what he asked for all the time.
Should have
Kevin O'Leary. There you go. You should have asked for royalties. I get $1 into perpetuity.
Don't ever mention his name in front of me, Kevin O'Leary.
Why? Is it that bad thing with your son and the daughter? Kind
No,
of thing?
no, he's just I cannot stand that man. I think he's the biggest douchebag in the world. So I give him 0 stars. And as a Canadian, he should be embarrassed.
Here we go.
Daily Dynamics.
Seems happy.
Maybe I doubt he's happy. He doesn't seem happy. Daily Dynamics, 0 DT volatility throughout the day. You ready for this?
Sure.
Let's take a look. Tony likes a little 0 DT volatility.
Very popular with the ex Twitter crowd. Very popular.
Very popular with the ladies.
Very popular with the ladies. It's most widely traded most days, most option
Sure,
volume.
of course. Implied volatility is simultaneously a measure of current option prices and an indicator of how much movement the market expects. On this show, we've always talked about implied volatility as being the Just another word for it is expected move. When selling options, we can either profit from theta, when time passes through our strikes without being threatened, or from vega, when implied volatility goes down. For 0DT trades, this means looking at an implied volatility contraction over the course of the day. Does implied volatility a month out in time, or 2 months out in time, or whatever it is, a year out in time really matter to 0DT trades at all? Question.
I know, and I'm thinking, I want to use that word you don't like me to use, but I just used Kevin O'Leary. You don't like me using that word either. I was going to say de minimis, but I'm trying to think of another word for that. So I'm going to say
it has a very minimal impact.
There you go. Yes, that's the word I'm going to use.
So has the 0DT implied volatility typically, how has it behaved throughout the trading day? Does it get stronger as the day goes on, or does it kind of disappear as the day goes on?
I think it's going to kind of disappear. I don't think it's going to have any.
I don't think it's going to get stronger either. Let's take a look. So we did a study. We used 2 years worth of data in the SPX. We collected the real-time data for every 10 minutes. At that point, we tracked the at-the-money implied volatility over the course of the day relative to the opening implied volatility. Now remember, this is only the 0 day. So if you're thinking, oh my God, what's going to happen this weekend? Doesn't matter. Like, this is intraday volatility. This is expiration at the end of the day. There is no overnight risk. So as you get closer to the end of the day, just think about this. What is volatility? It's expected move. Based on what? Based on fear. As you get closer to the end of the day,
less time for fear to become a factor, right? I mean,
if you have 5 hours left in the day, something can happen.
Sure.
If you have 15 minutes left in the day, and it doesn't matter what happens after the close. Sure. It's literally at the close. Then, of course,
because these are cash settled.
They're cash settled. Of course, fear is going to go down. So, if the 0DT SPX straddle had a 20% implied volatility at market opening, but a 14% implied volatility at noon, we would consider that a negative 30% change in relative volatility. All right? Because it dropped from 30 to it dropped by 6%. So from 20 to 14 is down 30%, just so we understand what we're going to be looking at. We separated out the results for those days with high opening implied volatility and then lower opening implied volatility, and all times were central time. Okay, let's go to the next slide. So the first slide we look at, and this is just, these are all visuals, say we're going to go with charts rather than numbers. So what we're looking at is the average 0DT implied volatility intraday behavior. This is the average. That's exactly what you would have thought. And by the way, the grayed out area is the one standard deviation. Okay, so that's one standard deviation the whole day. And that's looking at the average relative implied volatility. It's basically from the beginning of the day to the end of the day, it goes straight down. So what's your risk then?
Intraday move?
Intraday move.
That's it.
Intraday move.
Not the fear of what's going on or
intraday move.
The news afterwards or anything else.
What's your risk? Intraday move.
Yep.
You can see we say inside of that one standard deviation, we keep the line pretty clean. Volatility just disappears as the day goes on, but you are always at risk for that intraday move. Let's go to the next slide. So this is intraday behavior when implied volatility is high. So you can see when implied volatility is high, you are going to make a lot more money, but you in the process are going to take a lot more risk because you're going to get volatility that's kind of all over the place. Now, it still obviously stays, you can see it within the one standard deviation. That's kind of the expected move. That's your distribution curve. But you can see how volatility is all over the place, but it still goes down. And as the day goes on, it disappears to essentially nothing.
Mm-hmm.
Let's go. Oh, no, Beth, there should be, this is from high opening volatility. There should be one for low opening volatility, right? Next slide, number 5. There it is. So this is your average 0DT implied volatility intraday behavior. No, that's 3. 4. Go to 5, please.
These are all of them.
Basically the same, Southern. If you're on 5.
Oh, that is 5? Mm-hmm. Okay, so there's only 2 slides then, right?
There's 3. This one?
Yeah. Oh, this is the one I want. Low opening volatility, right. So this is a little bit different. So this one, okay, you see how it doesn't have the jagged edges?
How it does have jagged edges. This does have the movement, meaning that there's extra movement to the outside.
But what happens here is it's much smoother, but you make less money.
Sure.
So what we're showing is most of the time volatility is kind of on the low side, because remember, most of the time it's in a lull state. So it's on the low side, so it doesn't have that much intraday movement, but you make less money. When it's high, you make more money. But the key takeaway from this is all of these visuals are the exact same. And over the course of a day, that implied volatility is basically going to go to 0. So it's one of those rare things where implied volatility goes down based on time, which is different from the way implied volatility acts and the way you normally collect on theta. Mm-hmm. That's what people love about the 0 DTEs. It's also what they hate about it, because if you're an option buyer, this is why your options are going to 0. You can't defend against time.
Of course not.
Okay, that's why you have to take profits. Let's go to the next slide. So the takeaways, regardless of the opening implied volatility, premiums fell over the course of the day more rapidly than their theta would indicate. If premiums fell exactly the rate of theta, then IV would be a constant. The real boom for 0 DTE options is that volatility essentially goes to 0. When IV started low, it typically took longer to start coming out, looking at the 20% line. The average relative implied volatility crosses it around 10:30 in the morning Central Time, but low IV, it's closer to 10 o'clock. Still, by the end of the day, relative IV collapsed all the time. Higher openings in implied volatility were more erratic, with a wider standard deviation. Typically, premiums would decrease rapidly, but this was less reliable. However you choose to play your 0 DTEs, these charts can give you a handle on how anticipating how long you want to stay in and let the premiums decay. They will decay, but things get a little hairier later in the day.
Sure, you've seen that on even butterflies that we've put on.
Sure.
Yeah, how it moves, and it moves quickly. Good job out of you. Good job out of the research team. Thank you to the SIBO for sponsoring that, or Chicago Board of Options Exchange, or whatever it's called these days. Even the S&P's down 12, Sosnoff. We'll take a quick 90-second break because
not much going on there, is there?
No, not much going on at all, except if you're in UNH, which is still down 51 or 52.
It's about the only play.
No bounce back in there at all, Sosnoff. No love in there. We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next, Oz? That's right. Your friend of mine, Mr. Scott Sheridan from the Scott Sheridan Studios. Immediately following these messages, back in 90 seconds.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Tomorrow is your big day. Are you going to get all your shopping done tomorrow?
What tomorrow?
What's
Tomorrow's Saturday before Mother's Day.
Oh, yeah. We got that. This is.
Oh, yeah. Yeah, I've set the bar low. I'll go to Trader Joe's this afternoon, pick up a car, and I'll be done.
Wow.
By this afternoon, and then by Saturday for sure. It's so picked over. You actually are like, you have to cross out, love your son and put husband there. There are no more cards.
No, the only card that's going to be left for Tom, it's going to be like, to my strong black queen.
Tom, how was your weekend?
My weekend?
Yeah.
Pretty good. I didn't really do anything. I worked at a coffee shop a lot.
He worked a coffee shop. Like, what do they trust you with? A broom?
Oh, no, they don't trust me.
No.
I think he's more of a greeter.
If they need something, I'll go get it.
Like in the back?
If they need something.
No, like if they run out of milk or something.
Yeah, like
they
that.
must run out of butter every day. Like, Sosnoff, we're out of butter. Sounds like, I just bought 4 pounds yesterday.
Oh, that's how they get rid of. Oh, that's how they get.
I'll go get some.
That's how they get rid of them.
How's your TV doing, Tom?
I don't watch.
Oh, you're gonna put Tom into the conversation?
I only watch sports. I stopped watching TV.
He's got other things to do, like TikTok.
I got other things in my life that are more important.
TikTok.
His TV doesn't work. That's what it comes
I have a
down
TV
to.
that works.
Where is it?
It's not in the bedroom where you eat.
Yeah, there's no way. Where's your TV that works?
Big screen.
In the no, it does not.
It does.
In the living room?
Yeah.
No, sold.
Thomas, you look off a little bit today, Sosnoff. What did you do? Did you forget something at home?
Don't you dare start.
I saw things in the office yesterday, and I was just like, what is even happening?
What'd you see?
I saw Beth holding a phone, pointing it at your hands, while a very nice Indian man asked you questions through a phone. What was going on, girl? You got a bum flipper?
Yeah, I either got bit by a spider or I ate something weird. I don't know.
Be so for real. Where were you that you weren't in the woods where there's spiders?
I know.
So, but your hand's like swollen and
Yeah, it was
puffy?
swollen. My hand was swollen, so I wasn't sure what it was.
Is it gout? It's gotta be gout.
That's what I thought, but he said probably not.
Oh no.
Yeah.
So what's they're gonna have to
Like
you're in trouble now, Sosnoff.
Yeah, don't you have viewers that care about you? Don't they send you like
medicine?
Veterinarian, don't they send you like horse pills or something?
Yeah.
Did you wake up like that, or did you go to bed like that? Because if you went to bed like that, wouldn't you be a little alarmed?
Actually, he did go to bed like that.
I
was
did.
talking about it yesterday.
Yeah, it's from 2 days. It's the second day, but it's. Listen.
Do you think this is from rancid hummus?
Could be. I have a tolerance for pain that's a different level than you.
Oh my God.
get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend, and you know what that means. Time for a little bit more Tasty Live with this man. That's right, Tasty Trade World Headquarters. Your friend of mine, not you, Sosnoff with the cross arms. I'm talking about this man, Mr. Scott Sheridan from the Scott Sheridan Studios.
Okay, I have a couple things to start. First, I just got off camera with Rich. It was great. Fun talking with him in London.
Rich whom?
London.
Rich McDonald.
Yeah, the real talent.
He is first. He's in first place by only a few percentage points in Milan to get the promise ring from Mr.
I'm not commenting on that because when I said that on air, I didn't know he was watching, and I went back to my desk, and he left a message for me in Teams. So I'm not going there. But anyway, I just had a very nice 45-minute chat with him. Here's my question for you. Totally serious question. He said,
I understand everything he said. He has a little bit of an accent.
Not good. Okay. I'm good. That
I know I'm bad at that.
That I can understand. There's a couple accents I can't get. That one I can get.
He's Scottish, but you can understand him.
I can understand him.
Yeah.
It was a very good interview. So.
Oh, he interviewed you?
Yeah.
Oh, okay, good.
I did that too. I had a great interview with him.
Okay.
Actually.
Yeah.
It was fun.
Yeah, it was good. So here he said he was listening to a podcast.
Yeah.
And he said somebody on the podcast was talking about, they knew us, and they were talking about it.
Yeah.
And the person said, I don't know who the person was, they were the ones that gave you the beret. And I said, that's BS. I said, I think, but I got to ask Tom, I think. Now, I said, unfortunately, Tom, it's revisionist history, so he's going to make up any story he wants. But I think it was a marketing company that sent it. I know the Goldfish was. Where did you get the beret the first time?
You know, I would not know how to answer that question because I don't.
Where did you get the very...
I think it's the podcast that they were talking to Q. No, he didn't say that. That's not what he said.
I don't know. He didn't tell me who was on the podcast. He just said he worked with us, and he was the one that gave you the beret. And I said, absolutely not.
No.
Right.
That's not what he said. I listened to the podcast, though.
Oh, what'd they say? Sorry, Rich. Yeah. I don't want to hate mail.
Wrong.
I don't want to hate mail. Where did you get the beret? Forget the podcast. Where'd you get it?
The guy, whoever the podcaster was, it was.
I don't care. Where did you get the beret? Stay on point.
Where'd I get it?
Oh my God.
Yeah.
I'm telling you, I wish I was in the mafia and he was the only one that saw like what went on. He's amazing. He's great. You'd be a great witness on this.
Great witness.
I got
Unbelievable.
Right.
I just had it made myself.
No, you did not.
Yes, I did.
Oh my God.
You were lying in bed one day.
And you know what? You had to think about that. And you actually
always
took
wore sunglasses at the top.
And 30
I
seconds.
liked wearing sunglasses. I know, but then I got the beret. Yeah, I had it made. I had the original.
No,
where'd you get the idea from?
You did not. Somebody gave it to you.
China. They're made in China. That's where he got them from.
No. I got it.
Tony, has he been like this all day?
It's actually been okay. I think it's you.
No, so I got it.
Who made it? Where did you have it made? Go ahead, tell me this. I don't remember. Here it comes. Go ahead. Where did you have it made?
We I'll tell you exactly what happened.
Go ahead.
So
we had tchotchkes made. We had pens. We had stuff made. Right.
So
ladies and gentlemen, it's the story of the beret.
Okay.
When we first started Thinkorswim.
Yeah.
Okay.
I was there.
Yeah. So sometimes like my hair would get in my eyes. I'd like to wear glasses.
Like if the windows were open.
You always wore glasses.
Yeah, always. But
always.
If the windows just
Summer,
so people.
I'm explaining. Will you just let me explain?
Go ahead.
So we were coming up with different ideas over what we were going to give away.
Yeah.
Okay. You tried a babushka. I remember that. That didn't work out very well.
We tried.
People kept saying, "Ma'am." Yeah, it was not good.
You weren't even working there then. You don't remember. But we tried.
You couldn't hire me. You tried to. I turned you down.
It was the worst move I ever made.
4 times I turned you down.
Twice.
Stop. Where'd you get the beret?
So I'm just explaining.
Felt like 4.
First, so we bought things like we got some barbecue sauce that was branded, and we had this book. Remember, we got the book.
Yeah.
So we had the book and the barbecue sauce, and then we started doing these events with an education company, and we gave away stuff each month. Yeah. So one month, I decided to make berets, and then so we made.
I don't know. You went from barbecue sauce to berets.
So I made it. The barbecue sauce broke.
In transit, yeah, you.
I don't think this is correct.
That's what happened.
Okay, if there is a viewer out there that has one of these berets, because that would have been from Mike's shop.
No. We never gave them out. So we got them.
Here comes the story.
We got them.
This is like
and we wrapped them in the barbecue sauce bottles.
We got them, and then I didn't.
So you had like 50 berets.
So whoever opened up an account at that brokerage firm will remain.
So we hired this
nameless.
company that would make all this tchotchke crap, right?
No, we had the
and so they sent us
the pigs, the cows.
Cows.
Yeah,
I loved.
Yeah, the cows were good.
Smushy cow, everything.
There's some non-Jewish people. Tchotchkes is slang for.
Everybody knows what tchotchkes are.
Okay. So
everybody knows what a matzah ball is.
We did everything.
I don't know what a
It's true.
tchotchke is.
Good point. A tchotchke is
Thank you.
All right, now you said that. I'm with you. Tchotchke. Hold on.
Cheap giveaway,
Cheap,
like a
cheap
little
little crap like pens and just stuff. Branded items. Branded items.
We made aprons and sandals.
Yes, true. Facts. I still have my apron. I have my apron.
Okay. We made all.
I don't think they weren't sandals.
You made sandals?
They were flip-flops. They were flip-flops, not sandals. Flip-flops.
We made everything. We tried everything.
No, this part's true.
And so one of the first things we got was a beret, but I didn't order them because I was like, these are too hard to like stretch.
They didn't fit your head. Be honest. They did not fit your head.
Can we explain how we originally shaped them? We got a basketball. Stretched them over a basketball.
How we originally? That's how we do it to this day. Are you kidding me? We're like an Italian.
And not a WNBA size. It was an NBA, not WNBA.
So that's how I did it.
Full size.
That's how we got it.
And he still has to give it a little bit of.
I still have one.
Do you?
Of the original ones.
Do you?
I will sell that. I will sell that. I will sell that.
I have it somewhere.
You have no idea where it is.
So Rich gave me one.
Rich,
the original one?
No, he gave me one when I was over there last time.
He gave you a beret.
IG?
No, he just Tasty one made up.
Oh, Rich,
very nice.
Nice job.
Oh,
yeah.
So the 6 is still trying to clean out our house, which apparently we are never selling. Okay. So she messages me, found a bag of monkeys. What do you want me to do with them? And I said,
keep them.
Burn them.
No, don't give them away.
All right, I'll bring them in.
Hey, you work for Coke.
No, don't bring them in. Just
you work for Coke. You drink Coke.
Bunch. I'm going to say Tom wants the monkeys.
No, I already have a box.
I'm saying it.
I don't need any more.
Sorry. You got a box of monkeys. Okay, now, moving on.
Yeah.
Went to Zarellas last night.
What is it again?
Zarellas, which is where GT Fish was.
Oh, the pizza place.
Yeah.
Yeah, okay.
First of all, you can't get in.
Can't get in.
No, but we went
Pizza
early.
place, but you got in.
Well, we went at like 4:45.
Oh.
So you got it at 4:45.
You pulled the Sosnoff.
Yeah. Well, I think we got there at 5 o'clock. Actually, I think we walked in around 5. We had bars, like literally at the bar, which I didn't care. It was great.
Okay.
So they have tavern style or they have New York style. I went tavern style.
Why didn't you do New York
both?
style?
I went to 6. She wasn't really eating.
Who
Why didn't
cares?
you- why
You
didn't you
gotta
do
do
both?
just so you can try
You gotta
it.
try
Take
it.
home. What difference does it make?
Yeah, well, I mean,
Pizza's good the next day.
Oh my God,
What is? Are you a rookie? Are you new at
when
this?
tavern style or New York style, those are your two choices?
There's nothing wrong with
What are you
that. I like
picking?
that.
Don't pick on me. I didn't create the menu.
Okay.
I went with tavern style. Outstanding. Great. So I saw the
I
New York
wish I
style.
knew what the New York style tastes like.
It looked good. So Chris from our accounts team is the one who told me about it. He had the New York style. He said it was great. Now, they had gnocchi, which was maybe the best I've ever had. And then we had chicken piccata, which do not order. We'll just leave it at that. I'm still trying to figure out
I wouldn't order chicken piccata anyway. Whoever orders chicken piccata.
The 6 wanted it, okay? So the
Chicken piccata?
I like chicken piccata.
What is that? Chicken and what?
It's lemon and capers.
Lemon
and capers.
Lemon and capers.
I like that.
Yeah.
So
I like lemony stuff, so I'm with
Me
you
too.
there.
So
I would never order it.
Oh my
because
God. So the
I don't
preparation
cook
was good.
when I
They coated it. It was nice. The problem was,
It's flour. They bread it with flour. I mean, you're not going to put any.
seasonings, whatever else. It was good. But the problem was, I still don't know how, sometimes they cook chicken too fast, but you don't order chicken. For those people that do order chicken, if you cook it too fast, it gets rubbery. This was like they pressed it. It was weird.
You mean they pounded
Why would you?
No,
order
they didn't
chicken
pound
in a
it.
pizza
I know what
reel?
pounded chicken looks like because I pound chicken.
Oh man, I know how to pound a chicken.
Why
like
would you
nobody
order
does.
pizza chicken in a pizzeria?
Every pizza.
Okay, the 6 ordered the chicken and the pasta. Do you want to call? I'm going to call her.
No.
I'll call this-
Please don't out us. Please don't out us.
I'll call the
Please.
6 and say, why did you order that? I ate the pizza, I tasted the chicken, and the gnocchi was excellent. So what I'm saying is, I give it the 2 thumbs up. Absolutely go.
For pizza.
Yes. Well, the gnocchi was excellent. I didn't really look at the rest of the menu.
I mean, I'm probably not going to drive all the way down there. Just
Well, you do it on the way home. If you're here late, stop on the way home at 4:30, 4:45. It's perfect for you. You're in bed by 6.
That late?
Yeah. I mean, it's nice.
I mean, that's a pain in the ass location to get to.
It's not a good location.
Yeah.
That I agree with.
And there's no parking there.
And there's
no
no,
parking.
well,
There's
the
on the corner.
6 has the greatest parking karma in the history of the world. Doesn't matter where we are. You could go on the busiest street where there's one spot and that's it. It opens up as soon as you.
Not a particular fan of those type of people. Not gonna lie, because I don't have that.
You want to tell her?
No.
You could tell her. You guys have been picking on her today. You could tell her. I'm going to tell her why.
Tom has been picking
I'm
on
going
her.
to tell her. I'm
No
gonna pick on
one's
anybody.
safe.
Right?
No one is safe.
I'm not picking on anybody. I'm being the nicest I can be.
Soundbite Beth. Tom's been picking on the 6, not me.
So we now know you never order chicken when you go out, and for sure you're not going to order. But God, if you did order chicken, you order Vesuvio.
He orders chicken.
Occasionally, but it's not really my thing. I don't really
Like if there's nothing else you'll eat, you'll go.
I mean, why would you go out to a restaurant for chicken?
Yeah, right.
Like
Because you like chicken.
Nobody likes chicken.
nobody goes out to a restaurant.
Nobody likes chicken.
Ooh, I'm gonna have the
If
chicken.
it's not
I mean, you go to
fried-
like a fried chicken joint.
Yeah, I mean, if you go
or
into a
something
fried
like
chicken place, that's one
Right.
thing. But nobody
Yes.
goes to a restaurant and goes,
Yes.
how's the chicken?
I order chicken all the time.
Yeah, but that's you. That's because you
Oh my
don't really
God.
understand food.
That's why we only have you on the show for a couple
That's why,
minutes.
yeah.
Oh my God.
Nobody orders.
So chopped brisket, chicken. Oh, by the way, on the news this morning, do you know where they claim deep dish originated and why it originated?
Uno's.
True. Facts. You got that. And do you know why?
Something
Why?
with something broke. Didn't something break or there was?
No, they gave it away. This is what the story said. They gave it away at the bar to get people to drink more, to
No,
stay and
that's
drink
why
more.
they have tavern pizza. Where do you get
It's
this?
on the news.
Why
That
would you
is
have
the
a
definition
big,
of tavern
thick-
pizza.
What the hell is
tavern-
You want a fresh one?
I'm listening to the guy that runs Uno's. And he's,
Definition of tavern.
Oh my
Go
God.
ahead, Tom, give it to
Definition
him.
of tavern pizza, and the reason they cut it up in Chicago in
It's a
squares,
small little squares
is so they
so
can
the
put it on the
pizza-
bar.
I'm not talking about tavern pizza. I'm saying where the deep dish came from.
Yeah, I understand, but
Oh my
that's the
God.
definition of tavern pizza, and that's why they
how
cut it up into
invented
little
tavern pizza.
squares.
That's how they invented deep dish.
That's not
pizza.
why
They're gonna
deep dish.
have the-
Okay, I'm
oh,
gonna
because
go-
they would eat so much of it, they'd be too fat that they wouldn't be able to leave the bar.
What are you gonna
Is that
do
why
with
they
deep
did
dish?
it?
What are you going to do at deep dish? Give out forks and knives and everything at the bar?
I mean, honestly,
makes no sense.
Sometimes, Scott, you got to read between the lines.
So
the whole reason why
he made so the guy that
I apologize.
The guy that runs Uno's now is just making this whole thing up.
He's not the guy that started Uno's. He's the guy that runs it now.
Yeah, or bought it from.
Right, and he doesn't.
Probably some millennial.
And he doesn't know. And he
knows the definition of why they have tavern pizza in Chicago. That's why he's wrong. That's the wrong explanation. That's the whole reason for tavern pizza.
So you know what?
Why they cut it
Can
up
you
like
go
that.
on NBC local news tomorrow and rebuttal?
I should.
And just say, listen, that guy's an idiot. He has no idea what he's talking about.
He is an idiot. He's an idiot. He doesn't know what he's talking about. That's the whole reason why they have tavern pizza.
Okay.
Tom's right on this one. Matter of fact, we got Frank.
I'm not disagreeing with you about tavern
definition of
pizza.
it.
I'm telling you, this is the story of why he said Uno's. This is what they did. The original Uno's. They came up with it to give something to the people while they're drinking, to give them something to eat.
But he's probably a young kid, just hears the story. That's not the story. That's why they have tavern pizza.
How do you go through life? How can you handle the weight and the pressure of knowing every single thing, of never being wrong?
It's difficult.
Like, what do we need AI for? I'm calling it A Tom, okay? What do you need AI? Just A Tom. It's not our.
I'm just telling you the definition. It's a definition. Listen, I didn't even grow up here, and I know that. You grew up here. You should know that. That's standard.
Here. I'm just gonna go with the here. All I did was I put in why did you probably remember this again. The guy's name was Sewell, who invented owner of Uno's in 1943. Why did he invent the pizza? Says, he poorly created a pizza that was more substantial and filling than the thin crust pies commonly found in the area, inspired by the desire to create a hearty meal. That's it. Not to keep anybody at the bar, because they're going to put that big pizza in their belly. Then what do you think? They're going to eat? What are they going to have? A case of beer after that? No, they're not even going to be able to drink one beer after that.
You want to Google the reason why they have tavern-style pizza and why they cut it the way they do in Chicago?
So that why they don't have tavern pizza anywhere but in Chicago?
No, it's only a Chicago thing because they have taverns on every freaking corner.
There are taverns on every corner. And New York does not have tavern style.
Frankie in the chat room's family owned a bar. They have tavern pizza to keep people in there so they can eat a little bit while they're just having.
That's right. Just have a little snack on your way home.
For just small meals.
It was a reason on your way home from work
to stop
and have a beer and a little piece of pizza before you got home.
You sound like you've done this.
I mean, no, but I mean, I've stopped for the, you stop for the, maybe a Wendy's.
Premium meal.
You like to go to places that have the chopped liver and the cheese on the crackers?
The pre-dinner Whopper, there was once a TV show on that.
Tavern-style pizza. All I said, why was tavern-style pizza invented? Tavern-style pizza was invented as a bar snack specifically to encourage customers to drink more.
I wasn't talking about
square cut to Sosnoff's point here. Once again, Sosnoff circle gets the square. You get the win. You do not get the win, Mr. Sheridan.
If we could roll the
easily
tape,
served on napkins and eaten with one hand while holding your drink, which would bring Sosnoff's point of what am I going to do? Have a knife and fork and eat the big pizza? That's going to make me full.
I'm going to go find the clip.
The guy could say whatever he wants, but he's wrong. Okay, you just because you see something, a clip of a guy he's probably been a restaurant manager there for 3 weeks.
Dude, I don't know who the guy is, but if the off chance he's watching this, I apologize. Anyway, we're going to go on to business now. Wow. Whew. All right. Top 15 someone's going through the system. First 40 minutes today, no broad-based indices or futures. Top few number 15. Goog with an L at a 28. For everybody else, UNH at a 149. Tesla at a 27. NVIDIA at a 32. Walmart at a 31. Cisco at an 18. Baba at a 25. Coin at a 27. Amazon at a 19. PLTR at a 31. GLD at a 50. Reddit at a 33. Apple at a 25. MSTR at a 21. AMD at a 19. And number 15 for Tom, Google with an L at a 28. Rounding out the next 10. HIMS at a 61 and TLT at a 38.
I don't know if this is a word he said after that news that he gave us. It was just false, by the way. Fake news.
I'm short some puts in UNH. It's not working out so well right now.
You want to trade positions?
It is not working out. Is this like was there fraud? Is this what happened? Is this what?
You want to trade positions?
What's the news? I haven't had the time to look at it. What's the news on it?
The news is down $57.
The news doesn't freaking matter. It's down $57.
Why? After being down whatever yesterday.
Well, it's down 60 2 days ago.
To be down 50% in the last month.
Right.
Down another.
The CEO. We figured out the CEO that the real CEO stepped down. Right.
Yeah, but then after that, this is some fraud. This Batista took me down. There's nothing else to it. This is 100% Batista's took
Nobody is without. Nobody can get away from the wrath of the Sazno.
The Batistas took me down.
Can I blame the Batistas?
My son gave you a vertical spread. You decided to go naked. That was your decision.
Because I'm not a millennial.
Well, stop acting like one.
In fairness, I don't have a spread on either.
It's somebody else's fault.
It's not good when you're selling the like 50 or 60 strike, like lower for more money. Oof.
There's nothing good. I just sold some calls because I can't take it anymore, and that's probably the bottom.
And Mr. Lou Malnati actually worked at Who Knows.
Did he?
Yeah.
Guess what's for lunch today?
Scott is so wrong about food as much as Tom is wrong about everything else.
Who said that?
My Taiwanese sources.
Is that Frankie?
Guess what's for lunch today?
Lou Malnati's.
There you go.
So I was not happy. Why aren't we having Art of Pizza?
I agree.
No, we had Art of Pizza last week.
I'm just not a Luz fan.
You're not a Luz fan? I like it.
I'm not a Luz fan.
I don't love.
It's the best of the website pizzas.
Do you like cornmeal as a crust?
Do I like what?
Cornmeal.
Yeah, I like everything. Look at me. I like all pizza. I can eat pizza for breakfast, lunch, dinner, snack.
It's not. There is no cornmeal crust on the East Coast.
Yes, that's true.
So I never had it.
Although they use cornmeal on the bottom.
I never had it before Chicago.
Yeah.
And my favorite cornmeal crust place was Au Famé, but it went out of business.
Right. Au Famé is great.
It's great.
Red Tomato is pretty good, but Au Famé is great.
Au Famé is old. That's gone now, though.
Oh, yeah, it's cool.
Yeah,
I think they claimed that they moved to the place over on Western by like Montrose or something. I've never been in. I'm like, nah, I'm not believing that. But Au Famé, the original, when it was on web.
Oh, you're really bringing a lot to the show. You told us false news about deep dish pizza, and now you're telling us about a closed pizzeria. This is great.
He brought it up, okay? Why am I taking...
You expanded on it, okay?
Oh, my God. I think I'm busy tomorrow.
No, it's your day to shine. Tomorrow we take phone calls where people can also ask you questions.
You know you're a bad trader? When you buy stock and it's $10 lower, and then when you sell calls and they're $2 higher.
I'm telling you about
you couldn't time
standing in there. Ivy rank 160 in UNA.
I know. I just sold calls that were. I just sold them $2 lower than where they're trading.
And the stock hasn't moved.
I understand.
Oh, the stock moved 50 cents.
I don't want to go look.
I don't want to look either. But
I don't want to look.
One part of me wants to sell 1 million strangles. The other part of me wants Tony to give me a piece of black to give me a piece of black tape and not look at it for the rest of the day.
Somehow it comes down to you, always.
I know.
Right?
My fault.
But at least this way he's asking you or saying you could give him tape. So
this has got GameStop
Baco written all over it.
It's got GameStop vibes on it for me.
Mm-hmm. Yep.
Well, the difference, it can only go to zero.
What?
It can only go to zero. It's not going to zero.
No.
I mean, GameStop was 5 to 500. It's a lot different. Anyway, been a pleasure being in here with you guys today.
I don't think so.
No,
but I'm going to take a quick 90-second break.
We didn't do well with guests today. Hence the reason we don't have guests on this network. Oh, look at the cat dragged in. Look at the cats dragging in.
Oof.
Liz and Jenny, they want in. We're going to take a quick 90-second break and let them in the studios. We got more Tasty Live with Liz and Jenny show next. Peace.
No fingers.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
I want to play a game. It's a relationship game, so I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes! So are you ready?
Exactly.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like, I live in Italy. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful. It's not always a profit.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on. She's wrong. I'm right.
High school party, high school kind of.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. And then parties for the rest of our lives. The same thing with college. She went to a different college. I went to a different college, but we both ended up at the CBOE together. Yep.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
Got friends? get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
And welcome to the Thursday edition of the Liz and Jenny Show. I'm bringing us in today because I'm the only one in this room wearing red. I'm not going to shame Glenn because he didn't know to wear red on Thursdays, but every Thursday we put a smile on our face. Glenn, put a smile on your face and wear red. My name's Liz Deerking. We've got the beautiful brunette across from me, Jenny Andrews. And we've got Glenn. I don't know your last name.
Freiberger, but you can call me
Glenn Freiberger.
A beautiful brunette too.
And the handsome devil to the left.
Okay.
Glenn Freiberger?
Yes.
Freiberger.
I'll take it.
Now, thanks for joining us, Glenn.
Oh,
we were
thanks for having me.
we were just talking to Glenn about his past, where he went to school, but I don't know where you grew up. Did you grow up in the Chicagoland area?
I grew up in North Carolina.
Oh,
Yeah,
really?
But my mom is from Oak Park.
Oh, okay.
Yeah.
That's why you landed at Northwestern?
Exactly. Yeah. Needed to get out of North Carolina. Great place to grow up. A lot of people are retiring there now. A lot of lakes.
So, and Glenn just assimilated correctly into here because Tom and Tony are in, and you notice the traders will have like 6 different conversations going at once. Did you notice all
Oh,
this?
yeah.
And Glenn just right in, hanging out.
Smile and wave. Yeah.
Well, I'm excited to have you. You're here to talk about FX markets.
Oh, yeah.
And our FX, I don't even know what to say. FX products, FX, what we can do on the platform in FX. This is all new to us.
So it is 100% new to us. So you're going to have to bear with us, but we plan on learning as much as we can today and then putting it.
All right.
And then we say at the end of each show, laugh with us, learn with us. Take us maybe 2 months to learn it all.
Okay, so this reminds me, back in the day, Liz and I used to just trade equity options.
Okay.
And then Frank Aberna started coming on our show, teaching us futures. And we were like, Frank, we have never traded futures. Like, we don't know what we're doing. And now we're
singing futures.
All right. Nice.
Now we're wildly crazy futures traders. So we need a few sessions with Glenn, and we'll be great with FX.
It's true.
Yeah.
Well, Frank
My biggest position, and I got to tell Frank this, is natural gas.
Oh my gosh,
Oh, there you
her
go.
natural gas position.
Crazy.
It's like, as big as our pages of positions, her natural gas positions are bigger.
And I blame Frank.
You can always blame Frank. Yeah, I told Pete Momat I was trading nat gas futures one time. He's like, you're crazy. What? Stick to the basics. I was like, all right. So you're really into it.
I love natural gas futures.
Frank's the best though.
Now, how do you like working with Frank and Pete?
It's fantastic. It's they keep you on your toes. You got to stay sharp.
Two
you learn
super
a
smart
lot.
guys.
Very smart. Yeah.
Very smart.
Frank, math, Michigan. Pete,
Oh, that's right.
born
I
and-
knew
born
Frank.
and raised in the pit.
Yep.
Yeah.
Yeah, they're both pretty quick, so got to keep up. But I think I'm doing okay so far.
I'm pretty sure Pete is Tom's phone a friend. If he ever asks any questions, it's gotta call Pete. Gotta call Pete.
Oh, any futures question.
Anything about any markets questions, because I mean his market knowledge is hereditary. Like it's generational.
Right.
Yeah.
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 His grandpa, his dad, his wife.
And you guys knew him back in those days.
No, we met Pete here.
We met Pete here because he was across the street. So
Gotcha.
we were with these knuckleheads.
More than across the street. Like, wasn't he over at the CME? Like, wasn't he? If you're trading hogs and
You think he was at the Merc? He might have been at the Merc. So he was across the street, 4 streets over, and across the river.
it wasn't close. I only know that because
Same zip code.
So we were over at the options exchange,
Okay,
which was
gotcha.
across the street from the Board of Trade, where they're trading like bonds. And,
Yeah, correct.
But then,
And then the Merc was.
So my backer's office was at the Merc, and if I had to go to his office, I was like, "Oh man, I got to go all the way over there." It wasn't so close.
Yeah. Well, I was hoping that I'd get to go. They'd let me go to the.
You can go to the
Exchange with you
floor.
guys.
We film from the floor on Tuesdays and
I've never
Wednesdays.
been.
Oh, come down, you'll like it.
I know. And they said, all right, you can go on Thursday. What the hell?
On Thursday,
They'll be in here.
Come
you
on
know.
a Tuesday or a Wednesday because we film live from the SPX pit. You can
Yeah, that looks like so much fun. Is
any
it?
Tuesday or Wednesday, meet us down there maybe an hour before the show, and
All
we'll
right.
show you around.
I'll tell Frank and Pete that I'm
Well, if
gone
you
the whole
bring a
day.
handler, you can meet us during the show.
I think Frank came down, didn't he, with Angeline?
Oh, yeah.
Frank did come down with
Yeah.
Angelina.
Yeah, looking forward to it. Let's do it.
All right, so tell us, act like we know nothing because honestly, we know nothing.
Yeah, well, timely appearance, I think, because we have some exciting updates to the Tasty Trade platform, increasing in the coming weeks our FX offering through Tasty FX, who's providing these services. But if we want to pull up the platform, we can get into just what you can see so far.
Put on my glasses.
All right.
Tell me what to do. You just
Go
tell me.
to your watch lists.
Are you Friends? Did you ever watch Friends or are you too young?
I watched some Friends. I preferred How I Met Your Mother.
Oh, I love How I Met Your Mother.
I like that one a lot more.
I never watched it because so many people hate the ending.
Oh, I hate the ending.
I thought it was, I hated the ending. I'm not
Thank you. I was going to say, you got to get out of here. You like that ending?
Yeah.
Show is fantastic. Ending, not so
What was
good.
it? It was the second to last season where it was like it was just the wedding.
Mhm.
That was great.
That was a good season.
That
It
was
was so, I say,
Stop there.
every time my husband hands me a drink, I go, thank you, Linus. Because remember that whole season?
Thank you, Linus.
All right, I have to watch it. I do have to watch it. Okay, here I am.
Benjamin package. The Franklin, yeah. So if you go to your watch list, you'll see now a Forex tab.
Okay, see it.
You can go
Ooh,
to,
this is exciting.
exactly. You
I'd be
can
able to see what
go
we're doing.
click on any of those.
So pairs might be something for a beginner since pairs would have less risk.
Well, click on them.
Say.
Click on them. I want to see
Click
what
on
each
it,
one is.
and actually our offering, if nothing's popping up, the bid and the ask will populate data. Should in the desktop platform. In the web platform, you can actually get charts right now as well. But if you click on any pair there,
Okay, so here's like
Oh,
Euro
Eurodollar.
USD.
Yeah.
you should get. Yeah, if you drag that prompt over in front of your
This
your
one?
platform, yep,
Well,
drag
this
it.
says join the waitlist to be notified when it's live.
Booyah, little Easter egg for you. So
Ah.
FX coming soon. And if you want to be notified immediately when those products are live, you can join the waitlist.
Why don't you join that waitlist live?
Join the waitlist. But then what will I have to do? Type in my email?
Jenny at
No.
Tasty Live. Everybody knows it. I know it. You can type Liz at
There you go.
If you want to conceal your email, just type Liz at Tasty
Okay, if you have any questions, email liz@live.com. I think I just cleaned up my inbox almost yesterday.
Fine, type my name in there. I don't care.
You don't have to do anything. You just click it and you're on the waitlist.
Okay,
So that's the functionality we have right now.
so you're going to have to come back, obviously.
Or we bring our good friend Frankie Forex.
Frankie Forex, I love it.
Yeah, happy to come back, talk when these products are live. But for now, I've got some slides just
Okay.
to take you through some Forex basics. So you,
While we're in the platform, can we do something else? Go to the watch list again because there was 4 different prompts.
Right, so it was.
I just want to see. So
pairs,
then go to emerging USD. Just hit it.
Popular non-USD.
Will you just hit like each of those? So hit the emerging USD.
So
There you go. I just want to see. So these are still going to be pairs. So is Forex always a pair?
Yep. So the complete offering is over 80 FX pairs. So every currency
Versus another currency.
Right. So every product you're trading, it's all directional. You buy or sell, and when you're doing that, you're simultaneously buying one currency and selling the other.
Always versus.
like, who's
What's your
top?
favorite
What
pair?
country is HUF?
HUF is the Hungarian florent.
That's going to be my first trade.
Heard it here first. And I'm sticking to it. There are so in terms of like the whole tradable markets breakdown, a lot of people stick to the major U.S. dollar pairs against, the euro, the pound. But there are some traders out there that will religiously only trade like the Israeli shekel or some of these exotic.
But the Israeli shekel is going to be versus something else.
Correct. Yeah.
So they could be like, okay, I want the Israeli shekel versus the Canadian dollar.
And so that's why we through these watch lists, and when we have the complete offering, they'll be broken down into U.S. dollar pairs, non-U.S. dollar pairs, so you can, because that's kind of the second level of diversification for us here in the U.S. U.S. dollar a lot easier to understand, whereas you could just take it out completely.
Now, I want you to come and do a whole class. So my husband works for a German company. He sells German products, and the dollar euro is always really affecting his sales, right? And so you need to teach all these people like that.
You got yourself into now you're in charge of teaching.
How they can use these pairs to offset their risk. If he's quoting, like if he's selling this equipment for $5 million to this company, but then as the exchange rates are changing, he's losing money on that deal. Like how they can hedge that with this.
And so you touch on a really important point: is that the FX landscape. These are global markets, and so you have all these participants, like large-scale corporations, like countries themselves, that have to hedge these risks.
Right.
And so, on a quarterly, monthly, like Pete Momat especially looks at month-end flows.
Yeah.
Because a lot of companies and even funds are, in writing, have to rebalance some of those exposures. So the whole world is doing price discovery on these markets.
So would you argue that the biggest customer or client base up until this point, up until Tasty is putting this out there, is bigger corporations or countries or things of that nature where it's using these pairs?
So it's not like all of these pairs are traded through an exchange. It's a global marketplace that is decentralized. So there's no real true one price. But like
it's price discovery.
Exactly. So TastyFX, when you're trading this, you're trading again, like with TastyFX. They are not the entire marketplace, but they pull prices from the interbank market. So actual central banks themselves exchanging in very large quantities, as well as small sprinkle of retail.
Is it are these things pretty liquid?
Yeah, so that is a big value add for these markets. Is they trade 24/5. And if we want to get into the slides,
okay, sure.
We've got.
You're going to need to rein us.
Yeah. I know.
No worries.
We only have Gary for half an hour.
No, we've got a good thing. Why add SpotFX to your portfolio? If we can kick it to the next slide, please, John. Yeah. So here you touched on it. You nailed it. Liquid markets. Accessible 24/5. So these trade, they open an hour before futures on Sunday and close the same time on Friday. There's no hour.
So 4 o'clock on Sunday?
Yep.
Yeah.
And 4 o'clock on Friday.
On Friday. Okay.
And so these are trading 24/5, but you're also getting some liquid markets because you have participants in Asia, you have participants in Europe. So it's pretty interesting for me when we do the morning show. You wake up and you look at kind of like an hourly chart. You can tell when like Asia enters around 8 p.m. You can tell when London enters around 2 p.m. because you do get some of these surges in liquidity.
I'm going to ask a very dumb question.
No such thing.
Okay, so we do. We've traded the euro dollar and we've traded, the Aussie dollar, and we'll look at or the Japanese yen. When I'm trading that future, when we're looking at that, I thought it was always versus the U.S. dollar. I thought it was always versus something when I'm just trading the future.
Correct. So,
like if you go in and if we go in and we trade 6E.
6E, yeah.
Yep. So you're trading, yes, in U.S. dollars, whereas when we're quoting it this way, it's effectively the same thing, but you could have a pair without the U.S. dollar. And the main thing is those are created contracts. They're futures with an expiration, right? These are rolling spot contracts. So there is no expiration. You could theoretically hold
it
these
for life.
Correct. But there are some overnight funding charges because everything is settled kind of every day. And so there are some.
So there's some definite nuances there.
Exactly.
Okay.
And so one thing that's broken the news cycle is the dollar yen carry trade. That's popular because right now with the interest rate landscape, you can be holding U.S. dollars overnight if you're long dollar yen, and financing that with yen, which their interest rate is 0.5%. So your overnight funding charge, you're actually getting money overnight.
See, these are things you've got to teach us how to do.
Yeah.
Right?
And that's not to say that if the price moves against you, that's
It could move against you.
Correct.
It can turn on a dime, is my guess.
Yeah, because these are leveraged products as well. But yeah, you're absolutely right. There are some differences between futures products, and it's the same underlying for sure, but less construction around contract month. Those, if you look at Euro futures right now and you look at Euro spot, the Euro futures will be have a higher price because there's some of that forward rate in play, whereas here it's just the exchange rate right now.
Okay. Cool.
So yeah, I mean, this is a good week to talk about when to trade Forex because we had CPI data, we had the Chinese tariff pause on 2 a.m. on Monday.
Dollar is weakening.
Exactly. So if you're Chris Vecchio or Ilya, you were up at 2 a.m. on Monday, and in the spot FX market, you can get filled very quickly. When it's less liquid, the spread will be a little bit wider, but you can get into these at any time.
Okay, just bear with me for a second. If you were going to be doing this, so say everything that's happening this week with the dollar weakening versus like the yen and how the yen's interest rate is better, so you can actually get money by holding it overnight. What would you be doing? You'd be buying the yen and selling the dollar?
So when the pair that we offer is US dollar yen, you can think about it like a fraction. To go long dollar yen would be buying US dollars and selling the yen.
Okay.
So for the yen's example, it's flipped from the popular future,
To
whereas the euro dollar, it's pretty much the same.
Okay.
So yeah, if we want to cut over.
So, yeah, like if I'm looking back in the platform where it says USD/JPY, or like, what are we going to get here eventually? You could buy or sell it, or
Correct. So that is just each one of those rows is one market that you'll be able to buy or sell.
So you'd be flipping it over if you're selling it.
Yes. So you're simultaneously buying one thing and selling the other.
Is the numerator always the one you're buying and the denominator the one you're selling? Like if you're looking at it like a fraction.
If you're going long.
If you're going long. So like that top one, it says euro US dollar.
Yep.
So if the euro's on the top and the US dollar's on the bottom, I'm going long the euro and short the US dollar.
If you're buying
If you're buying
the pair.
it. So if you're on the bid,
pair.
if you're on the bid, the numerator is what you're buying and the denominator is what you're selling.
Whereas if you want to be long dollar in euro dollar, it's a lot. It's a lot. But they actually are constructed.
No, but that makes sense. I just want to make sure it's consistent that way. Where then I know if I'm on the offer, then I'm doing the opposite. Then I'm buying the bottom and selling the top.
Correct.
And will these show us the chart? Will we be able to click on the chart so we could see where the pair is currently?
Yeah. So in web, it's live now. Desktop, not yet. But once the offering is completely live for everyone, we'll have a ton of price data going back all the way to like 1980.
Now this is going to be new. This is going to be new here on our platform and new for us because we haven't been doing this. But are there people in other countries who are just doing this all the time? Like this is what they do every day? Yeah, so it's very popular worldwide, and a big part of that is because it's a decentralized market. So it's really up to local authorities how they're regulated. Here in the U.S., they are regulated by the NFA and the CFTC. That's more recent. So if a long time ago you would hear about FX, maybe it had more of a scammy connotation to it because it wasn't as regulated. Now it's regulated by the Futures Association.
It's so funny because when I left the trading floor, and so this is where we're going back, 15 years because we've been on air for 14 years. When I left the trading floor, one of these like young traders called me after she found out we had this, and she's like, "So I'm trading FX every day, and I'm just trying to make." And this was
I remember that
Triple H's sister Kristen. Remember she called me, and so and she's like, "I'm trading FX," and it was like she was speaking a different language to me, and I've been trading forever. I was like, "Oh well, great if it's working for you, keep it."
Yeah, keep it up.
Yeah.
So a lot of cool products. Like I said, we have 20 of those are US dollar quoted pairs, 60 are non-US dollar. So there's no dollar component at all. So pretty interesting markets, but yeah, everything will be converted to dollars for, our account purposes.
And as far as account size goes, like what do you think, are there some smaller pairs than others? Are some better for smaller accounts or Tasty Bites accounts?
What's a tick
compared
size?
to-
That's a great
Right.
question. Like, how much capital?
You guys
do
are
you need?
nailing it. John, if you can pull up the next slide. Oh, look at that. Yeah, so we've got a comparison to futures, and this is one of the big value adds for spot contracts because the minimum lot size is just 1,000 units of the base currency, so it would be like 1,000 euros. And given the leverage on the euro dollar, for example, which is 50 to 1, you're only required to put down 2%. And so if you're talking about what the absolute minimum deposit would be to get into euro dollar, you're looking at around $25.
That's why she was trading it.
Yep.
It was
because you
it was
you don't
so
need that much
that's what she was saying. It was so inexpensive, and she said she was scalping FX, and she'd make like $100 a day and then turn it off.
Yeah, so this is it's very popular for intraday stuff because of some of those funding nuances, and there's no pattern day trading or anything like that. And so another example here in this table, I put together 4 micro euro dollar contracts just to really nail down the point that when you kind of layer into these positions, you're not having to pay a flat commission every time. These markets that will go live soon, you're only paying the spread. So able to be offered commission free because of TastyFX's.
Okay, I need you to say that sentence again, like from the top.
Yep. So yeah, spot Forex contracts offered by TastyFX, your only cost to enter a position is the bid-ask spread.
Okay.
There's no
wherever
commission.
like you can get filled in between the bid and the ask, whatever your give up is.
Exactly. And so when you're kind of layering into a futures position, those are flat commissions every time, and that can kind of eat into your P&L. Whereas here, it's very easy if you have 0.5 lots of euro dollar, which would be equivalent to those 4 contracts. You can layer into and out of them. You can go down to 0.49 lots. You can really, there's a lot more flexibility in sizing these to start small and keep trading small. And then, the upside is you could make them pretty much as big as
And I know there's no like contract expiration or things like that, but is there any risk of holding these things for longer? Do most people try to take the risk on and off each day? Is that pretty common for it to be like a risk off scenario at the end of the day?
Yeah, so there is some math there with, the spot contract versus the futures. But with that overnight funding charge for some pairs, it's around 3 weeks to where if you want to hold it longer than 3 weeks, then it might be more cost effective to buy a future in a later month.
Okay.
Since they're 24/5, like you're not really holding it overnight because it never closes.
Right.
Unless you're holding it over the weekend.
But he was saying 3 weeks, and then it becomes more,
Just because you could be, kind of refinancing that position, and they're small, but it adds up. And so it is popular, especially just because from a risk management standpoint, anything could happen while you're asleep, especially in like the dollar yen pair. You see some volatility overnight, so you can have a stop loss in there and let it on. Or if you wanted complete control, you could manage your expectations by wanting to get out of positions every day.
Okay, so I'm going to ask some basic questions right now. How long have you been doing this? Not with Tasty, like how long have you been looking at these FX and Forex and things like that?
2 years.
2 years. And did you want to do this when you grew up? Like, I want to learn about FX. So you got into this role and then learned about this. You've been doing it for 2 years.
Yep.
Look at you. You're our expert.
All right. Somebody's expert. That's good.
I think these are going to really blow up over here with the Tasty community because look at how they've embraced the 0 DTEs. And Liz and I talk about this all the time. Like we are getting greedy as traders because we can make money in a day. Like we could do the 0 DTEs and get in and out in a day.
Yeah.
And this is going to allow smaller accounts because sometimes you
pattern day
can't get
trading.
in and out of a day because of pattern
Exactly.
day trading. But this, that doesn't apply.
Correct. Yeah. And then if John, we want to kick over to the next slide. The other thing that is, like 0 DTs, it's a double-edged sword, but the leverage you're offered in spot FX, that table in the last slide, it was more the leverage ratio you're getting in euro dollar is 50 to 1, so 2% buying power. All the other major pairs, it goes from 2% to 5%. but you're still getting a ton of leverage. So, I mean, when I first started, and you'd see a headline like the euro dollar drops from 113 to 111.
Yeah.
That's like, okay, it's 2 cents, big whoop. But the way these products are structured, that's 200 points of movement. And so if you're trading a one lot, that's $10 per pip of movement. So $2,000 of profit or loss potentially on
these
just
things can move. These
$2,000
can
in
move.
margin.
Yeah.
But people can start very small. We say the best way to learn is by doing so, because you can start so small just to watch it and see how, how it's changing.
Because it's very likely where you put on a position that only costs you $25 in margin, and it could move $50 against you. But yeah, that's a good lesson to learn with only $25.
Right. And these can go, I mean, I see it on the Tasty platform. So these can go into regular margin accounts. Can these be traded in IRAs? Can these be traded in all accounts?
Right now, it'll just be individual margin and
Individual
cash.
margin accounts.
Yep.
Okay.
Okay. And in this slide, it says risk-reward ratio. Now, is that,
Where do you
how
see-
much this moves, how volatile this is, how much you could potentially make on this pair?
Yeah.
Where do you see risk-reward ratio?
In the middle of
It's
that.
very small. In the
Yeah,
middle
I-
of the chart there.
Oh, in the chart.
Yeah.
Okay. I was
So,
looking at.
so what we'll get is, with the FX offering, we'll get Tasty FX charting capabilities. And this is one cool feature, in my opinion, is that in the middle, that line shows you that one lot position. And then it'll let you attach take profit and stop loss orders.
Oh, you can do a take
on-
profit and a stop loss.
Yep, on the chart itself. And here on the left side, it'll contextualize that in dollar amounts, what that take profit level would be and what your stop loss would be. So,
And you can do it on the chart where you can just take it up when
exactly.
it gets this
And
level.
then that risk reward ratio is just an auto-populated
And this is an
ratio
hour
based
chart. Is this correct?
Pardon?
It says up in the left-hand corner. Is this?
Yeah, so this is
just an hour.
This is just a time frame of last Thursday to yesterday. So you're seeing over 200 pips of movement.
So when that says risk-reward ratio 1.5 to 1, is that you've got 1.5 euros versus $1, or what is that?
That's only based on your take profit and your stop loss levels. So if you'll see that,
See the stop losses at the bottom.
Right,
Yep.
so I
Take
see
profits
like,
so
in the middle.
you're with this risk reward ratio, you're risking 1.5 to get 1, because that stop loss is lower than your
So you're
take profit
risking
is
1.5
higher.
to the bottom, but you're willing to take $1.
and I was
Exactly,
just wondering
and-
how big this is. If your stop loss at the bottom, you're down $1,300,
It's-
or you're up $885 at your take profit level. How much does this position hold? What kind of buying power does this position hold?
So this would be one lot, and it would be around $2,500 in margin. So yeah, that gives you some context.
So with $2,500, you could see you've got maybe, if it hits the bottom there, your stop loss $1,300 in risk or $885 in profit.
And and you've seen those prices within a week. And yeah, those stop losses, those orders are a really good functionality because you can hold these in perpetuity, and so they're not defined risk outright. And that really helps, especially with the dollar amount there, contextualize your actual risk reward.
So since these just continue, a stop loss is the way to make it defined risk. If someone wants defined risk, put in a stop loss. Normally, we don't do stop losses, but in this situation,
It's at least helpful to know, yeah.
Does the stop loss then trigger it being a market order? How does that work?
Precisely, yeah. So it's
Okay.
not guaranteed that you're out exactly at that price.
Okay, just
but
once it gets
once
that price, it triggers a market order. Okay.
You guys are good, yeah.
and that would depend on how wide that bid ask goes.
Correct,
And
yeah.
it's just going to pay the offer.
Yep.
Yeah.
Right. Okay.
But the good thing is for euro dollar, you're getting at the most liquid times 0.8 pips of a spread total.
Which is that's it's pretty
Very
tight.
tight, yeah.
Yeah.
And
What I would imagine if you're in some of the off the beaten path ones, what was the Hungarian whatever?
Oh, yeah.
Are those markets a little bit wider?
it gets pretty wide, yeah.
Yeah.
And so that's just something you're able to see before you get into a position. But yeah, the platform will actually, it'll take your position from the mid price. So if you enter in a wide market, you'll know immediately how much you have to make up because your loss will show.
Your loss will show because
Yeah.
it takes into account the size of the markets.
Will the platform show us which pairs are more volatile? Where some people might want to like risk more to make more, have more risk on to make more quickly. So will that show us, okay, this pair moves more than this pair?
Right. So a lot of that functionality will be within the chart itself. We'll have a ton of price data, and we have a ton of technical indicators that you can easily put on to show some volatility. But day one.
And I've got a question from the chat.
Oh, good.
Yeah, a text.
Okay.
And can you set FX pairs alerts?
Yes, you should be able to.
Okay. See?
Glenn, this was awesome. And it's
Yeah.
10:30. Fastest half an hour. Will you come back again?
Wait, there's one more slide.
There's
oh,
one
yeah,
more
okay.
slide. Just comparing to some of your option strategy, that these are all static delta, pure directional plays, but that takes some peace of mind out of it. Not a lot to manage, and especially if you trade small.
Oh, that is
popular.
interesting. How correlated they can be or uncorrelated they can be.
Exactly. So that's a popular use case for these within a larger portfolio is a bit of that diversification. If nothing's really moving in the stock market in a given day, then people will look to these markets for uncorrelated moves to get in and out of a day. But yeah, a huge correlation matrix here on the screen, but it can show you that just relating to the S&P 500, these are major pairs and their correlation against it. British pound, US dollar, 0.06, very uncorrelated over the last 3 months. But yeah, this is something I like to look at. Just you've got your gold, crude, your bonds, just to see what actually is moving.
And this is great because when the market slows down and volatility is low, we're looking for other things to do. We're looking at commodities, and now we can be looking at these FX pairs. Liz?
Yeah. I can't stop looking at the correlations. I was like, the exact correlation of this is. That's pretty good.
Yeah.
Thank you.
All right, Glenn. Now I promise we're going to slow clap you out because you got to find the door.
Yes.
Thank you for coming.
Oh, thank you for having me.
This won't be the last time we have questions for you.
Thank goodness.
No, definitely. As soon as this is live, come back so you can watch us put the trades on to make sure we don't mess it up.
I promise.
All right, sounds good.
All right,
thank you so much,
Thank you,
Glenn.
guys.
Have a good day. Thanks, Glenn.
Thank you.
We'll see you again soon. How long do we have to wait before everything's live?
You should add yourself to the wait list so you don't miss.
I did. We'll
We're
find
in.
out. Soon.
Yeah.
Soon.
In coming days.
Okay.
Thanks,
Excellent. That's exciting.
I would like to say something. You did call him Gary twice. That's because you asked if you could call him Glenn Gary Glenn Ross.
Did I call him Gary? I can't get Glenn Gary Glenn Ross out of my head.
I know. That's why I was like, she's just going to call him something different. It's going to be
Hey, you know what? No,
my favorite is he just went with it.
I told him ahead of time. I said, when I hear Glenn, all
And
I think of is Glenn Gary Glenn.
all I keep thinking is, I'm going to call him Gary now.
Gary? Gary?
Yeah, it was pretty funny. No, that was super interesting. And you could tell when we're quiet that our wheels are turning us.
No, but this is going to be.
It makes sense, yeah.
We've got all the people who love trading the SPX 0DTs getting in and out. But we have the smaller accounts who are handcuffed with the pattern day trading rules. Here they can get in and out of trades.
With a small
amount for smaller account sizes. I mean, any account size, right? You can scale up or scale down as much as you want, but you don't have to deal with that pattern day trading. This is going to be huge.
But I do like the one thing that my big takeaway from what he said, which I did love, is when there's not a lot of stuff going on in the markets. Now, we've got stuff going on in the markets now,
right?
But there was a 10-year period where...
Can you sing the Calendar Girl song again? We did.
There was a 10-year period where this would have been amazing.
If we had something to do other than just look for strategies
high vol,
in the equity
sell premium.
when the vol was low.
Correct.
So something tells me, like, even if the VIX gets back down to the low teens, we can still find some FX pairs to trade.
We're going to be cooking with gas.
We might need to make our show an hour and a half.
I agree. All right, should we pop into the platform? I want to take a look what is happening, because honestly, Jenny, I'm not going to lie to you, I didn't know the spoos were up. Did you?
No. I will say the good news today is that BABA is down 10, which we said the only thing that was going to say, this is an old residual, and we already took our risk off of our short put there. So this trade, which looks like we're down $128, really net made money. I'm going to go back in our history, 29 days.
Oh, we did for sure, because
yeah,
you're right. It's underneath.
So,
wow.
Activity.
Here.
BABA in the last 30 days. We only got $1 for this iron condor. So we got $1 for this iron condor. Let me just go to chains.
We bought that thing back for 2 cents. We got $1. We got $1 for it, bought it back for 2.
30 days, $18. That's it. What the heck?
Jenny, you still have to pay for it. You still have to pay for this to buy it back.
Why isn't it free? This is
because you got
this is 1 day to go.
You've got the 25-30. Anything can happen. If it pops up $2, you're back in the money.
I thought this was going to be 0.
No, it's not.
I'm waiting until tomorrow.
But is Walmart still up? Because Walmart was up.
No, Walmart. Well, last I saw, Walmart was down.
What the heck? Walmart was up 3% this morning.
I know. I thought, at least Bob is working. Well, I'm going to leave this and try to buy it back for nothing tomorrow.
I mean,
call me crazy.
This was such a big loss. Just close it.
Fine. 83-cent debit for something that's completely out of the money.
By $1, and it's Baba. This was a massive loss. It was $1 loss.
Massive loss. A $5 white iron condor.
We only collected $1.
That's fine.
So it was a $400 loss.
It's gone. But with Baba down today, I don't want to. I'm not dying to jump back in.
No, I'm not either.
I'm not dying to jump back.
Okay, what else do we need to manage? Yesterday, Walmart was our other trade.
Oh, and Reddit's down today? TLT. Oh, we need it up more than that. We're finally getting a little bounce today, but just
it's just back to where it was, right?
Okay, so I don't think we have anything to manage. Again, if you see red on our screen, when we have green, we take it off. We close our winners, leave our losers till they hopefully turn into winners. And right now, we have nothing but you all, and I'm not even opening it.
Okay, go to Birkenstock, because I would like to show you that I'm hoping it stayed. Because I know you have Birkenstock.
We don't have.
And I know my son has Birkenstock. Just go to Birk. They had earnings.
Up through 60.
It was up 10% this morning. They loved it. They loved it. The crowd loved it.
They loved it. I've got my Birks on that you gave me for my birthday.
Oh.
Yeah.
You have a dress on. You have a dress on. Otherwise, I'd say, show us your feet.
Show us your shoes. We had one on. We took it off so we didn't have the risk on over earnings because we already made some money in there. And a 5 rank in kind of wide markets, I think, I don't know what to say.
No, I just wanted to show because I know that you have it and I know my son has it because that's what we put in his account when you bought him something. So yeah, he was very excited. That it was
when did he turn 18?
November 17th. But he probably got his account right around December 1st, which is easier.
So we bought him some Birkenstocks.
He took some heat all the way down.
Right around 51. He did take some heat.
Yeah, but he's back.
And now it's back up. I remember it was at a school play.
Yeah.
A school play, and he had just opened his account. I was like, Judy, I got a tip for you. Go buy some Birkenstocks.
And you guys did it together on his phone, I think, didn't you? Yep.
Yeah. Good.
So that I knew they had earnings. Now, I do.
Let's pop in Twitter.
That's what I was going to say. Because today we have quite a bit of stuff to do. Okay, so.
I can't believe I was calling Glenn Gary.
Well, you kept calling him Glenn Gary again, Ross. So then at one point you're just like, Gary. So, and he just went in with it.
Why didn't you say his name was Glenn?
Because I figured it'd be more fun to talk about it after he left.
Poor Glenn. Like, all I kept thinking is, we were hammering him with questions before the show because to me, he seems like one of our kids. Like, I have a son.
He's very young.
I have a son who's probably 2 years younger than Glenn. And
Gary. But so that's what I was asking. Like, he's super smart, and that's what it's not. What I want people to realize is that he's an expert. He just started doing it 2 years ago, and he's our expert, right?
Hey, you dive deep into FX, and you spend 2 years on it. You become an FX expert.
You become an expert. It's not, and so that's my goal. Is I want to keep learning new products, new things.
He's got a degree from Northwestern in statistics. I think he could handle the FX.
Yeah.
Like, if we're going to be able to trade the FX, Glenn Gary is the expert.
Well, it's gonna. So when he comes back in second time, so I'm gonna be like, so the numerator.
If the numerator is on top and the denominators, if you
am I buying the numerator and selling the denominator?
And I hit the offer, am I buying the euro?
10 times, Gary. You're gonna have to tell me 10 times. No. Okay, Mikey.
Oh, here's Mikey. Look at this. Look at this free butterfly he's got on.
Oh, you're just ignoring what he says?
No. I didn't see it.
Hey, isn't it Red Shirt Thursday?
Forgot what day it was, Mikey.
Is Jenny's Mikey shirt in the wash? Anyway, locked in $115. Let's close SPX at
nice.
Yes, 58. 95, hopefully. Where is it right
And
now?
then it says, love you both. Mikey, we got another taker on the boat ride. When you come out to go on the boat ride, Tom's coming too.
So he's not scared. I said, she'll only crash twice.
Hey, I told you. I just hired someone. He's repairing the hole I put in when we were on the boat.
I know.
When we hit the concrete.
We got another one. We're going to get another hat. Tom doesn't get a hat. I've already told, there's 3 hats. I'm wearing one. You're wearing one. Mikey's wearing one.
Okay, if you're on the boat and I'm on the boat and Mikey's on the boat and Tom's on the boat and the boat is going down and we only have 3 life jackets, who's going?
He doesn't get a hat. He doesn't get a life jacket.
Who's closest to death? Who's going overboard?
I'm a really good swimmer.
So you're just gonna sacrifice yourself.
I would. Well, it depends on what kind of a setting we're in, but yes. Okay, now pop into here. So this is Carvana.
on Fire.
No, it's Cava. I read Carvana.
Oh,
my nail salon.
hey,
got taken over.
TTWO. That's my
too.
That's one of my son's biggest positions.
Yeah, let's take a look at that.
TTWO.
So AMAT, Cava, and TTWO have earnings today.
And again, TTWO makes some kind of game, Take-Two Interactive Software, some kind of game that my son likes to play. Let's pop on the platform and try to make a trade. TTWO, Take-Two Interactive
So
Software.
this took a plunge and then popped right back up. So can we look at the chart? Not a plunge, but it did. I remember it being like down a little bit and then it's back up.
And what do you do if you're like over Christmas break? Over Christmas break, Logan's like, I want to buy Take-Two. So he bought just some stock. And he still has it, but should I tell him to sell it?
No, because that's how we look at these. Because he's gonna be like, my mom told me to sell this.
Sell Take-Two at
No,
$233 and now it's $400.
Yeah.
That's pretty much.
So he's got to come up with where he wants to sell it, because then he can't say, my mom told me to sell this.
It's very easy for him with crypto, like watching it go back and forth, to say like, okay, when Ethereum gets to this price, I'm going to sell it. It's very easy for him to do that with crypto. It's harder for him with the stocks to say, okay, if it gets to this price, I'm going to sell it.
It's interesting.
Right? Isn't that weird?
It is weird, but that's good. I mean, any way you learn how to scalp, you learn how to scalp, right? So whichever product you feel comfortable scalping in, do it.
Pretty soon he's going to learn FX.
But he doesn't. So the other thing too is he probably doesn't love Ethereum. Like, he likes this. He wants to be in this product. It's kind of like you own Birkenstocks, or you own Disney, or you own things that you like. Those are products I don't mind having in my account.
I don't own Disney anymore. It's going to be called away from me at 101.
But it's still in there right now.
All right, Take-Two, 1186 expected move. Let's see how wide these markets are. It gets 3 stars on the liquidity meter.
Scott's just handing out stars these days.
If we want to be bullish, I'm gonna price out a diagonal. And you know me, this is unusual for me to say I'm gonna do a diagonal.
This is gonna be expensive.
I'm gonna price it out. I'm gonna price out a diagonal. Go to the expected move and get $2 for the 245.
Okay.
And buy at the money. It's not that bad. $5.
It's not that bad. That's
so
not
what do
bad.
we have? 232, 245, $12 wide for $5.
It's not bad.
I don't know.
It's not bad for a Thursday. Now, okay, just giving the pros and cons. I'm actually fine with this. I actually don't think it's that bad. This is a bullish trade, though. Take-Two Interactive Software goes down, you're out $5. Take-Two Interactive Software goes up, you make some money.
You make some money. I could give yourself some room and just sell a put spread. And you know what? I could sell this baby put spread.
Yeah.
$250 wide for $70. And then we're only risking $177.
That seems a little bit more. I mean, don't get me wrong. Walmart makes me really mad because it was up and now it's down, and we had that diagonal in.
Right. Yeah. So, I mean, think about this. If someone bought 1 share of stock for $232, it would have to go up $73 to make $73.
Yes.
We can sell this put spread.
That's a good point.
Yeah, we can sell this put spread for $182, and it just doesn't have to drop below 222 to make $72 in a day.
That's an excellent point, because if you were going to, like your son, he probably has a couple shares. So you're going to make, if it moves its expected move, he's going to make $12 a share.
Yeah, versus here we can make $73 if it doesn't fall below.
If it doesn't fall below. Yeah.
Yeah.
Sure. I like it.
Okay, I'm going to send this. Wide market, I'm going to, 70 cents is my final offer. And we'll see if we get filled.
Okay.
It takes we're usually not in, it's not like one of the most active, most liquid products.
No, it's a little illiquid. Can you do me a favor and pop out the side, see if we got filled on anything yet? Just because I haven't really, on days we're here, it's so off-throwing because I don't see anything. Do you know what I mean?
Just
Baba.
And
while you're there,
working.
push that through, and I'll do it on the other side.
Just sure. I'll send this to the follow page.
There you go.
And people could follow our trades.
There you go.
And see what we're up to. Okay, now, yes, booze up 16, cancel crash.
It's weird because things are down that
This Weeble has fallen every day, I think, since we
put it on.
Yeah, since we put it on. I think we put Weeble on
it's
here.
back to its IPO price.
IPO'd open $16. It's only $12.94 now.
I mean,
interesting. Okay. Anything else on the earnings list?
So it was AMAT and Kava.
AMAT, $175. It does not look like Take-Two. It is not at the top of its range. It's not at all-time highs. And the expected move is...
Are Cisco and AMAT?
Don't ask me.
Okay, because for some odd reason, they're maybe in the same generation or something like that. I don't know if they do the same thing. But Cisco had earnings yesterday, and this morning it was up a ton. I don't know if it still is, because I also heard Walmart was up. Is Cisco still up?
Let's see. I mean, AMAT's up $1. Cisco's...
I'm just bouncing around, but I mean, when Cisco and AMAT seem like they're the same genre of when we were trading.
I mean, from when we were traders, like they were like big names.
Cisco and AMAT.
Hey, you're going to the AMAT pit, you're going to the Cisco pit.
We don't know what they do, but we know they were big at their time. Yeah, so this is still up.
Up $3.89.
Yeah, so
and they had earnings yesterday?
They had earnings yesterday.
How did we miss it?
We looked at it and said, well, you don't really care to do anything in Cisco.
Oh.
We did look at it.
Okay, so AMAT, do you want to just sell a put spread in AMAT?
Kind of. Let's see where AMAT is.
Or let's see if we can sell a naked put. It's only, it's $175.
Yeah,
that's 165 put for $1.10. So $110. $2,400 overnight.
Bring it up to the 67 and a half.
Do another baby put spread.
Yeah.
I kind of like, a 57 cents, not quite enough if we wanted.
But you gotta,
let me price out the diagonal.
Okay, because this will be cheap, I think.
185, 175, 185. It's going to be $10 wide. 175. It's similar in price to the TTWO.
Yeah, it is.
I think we're going to have to sell a put spread, right?
Yeah.
And I kind of got to bring it up. 170, 165, 73 cents.
Yeah, that's fine. I mean, what I like about the put spread, and these are baby trades, but it can go down. It just can't go past 167.
Baby trades, we're using $178 to make 72.
And I liked what you said about TTWO, because when you look at it from that perspective, because JD's got, 5-6 shares of things. So it's like, you're going to make like $3 a share. But you can use less capital and do something with it. Or take it into a put spread on top of it. I don't mind either.
For these younger kids with these small accounts, I love teaching them how to sell puts in low price products. If you think about it, if you can go to a $10 product or $20 product and they can sell a put for 50 cents and get $50 in a few weeks, that would be like buying one share of stock and that stock going up $50 in a few weeks. That usually doesn't happen, but they can get their $50 for selling one put. That's why they have to learn from buying their stocks, and then they have to make that transition
into selling puts. I agree.
Yes.
And that concept is so foreign for kids, being like, it just can't go below here. But when it's on the sheets and it's a monthly option, when it goes down, you look like you're losing money. I was like, you're fine.
But then they don't want it. What puts where JD was like, just get these puts out of my account.
Can you just get all the puts out of my account? He had American Airlines, Archer Aviation, and Snap. 3 low price products. I sold 1 put in each.
I'm going to and I think that's funny is like, just get these puts out of my account.
Can you just get these puts
I heard the airlines were taking a hit. 1176 for American Airlines. If you call this a hit.
It's a hit. That's a hit.
You all?
It's not a boon.
Boon. Tell me again the definition of boon.
Something that is positive or advantageous.
Yeah.
Not a boon.
We learned that yesterday from Jacob. Okay. You all down again. Is this a hit? Do you look at this and think 26 rank, you all's had a little bit of a move down, maybe a boost in vol. Let's sell a strangle in you all?
Yes, sure.
I don't know.
I like strangles in you all.
Let's see how much.
I have stock and I have strangle around it, so technically I've covered like 2 puts, and in the money put and out of the money put.
So we can sell the 65 put for 92 cents.
Ooh, that's pretty good.
And we can sell the 92. We could even give yourself more room if you want.
I'm okay with the 92.
92 and a half put for 80 cents. So we get $178
for 700.
And using only 700.
That's not bad.
That's a number I could live with.
That's a number I can live with.
$178 using 777, 36-day trade. Before we know it, it's going to be June expiration.
I know, it's kind of crazy.
All right, I'm going to ship this. Strangle in you
June
all.
20th. After this, I just got the call from the Mayo Clinic. June 26th, I'm going.
Yeah, just so, right. I mean, update. Mayo Clinic called you. You're finally in. June, what day?
June 26th. So I just looked. It's June 20th, after this expiration.
After June expiration, that weekend, you're going to be packing up, hitting the road?
It's on a Thursday.
Going to
I'll be wearing
Minnesota.
red.
It's on a Thursday.
June 26th is a Thursday. Yeah, so I won't even miss the SIBO.
It's on a Thursday. I'm excited for you to go. And
I
maybe-
know. I'm so excited.
And for those newer viewers, it's
Double
been a
vision
year.
left
It's
eye,
been a year.
yeah.
Liz got double vision. I call it, 'cause when I explain it, it's like quadruple vision, right?
Well-
Like sometimes you see 4 or 5.
Oh, it's like living in the Matrix on this side.
Yeah. So
Yeah.
you like, you see, like you saw 5 of Glengarry's.
Yes, that's why we can call him Glenn, Gary, and Glenn Ross.
Glenn, is that Glenn and that Gary?
Ross.
So hopefully, after seeing every doctor in the Chicagoland area,
Yeah.
maybe they'll have some.
I know, I'm excited. So yeah, they called today. We were talking live on the show, and I was like, well, if they called during the show, I would have taken it. I would have been like, sorry, Gary, I got to step out.
I was on the phone with Liz, and she was like, "Oh my God, it's the Mayo Clinic."
Yeah, so we're going June 26th, which is awesome. But let's, okay, you all sell that strangle because I'm in. And keep
I sold it. Well, I'm working it.
Did we get filled on anything else?
You all working it. Dollars. I will knock it down to.
Oh, we're still wearing.
What did I do? Oh, that's the old. That's the old trade.
That's
Should I
our-
take this off? It's never coming. No, I guess it'll all expire.
That'll all expire.
That'll all
and it's to
expire.
the downside if you all falls down. We've locked in a profit on there.
I
We
know.
locked in $77.
Yeah, we don't need to do-
If it falls more, great.
We don't need to do anything. Okay, 173. Because I wasn't getting filled at 175.
No, yeah,
Come
you
on,
gotta take
you
it down
all.
a little bit.
Honestly,
Big money, no whammies. It's it's already 10:50.
normally we hear dings left and right. I'm not going to hit the bid. 172.
No, you can't hit the bid.
No, I'm not hitting the bid. 172. There we go. So we sold that strangle.
Okay.
$178. I don't even need to put in GTC because I don't think we're going to hit 50% by 21 days.
I don't think so either.
So I'm not even going to put in a GTC.
Okay, let's pop
Still
it.
working our TTWO.
And CAVA, I don't care to like look at it for earnings.
What is Kava?
I don't know. Is that the coffee?
Kava Group. I'm pretty sure every single time we say, what is Kava?
And we say Kava Group. All right, let's pop back into Twitter. Jeff, I think I have an answer for this question because we did ask this. So hold on. Let's pop back into Twitter. So Jeff Jones come in. Can you trade spot FX in a retirement account? I'm thinking no, but hoping I'm wrong. That's what I asked.
And he said in margin and cash.
In margin and cash. So, I mean, if you're thinking retirement account is an IRA, the answer is no. But cash accounts sometimes are margin accounts.
But
Or are-
honestly,
are-
the fact that you can trade with so little dollars, it might be, it might be a way if you're interested in it, you could put a small amount into a cash account or a margin account. I mean, you don't need that much money in a margin account. What did JD start with? $5,000 in his margin
Yeah, but I
account?
think you can have $2,000.
$2,000.
Yeah. Yeah.
I think you can have two. I don't know what the limit is, but
you can also have a cash account. He did say cash or margin.
And cash just means everything's cash secured. So like, let's talk about these American Airlines.
And the cash accounts have no. Wait, don't hold on. I'm gonna.
Oh, more tweets.
No. I just want to say cash accounts have no pattern day trading rule, right?
No, but everything's completely cash secured. So
Yeah.
if we go back to the platform, we were talking about.
We got Mikey. USA, 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 and then we'll go to the platform.
What did he post?
Don't worry.
What did he post?
He posted a picture of us, and he goes, "Upon further reflection, I think this might be called the USA edition because I'm in."
Oh, because I'm in blue.
Yes.
Okay, so here's Lyft. Like I pulled up Lyft June 36 day. When we were talking about the kids, like let's say they want to buy a couple shares of Lyft. Well, if they buy 2 shares of Lyft, it has to go up $25 to make $50.
Where if you sell one put,
they could sell one put here and make $58 in 36 days.
Well, and keep in mind cash accounts. If it is a cash account, you'd have to put up, $1,500. But all you have to do is go down and buy that 12.
Well, you only have to. Okay, so yeah, here in margin you put up $269. In a cash account, it would use $1,540. So Liz is saying buy this 12 and give up a little, and then in a cash account,
You can trade in and out, and there's no rules.
You might want to fix your glasses. You got like one piece of hair that's just sticking out sideways.
That's how I roll these days.
I mean, if that shot gets taken for our,
it's gonna
for our the like still shot for our archives, you're not gonna be happy.
It's gonna. I'm sure it's gonna. Okay.
I think I'll add on some of these puts and lift. They don't look too bad, right?
No,
15 rank be damned. $58.
I mean, I think the ranks are going to be low across the board now. SPOOs are up 14, cancel crash. Where is the VIX? I would like to see where the VIX is.
I'm gonna guess it's 18. 1849. Same place it was yesterday when we looked.
Yes, and then but when everything was down this morning, VIX was like 1979.
Was it?
Yeah, it popped back up.
1849.
So that's why, I think it was 18. I want to go back and look at the study. So I don't know what day it was, but they said when VIX is a certain level,
there's like
the risk of it could spike again.
I want to say when it was like 20.
I want to say it was 19. I want to say it was 18 or 19.
You think so?
I don't know. We're gonna have to go.
We have a meeting with Kai. We'll try to get that.
We're gonna have to take it to the tape. Yeah, I'd like to.
We'll try to get that study. We're 10:54, running out of time. Anything we want to do or need to do?
Do we need to manage Walmart? We looked at it.
No, there's nothing. What are we going to manage? It's a. We have an 8-day 97 call. It's only $1.50 out of the money. Not crazy.
Would you ever want to buy back that 102?
I can almost guarantee you Walmart's not going to skyrocket through 102 tomorrow.
God, I hope it does.
I hope it does too.
I hope it does.
I think that's it. Rivian, we're at 71% on this 12 put in Rivian.
Take it off.
Take this thing off. We sold it for $66 and we're going to buy it back for $19, made $47 on that Rivian put.
You know what's taking a big hit today is some odd things like...
Unless you want to stay, if you want to stay in, this is what I do, buy that back and move it up.
I mean, that's what you have to do because I'm not going to stay in it I don't need $20 that way.
But that's what anything that's gone up, this is a common problem. Stocks have been rising. If you want to stay in, I'm just rolling them up.
And here's the deal. I know we kind of have been drilling down on the puts, and we didn't expect to today. But from this perspective, I would still rather sell that 15 put, even though there's a 10 rank, than go out and buy the stock.
Right. I know they might say, 10 rank, do a call spread or something.
I don't want to do a call spread.
I'll just sell that put.
The call spread doesn't give you any room to be wrong. It gives you 93 cents in room to be wrong.
So we collected, what did we make? We made $47 on that current put. And then we would take in another $72. So we've got over $1.30, $1.35 in credit. And we have the short 15 put. So if we have $1.35 in credit and we're the short 15 put, if Rivian drops down, our cost basis is $13.65.
Yeah.
So it could drop down to $13.65 and we'd still be breaking even on the trade.
Yeah. That's why I would prefer.
And let's roll it up. I kind of like when.
Did you roll it up?
I put the order in. Here it is.
Oh, there it is.
I'll go down to 70 cents. There, rolled it up.
Not bad.
I like to keep an eye on Rivian.
I like to keep an eye on Rivian too. I saw it pass 4 Rivian trucks today, and I like them. Oh my God.
I did pass quite a few Rivian trucks today too.
Okay, let's pop back into Twitter. This is going to be our final tweet of the day.
Final tweet of the day. Let's see.
Because this is a great way to close it. Yep, we'll bring a floaty. Tom is bringing his floaty for the boat trip, which is awesome.
Oh.
And then Florida Trader, Kava is like Chipotle, except for Mediterranean. Oh.
Is there one in Chicago?
I think so.
You think so?
I do. I've never been there, but I think there is some in Chicago. I think Tom likes Kava.
I'm surprised we've never been there. The Seaboat is surrounded by 5 Mediterranean restaurants.
Why? We don't know.
It's like, Liz, what do you want for lunch today? Mediterranean, or Mediterranean?
I think I'll go with Mediterranean. Yeah, it is true. It's very bizarre. Okay, so that was our final tweet for the day. We are going to push everything out while you are there in the platform of the things that we've done today.
I will tell you what we did, and I'll push it all out. So today, we bought back our put spread in BABA, and we made some money back. Made a little bit of money on that BABA trade.
Because it would have been a $400 loser.
It was yesterday. Yeah. AMAT, we sold a put spread. Sold a put spread on earnings in AMAT.
Perfect.
We sold a strangle in UL, just a durational trade.
Beautiful. Are you pushing these out as you're talking?
Yes, I should be.
I don't see AMAT yet.
Okay. Lyft, we sold a put in Lyft.
Perfect.
And Rivian, we rolled our put up just to continue the bullish position in Rivian.
Beautiful.
Okay, now Liz is going to push them out on the follow page, and if people want to see what we did or what anyone else did on the Tasty Network, you can follow them right here.
Yep, and they're there. So there's Rivian, Lyft, AMAT, UL, BABA.
Let's see if maybe Glenn Gary's going to join when he starts trading FX.
Glenn was awesome. I mean, I do want him back.
I loved Glenn. He was happy, smiley.
Loved him. Very smart.
Very smart.
Very smart. All right. Fastest hour of the day is done and dusted. Everybody, good luck trading out there. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddy Mikey Butler. We miss Katie taking the day off, working very hard. She deserves that little time off. So you get just us today. How are you, sir?
Doing good. Doing good.
Yeah.
Just trying to stay warm in this office, you know. It's how it works.
It's hot in here.
Well, it feels good in here. I know this, you're not going to like to hear this, but I'm kind of on Tom's side here. Like, I don't mind. I grew up in a house that would just never had the AC on. So I'm like fine when it's like 75 or 80 and just like balmy. Like I'm fine with that. And I know he's the same way. But
I run hot. I run hot.
Yeah. But yeah, I've got the hoodie on. Because it's just a classic building thing where like it's warm outside, they're trying to offset it, they're blasting the AC.
Yes. Yes.
Feels good. Feels great.
We have a weird day today in Chicago. It's supposed to be like 90 degrees all day today. And
Tornadoes.
Then we have like tornado and golf ball sized hail potentially coming later this afternoon. So who knows if that actually plays out. It's wouldn't be unlike our world for it to just not happen and just be totally fine all day today. So
if you look on the radar, it shows it's supposed to be just fine.
Yes.
And there's this underlying storm brewing. It almost feels like the market.
Yes.
Little underlying storm, but everything's fine. Back up to 6K almost.
Yes, a little bit of a bounce here this morning. We got we had a little bit of weakness in the early part of the morning sessions. E-mini's got as low as 58.67, so they're about 20 or 30 handles lower from yesterday's close. We have since bounced back. We are sitting at basically the high of the session here, 59.27. You've got the NASDAQ up 43 and the Dow actually up 173 here, the Russell up 5. The Dow, we talked about it yesterday, UNH, one of the biggest components in the Dow because it is price weighted as opposed to like market cap weighted. It's based on the price of the stock. So when you go to the Dow Jones watch list here and you sort by price, the biggest weightings in the Dow are the higher price stocks. Obviously, the stock was trading at 600, days ago. It's now at 200 and change. So the Dow has been relatively weak compared to the rest of the indices, kind of catching up a little bit today with this bounce in UNH. It was down. It got as low as almost 248 was kind of the low. It has since bounced, so that is helping the Dow overall. Oil selling off a bit, / CL 61.18 down to $1.50. Volatility futures remaining steady at 19 and change here. You've got bonds up 25 ticks. They were very, very low this morning and continuing lower from what has been a rough week or two here. But rates seem to be coming down a little bit with bonds going up. Gold catching a little bit of a bid here, or I should say a big bid. We got to 31.23 in the overnight session. We're up about $100 from that point. Silver as well, heading higher. And then Bitcoin, along with the risk-on assets today, basically unchanged, but has bounced from the lows. It got to 101,000. It is now at 103 on the spot. So having a nice little day there.
Yeah, it looks like they're pricing in a little bit more of a possibility for a 25 basis point cut in June. It was like 97% that we would stay, and now it's only at 90%, almost 10% that we get a 25 basis point cut. So maybe they're pricing in something, but I mean,
you had some J-Pow talk this morning.
Yeah,
I didn't think it was. I don't know if it was televised or not, but I know he was speaking at some sort of conference or something.
Yeah, but yeah, interest rate probabilities still looking like a 35% chance that we actually get a cut in July, not June. September is where the priced cut is at 50%, 25 basis points. And then December is now a much higher probability that we get to 50 basis point cut as opposed to a 75 basis point cut. So they've basically removed one of the cuts from the projection for the year.
There you have it.
We'll see. We get one. I'm actually in the boat of like they're not going to do anything. Maybe we get one.
There is certainly a lot of uncertainty.
Yeah.
So that wouldn't be a shock.
I'm going to bring that up today on overtime. We'll be there at 3:00.
Oh, very nice. Special guest.
Yeah, with Ilya and Mr. Radigan.
Very
So,
nice.
I'm going to bring that up. I'm going to ask them because I just don't see more than one.
Just
then
because
again,
of the overall uncertainty.
Yeah, it's been that way for the last couple of years. Like last year, they were supposed to do 6. They didn't. This year,
things change.
Same thing. Like, we haven't done anything. Yeah, things change. Yeah.
Yeah.
So we'll see. I think we get 1. They're pricing in 2. I think we get 1.
So you're certain of uncertainty.
I'm just really just filling the air with words right now. You know,
well,
nothing, because it shifts in a matter of seconds, really.
Trades today, you close out of your Cisco position. Nice little trade for you there. I did a couple things as well. I had a Walmart butterfly, risk-free butterfly on into earnings. If you saw Walmart, it actually was up like $2 or $3 in the pre-market session, then sold off this morning. So I closed out of that butterfly that I had expiring tomorrow. It's good timing there. I got a number of different questions on my Coinbase position that I put on in my Johnny Trader account as well as in this account. Yesterday, why did I go with a it wasn't a typical skip strike butterfly. I did it for a net 65-cent debit. I was long the 280, short the 300s, and then long the 330. So it's 20 by 30. My whole thinking there was that I wanted to get as cheap as I could while still using just about $1,000. I didn't want to go past like $1,000. If you had done the skip strike butterfly where you're 20 by 40, you'd use about $2,000 in buying power, and you'd do it for like a 70 or 80 cent credit. So it's a $1.50-ish in difference between your credit and debit, but you're only risking and putting up $1,000 in buying power. So for me, it made a little bit more sense to do that. Into the down move today, I bought in that risk. So now I have this equal with butterfly on in June, the 280, 300, 320, and I have it on for a net debit of $1.23. So it's marked at $1.55. So I'm up a couple pennies. That's with this rally now because I bought in that risk when we were 10 points lower. But again, that small net debit that I have on this position is negligible compared to, taking off the $1,000 of risk that I had on this morning, or the $2,000 that I would have had if I had done a normal butterfly. So this was just like an advantageous adjustment, and it happened to be advantageous with the stock bouncing 10 points now, but it could have gone lower, and it would have been negligible in terms of like I wouldn't have lost anything if the stock had continued lower. So I just took advantage of that move. I also sold out a put spread against my IBIT position. I've been legging out of the put spread into the up move. We had a little bit of a pullback this morning. I sold the put spread out again, so I now have an iron fly there in IBIT. That's basically a scratch right now. So I'm short the 55 straddle with 15-point wide wings. I've legged out of the spreads here and just kind of playing the game here into this move. But again, just kind of taking what the market's been giving me, taking moves to the downside, selling out put spreads, taking moves to the upside, selling out my call spreads, and just kind of playing that game.
Yep. That's all you can do.
Yes.
That's all you can do.
Yes.
Yeah, I made those adjustments, closed that Cisco position this morning. That was a nice little call diagonal spread. And then I placed the trade for today, which we'll talk about in just a few seconds here. But yeah, if you want to join us on the YouTube channel, we're streaming live. Just pop over to Tasty Live. You'll see this video front and center. I've got the link to the Cherry Picks newsletter pinned to the top of the YouTube chat. So go sign up for that. Totally free. Must have. But yeah, if we want to pop over to the slides, we can run through these trade ideas real quick, and then we can get to some trade questions in the YouTube chat. All right, it's May 15th. We are almost to June.
Crazy.
Kind of crazy.
You can sign up and see us in June, DC, if you're around.
Yeah, June 12th.
Yes.
It's going to be great.
Yeah.
Oh,
there it is.
do that. Yeah, June 12th, Seattle in August, Dallas in October, and San Diego in November.
Very nice.
I'm really glad that Brittany organized this to where once it starts getting cold, we're going to California. It's a nice thing.
It's true. Golf recommendations we would take.
Yeah.
So.
Let us know.
Yes.
For all 4 of those.
Honestly. All of them.
But yeah, join us. I'm actually working on the presentation right now.
Yeah.
I
should probably do that as well. Yeah, I should probably do that as well.
Yeah, it's gonna be good.
I'm a little behind.
Yeah.
Kind of a slacker.
Yeah. I mean, there's only so many ways you can slice the idea of trade and portfolio management, but I think we were given this market environment where we just saw the market drop 20%, and that's what we're going to really focus on here with trade management and just trading in general, and just talking about how you can trade through that environment and how we did, honestly.
Yeah. Position sizing. Yeah.
Yeah. So yeah, join us there. You can sign up on tastylive.com/events. Seats are filling up. So if you do plan on going to one of them, sign up sooner than later so that you can get your seat, because they are smaller events, more intimate venues. All right.
Cool.
Let's get to these trade ideas.
Yeah.
I'm going back to the tech stock go up is my theme here.
Oh no.
So I'm getting into a call diagonal spread in AMAT, and very similar setup to my previous one, Expedia, that didn't work out as of right now. But literally the same strikes. Long the 175 call in July, short the 185 call in the May 16th weekly for tomorrow. I paid $9.50 for this. It's actually up $100 right now. It's rallied intraday after I was filled. I would still place the same trade right now if I were to enter it right now. But I will say this, if it keeps going, if we get up to like up 3 or up 4 prior to earnings, and this is like a $200 winner, I'll just take it off and not take the risk. That I don't day trade in here, so this would be the one day trade in a 5-day rolling period. So
it doesn't matter either because the account's over the 25 limit, so you're fine.
Yeah. But if people are out there that are, following along, just to let you know, I'm going to stay in it unless it gets to like a $200 winner pre-earnings. Little pre-earnings pump.
Okay.
But yeah, this risk graph shows you if we were to hold this through tomorrow, get all that extrinsic value of the short option, and I crushed implied volatility in July by 5 percentage points. So this risk graph tells you could look at maybe a $480, $500 winner if you get a rally up to 185 and get all that extrinsic value out of the short. So we'll see. But yeah, just playing to just continue to be bullish on these tech stocks that have gotten hit over the last couple months that are now reporting earnings that seem to be fine. But we'll see. Longer term, long option in July versus June. So if this fails, I can roll the 1 day into June and hedge the risk that way.
Fantastic.
Feels good.
There you go.
Until it's not.
Yes, I feel you.
Beautiful.
All right. We're getting spicy. Pan W. So cybersecurity stock, if you've looked at CrowdStrike or any of the other cyber stocks, Zscaler has gone absolutely banana land as well. They've all really, really outperformed pretty much every other tech sector. And if you're a tech by the dipper, this might interest you. Pan W, the 52-week high is up around 210, so that's kind of what I'm playing for. They do have earnings in the middle of next week, and I'm setting this up a little bit early, but I'm not bothered by it. So it's trading at 193 right now. It's having a nice little day today. Going out to June, I'm buying the 200 call. I'm then selling 2 of the May 23rd 210 calls against it. So we're playing for highs or maybe a little bit under highs here into earnings. This is the earnings expiration, May 23rd. So you're getting a lot of juice there, a lot of positive decay in your favor. You're selling about $4.50-ish, $4 and change of extrinsic value that expires at the end of next week. So it's a very, very good a big buffer for your position with some short volatility. So you want volatility in the sense that you want the stock to move. You want the stock to move higher, but you're short that volatility above 210. So you have some long decay, some positive theta, some short volatility, and some positive gamma with that June option. All the things that I love. So I put this pop at about a 60%. You can see the risk profile. I moved it to the end of next week. It's got a nice buffer to the upside. You have to be making new highs here. I bought the 225 call just to cap how much capital I'm using. You can see from my max loss section here. I did this at a $3.18 debit. It uses $818 in capital to hold that position because I actually have a $5 wide credit call spread that I'm short on the upside. That is the 220, 225 call spread. That's where I have extra risk on the upside. So if we have an explosion to the upside, I have potentially some risk there, but it is very far out of the money. We're talking 2-3 standard deviation. So certainly a big move. My max profit on this trade is somewhere between $300 and $500. I would probably be happy taking $100, $200, but it's something that you got to hold through earnings to see what happens here because you really need that vol to come out of that short expiration, which probably won't happen until earnings are over and done with.
There you have it.
Yes.
I just followed you, but I just kept the equidistant strikes. I just did the 200, 210, 220.
There you go.
So paid a little bit more because the 220 is obviously more expensive than the 225, but keeps it simple in terms of the width.
Yeah, keeps your risk.
Both of them are very similar.
Yes.
So yeah, I like it.
Very nice.
Yeah, anytime you can buy a $10 wide crab for way less than $5.
Yeah, it's
$5 is usually like what you would expect to pay.
Yeah.
Feels good.
Yeah.
It just speaks to the high IV in the 8-day relative to June.
Yes.
For sure. So yeah, I think Katie skipped out on us today because she's doing something that we normally don't do. She's fading the mouse.
Ooh.
Yeah.
It's okay.
Scary.
To each their own.
Yeah. The mouse ripped higher after earnings. As you can see, it went from low 90s up to 110. That's insane. That's a crazy move. The stonk market is stonking right now. So yeah, she is fading the mouse in a defined risk way, going to the 115, 105 put spread, basically risking a little bit less than the max profit here. If you look at the June cycle, the 115 right at the money, trading for about $5. The 105 still collecting $1. So pretty low IV, which is why this is risking less to make more in this situation. But it looks like there's a little bit of put skew, maybe. The strikes are limited, so you can't see it as well. But the 105 is trading for more than the 120. It is a little bit closer though, so maybe not. But either way, risk 380 to make 600. Fade the mouse just for a little bit of a pullback here.
Yeah.
I think I'm gonna get into this too.
I did it. Short delta. Yeah, I did some short delta too. Damn, that's all three of us in there too. It's scary.
What if? I already have a short or a long put at the 95 from leftover earnings. So that's fun. You know what I'm going to do actually? I'm going to do this. I'm going to do another diagonal spread. I'm going to buy the 115 in July and sell the 105 in June.
There you go.
So for 494, get into a diagonal spread here.
I did the 110, 105, July, June, $2.45.
There you go.
Cheapy.
Yeah.
Small little short delta play. I like it.
Yeah, but it's nice because you're paying $2, $3 for a $10 wide spread. Even this diagonal, $4.95 for a $10 wide. If this sells off $2-3, you'll make $200. So
there you go.
We're all in. We're all short the mouse.
Yes.
Believe it or not. All right. That's it. Quick and easy. 3 trade ideas. Pop on over the YouTube chat now.
Yes.
Again, if you want to join us, we're streaming live on tastylive.
Send some trade ideas. If you got something that's got some high volatility, I'm looking. Can't find nothing So point something out to me. I'm ready to roll.
How about some 38 puts and X for Dave?
It's still like kind of in play as a buyout candidate. I mean, these options are juiced.
Yeah.
This,
It's been a buyout candidate for like 2 years, it feels like.
yeah, they had a deal on the table, and then I think both Biden and Trump have kind of put the kibosh on it. I think it's gone on for the last year or two.
Yeah, this is actually pretty surprising
Yeah.
to see such high IV.
Mm-hmm.
$3 for a 38 strike in June. So yeah, the risk you take if this does get bought out is just where that price is, where the price point is.
Yeah.
The nice thing is if it's above 38, you'll just make all this money right away, even if you are in June or July, because the extrinsic value far out in time will just be non-existent if the buyout is confirmed or basically confirmed. The risk is, of course, if it's below 38, then you will lose whatever intrinsic value is below 38 less your credit received.
Yes.
So if you sell this 38 put for $3, you're looking for a buyout price of 35 or higher to make money on this, if that's how it goes down.
Yes.
And if not, then you just keep that premium.
Over whatever the duration is. Like if it
Correct.
doesn't happen in the next 36 days,
Yeah.
it doesn't matter what the buyout is.
Yep.
So
yeah, a little bit higher IV, a little bit higher buying power requirement, but likely due to this still being on the table. Opinion on OGN. Will it continue to $10?
I'm gonna sell the 35 strike puts. I'm
Max.
gonna try and get a little bit in X. Yeah. I'm gonna stop at $2. I'm not gonna go below $2. I want that round number.
Yeah.
All right.
Get a little.
What are we looking at?
OGN.
OGN.
Will it continue to $10 to the upside?
All right.
Organon and Co. Huh.
There's nothing to do here. I have no idea what this thing does.
American Pharmaceutical Company.
Ah.
Specializes in reproductive medicine, contraception, psychiatry, hormone replacement therapy, and anesthesia. So there you go.
The
gamut. Yeah,
I mean, you had all the pharmaceutical cap, whatever price thing that probably had, some weight on this stock. It's an $8 stock, so it's kind of a lottery ticket here just to buy shares. If you wanted to buy calls as like a speculative play, you could certainly do that, but I don't see really a point in selling any premium here. There's really nothing to do here. The stock itself, the shares itself are a call option, so I would probably just buy the shares. But if you wanted to speculate, you could certainly buy some calls here and just kind of play for that sort of move. There's not a ton of strategy on this on this ticker, given where it's trading.
And just looking at the options here, I would not go further than the Jan 2026. The Jan 2026 is still very liquid, 10-cent wide markets for the 10 strike or the 7.5, like whatever you're trying to do. When you go further than Jan, you can see there's zero bid, $5 ask, zero bid, $5 ask. So there's no markets. There's no markets beyond Jan 2026. So that's where I would stop if you're using options here. But yeah, I also don't mind just buying the shares.
Yeah.
If that's what you're trying to do.
That's probably the easiest way, because then you don't, if something happens and it spikes up, you're penny wide delta because you're just long the stock. If you have these options, they'll have extrinsic value, the spreads will widen out, liquidity won't be as good. So that is something to keep in mind. But if you're looking for your YOLO leverage, buy some calls.
Yep.
But not going to be something for me.
Torrey Pines, Spyglass, or Pebble Beach while in San Diego?
Ooh.
I would go for some Pebble.
I mean, gonna have to have a good AMAT earnings trade to afford that one, though.
True. All of those are probably $500 rounds.
Yeah, or more.
When and why is it optimal to put on a butterfly instead of just a spread?
I mean, they're different trades. I mean, a butterfly itself is more of like a. I got filled on my X short put for $2. Butterflies, I think, are a shorter duration type trade. I mean, I know I did mine in Coinbase, but that was kind of like a short premium. You know, like you had risk on that trade. If you're doing an equal with butterfly, I think it sets up for like an earnings trade or a binary event or something like that. I usually don't do butterflies themselves on a 30-day time frame. I'd rather just do a put or call spread and do a more directional, neutral to directional trade.
Yeah. I think, and they're just different. Like, just a spread is no risk to one side. Butterfly is risk on both sides, higher max profit, et cetera, et cetera. So,
yes.
For us, we like the crab trades because we take advantage of higher IV in the near-term cycle versus the longer-term cycle that we're buying with the closer at-the-money option. Same story for a diagonal spread. Like, I would rather do a diagonal spread than a vertical spread 9 times out of 10. Just because you have longer duration in the long option, less IV exposure, it moves faster because you have the shorter-term short option. So, yeah. When we're in environments where the near-term IV is much greater than the longer-term IV, we're gonna lean towards diagonalizing these trades versus vertical trades.
Yeah, because we like to have it. You put up more capital, obviously, to be in that sort of trade, but we like that, you know, asymmetry of potential profit, whereas a butterfly is kind of all or nothing. I hit one today, the Walmart, you know, like that was one where I turned it into a free butterfly, made a couple bucks out of it. Great. I love, you know, incorporating those into my trading, but they're they're slow moving trades, lower upside.
Yeah.
Got to hold them.
Well, I like them too for like downside hedges. Like into a sell-off, you can throw on an SPX broken butterfly. If the market rallies the next day, you move the risk out of that trade by creating a symmetrical butterfly, and you can just layer into downside butterflies that have no risk, that are in for credits.
Yeah.
That's how I've been trading the upside in gold. And into the rips, I've been doing a call broke wing butterfly, and I've been lucky to get the move down to be able to remove the risk in, I think, 3 in a row. So, yeah, broke wing butterflies converted to free butterflies can be a really nice way to just trade the moves.
Yeah.
As they happen.
I would like gold to spike a little bit. My free butterfly I got up here.
Away with the numbers. I usually hang out with the UKIG show.
Ah, very nice.
Started using Tasty platform. Love your show's support. Thank you. We love our IG crew as well.
Yeah.
Yeah. So
Yeah.
just grand old happy family.
We're going to have to incorporate them when we start doing our Tasty FX stuff. I mean, we'll have Frank and Glenn come on the show, maybe Pete, but maybe we'll get some of the UK boys and girls on the show here with us. Be fun.
Aaron's looking at a long 105 put in July and short 120 put in June in AMD.
Oh, so they have the adjustment. They've done this. So they're okay. So we're in July for the 120. We're in June.
120 short in June.
120 short in June?
120 short in June and a 105 long in July. So an inverted diagonal.
Okay.
For a 453 net credit.
So you're basically at a scratch right now. I would close this trade and start fresh. It's just not, you're kind of all over the place with this sort of setup. Let me get my position out of here.
This setup is a bullish trade.
Yes. So
if you want to be bullish, I would just, like Nick said, just close this, go to a call diagonal.
Yes.
Where you're buying the 64-day, selling the 36-day. You have way more upside profit potential and similar downside risk, honestly. And you're going to use less buying power.
Yeah.
Because right now you're using $1,000 in buying power versus $600, $700 of buying power if you converted this to a diagonal.
Yeah. 100%. And, this move that we've had over the last, week or so, going from 90 to 120, it's exactly what you needed if you've been making adjustments on this and you're at a scratch. So I agree with Mike. I think you close it, free up that capital, you roll into something new that has some positive delta so you don't have to worry about that position.
Yeah. The 115, 125, 10 points wide is trading for 590 debit. So you cut your buying power in half. You have way more upside profit potential because your long option and your short option are moving together to help you versus your longer term put out of the money is going to drag on your short put profit.
Yes.
UNH huge IVR trade ideas.
Yes. I just put on, so I have a short put spread in there that is deep in the money. I mean, we're talking
deep.
100 points in the money. It's basically zero. I'm just going to leave it on as a lottery ticket. But I think right now it's kind of an interesting point to do like a call diagonal spread. I did the 300. I bought the 300 in July. I went to June. I sold the 330. You can move this to like the 350 if you want to use a little bit more capital. But I'm out about $20 on this trade right now. I placed it right before we got on the show here. But this sort of setup, volatility here is super, super elevated. I mean, this is a stock that typically has like 20, 30, 40% implied volatility. You have much higher now. So I think this sort of thing kind of plays into the spike potential. You play that gamma. You have a little bit of decay in your favor. It's relatively cheap. Going 30 points wide for $1,000, $1,200. Not a small position, but it's pretty cheap relative to the width that you have here.
Yeah.
And this I expect with UNH specifically, if there is a bounce here, and we're talking, 20 or 30 points, back to like 300-ish, volatility is going to come in very, very substantially. So you have to be, if you're playing this in the near term, you have to be either short puts or put spreads on the downside, or you have to cap your upside potential on these call trades with some short premium in June because it's too juicy not to sell those.
Yeah.
You might, if you're buying June calls at 350 and we see 290 here, you probably don't make that much money on that because volatility is going to get smashed.
Yeah.
You need to be selling that real short-term premium, and then you get your positive value from the gamma that you get from the longer dated option.
Yep. Yeah, you can see just how juiced the June options are. Like the June cycle's pricing in a 50-point expected move. The June of next year is a 100-point move. So you have 10 times the amount of time from this June to next June, but you have half the expected move.
Mm-hmm.
So that's a huge differential. And again, there's no reason not to sell June. Even if you're above the expected move, if you're at 340, 350, like it's not going to come into play.
No.
You're just collecting $400 that is going to benefit your position.
Yes.
Because if it goes to 350 and you have a diagonal spread,
you're not going to care about the $100 or $200, $300, $400 that you lose on it.
Yeah.
You're going to make a comma on each one of your.
Yeah. A comma. Nice. Very nice.
Mm-hmm.
Larry wants to simulate 100 deltas on stock. Say to the upside. What is the best strategy for long and short-term simulations? Short-term, call zebra.
Mm-hmm.
The shorter term it is, the more a call zebra makes sense because all call zebra setups have 100 deltas or around there. It's just way cheaper to do it if you have a shorter term assumption.
Yes.
For a longer term, buying a call, buying a slightly in the money call, just doing something simple like that. The longer term you go for a zebra, the more you might as well just buy the stock or buy an in the money call because you don't benefit as much because to get rid of all extrinsic value, you have to move your 2 calls really far in the money.
Mm-hmm.
So
Yeah.
that's kind of the gist of it.
Yeah. Yeah, obviously miss out on dividends if you are using Zebras. So that's another consideration if this is like a stock that pays dividends and you're looking, a year out or 2 years out, you have to keep that in mind too, that you're missing out on that. But it's a stock rental. So shorter durations are going to give you a lot more leverage than longer durations because your rental is a shorter time frame.
Indeed.
Yeah. And it depends on account type. IRA cash accounts, you're going to get significant leverage relative to buying the shares. Where in a margin account, once you go past like a year, it probably uses the same amount of capital from a margin perspective versus your risk perspective on a Zebra or in the money call, because you get that added leverage in a margin account.
Mm-hmm.
E-mini's up 22, high of the day.
Classic.
Buy the dip.
Robinhood, SoFi, oh my.
SoFi, perfect spot for me right now. I need it to sit right here.
Right at 13.
I got 2 14 calls and the 14 put in June. I'm straddled right at this price. Yes, with a bunch of rolls. So this is exactly what I need.
Love to see it.
Yes.
But yeah, SoFi is one of those fun products. You can do whatever you want in there. Premium is a little light, but very tradable.
Yes.
But yeah, if you're in like June or July, totally fine. Robinhood
might be one for you. SoFi.
Yeah.
What's the volatility in there? And low. Do poor man's cover call or even normal cover call. You're looking for something new.
Hood.
The hood, what are we thinking?
It's almost back at highs. Just casually doubled in price since April to now.
Yeah.
So yeah, this one's tough. I mean, low IV rank, but still implied volatility is plenty. 65% IV. You can sell premium in there all day. It's just tough. Like, what are you gonna do? Like, what do you do when a stock doubles in a month?
I'm going to do the 60-65 call ratio. Get a little bit of a down move. I can sell put. You can't get long here. This is kind of like if
Silly
we,
mode.
yeah, if we get a little bit of a drift higher,
Then fine.
yeah. But I do this 82 cents. We'll see if we get filled. $800 in buying power.
Beautiful. John did a diagonal in Boeing.
Ooh. Upside, downside.
Call diagonal. Just
Nice job.
looking for a continuation of moon. Yeah, this is a big one.
Oh, I'm going up. I got
This one, I kind of, I'm kicking myself for this one.
There we go. 80 cents. Okay, Boeing. What are we doing?
I mean, this move is insane. But yeah, big rally from the lows from April. Boeing's another one of those stocks, though, that's like, it's so embedded in all these airlines. It's just very volatile.
Yeah, volatility. Well, volatility now is low.
Yeah.
We've had some realized volatility, no doubt.
Yeah. But yeah, if you're looking for a continuation to the upside, defined risk is certainly how we would do it. And yeah, you can do like a July, June diagonal, 10 points wide, 15 points wide for less than $1,000. So
yeah,
I can't personally do it yet. Like I'll look for a sell-off first and then get into it. But yeah, it's a good trade today
Yeah.
for sure. How about selling naked calls? Wow, James Bond.
Ooh.
Coming in hot. Naked calls in CZR with high resort fees and everything being expensive on the strip. What do you think of going bearish on the gaming stocks?
Caesars.
I
Do
don't
they
know.
have earnings? I think they had earnings like either this week or last week, maybe. Oh, probably on this gap up, I would imagine. I mean, $300 buying power. I don't hate it. I just get wary of 70, 80, 90 cent options. Right at the money. Like, it's tough.
Yeah. I don't know. I can't fade. I don't want to fade sports betting. Basically, that's what you're doing.
Fair.
I don't know. If it was higher, I think I'd be more fine with it, but I don't know.
Yeah, it's kind of in the dumps. I mean, it's had a nice rally here but I guess it's right in the middle.
Yeah, you can do
22 and 44.
I wouldn't sell calls though. I just think you can just get more bang for your buck just defining your risk, do a diagonal spread or something like that. Like the July 64 day, like it's $200 to buy a 30 strike call. There's just no reason to take all the risk to the upside. You could do a 3-point wide or a 2-point wide, or a 3-point wide diagonal is $1.50. That's your max profit on your short call with a fraction of the risk and a fraction of the buying power.
Yes.
So, but that's just me like being scarred from short calls. So, long put diagonals I'd much rather do. Which hoodie is this on the website?
That's a retro.
Is it?
Yeah.
I think this is on there. It should be. Is there a zip?
I think those ones specifically were like back when we were still that name. The one that you have.
The one I have.
This one, yeah. But we are selling those.
Yeah.
That specific one.
I'll try and find it.
Yeah. It's tastytrade.threadless.com.
Yeah.
Or is it threadless.tastytrade?
Tastytrade.threadless.com.
Yes. Get some swag.
Yeah, this is the classic fleece zip up. It just looks a little different. There's a cherry on it now. Let's see. When a stock doubles in a month, you buy. When a stock halves in a month, you buy. Any questions? Not from me, Stonky.
Sounds fair to me.
Hims, 61 IVR, sold a call ratio yesterday, but there's still juice in there if you wanted to set up a strangle.
Oh, this thing is a mover. I had an email from somebody buying far out of the money call spreads. Shout out to them for nailing this move. It is one. I mean, they reported earnings, so that's off the table here. But it is a mover.
Yeah, it does certainly move. But yeah, the ratio in there is going to be nice and wide.
Should I do like the 60-75? How do you lose on this? he said before he got his face ripped off.
How do you lose on this? Well, if you stretch your graph more vertically, you will be able to see where it could go to where you would lose. But yeah, the 60-75 brings your break even at 90. Which this stock has not seen 90 before. So yeah.
How about the 60-70-75? 1-1-1. So it's a ratio. Gives you a break even at 85. You do it at 82-cent credit in June.
It's all you.
75 is the high. All right, we're going to do that.
It's all you.
88. Let's see if we get filled above the mid price. See, it's
fun.
I'm willing to dabble.
Yeah.
And this sort of trade, because you're moving the shorts far out of the money. That's why you're getting only an 80-cent credit here as opposed to a $2 or $3 credit. But if the stock stays kind of range bound or even goes down slightly, you probably capture some value just via the long option that's closer at the money. If this skew kind of lightens up, which it's very, very skewed to the upside, that's another benefit for you. And this thing's moving. I'm going to go to 75 cents. We'll see. There you go. All right.
There it is.
Got price improved to 76 cents.
Tim commenting on your XOP Himalayan mountainscape when you used to do butterflies.
Oh, yeah.
Fly them off.
Haven't traded XOP in quite some time.
But yeah, it's a nice way to just like layer into just a myriad of different positions.
Yeah.
Broke wing butterflies, playing the directional moves, freeing up the risk, blah, blah, blah.
Yes. Any more?
Yeah. So yeah, the AMD position we were looking at was a strangle, rolled out to August. So yeah, if you're doing strangles, that's fine. You're short the 125 in AMD.
Oh. In
Short the
June?
100, short the 125 in July.
The 100.
Or no, August.
You're in August now?
Yeah. Rolled out to August. So you now have a 100, 125 strangle in August.
It can't be a $4 debit or a $4 credit.
It's a $4 credit.
This can't be a $4 credit. If you're short the put at 125.
Short the call at 125.
Ah, okay. So we got a strangle.
Started
125, 100.
Yeah, it was a 75, 115.
Okay.
Rolled the 75 up to the 90, rolled the 90 up to 100, rolled the call from 115 to 125. Now short the 100, 125 for a $4 credit. So yeah, it's a long-term strangle.
You can't do that. You got to close this. 90 days.
Strangle. It's a long time.
It's a long time. You got vol low. The move today is helping you, but the move over the last week or so has not really hurt you all that much. Volatility has come in significantly. You close this and you start fresh. Rolling out this far with short premium, you
on both sides.
On both sides, you're stuck forever.
Yeah.
And by forever, I mean the next 60 days, and that is forever in markets.
Yeah. If it was just a put or just a call, it's easier because you get the delta.
Yes.
Where when you have risk on both sides, you offset the delta, and it's more about the theta and IV. So yeah, I mean, this has been a crazy move. You've managed it throughout.
Yeah.
Through the hellfire of April, you're down a couple $100.
Close the trade, start fresh.
But yeah, if you want to keep it, you can keep it. It's just you're going to be in this trade for a long time.
Yeah. Or buy the wing and forget about it.
Yeah.
Buy 20-point wide wings and just leave it on.
Could work. Like buy the 80 and buy the 145.
Yeah.
Yeah. You give up a lot of premium on the call side specifically.
Yeah.
But yeah, I mean, it's tough.
I would close too long. Sometimes you just got to eat a loss. Like, I know that it's very fun to roll it and keep the dream alive, but sometimes you got to look at this and be like, you know what? Volatility has come in significantly. I may back some money, which you certainly have in this position. If you had the 115 calls and you rolled out this, rolled, did all this stuff, lesser loss sometimes is like a positive. And then you can start fresh and build the position to what your current assumption is, not one that you've managed over the last month, 2 months.
Yep. Coin. What's going on with coin? Coin bullish trade. Yeah. So Coinbase is being added to the S&P.
Yes.
So that was the spike 2 days ago. Looking at a 260, 300 call spread. To buy a 260, 300 call spread twice to cover buying a put spread.
Selling the call spread.
Selling the call spread.
260, 300.
260, 300 to buy a put spread, 230, 220.
Sure. I mean, it's a super bear, as they would call it. This sort of setup, I mean, you're selling a bigger call spread, so you have, it's a higher probability trade. You're looking at like a 60, 70 pop. Like it's good if you're bearish. I have my upside play in Coinbase, which is kind of like a very cheap / free butterfly at this point. So that's my position. If we get up there, maybe I'll look to put some short delta on. But yeah, I like it. It's, you know, you have call skew here, so you're selling a big wide call spread. Yeah.
I like it. OGN is still going up. Will it hit $10 today? You can just look at the probability. Probably not.
We looked at this. I mean,
there's an 8% chance that it goes to 10 today.
Through tomorrow.
Through tomorrow, sorry.
Yes.
Through tomorrow.
There you go.
We're at the bottom of the chat. How are we
There we
trading
go.
Take Two, TTWO?
They got earnings coming up 15th after the close today. Are there any other stocks of note today? Let's see. So you had Walmart, Baba, John Deere this morning. You had AMAT, Kava, Take Two.
Ooh, Kava.
A throwback. Space.
My God. Spice.
Yeah, remember that thing? It's at $3 now.
Kava.
What's Kava at?
100. After the close today, $10 expected move, big IV.
Mm-hmm.
I mean, I just don't need to go long Kava.
I know. I was thinking of playing it like with like a put ratio spread or something like that. Take Two. Take Two is another tough one. Stock at highs.
Yeah.
High volatility.
Yeah, Kava is very good. I'll tell you that. Let's see. Scanning.
What if we do another?
Kava downside expected move butterfly. That could work.
Yeah.
Cheapy.
Yeah.
For sure. Like a 95.90.
Yeah, that's what I was looking at for like a 20-cent debit or something in the.
Yeah. 60 cents for a $5 wide in the 1 day.
Yeah. That probably makes sense to just buy the 85 just to cap your risk. I'll do it. I'll bite. 60 cents. Why not?
Why not? AVGO, May 23rd, 210 short call. Is there assignment risk?
AVGO 210 May 23rd. Does it have a dividend coming up? It looks like they do quarterly dividends.
Yeah,
so I would,
next month.
Yeah. I mean,
not really.
Yeah. It doesn't change anything.
Yeah.
If you get assigned in the next 8 days, there's no difference in your risk.
Yeah.
So
Your delta goes from 90 to 100. It's already basically at 100.
yeah, it's at 91.
The only reason why it's not at 100 is because there's extrinsic value left in this option. 50 cents. So if you are assigned, someone's giving you 50 cents.
Yeah.
And you could just close the shares and resell this call, or close the shares and roll out to June. But yeah, your risk is the same. You have unlimited upside risk above 210. Your max profit improves to the downside if you're assigned, because now you have static delta instead of the short call delta that goes away into a sell-off.
Yeah.
So yeah, if you're worried about it, you could just roll.
Yeah, that's really the biggest question is like, why hold it? Are you holding it because you want to be short the stock? Then that's what you have on. But if you're just holding it, out of stubbornness, maybe it's just a roll. Buy back to 210, you roll to June. You can roll this up a little bit, be a little bit less short if you want to, and sell a put against it, do it for a small credit.
I think that's it.
Cool. Lunchtime. What do we got today?
Pizza.
Ooh, which one?
I think Lou's.
Really? Oh, okay. Nice.
Could be wrong. Could be very wrong. But I think it's lose.
Yeah, Wednesday is usually, or it's not Wednesday, it's Thursday.
It is Thursday.
Thursday is a pizza day.
Thirsty Thursday, PGA Thursday.
Beautiful.
Yeah, all the Thursdays. But yeah, that was fun. Got some new trades on. We will post all of them to the follow page shortly on Tasty Trades platform. But if you want to follow us on Twitter, you can reach us there. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. We got plenty more content on the YouTube channel as well as tastylive.com coming your way. I'll be joining Ilya and Dylan at 3 o'clock for overtime. And I'm going to force them to tell me what they think about interest rates. So
beautiful.
Stay tuned if you want to watch that. But yeah, plenty more content. Stay tuned on the website as well as YouTube. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trading like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means? Time for a little more Tasty Live for confirm and send. Can I do a little public service announcement? I know you hate public service announcements, but the diamonds have a dividend. Just like I know you don't trade a lot of diamonds, not that widely traded, but they trade a lot of it in Europe.
Is tomorrow expiration?
It's tomorrow expiration.
Should be.
Yeah.
So
third
funny.
Friday of the month for the last 1979 until now is expiration.
So I got the actual numbers for May expiration because I may have been a little off yesterday afternoon.
Oh, so you were misinformation again.
The massive misinformation. May expiration, the settlement in 2021 up 19 handles. The settlement in 2022 up 37 handles. The settlement in 2023 up 10 handles. The settlement in 2024 up 16 handles. So the last 4 years, the move from Thursday night to Friday morning has been up 19, 37, 10, and 16. So 4 consecutive up moves. That gives it a little bit of bias to the upside. The number of down moves in the last 27 years.
But now this is just for expiration. We're not.
It's just tonight for tomorrow.
Right. So one
The number of down moves for SPX expiration in the last 27 years, 10. Number of up, 17. The average down move, $10, 10 handles. The average up move, 7 handles. And the average move total is about 852. We'll take a look in later and see what the expected move is tomorrow on the opening. It's only been 852 for the last 27 years, but I'm guessing it's probably going to be 25 or 30 where volatility is right now, maybe higher. But we'll take a look later today. But anyway, those are the actual statistics.
Very good.
I thought it was more evenly matched, but I was incorrect. And there you go. We have a little confirm and send. These are emails that came into us overnight from viewers all over. And we have a few extra ones today because Vanetta is in parts unknown on vacation.
But you know, but you're not telling us.
Parts unknown, but I know. I know. But if you guess, I'll give you one guess a day.
I know where she is.
Oh, you know where she is?
Yeah, she said it on the break. But I mean, you know.
Oh, okay.
Be cool, guys. Be cool.
I go by the mafia code. You know what I mean? I'm not a rat or anything like that. You know what I mean? I make believe I don't know. You know?
Tell Tony, tell the world. But I would not tell you. But see, I was protecting her. But okay. All right. It is Thursday, May 15th, middle of the month. let's do this.
Ready.
First email. How do you calculate the expected move? I've noticed that it's different on different platforms. Got this question a bunch over the years. I've also noticed that it isn't always the 16 delta strike. I thought the 16 delta was supposed to be equal to a 1 standard deviation move.
I mean, it is just about 16-ish delta. I mean, if you're just back of the envelope looking at it. And every platform uses a little bit of a different formula for expected move. And that's why you get a little bit of a discrepancy. But it's all in the same area.
Yeah. You know, expected move is a funky term that we came up with about 25 years ago and added them to retail platforms. The first one we built it on was the Thinkorswim platform, and we called it the market maker move, MMM. But we've since changed that to expected move. When we built it into TOS, 25 years ago, we essentially took the at the money straddle and the at the money strangle, added them together, divided by 2, and kind of gave you kind of a rough, interpretation of the front month straddle, and that used that as expected move. Over time, as we built Tasty, we got a little bit. We decided to clean that up a little bit and make it a little bit tighter, a little bit more accurate. So what we do now is we take 60% of the front month straddle, 30% of the next nearest strangle, and then 10% of the next nearest strangle. And so we basically smooth the skew over 3 different strikes, and then give you, whatever that number, the average, whatever that number comes out to. It's a little bit, it's probably a little closer to, it's a little more accurate. Now, the reason the 16 delta doesn't work perfectly is because sometimes the 16 delta could be skewed based on implied volatility per strike and things like that. But like Tony said, it's close enough.
Yeah, it's
no hero stuff here, okay? Generally speaking, the 16 delta is your expected move. But if you want to, you can always use what's on the platform on Tasty. I think we have kind of the most accurate formulas built into this platform because it's the newest. So
new and improved.
And we're constantly updating them to make them even better. So yeah, that's how it works. So the next person writes
read this for you. The font gets a little bit smaller. You all right?
Actually, here it is.
Want these?
No.
Are you sure you don't need them? Probably. You could see. You got
no, but the number just came out.
Hey, even the S&Ps haven't moved. They're down 26. Bonds are up 8 ticks. That's moved 4 or 5 ticks there. 112.20.
No, but I'm going to.
Gold is unchanged. Actually, up $1. That's you're moving there. Volatility in by 5 or 6 cents. It looks like a
I am going
move.
To sell out my notes.
Notes are up 7.5 ticks, trading near their highs for the day.
Yeah, I just sold some at 31. I'm offering some more. We bought them last night at 20 and 21. So it's a little kind of an okay trade. Bonds really didn't move much. They're up 2 ticks. They were just up 9 ticks. I probably should have been a little more aggressive.
Everything is hindsight.
Everything is hindsight. But, that's the kind of thing. Who knew? So I'm offering some more at 31. We'll take that little profit if we get it. And you're right, gold. I had this bad feeling about gold this morning. That's why I bought in a few contracts. But I don't know.
Gold basically unchanged after being down around 60, 65.
Yeah. Sorry, Beth. Let's go back to the next slide. So I've been following the Unlucky Investor's Guide to Option Trading for constructing my portfolio this year. That is the book that Julia Spina wrote. Julia's one of our researchers / data scientists / physicists. She's the jack of a lot of trades. It was all great until the sell-off a couple months ago. I was using 30 to 45% of my capital, but my naked options grew teeth. and I ended up selling all of my core positions and stock positions. I'm finding it difficult to get back in the saddle. Any guidance on portfolio management during sell-offs?
I mean, this is on entry, 30 to 45%. I mean, how do you mitigate problems? You do that on entry by trading small. Now, 30 to 45% of your capital it is at the higher end of the range, but I'm okay with that. And you said you had to sell out of your core positions and stock positions. I don't know why you had to. You mean you felt like you wanted to. So I guess how do you make it more tradable, or what guidance can you use? I mean, if you're talking about core positions here, I'm surprised that you changed course here. So I don't get.
Well, I mean,
I know if you get a strangle and you pick up deltas somewhere, and you roll down and you get taken out of a position, I get that. But if a core position, I'm a little confused.
Well, they just got nervous. I mean,
Okay.
like they saw something that they had never seen before.
Sure.
And I mean, a lot of us haven't rarely seen moves like that.
Yeah. But it's certainly not used to it. That's for sure.
We're out of our 10-year notes from yesterday.
Beautiful.
Winner, chicken dinner. Oh, by the way, I hate to interrupt this, but I forgot with the earnings plays last night. I didn't look. Baba was one of them. It looks like it's down $7.
Baba is down $7, 127.
6.5.
Change, maybe 6.5 to 7.
And what was the other one? Oh, Walmart.
Walmart, WMT. It was
Sprawlmart.
changed a moment ago.
Unchanged.
It's still unchanged.
Think it's come out?
I believe so.
Sprawlmart unchanged. Baba
Walmart
down.
definitely came out.
It came out?
Yeah.
Okay. Anyway, so Walmart unchanged, and Baba down $7, 6.5, which I think is inside the expected move.
It is. Even
Okay,
the
sorry,
S&P
Beth.
Down 16.
What?
Even the S&P is down 16, catching a little bit of a.
Yeah, they were out a little bit. The bonds are back to, we sold out of our notes at 31, and the bonds are back to up 8 or 9.
Mm-hmm.
They're 120.20. Like I said, I need 114. So let's go next slide. So anyway, no, go back. So I completely understand. You're following along. Everything's going great.
But we talked about this. Like, let's say you had a covered call on and it went too far and you were uncomfortable with the position, but it was still kind of a core-ish position. Close the covered call, use a lot more buying power. Maybe you get into a vertical spread. You don't make back the money that you lost from the covered call, but you're in the game. I mean, I would look to take less risk if I'm doing something like that.
So everything's going along swimmingly. And then all of a sudden, the market does something that it doesn't usually do, which happens once every
anticipate. Sure, whatever.
Which happens once every 7 years, 10 years, whatever it is. And you get some kind of a really volatility explosion, and you get a huge down move way outside of the expected move, and it throws you off, and you're like, damn, everything was so good, and now now this costs me. And so you get frustrated and you get nervous, so you blow out your position, which is not that you're not alone. Let's put it that way. Mm-hmm. Most people will try to fight it. I try to fight it. Tony fights it. But if you've never fought it before, I can understand. You're like, listen, I'm better off just starting over. I get that. It is difficult to get back in the saddle, but what you have to tell yourself is what we just experienced does not happen very often. And what you were experiencing before that, which was probably a reasonable amount of success, does happen more than not. And there are going to be some losses along the way, but these volatility explosions like you saw, those are going to be pretty rare. So, I mean, that's what you're going to be challenged with explaining to yourself and kind of trying to rationalize. I'm not sure that there's much. I'm not sure there's much else we can do because, the markets are totally random, and we are challenged by the exact same move. It wasn't like when that market dropped in early April, it wasn't like we were sitting back going, man, we called this, because nobody did. Let's go to the next slide. I'm confused about when to recenter, buy the guts and sell the wings. When do you do that? Do you do that in the same month that you're currently in, or do you roll out in time?
Yeah, you can do it all. I mean, let's just take today as an example, if you were facing this dilemma today, June, which I would expect that's where you had your original position, that's 36 days. We typically roll at 21 days. So you got 15 days before you're really going to roll. So for me, I would not be looking to go to July with 64 days. I'd be doing it in this month of June. So I'd be buying the guts in June and selling the wings for a debit in June. Now that leaves me with a short strangle and positive theta decay, which is what I originally wanted and which I am happy to have. If we were closer to 21 days, maybe 30 days, 26 days, something like that, I'd say you'd be doing the same thing, but I would be buying the June options that are closer at the money and selling the July options that are further out of the money. Put myself into a strangle again, if that's the position I have.
We used to say that you should recenter, that you should consider recentering when maybe when the strike was breached, or when the strike was challenged, or when you go inverted, any of those times. We're more aggressive now because we found
Research has supported it.
We found that that if you're trading liquid underlyings, it's just as easy to get filled, on all four legs as just two legs. So I'm a little more aggressive now. So my answer to this question is, you recenter whenever you're uncomfortable. Just recenter. As soon as you get uncomfortable, just recenter.
Yep.
As long as the underlying's liquid, just whenever you want. Just all four legs. Buy the guts, sell the wings. Boom, boom, boom. I do it all day long. Never hesitate. I've already done it this morning in commodity options, probably on four different underlines. So do you do it in the same month? Yes. 95% of the time you do it in the same month. Do you do it?
It's a big number, but okay.
Do you roll out in time? Sometimes, if you get near 21 days, we may roll out in time and buy the guts and then recenter in the next month. But I would say that mostly all the time, 9 out of 10 at least, are in the same month.
Big number, but okay.
Okay. I mean, it's just my own, maybe yours is different. So
it's bigger. Go ahead. What? I just saw your May 9th piece on Ultimate Guide to Strangles and Iron Condors. But how do you pick your underlings? Do you pick by IVR or minimum price or something else?
Can I tell you a pet peeve of mine? No, this is not what you think. What?
Underlings?
Underlying.
I know, I'm just teasing you.
Underlyings is a pet peeve because for some reason it always comes up as that's not a word.
Is it not a word?
Type it in. Type it in. And I guarantee spell check is going to tell you that it's not a word.
Oh, man. This is off with their head, whoever wrote this.
It bothers me. It's been bothering me for 20 straight years.
Underlying.
Underlying is a word. Underlyings.
Yeah, no, I don't see it. No, I don't see it with the S.
Yes.
You're right.
Bothers me. So all of a sudden, as soon as you have with an S, it's considered a misspelling. I don't like that.
Yes, underlings can be considered a word.
Underlying.
It's the plural form of the adjective
Not
underlying,
underlings.
meaning something that you asked me, and I said
Underlyings.
no. I said, is underlings a word?
It's not underlings.
I know, underlying's a word. I said that. Yes, underlyings can be considered a word. It's plural form of the adjective underlying, meaning something that is situated beneath or forms a bias for something else.
Well, then somebody needs to tell Microsoft. You need to explain that to Microsoft.
I got it here on Google.
Because that pisses me off.
Mm-hmm.
So we did a piece called The Ultimate Guide to Strangles and Iron Condors. But how do you actually pick your underlyings? Do you pick by IVR, by minimum price, or by something else?
Yeah, IVR is the first. I mean, listen, first I go to the high option volume list. You can go to any list you want, NASDAQ list. You can go to a list of stocks that you like to follow. It doesn't matter to me what list you go to, but I typically go to high option volume list, and then I rate or rank by IVR, highest ones, and I throw out earnings. And then I look for there. And then I just kind of, cancel and replace which one I want to trade and not trade for whatever reason.
There are lots of different ways that people pick.
Sometimes you get a phone call or an email. I mean, we do it twice a week where, viewers will call in with an assumption. I never traded this stock before I look at it and has good IVR. It has decent tight markets. Okay, I'll make an assumption on this one just because of the math.
Sometimes when your friends tell you to do something,
you do the opposite.
You do the exact opposite because that's probably the best thing you can do. Or
what if you don't have any friends, Sadaf? What if you're more of a person?
If your mom tells you something,
or your mom tells you,
and you do the opposite,
right? Or what's that? Selma's son tells you to do something. What do you do then?
Right. The opposite. You always do the opposite.
Always do the opposite.
But how do you pick your underlyings? The reality is we pick them based on a combination of multiple things. We pick them based on IVR, based on liquidity, and based on it's not necessarily a minimum price, but it could be based on price. In other words, like we might not trade something that's $7 and we might not trade something that's $700, but we also choose things based on our own interpretation of price extreme, which means nothing to anybody else other than it's a personal opinion about price extreme. I mean, at the end of the day yesterday, I sold some NVIDIA stock because I thought NVIDIA was at the high end of its range. I sold some Tesla stock because I thought Tesla was at the high end of its range. There's nothing that actually tells you if that's the case. It's just a gut feeling.
It's an assumption, right? And then you try to pick out a high probability trade to fit that assumption based on the IV rank and liquid market.
I mean, I bought some UNH because I thought, hey, we're on the low end of the range, and now it's down $20 this morning. So, I mean,
now it's at a lower end of the range.
Right, but I'm saying you just don't know. Sold some Tesla, it was down $10 this morning. Bought some UNH, was down 20. So you just don't know. That's kind of what trading is.
Yep.
But IVR, price extreme, liquidity, that's what you have. I mean, you got lots of choices too. It could be things you like, don't like, anything. That's the great thing about the markets. You're not you just don't have to bet on one baseball team or one football team.
Oh, and it's ever evolving too.
Let's go to the next slide, Beth. Did you stop carrying 200, 300 short deltas past 100K in net lick that you used to talk about all the time? Do you now take more of a delta neutral stance? When did you start doing this?
I think you have, yeah, and I think it's something that I know you can speak about it more because they're asking you in your position, but I think you have, yes, especially after the little bit of a down move. We actually picked up some long delta in there. Some of it was good. Some of it you had to wait on a lot longer than you wanted to.
When you're in the midst of a decade-long bull market, you're going to repeat the phrase many times. Yeah, I'm leaning with a little short delta here to protect my premium, my short premium. But we always said during that period of time that if the market ever sells off, you're going to see us probably be a little bit long delta. We're not married to being short delta, short premium. If the market sells off a lot, we might be long delta, short premium. And I think that's the case. Now we kind of I feel like the market went from being very overbought to being very oversold, of which we were definitely long at the bottom, and to being very fairly priced where it is right now. I don't have a huge market opinion here. I mean, for the day, I might be a little bit bearish, but for the near term, I'm not much of anything. I'm kind of I think we're going to stay range bound, and I'm not overly bearish. I'm not overly bullish. So why would I be short a certain number of deltas? That's how we used to be on the way up when we were rallying for multiple years consecutively. I was worried about a pullback. Now, after a huge sell-off, I'm not worried about a pullback as much, and I think we're going to be range bound, so I'm pretty neutral. So we started doing this, I guess, you could say after we started selling off.
Very good.
I mean, it's a little bit of common sense. Let the market take you to wherever you want your position to be. That's kind of how we approach this. Let's go to the next slide. And by the way, the bonds are down now, down 4 ticks.
Bonds are down 4 ticks, 112.08, about 4 ticks off of the lows. Even the S&P is down 20.
Notes are up 3 ticks.
Better.
What's the reasoning? What's the reason or reasoning behind rolling? If I understand correctly, rolling means that you realized a profit or a loss on an existing position and you're now opening a new position. Why not simply close your position and move on with new positions with higher probabilities versus defending an existing position by pushing it out in time with a lower probability of profit?
I think there's a couple of hidden kind of in between the questions here that need to be cleared up, and you're basically saying exactly what we're doing in the end. Let me kind of explain here a little bit. Each night when the market closes, your P&L reflects your position. So you may think that you're closing a position when you buy back the guts, meaning the closer out of the money options, and selling the wings and opening a new position. But that P&L has already been reflected in your account. End of story. Each day, mark to market, each moment, mark to market. So whether you close it or not is irrelevant. I'm not an accountant. It's not, each day you're not mark to market and then you have a tax bill for it. It is what it is on that day or intraday as you're trading. So all you're doing when you buy the guts and sell the wings is reducing your delta risk or reducing your gamma risk on the trade that you have here, both of them at the same time. So whether you close it and open a new position in the same month or back month is only kind of the reason you would do that was if the IV rank in that stock still supported. So let's assume that it has a high IV rank. You had a strangle on that was further out of the money with an 80, 85, 75% pop. Now you got a 50-50 shot. You have to say to yourself, do I want this 50-50 shot of keeping the guts on, or do I want to buy that back and roll out to have less delta risk? And that's typically what we do. So we're not defending the existing position. We're actually closing that position, as you said there, and opening a new position, because that's what it is. Whether you think in your mind you're defending it or you're closing and opening it, it's basically the same exact thing.
Yeah, I mean, I'm going to second what Tony said. Everything you wrote here is totally fine. The reason that we feel like sometimes rolling a position is better for us is because we're in the position already and we've been watching it, so we feel comfortable in it. Rather than having to close both sides, we're only just rolling up one of the sides. So, or rolling down one of the sides. So I feel like it's an easier adjustment than it is to close and reopen a new trade. I feel like there's much less slippage in there. And usually when the IV rank stays high, there is a reason we're in the trade to start with. It's probably a liquid underlying. There's probably, some kind of an assumption. So yeah, I mean, that's the reason for doing it. Bonds in the 111 handle, Mr. But
Didn't think I was going to see that today, Sadloff. 111.31 just traded down to 29.
Yes, I just bought some at 12.
112.04. Why would you do that, Sadloff? But it's higher than where it is right now. And
I don't know.
It was only a minute ago.
I panicked.
Evidently.
Yeah, I think I'm going to try to buy some 29s.
Even the S&P down 25.
I don't like this. I don't like this tape action in the bonds. Not at all, Sam. I am. Very, very strange, aggressive, very bearish tape action in there. I don't know. How come nobody talks about raising rates?
Because it goes against the narrative.
I understand, but at what point?
Why hasn't anybody talked about this rally being one of the quickest, swiftest rallies?
I'm talking about
month.
bonds.
Tell me, maybe they didn't go to either drawer to the newscast.
I'm just talking about bonds. Because the bond prices, that's where interest rates are trading.
Mm-hmm.
At what point does the narrative switch from lowering rates to raising rates? How does that?
I think it's already switched. I just don't think anybody's talked about it.
It's weird that nobody's talked about it.
Yeah.
All right, let's go to the next slide, Beth. So this person writes, just wondering, why are the Mag 7 stocks trading like meme stocks lately? They're moving up and down by a huge percentage daily. I don't get it.
You said it yesterday that those popular Mag 7 stocks were trading like meme stocks, and
yeah, they did. They felt like it.
Yeah, they did, but I don't have an answer why. I mean, I'd like to say that people are trying to catch up to the class or the chalk of the market, but I don't think that's the reason. It might seem like, and I think you kind of traded it yesterday from that point of view as like a blow off kind of top type of thing. The market didn't warrant that kind of exuberance in those stocks. We had volatility expanding, we had market going nowhere. It wasn't like people were trying to chase the market itself. It actually seemed a little bit heavy yesterday, but what do I know?
Yeah, like the reason I think that the Mag 7 stocks were trading the way they have been lately is just because they have the depth and the liquidity to support a lot of buying. So maybe more so than other stocks that could be, they just can't absorb that kind of liquidity. So I think one of the reasons is there's just been, a huge capital flow playing catch up, and those are the stocks that can handle it. I mean, that's the only answer I've got. There's a lot of money managers playing catch up. Let's go next slide, Beth. This person writes, I have 10K in a cash account and I trade stocks in. I have 10K in a separate margin account for options because I just started trading options a few months ago. Should I combine these accounts so that I can do more undefined strategies to possibly have better results?
I don't have separate accounts like this. I mean, I have IRA accounts and margin accounts. I don't have any other type of accounts. I don't separate them from one or the other. So for me, I would probably say, yeah, I'd be looking to combine these accounts. Or if you want to keep them separate, in my mind, I would mentally look at them as one account.
I mean, I think that I think you should put them together. It doesn't make any sense to me. I mean, of course, you can keep them separate.
Yeah, you do whatever you want.
Do whatever you want. Keep them separate. If you're trading in a cash account, I just sold out, scratched those bonds at 04 because it didn't seem
lucky
like
you, man. I was really worried. I was really worried for you.
Didn't seem like a good buy to me. Now I'll reload if they go back down to 30.
You don't want to hear that ding.
In a cash account, you're not subject to pattern day trading rules, so that's the good thing about a cash account. But other than that, there is no good thing. You can borrow money.
But he has 10K in a separate margin account. I was assuming that was over 25,000. I just thought it was excess money. So just a $10,000 account.
Okay, yeah. So the only I see no real reason why you would keep this money separately, because you want to trade stock and then trade options against it. You want to borrow some money, whatever it is, just to be able to do certain things. I would be reluctant to have two separate accounts trying to trade one for stocks and one for options. I don't like it at all. Let's go to the last slide. I think it's the last slide. It is. Is selling cash secured puts ever a worthwhile strategy when trading in an IRA account with no margin? It seems to me that the premium received isn't enough of a return on the capital tied up, nor enough to cover the risk reward.
Yeah, I mean, I think you're stating the obvious here. You could give up pennies by buying a further out of the money put and put on a wide put spread that might be $15, $20, $30, $35 wide, $40, $50, $60 wide on a $200, $300 stock that would give you a lot bigger bang for your buck. Return on capital is what you're calling it here. I like, when I'm thinking about trading an IRA account, which is very similar to a cash secured account or anything else like that, I like to try to mimic what the buying power would be in a margin account. So if a buying power in a margin account on that naked put would be $5,000, I like to put on a spread in my IRA account that uses around $5,000 to $7,000 and mimics a naked put in a margin account. So I'm on the same page with you here, and I'm glad you're kind of noticing it.
Is selling cash securities ever a worthwhile strategy? An IRA account with no margin? Sure.
I mean, you get 1% a month pretty much. I mean, I'm just ballparking.
Sure.
Right?
Yeah. I mean, sure. I mean, of course. How would we ever say anything but that? Of course. It seems that the premium received isn't enough. Well, the premium received is what it is. If volatility is high, the premium is going to be higher. If volatility is low, the premium is going to be lower. But when you say not enough to cover the risk reward, it reduces the risk reward. It lowers your risk and it improves your reward. I don't accept that as a
no. The trade
statement.
itself versus stock is what you're asking. Right?
I understand that.
Yeah, but they're
I understand
saying
that. If you're worried about limiting your upside,
if I'm going to use $30,000 to sell a $2.50 put, is that a good risk reward? Or I'll do it this way: $3 to sell, and I'm going to use $30,000 worth of buying power. So I can make that 1%. That's all I'm trying to do. Is that good, or would it be better to use $1,500 or $2,000 and only get $250? I mean, I don't know. That's you guys.
I don't know, but your return is always in line with your risk. And so for me, any strategy that has a high probability of success, which this does, I'm okay with. And if it's only 1% a month, but that's assuming the principal doesn't move. The principal moves, you make more. So yeah, sure, I'm fine with this. 100%.
I don't think you answered the question, but you know what? It's the last question. You're probably tired. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What we got come out next? Trades from the research team. Sound off. We'll be back in 90 seconds. Let's Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with a market measure. Even the S&Ps, let's do a little bit of an update here, Sadno. If they're down 15 handles, we've had a very tight range all day. Even the S&Ps down around 20-ish to down into the teens. They're down 1450 right now. NASDAQ down 95. Russell down 8. Dow down 112. Volatility up by 16 cents, hanging steady. Bonds probably the biggest, best two-sided action of the day. Up 10 or 11 ticks, trading 5 ticks off of their highs. 112.23 after trading under 112 and flirting with 113. That's $1,000 move, almost $1,000 move from top to bottom. I wish I was a millennial and UNH side enough trading fractional shares. It's down 49. I have a little bit of long delta in there. I'm sucking a little wind. You really know how to poke them. He's DMing me now still. I mean, you got in his head.
Oh, I'm deleting him as for my contacts. I'm Tom Sosnoff. He's Tony Batista.
This is talking about Victor Jones and that.
Yeah, we're
last
talking about
segment.
Victor
If you
Jones.
didn't catch it, hear me out. Watch it on the replay. Victor.
Like millennials when they get all bent out of shape.
Mm-hmm.
They're, you know what? They're the
stop yourself.
They're the most damaged. Damaged generation. They
Every past generation said the new generation is.
Yeah, but they're the millennials are the most damaged. I don't know what happened to you guys, Beth. Are you a millennial? Do you count?
Yes, remember I'm an elderly millennial.
Oh,
aging millennial, not elderly. Aging millennial.
Anyway, before we do this piece here, a quick little reminder: Tony and I are going to be on the road in just is it 2 weeks from tomorrow?
Friday, yeah, we'll be doing the show.
Yeah, 2 weeks from tomorrow, the Bat and I will be on the road. We'll be the first official road show of 2025. It kicks off a huge
whirlwind tour, they like to call it, Sosnoff.
It kicks off a massive schedule on the road. At Work by 11 with Tony and myself, the whiteboard tour with Mike, Nick, and Katie, and sometimes Ryan Grace, and Options Crash Course with Dr. Jim. But all told, it's close to 20 different road events. Not even all of them are on here. There's a bunch more. And we are so looking forward to it. We kick it off we kick off in Atlanta, Georgia, 2 weeks from today, on 2 weeks from tomorrow. I'm sorry, on May 30th. Doors open at 8 o'clock in the morning. Show starts promptly at 9. It will be over at 10:30. It'll be at work by 11. And if you want to take Tony to work with you, is this bring a kid to work? Bring a trainer
Not
to
take
work
Tony
day?
to work day.
It's
not.
take Tony to work day. Sure, we can let him go. If you hire him, we'll pay extra. But
I come with a stipend.
yeah. So anyway, we hope to see everybody in Atlanta. Atlanta is one of our, favorite cities in America. We've been going there, trying to go there every single year since we started Tasty, and
because they have a Buc-ee's not too far from there. That's why it's
because they have a Buc-ee's not too far. Yeah, that's it. No, because they have a little Waffle House. We can do all the things that we don't get to do here in Chicago. But
you're going to take me on the road to bring me to Waffle House? I could do my own thing. I don't need you to take me on the road then.
You should be lucky if I take you on the road to go to a Waffle House.
My name's not TP. TP you can buy with a Waffle House. I'm gonna a little bit more of a fancier hoe.
Anyway, we'll be in Atlanta 2 weeks from tomorrow. You can sign up at tastylive.com/events. There are
still seats available. Love to see you. Let's
only a
sell it
few
out.
seats left for this one, so it's almost all filled up. We should have a great time. It's going to be the Bat, myself. We've got Craig from the CME going with us. We have. I'm not sure. I think Vince is going or Andy going from the SIBO. So we're going to have 2 experts there, exchange experts, along with the gang. David will be there giving software demos. But the show is very fast paced. We'll be using we're making real trades, using real money, and taking real risk. We'll start trading pre-market, and hopefully we won't be coming in with any of the with any UNH positions that morning. So we should be in good shape.
I'm going to be, but sure.
But anyway, we'll see you guys 2 weeks from tomorrow morning in Atlanta. If you haven't signed up yet, tastylive.com/events. Next show after that is in London on June 20th. That's Triple Witching. That's a Friday night. And show starts at 6, doors open at 5, and we'll be at Earth. And then the following Monday after that, June 21st, we'll be in Milan at Fabrique for our first show ever in Italy. And it'll be myself, Rich McDonald, and Dylan Radigan. And that's going to be a fun one.
It is, because you're going to see who gets the promise ring, whether it be Dylan or Rich. It's going to be good.
There will be interpreters in the house. We are looking forward to doing this show in Italy. There's a huge, huge group of Italian option traders, and we've been doing webinars with them.
Well, it is Italy, Sosnoff. I would imagine that would be the prominent nationality there.
We've been doing webinars with them for years. Happy to finally get there. Can't wait. It should be a shit show of sorts and a lot of fun, because the nice thing about these shows in Europe, we serve alcohol.
Beautiful.
You didn't
We're
know
not
that.
doing that for breakfast in Atlanta?
Breakfast in Atlanta, you don't get any alcohol.
Oh, bummer.
Breakfast in Atlanta, you get a donut.
Oh, all right.
Donut and coffee.
Okay, all
But if you
right.
come to the nighttime show in
Needs a sharp stick in the eye.
London or Italy, yeah, we serve beer.
Nice.
Think. Bunch of stuff. Who knows? Anyway, we'll see you guys. That's the only shows you can show up for. After 60 days before every event, you can sign up for it. All right, let's do it.
50 days before.
60 days.
Oh, 60 days before, not after.
Prior to.
Yes. Don't listen
All
to
right.
what he's saying. Listen to what he's thinking, ladies and gentlemen. That's
Zero DTE trades today, brought to you by a really dynamic generation, millennials, who thought of this. I like how Vic says.
Oh my God, you're not going to let this.
I like how Vic
die.
says, the millennials, just so you know, just so everybody knows this, zero DT trades and the daily trades and the weekly trades, all the creation of the guys in this room, along with TP and a few others, we presented those products to the exchange. We helped to develop those products, and we get no royalties from them. But it was our presentation.
You should have been that guy Kevin from Shark Tank and asked for royalties. That's what he asked for all the time.
Should have.
Kevin O'Leary. There you go. You should have asked for royalties. I get $1 into perpetuity.
Don't ever mention his name in front of me, Kevin O'Leary.
Why? Is it that bad thing with your son and the daughter? Kind of thing?
No, he's just I cannot stand that man. I think he's the biggest douchebag in the world. So I give him 0 stars. And as a Canadian, he should be embarrassed.
Here we go.
Daily Dynamics.
Seems happy.
Maybe I doubt he's happy. He doesn't seem happy. Daily dynamics, 0 DT volatility throughout the day. Are you ready for this?
Sure.
Let's take a look. Tony likes a little 0 DT volatility.
Very popular with the ex Twitter crowd. Very popular.
Very popular with the ladies.
Very popular with the ladies. It's most widely traded most days, most option volume.
Sure, of course. Implied volatility is simultaneously a measure of current option prices and an indicator of how much movement the market expects. We always, on this show, we've always talked about implied volatility as being just another word for it is expected move. When selling options, we can either profit from theta, when time passes through our strikes without being threatened, or from vega, when implied volatility goes down. For 0 DT trades, this means looking at an implied volatility contraction over the course of the day. Does implied volatility a month out in time, or 2 months out in time, or whatever it is, a year out in time really matter to 0 DT trades at all? Question.
I know, and I'm thinking, I want to use that word you don't like me to use, but I just used Kevin O'Leary. You don't like me using that word either. I was going to say de minimis, but I'm trying to think of another word for that. So I'm going to say
it has a very minimal impact.
There you go. Yes, that's the word I'm going to use.
So has the 0 DT implied volatility typically, how has it behaved throughout the trading day? Does it get stronger as the day goes on, or does it kind of disappear as the day goes on?
I think it's going to kind of disappear. I don't think it's going to have any.
I don't think it's going to get stronger either. Let's take a look. So we did a study. We used 2 years worth of data in the SPX. We collected the real-time data for every 10 minutes. At that point, we tracked the at-the-money implied volatility over the course of the day relative to the opening implied volatility. Now remember, this is only the 0 day. So if you're thinking, oh my God, what's going to happen this weekend? Doesn't matter. Like, this is intraday volatility. This is expiration at the end of the day. There is no overnight risk. So as you get closer to the end of the day, just think about this. What is volatility? It's expected move. Based on what? Based on fear. As you get closer to the end of the day,
less time for fear to become a factor, right? I mean,
if you have 5 hours left in the day, something can happen.
Sure.
If you have 15 minutes left in the day, and it doesn't matter what happens after the close. Sure. It's literally at the close. Then, of course,
so these are cash settled.
They're cash settled. Of course, fear is going to go down. So if the 0 DT SPX straddle had a 20% implied volatility at market opening, but a 14% implied volatility at noon, we would consider that a negative 30% change in relative volatility. All right? Because it dropped from 30 to it dropped by 6%. So from 20 to 14 is down 30%, just so we understand what we're going to be looking at. We separated out the results for those days with high opening implied volatility and then lower opening implied volatility, and all times were central time. Okay, let's go to the next slide. So the first slide we look at, and this is just, these are all visuals, say we're going to go with charts rather than numbers. So what we're looking at is the average 0 DT implied volatility intraday behavior. This is the average. That's exactly what you would have thought. And by the way, the grayed out area is the 1 standard deviation. Okay, so that's 1 standard deviation the whole day. And that's looking at the average relative implied volatility. It's basically from the beginning of the day to the end of the day, it goes straight down. So what's your risk then?
Intraday move?
Intraday move.
That's it.
Intraday move.
Not the fear of what's going on or
intraday move.
The news afterwards or anything else.
What's your risk? Intraday move.
Yep.
You can see, we say inside of that 1 standard deviation, we keep the line pretty clean. Volatility just disappears as the day goes on, but you are always at risk for that intraday move. Let's go to the next slide. So this is intraday behavior when implied volatility is high. So you can see when implied volatility is high, you are going to make a lot more money, but you in the process are going to take a lot more risk because you're going to get volatility that's kind of all over the place. Now, it still obviously stays, you can see it within the one standard deviation. That's kind of the expected move. That's your distribution curve. But you can see how volatility is all over the place, but it still goes down. And as the day goes on, it disappears to essentially nothing.
Mm-hmm.
Let's go. Oh, no, Beth, there should be, this is from high opening volatility. There should be one for low opening volatility, right? Next slide, number 5. There it is. So this is your average 0 DT implied volatility intraday behavior. No, that's 3. 4. Go to 5, please.
These are all of them. Basically the same, Son, if you're on 5.
Oh, that is 5? Mm-hmm. Okay, so there's only 2 slides then, right?
There's 3. This one?
Yeah. Oh, this is the one I want. Low opening volatility, right. So this is a little bit different. So this one, okay, you see how it doesn't have the jagged edges?
How it does have jagged edges. This does have the movement, meaning that there's extra movement to the outside.
But what happens here is it's much smoother, but you make less money.
Sure.
So what we're showing is most of the time volatility is kind of on the low side, because remember, most of the time it's in a lull state. So it's on the low side, so it doesn't have that much intraday movement, but you make less money. When it's high, you make more money. But the key takeaway from this is all of these visuals are the exact same. And over the course of a day, that implied volatility is basically going to go to 0. So it's one of those rare things where implied volatility goes down based on time, which is different from the way implied volatility acts and the way you normally collect on theta. Mm-hmm. That's what people love about the 0 DTEs. It's also what they hate about it, because if you're an option buyer, this is why your options are going to 0. You can't defend against time.
Of course not.
Okay, that's why you have to take profits. Let's go to the next slide. So the takeaways, regardless of the opening implied volatility, premiums fell over the course of the day more rapidly than their theta would indicate. If premiums fell exactly the rate of theta, then IV would be a constant. The real boom for 0 DTE options is that volatility essentially goes to 0. When IV started low, it typically took longer to start coming out, looking at the 20% line. The average relative implied volatility crosses it around 10:30 in the morning Central Time, but low IV, it's closer to 10 o'clock. Still, by the end of the day, relative IV collapsed all the time. Higher openings in implied volatility were more erratic, with a wider standard deviation. Typically, premiums would decrease rapidly, but this was less reliable. However you choose to play your 0 DTEs, these charts can give you a handle on how anticipating how long you want to stay in and let the premiums decay. They will decay, but things get a little hairier later in the day.
Sure, you've seen that on even butterflies that we've put on.
Sure.
Yeah, how it moves, and it moves quickly. Good job out of you. Good job out of the research team. Thank you to the SIBO for sponsoring that, or Chicago Board of Options Exchange, or whatever it's called these days. Even the S&P's down 12, Sosnoff. We'll take a quick 90-second break because
not much going on there, is there?
No, not much going on at all, except if you're in UNH, which is still down 51 or 52.
It's about the only play.
No bounce back in there at all, Sosnoff. No love in there. We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next, Oz? That's right. Your friend of mine, Mr. Scott Sheridan from the Scott Sheridan Studios. Immediately following these messages. Back in 90 seconds.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then I got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
It's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing is moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday, hopefully the internet last edition of what it is that we are trying to do, guys. I'm sorry about Tuesday, but they're doing work in my neighborhood. They're not doing it anymore. Today we should be totally fine. But on Tuesday, they were doing work in the neighborhood. We got the notice like, hey, you may lose connection, like the internet may go in and out, whatever. It's fine all morning. It's fine all day. They're counting me in for the show. I told John, I said, hey, we might freeze. We may go dark, and boom. As soon as they counted me in, dark, frozen, no show. Internet popped back on in like 30 or 40 minutes, of course. And so, sorry about that. I did not mean to drop on you guys at the last second, but it was somewhat out of my control. But anyway, I'm so glad that you are here because it is only because of you all that we can do what we do. So thank you guys so much for being a part of this show and all the great shows that we have here on the network. If you're watching over on the Tasty Live Network right now, and it's live, 2 o'clock Eastern on May 15th, 2025, I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can communicate with your brethren who are also watching the show. You can celebrate once again if you're a bull and commiserate if you are indeed a bear. So John, bring us in to the market. Man, do we still have a market? Guys, did we make it today? You know, I mean, this morning, this wasn't any old economic data print. Like this morning, that PPI, I've been trading a long time. I've never, ever, ever seen a more important PPI than what we saw this morning. And it was ice cold. It was frigid. Like it was dry ice, man. That's crazy stuff. And so what does that mean? Is it deflation? Is it, is it depression? Like what is it going to be, man? Is it deload time? Like I don't even know. But that PPI print, man, it's taking some time off, I think. It's definitely resting at least 3 to 4 minutes between sets, but the market likes it. You've got even the S&P is up 24 1/4 on the day. You've got the risk-free instrument, also known as the NASDAQ futures, which is an extraordinarily high-risk product. For the record, up 70 on the day. You've got the boomers up about 160, and you've got the Russell 2000 Futures Index up just a little over 8, maybe an 8, maybe 8 and a skosh or a skosh and a half. You got bonds up 24 ticks. You've got notes up 18 ticks. You've got oil down $1.50. It's fast approaching its all-time low of negative $37 per barrel, which we saw back in 2021. I don't think that'll happen again anytime soon, but I can't say it'll never happen again because I didn't think it would happen the first time. And so UB40 is holding strong, 45 years later, up 31 ticks. You've got gold, man. Look at the shifties today. Shifties looking strong. Got gold up 36 points on the day after being down quite a bit overnight, if I'm not mistaken. In fact, I'm pretty sure gold was like almost under 3,100 at one point. We'll take a look at that here in a few minutes. But pretty impressive rebound for Peter Schiff at L. And then you've got the British pound is up, the euro is down. You've got volatility down a little bit. Volatility futures down 19 cents. And then you've got the spot volatility, the old VIX, for those of us that like to trade things that are old, crusty, and irrelevant. VIX down 36 cents. That's my own personal wheelhouse. I just kind of gave you all the old personal shopping list there. But VIX down 36 cents on the day. And I'll tell you what's really interesting. So the NASDAQ it's fading a little bit now. It's only up 57 points. It was much stronger. It was up another, 50 or 70 points at one point, I think, right? Let's take a look at this. You had the NASDAQ up. It was over 500, I think. It was 529, so 21,529. So it's up another 80 points from where it is now. It's now down to 21,449. What's really interesting, though, is the market being up or down is not that interesting. But the market being up, the NASDAQ being fairly strong today. I mean, this is not like a 300-point, kind of 1.5% move. This is not a face ripper. This is not a soul sucker. But it's another little something. Like, especially when you look at the way the rest of the week has gone. I mean, here's Monday. There's your soul sucker. Here's Tuesday. Here's your face ripper. Here's, Wednesday, which is kind of, an abandoned baby. And then you've got today, which is whatever today's going to be. But it's like, hey, man, I mean, you're just padding the stats. Just toss another, 60, 80 points on the NASDAQ, which isn't too much in its own right. But when you're already up, 3, 4, 5, 6, 7, 800 points on the week, it can be pretty significant. But what was interesting to me was looking at this. I was looking at some of the heavy hitters, man. I was looking at, and they're more red now, but they were still red when the NASDAQ was up over 500. I mean, Apple right now down $1.36. I mean, it was down like 50 or 60 cents, I want to say, when the NASDAQ was over 500. Amazon down $5. That's helping out our in the money short call. Man, look at this hero. Look at this hero play. They tell you not to be a hero. Well, they just don't know what they're doing. Man, this in-the-money short call on Amazon, it is working out. We should probably exit stage left before it completely backfires. But Amazon down $5 today. That was surprising, just given the NASDAQ strength. And then if we go on down the list, you had Meta. I mean, look, you got Meta down $6. Microsoft has been strong all day. Now, Microsoft is only up $1.50 now. I think it was up $3, $4, or $5 earlier. But you have Microsoft was strong. Netflix, of course, was strong. Netflix up $30. But man, if you look at some of the other, big names that are going to be the market movers, I mean, look at this. You got Tesla down $4 today. You got Snapchat still in business somehow, down 37 cents today. It's like, man, this is not good for the overall, market, you would think. But then the NASDAQ was green. Even the S&Ps were green. Even the boomers were green, man, kind of mailing it in for that 4-day weekend here on a Thursday. And so, pretty interesting day. Just again, kind of goes to show you that nobody really knows. And, just because the index is doing X, it doesn't mean that all the individual components inside the index also have to be doing X. Obviously, most of them will be doing X because that's what comprises the index. But you will sometimes have kind of some outliers. You will kind of have, some black swans, right? You will kind of have some things that are off the beaten path. And so that's kind of what we've seen down the list, in my opinion, for the Mag 7s, or Mag 7. But all right, let's go ahead. So what I'm going to do now, let's talk about a few things happening in the portfolio, especially the in-the-money short call on Amazon. That's going to take me at least, man, this victory lap, 17, 18 minutes. I can't get any victory laps in Fenway. I can't get any victory laps from our Boston Red Sox, so I've got to manufacture my own here on the show within the money short calls on Amazon. Like, that's how bad it is with Boston. That's how bad the Red Sox are. Our only hope is to sell in the money short calls on Amazon. That's how you know it's bad. That's how you know you need to change management. That's how you know whoever's making the decisions at the top, they got to go. They got to go. Like, if your go-to strategy to get yourself out of a hole, to get yourself out of getting swept by the Tigers, is an in-the-money short call on Amazon, man, you are not in a healthy spot. But alas, this is where we find ourselves. So Amazon, well, let's start with MES. We'll just kind of go top down here. So MES, up another $23. Obviously, the index is just on an absolute tear, up to 5,900, over 5,900, of course. And we've got a 5,400, 5,500. I'm going to sit tight. Now, you could make the case that you should be rolling the put up. Let's go inverted. Let's do all these things. That's totally fine. That's 100% okay. I mean, that's a very, very strategic way to think about this. I want to sit tight because, originally my strangle was like 5,400, like 5,950 or something like that. It would be great had we not rolled the call down. And I don't think that was the wrong move per se. But usually when I start rolling one untested side, this is just my own personal application. And so I don't have any hard stats. I don't have an options jive that I can link you to help you out with like the hard stats that are going to back this up. This is just my own personal anecdata, let's call it. When I roll the untested side once, I don't then start also potentially rolling the other side as the untested side should it become the untested side, which is exactly the situation that we find ourselves in right now with MES, if that was like super confusing to you. With MES, the strangle that we had on, like here, it was 5,400, the 5,400 put, and then I'm not even going to bring up the chains because it doesn't really matter, but it was like the 5,950 call or something like that. Maybe it was 5,900. I can't remember exactly, but let's move through this fairly quickly. So when the market was going down, right, and you've got Trump tariffs, you've got Trump non-tariffs, you've got liberation days, you've got not liberation days, you've got all these things that were happening, and the market was just getting absolutely just bamboozled, right? We rolled our call down to what we have now, which is right here. So we rolled it down to the 5,500 call. Again, I don't think that was the wrong move. I think that was a fine move. Helps to control risk, help to bring in premium, help to minimize directional bias, blah, 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 blah. Okay, got it. All right. Where is the gotcha? Right? Because for every gimme, there's a gotcha. Like if you want to be controlling and minimizing directional risk and you want to, be bringing in more premium and things like that, then you're going to have to give something up. There's going to be some cost associated with those moves. Well, one of the biggest costs of rolling the untested side, in my view, is the potential for getting whipsawed is greater and greater. And that's exactly what has happened to us here. And this is honestly part of the reason why the way that I typically take the mechanics and the different adjustment protocols that we lay out there and I kind of make them my own is I am oftentimes more patient than what someone who might follow, the tasty mechanics to the letter of the law might do. I'm typically a little bit more patient. But this time I wasn't as patient as maybe I normally would have been, or maybe I was, and it was just, the market was down to 4,800 or 4,900 or whatever, and I was like, all right, this thing's going to zero, like pretty quickly. It may even hit oil 2021 levels, where S&P 500 is marking at negative 200 one day. And so it's like, man, if that's the case, like we should probably roll these calls down. So we did that. But now, like, you got to pay the piper, man. Like the bill's coming due. We've gotten whipsawed in a pretty spectacular way. And so now that I've already rolled my call down as the untested side, I don't usually flip it over and say, all right, now the put is the untested side, which it is, of course, because the market has rallied up to 5,900 or whatever. And then I'm rolling my put up too. I don't typically like to do that. I feel like, man, I've already gotten caught chasing my tail once. I don't want to get caught chasing my tail twice, right? Where I roll this thing up, and then tomorrow, Trump pulls the rug out from underneath all of us, right? Like, we know, homeboy's going to hook us up, man. He's going to tweet. He's going to truth. Like, you need to buy stocks. And he's batting about 1,000, which kind of makes sense given his position in the world. And so when he says that, you've got about 30 to 90 minutes to load the boat, and you're going to be doing just fine. Well, just in case he decides to go in the other direction, tomorrow, next week, what have you, I'm just going to sit tight here with MES. So, all right, so that is my MES Jimmy Fallon monologue there. Let's go to Amazon. So yeah, look at this, man. It's a thing of beauty. It is a thing of beauty. Man, when did we do this trade? Yeah, this is gonna take us the rest of the show. Look at this thing. May 12th. We did it on May 12th? That was like 3 days ago. Wow, it feels like we've had this trade on for a long time. That makes sense though, because That's right, because we were assigned on the short shares. I went on vacation. I didn't close out of the short shares, and we still have the short shares on. And excuse me, I just wanted to get rid of them, but still have some kind of short bias in the stock. So we decided to essentially convert short shares into in the money short call, which is not usually something that we do. I mean, I joke and we have some fun with it there a few minutes ago. But if you're just watching the show for like the very first time, hey, welcome to the show. Hope you stick around. Check out my show. I hope that you get some value from my show. If nothing else, you're going to get a barrage of B- humor. Barrage of B- humor. Like, we basically are running the Walmart model with the humor. Like, the quality is going to be extremely low, but man, we are going to make up for it with volume. So you can absolutely expect that here on the show. But then hopefully from time to time, you catch a little value, here and there. Well, one of those value nuggets is going to be the simple fact that we don't typically sell out of the money calls to begin with, or we don't typically sell naked calls to begin with. We usually don't sell in the money naked calls. I just wanted to do this to pick up some more delta to the downside and take more of a directional stance here, in Amazon. And so far it's worked out. Obviously I didn't know what was going to happen. Nobody ever knows what's going to happen. But so far, it's working out okay. Now, the question becomes, what is my target point? That's a really good question that I don't think I have the answer to. I hadn't really even thought this far ahead, simply because this is kind of like a short stock substitute. Man, is the market really going to fade and go back to unched? Man, that would really be something. Like, that would really be something if they give it up. Wow, look at that. Interesting. Very, very interesting. And so, all right. So, with Amazon, if am I going for 50% of max profit? Probably not. That's probably more than I would want out of this trade. I mean, right now we're up, about $2.50 on the trade, which is really, really nice. If I can buy this thing back for $10 or $11, I'm probably going to go ahead and take that. Because to me, when you're selling out of the money premium and out of the money put and out of the money call, a strangle, a vertical spread, whatever, 50% of max profit makes a ton of sense. But when you're selling in the money premium and you're selling something as kind of a directional substitute, it's a little bit of a different scenario in my opinion. And so I think scaling down the profit targets makes sense. I think maybe going for something a bit more modest, going for something a bit even, below 50% of max profit really just makes a ton of sense. And so for Amazon, that's what we're going to do. And this little sell-off across the board is helping out a lot of things. I mean, it's helping out Amazon. It's helping out MES. Bank of America and Best Buy, these are our long stock, kind of cohorts that I talked about these a lot on Monday, so I'm not going to talk about these anymore. But Bank of America, Best Buy, and Nike, we talked about all of these guys on Monday. So I'm going to skip over these guys and not come back to them now, because I do want to talk about Starbucks. We don't really need to talk about Tesla simply because it's not working. So we just kind of gloss over the things that aren't working, like, the good, solid, reliable internet guru that we are. And so Tesla, we're not going to talk about that. But Wolf, we'll talk about a little Wolf. Look at Wolf. Man, I still can't believe I sold the put. I sold the put in a $4 stock, and you guys didn't stop me. You guys didn't tell me, what are you doing? Like, what are you doing? You're selling a 3 put in Wolf. Man, that's crazy. We'll talk about that in a second. But Starbucks, so a couple of things. Number one, we have two pieces, where we have our 100 share stock position that's an investment style covered call. And then we have our short put that was a holdover from earnings. The short put, there's not much of a reason to hold this any longer, in my opinion. We sold it for $3.10. It's now worth $1.07. So I think the time has come to just let's go ahead and buy this thing back. Then we can be out of the short put. We just have the long shares on, and then that can be that for our bullish position here in Starbucks. And so, wow, look at the Nasdaq. It just slipped under 400. Man, they're coming for him. Wow, they are coming for him. I don't know who they are, and I don't know who the them is that's in trouble, but man, there's a lot of things that are happening right now. So, all right, let's go ahead. Let's close out of the 80 put in Starbucks. This was part of our earnings. We did a lot of, didn't we do like 3 trades for Starbucks earnings? You guys got to remember, man, I was on the beaches of Destin drinking banana daiquiris for 9 straight days. And so I'm a little bit fuzzy on all the goings on and the details of what we've done together. But it'll all come back to me. Like Celine Dion, she nailed it 25 years ago. So let's go ahead and let's see here. Let's buy it back for what, $1.08 maybe? Wow, the NASDAQ is unched now. It is actually, it was unched. It's not unched anymore. Well, yeah, it's unched. Look at that. Wow, look at that. Man, how about that, man? It's almost like markets moving, things change. Like, oh, we got filled on Starbucks. There you go. Man, it's almost like this stuff is crazy. And so I'll tell you what, man, VIX, what's the volatility doing? VIX is still down 30 cents. I mean, that makes sense, though, because the market is still up. ES is still up 16 points. And so we'll have to wait and see kind of, what happens with that. But, yeah, wow, look at the NASDAQ. Man, if they stomp on them today, and by stomp on them, I mean if they drop them 80 points, that's basically a stomping on a day like today. Wow, that's going to be pretty surprising. Because the morning was kind of back and forth. The morning was kind of up and down. But then once they got their footing and they saw, the dry ice PPI print, they were like, okay, maybe we can rally them today. And they did. And so, man, now they're just giving them up. And so, wow, that's crazy. All right, so for Starbucks, though, we took off our short put. I'm going to sit tight on the long shares. And this is one of the great things about investment-style covered calls. You have the freedom. You have the flexibility, right? These are intended to be, kind of paired up with positions where you have stock. You intend on holding the stock for a long time. You're not necessarily like in a hurry to sell premium against the shares, but you like having another avenue to generate profitability on the position. That's the spirit. That's the intention of an investment style covered call. So if the stock gets beaten down, which Starbucks kind of has over the course of the last, couple of weeks, maybe month or so, you have the freedom to go ahead and say, listen, I'm going to walk up to the line and I'm going to call myself a little Caleb Williams audible for my Chicago Bears fans in the house. Like I'm going to walk up to the line and I'm going to call myself a little Jared Goff audible for my Detroit Lions fans in the house. And so we got to be fair. We got to be balanced. You got to go Fox News. You got to go CNN. You got to do all these things. And so if you want to call the audible and just hold the shares, then you're all good. Like you're good to go and you can do that. That's what we're going to do here because I don't really love the idea of selling a call, down around like 90, 92, 95 when I know that we bought the stock for, somewhere in the 90s or maybe it was even 100. And so for right now, let's sit tight. Let's just play the clean delta to the upside. And, we'll come back to that as we need to. And then lastly, Wolf, man, this is some crazy stuff. And so we did this on Monday. Man, Monday was quite a day. Man, talk about a rocky start back from vacation. Man, selling in the money calls on Amazon, which are working, by the way, which is strange. And also selling puts in $3 stocks. Like, that's like what is this show, man? Like, what are we even trying to do? Like, I certainly don't know. But so far, we're even on the trade. But what's crazy is Wolf up from the time that we sold it? We sold the put? I think that might be the case. Let me go to view market state snapshots. The stock, man, look at that. This thing's a scam. Look at this thing, man. This thing is a total scam. So when we sold the put, look at how crazy this is. This is why you don't dumpster dive, man. This is why you don't mix it up with the $3, $4, or $5 stocks. Even if it is a Wolf, even if it is a 175% IV, I wouldn't really mess with it. Now I'm obviously going to stick with the position because this content's not going to write itself, and so we'll stay with Wolf for a bit longer. But look at where the stock was on Monday when we sold the put, 335. Look at where Wolf is right now, 370. Now again, I'm no Julius Spina, right? I'm no Jacob Perlman. But when you sell a put and the stock goes higher, you should make money. When you sell a put and the stock goes up by 10%, you should do pretty well for yourself. And here we are even. Here we are at a scratch on this craptacular $3 stock that is Wolf. That's crazy. The only thing that I can think of that would be the reason why this is the case, of course, is the volatility in there must be expanding. Because remember, when it comes to option P&L, there's really only three primary drivers. There's direction, there's time, and there's volatility. Like, yes, you have dividends, and yes, you have interest rates, but those are very, very, tertiary, relative to kind of the main drivers, direction, time, and volatility. Well, we just looked at the directional piece. That's working in our favor. That should be making us money. Hasn't made us anything. So what about the time piece? Well, we're short of put. So we're positive theta, so time is helping us. That should also be making us money. We haven't made anything. So the only last piece of the puzzle that must be the stick in the mud is volatility. So the implied volatility of Wolf, I can only imagine, has increased. So if I go to the IV index for Wolf at the time of the trade, It was 274%. Man, 274%. That's pretty insane. If I look at it now, though, so if we go to the trade page, so you can see, so I'm in the June cycle. So this is really good. So I'm not going to move. So actually here, let me do this. So look at June right here, right? This is where my position is. And then if you go over, you can see the implied volatility is 310. Now let me bring my mouse back over to the yellow diamond. So this is real. This is a very, very cool teachable moment, especially if you are brand new to the show and you were still watching. That would be amazing. Direction, time, and volatility. Those are your three primary movers on any options P&L, any win, any loss that you might, come up against in your portfolio. We've already talked about direction. We've already talked about time. What about volatility? Well, if you right click on, the activity tab or the chains, of course, then you're going to bring up the market state snapshot. See what he was at the time of trade, entry. That's very helpful because right now you can see that the volatility in Wolf has climbed from 274% to 310%. So I don't know what this company does. I don't know what they sell. I don't know what they're doing, shareholders, but man, you better buckle up because it's gonna be a little crazy. So that's money in here. Like the directional piece has panned out. The time piece, of course, has panned out, but the volatility piece has not cooperated. And so even with Wolf up, we are not positive on the position. And so hopefully that makes some sense to you guys out there. I think that is a worthwhile use of our time. So, all right. So, this is perfect. We're about halfway done with the show. So now what I typically like to do is hop into the YouTube chat and let's get to as many questions as we possibly can. And man, I see you guys in the chat, man. I see Flam Taps in the chat. I see Yesik Campo Jr. is in the chat. Man, I see Dang Dan's in the chat. Argent Purr's in the chat. Brad Glazer's in the chat. Uptick, downtick in the chat. I see Theta Traders in the chat. Man, look at you guys. Look at you guys. I appreciate you guys so much. So let's go ahead. Let me find somebody in the middle-ish. And surprise and delight somebody. And here we go. Let's do let's see here. This is closer to the beginning. But it looks like a really interesting question, so I'm going to go into this one. So this is from Theta Trader. So thank you, my friend. I think I still owe you an email from like 7 weeks ago, so my apologies on that. But Theta Trader says, Dr. Jim, I've got an SPY put butterfly in June, along with a short call that equal about 25 short delta. Considering just dumping all these and selling the same delta call in July to simplify management, what say you? So this is a great question. This is a great question because there's so many ways that we can go with this, and you can bet your bottom biscuit I'm going to go down every single one of them. So oftentimes when you have multiple positions on in the same stock, you're going to end up with something that is going to be difficult to follow. It's going to be difficult to manage. Not impossible. Like, especially if you've been trading for a while, like you can handle it like whatever. You know that, the butterfly's over here, the short call's over there. Maybe if you've got a vertical spread mixed in there, whatever. Like, it's definitely doable, but it just becomes cumbersome. And there's like a lot of mental energy that you have to kind of deploy to figuring out, in any given day, any given session within a day, like where am I at on the position? What's working? What's not? Does anything need management? Like there's a few different steps you have to kind of run through every single time you go to check in on your portfolio, whether that's, daily, whether that's, hourly, whether that's minutely, like whatever it might be. Right. And so simplifying when you get to those positions is usually a good idea, in my opinion. I wouldn't say it's always a good idea. Sometimes you may want to keep kind of the mishmash of the different strategies because maybe you like the fact that the butterfly will pay off quickly because it's a shorter dated cycle or something like that. Maybe you like the fact that you have kind of, an undefined risk component and a defined risk component, which is kind of like what you have here. You have a butterfly, which is defined risk, but then you have, a short call, which is undefined risk. So how do you marry those two together? Is it as simple as just selling the same delta? the cumulative delta of your position as just a clean short call in the July cycle and calling it a day. That's one way that you could certainly do it, but you have to understand what you're signing up for. Right now, you have kind of a mishmash of some defined risk and some undefined risk, and the payout structure of the two strategies, butterfly short call, can be very different. And so did you say you've got an SPY put butterfly in June? Okay, so that's a long way to go. I don't like that. I like the butterflies to be shorter dated in like the front week, because that's when, in my opinion, you can do the most damage on those strategies. They're really, really hard to kind of pin down and nail down in the longer dated cycles, even something like June that's got 35 days to go or whatever. And so for that reason alone, I kind of like maybe moving away from that. But, just to expand on kind of the root of your question here, what if I had a butterfly in the front week with like 3 days to go or 4 days to go, but then I also had a short call like in the back month with like 38 days to go? That would be a very different scenario in my opinion, because that would be maybe now I keep both of these guys, intact the way they are now, because I like the quicker turnaround potential payout in the front week butterfly and the slower moving nature of the short call that's in the back month. Now, it's an undefined risk strategy, so it's not going to be slow moving in that regard. But from a time standpoint, the fact that it has more days is going to kind of slow it down and kind of act as like an internal drag on the strategy. But because you have it all in June, I actually do like, you look at your cumulative delta, right? And anybody out there if you have a mishmash of positions on in a given stock and you just want to kind of simplify things, just look at your position delta and say, all right, I like the directional bias that I have on in the stock, but it's too complicated. It's too confusing what I have on right now. You could just take that directional delta, just like Theta Trader is saying here, and just mimic that with a very simple strategy. It could be a short call. It could be a short call spread. It could be a strangle if you happen to be kind of neutral in a strategy, but you've got 4 or 5 different moving parts now. And so you could certainly do that to kind of hit the reset button and just kind of clarify some things a little bit. So I like that question a lot there, Theta Trader. Hopefully that helps you, my friend. And very, very good stuff. And so, all right, so let's see. Eric Jones in the house. Eric Jones says, Dr. Jim, did you try to steal slay or decay from the ladies? Yeah, so we're learning like this new technology that it's going to be kind of AI assisted, right? Obviously, I mean, everything is AI assisted right now. I mean, how do you know the AI isn't assisting me in real time? You don't know that for sure. It very well could be. And so anytime that you might hear like some B+ humor or some A- humor, you can be sure that was not for me, right? And so we're learning different ways to kind of utilize, AI's assistance. Well, we were going through an example of how to do that. Dr. Data like put all this together. He made it so dummy proof. Like he built all this. He built all this like from the ground up. And so now all I have to do is just kind of click a couple of buttons like the, Neanderthal that I am. And then boom, it like spits out like, things to help with the show and like whatever. Well, one of the things as the example that we were doing was one of Liz and Jenny's shows. And like we punched in all the information and it came back with a suggested title for the show. And I think it was Slay or Decay, or Slay and Decay. And so Liz and Jenny tried to lay claim on that title, but I actually told them, I said, listen, that's going to be the title of my next Geeks. And so I'm sorry, it's very much jungle rules here. And it is written, like we can't change it now. And so that's the backstory behind Slay and Decay. And so Daniel Perkins in the house, Dr. Jim, when you're finally making a little money, it's not going to last. Well, if you're bullish, I assume you may being bullish. Well, now you're making it back. So it looked a little dicey there for a second. Excuse me. With, the NASDAQ down under 400. I mean, it was 50 points lower at one point. Now we're back to being up 30. And so it looks like the back and forth action might be back, which is kind of fun, I think, and kind of gives us, some things to do. And so you've got a little bit of green on the screen again. And so, yes, Daniel Perkins, I don't know that it's here to last. I mean, it wasn't even here to last before when it was here to last. And so now I really don't know what to believe. But thank you so much for being here, my friend. David Gallimore is in the house. Dr. Jim, I was up at the Holland, Michigan Tulip Festival a few days ago, and I did not once think about you while I was in the state of Michigan, as you shouldn't. You shouldn't think about me in any state of our beautiful country or any country in this beautiful world. Like, if you're here, like, trying to learn some things and you're, engaging with the Tasty Network, then unfortunately, you have to listen to me. And you may even have to, absorb a thought or two that's related to me. But once, 2:45 Eastern hits, 1:45 Central hits, nah, man, you should be doing things like tulip festivals. Like, you should be doing things like, obviously, chest and back. I mean, not on a Thursday, of course, but just in theory. And so thank you, David, for being here, my friend. Eric Jones is digging the ad. Yeah, I think it was a promo before my show where Tom and Tony are like street fighters, which is really, really funny. Rob says a Trump put in bonds, sell some vol in ZN or ZB, getting some positive delta or stay delta neutral. Man, I have no idea if there's going to be a Trump put in bonds or not. I mean, I just think that from kind of being a short-term contrarian and kind of taking, a bit of a, mean reverting price stance on the markets, I would say you've got to be bullish on bonds right now. I would say playing bonds to the upside is going to give you more potential reward than playing it to the downside. I have no idea if that's going to be the right move, of course, but I mean, sell some volatility in ZN or ZB. I mean, you could certainly do that. What is the volatility in TLT? It's got to be pretty high, I would think. What is the IV rank? TLT is 86. Okay, I'm sorry. The stock price is 86. It's 39. So that's not too bad. Like, that's decent. I mean, I wouldn't say it's like amazing, but it's not too bad. And so, yeah, I mean, selling some premium in there, whether you do it TLT, ZB, ZN, I mean, they're all essentially going to be, there's slight differences in duration, of course, but they're all going to be different ways to kind of take a fixed income approach. Yeah, I mean, I think you could sell some volatility in any of those, and I think that you might be okay. And that's the beautiful thing about selling volatility. That's the beautiful thing, right, Rob, about selling a put or whatever. It's like, man, I don't even have to be right directionally. Like, I could actually be wrong directionally and make money. And if the stock just chops around or the index just chops around, then I'll be in fine shape. Not if you have Wolf, of course. That's a very special situation where, the craptacular nature of the stock is just too strong. Like, the power is just too great that you cannot overcome the Greeks. You cannot overcome the deltas and the thetas and the Vegas. But anyway, I digress. 9-5 says, will the markets really allow everyone to leverage 10x and make millions in half a year? Time will tell. Crazy market, man. Who's leveraging 10x and making millions in half a year? Interesting stuff. Interesting stuff. I'd like to know who's doing that, and maybe send them 3 easy payments of $39.95. Who knows? Maybe I'm doing that you guys don't even know about. But anyway, I digress again. So Joe says, "Hey, Dr. Jim, for the Iron Condors, when do you roll the untested side for more premium, and when do you just close out?" This is a great question. Great question there, Joe. Thank you so much for being here. So a couple of things. So when you think about an Iron Condor that's been tested, you essentially have 3 options. So you listed 2, but there is a third option. So number 1, you can roll the untested side. You could do that. Number 2, you could close it out. You could do that. Just be done with the trade. Or number 3, which is actually my favorite approach, you can do absolutely nothing. You can do nothing. You can just go on about your day. You can just go live your life. And just say, hey, I've got this Iron Condor on Netflix. I got tested. Just kind of throw like a at it and just go about your day. Like, man, I still got 3 more sets of walking lunges. I can't be thinking about tested Iron Condors in Netflix, right? That's going to take care of itself. And so I like the do nothing approach for an Iron Condor that's been tested, because when you roll the untested side up, that's also a fine approach. And I know a lot of traders like to do that. I think that's fine. But you just have to know what you are giving up. You have to know what you are signing up for. It's very similar to, what we talked about with MES a few minutes ago. Like, if I'm going to roll the untested side down because the market's crashing like it was, I have to be aware of what I'm signing up for. And I am signing up for significant whipsaw risk. And that's exactly what we are experiencing right here and right now. And that is exactly what so many of you have experienced, because I've heard it myself, either emails, either people showing up, at the live events, just seeing random people, just sobbing on the street corner. I know they got whipsawed. Like, I know there's only one possible explanation for those kinds of tears. They rolled down their ES calls too quickly. They rolled down their SPY calls too quickly, and they got whipsawed. And so you just have to know what you're signing up for. Same thing with rolling the untested side on Iron Condor. You have to understand that you are shrinking the distance between your short strikes. And so that real estate where both sides of the strategy can be out of the money is so valuable. It is so incredibly valuable. You are shrinking that distance. Now, you're getting something in return, right? It's givings and gotchas. You're getting more credit. You're reducing risk. You're doing some good things. But you are reducing that distance between the 2 short strikes. And so you have to understand that in and of itself is going to potentially cause problems later on for trying to make money on the strategy. Because now you have the 2 sides of the Iron condor, the short put spread on the bottom, the short call spread on the top, they're now closer to each other. So now the friction that they're going to cause up against one another is now greater. And so to make money on the strategy, it actually becomes harder and harder. And so you just have to understand that. It doesn't make it right or wrong. It doesn't make it better or worse, per se. You just have to understand what you're signing up for. I don't like to do that. I prefer to do nothing with tested iron condors, simply because that distance between the short strikes is so valuable. I kind of want to leave it intact. I don't really want to jank around with it too much if I can possibly avoid it. So hopefully that helps. Let's see. Sparky Dog's in the house. Hey, Doc. I got scared when you disappeared the other day and rolled up our Tesla strikes. Did I screw up? Oh, I don't know. Let's see here. You rolled up the Tesla strikes on a vertical spread? That's not usually something we would do, so that's very innovative of you there, Sparky Dog. I don't know that you messed up, per se. I mean, you could follow up with an email and tell me the specific strikes. But usually when you put on a defined risk strategy, which is what we have on here in Tesla, we're in the money, of course, because Tesla's been very strong the last week or two. And, if you were to roll up the strikes, that's going to cost you something, right? So just for completeness purposes, let me show everybody. Now, I don't know exactly what you did, Sparky Dog, because you didn't share the strikes, which is totally fine, of course. But this is going to be some version of what Sparky Dog is talking about for everybody else that's watching the show saying, what does that mean and why could that potentially be problematic? Well, let's talk about it. If you have a short call spread that you put on when the stock was when the stock was lower, so the call spread was out of the money, and then the stock rallies up so it's in the money, which is exactly the situation that I'm in here with Tesla, you could say, kind of like what Sparky Dog did, hey, let me roll up my strikes so I'm now out of the money again. Let me reposition this spread so that it's in a safer place, so that maybe it's out of the money, gives me a better chance to make money, things like that. Okay, before we even do that, though, let's just think about this. Let's just think bigger picture, because there's like a big foundational point that I think can really get lost in the shuffle here that can be really helpful for your learning not only this type of strategy, but other things that are happening in the market and trying to, decipher and interpret like what different moves in the market mean, what different strategies, the pros and the cons, the gimmies and the gotchas, different adjustment techniques, things like that. Whenever you want to take your strategy, specifically the strikes of your strategy, and you want to put them in a more favorable spot for you, that, my friend, is never going to be free. That, my friend, is always going to cost you something. Now, you may get kind of fancy, you may get kind of creative with it, and you may say, hey, that is going to cost me something, but man, I'm going to roll out in time. I'm going to use that extra time to help pay for, getting this in a safer spot. There's ways around it. Like there's ways that you can kind of work with that truth, but you have to understand just at the core, basic level, if you ever want to take a strategy and put it in a better position for you, that's going to cost you something. And so let's take a look at what that would look like here if we were to do it without also rolling out in time. So let's say that I wanted to, buy back the 325, sell out the 335. It's for 560. And let's just say I'm just picking strikes at random. I'm going to reposition this to a 350, 360. So I sell a 350 and I buy a 360. So that, if I were to do that, that's going to cost me $1.73 debit. So that is the cost. That is the not free nature of what we're talking about here. Now, will I be in a better spot? Yes, I will. Will my position be safer? Yes, it will. Because now it'll be out of the money. Will it be higher probability? Yes, it will. But all of those things are costing you something. In this case, it's costing me $1.75 or whatever. So what does that mean? Well, let's go back. Obviously, it means it's going to cost you $1.75. But just to even give you even more detail around that, because I know, like, for people that are learning derivatives and options for the first time, it's very difficult. There's so many things happening. And I just know from my vantage point back when I was a student, I really, really, really loved when one of my professors would go out of his or her way to actually like fully explain something. Like, man, I ate it up. like other kids in the class are like yawning, like other kids in the class are like asleep, right? I'm like, nah, man, like this is great. Like I need to know the why. I got to know the, the foundation. I got to know the this behind the that and the that behind the this. Like give me all of it. So when I became a professor myself and then obviously joined Tasty, 10 years ago, I'm like, man, I'm going to use that same approach. And I understand at times it can be a lot and at times it can be too much, but that's just, I think from a learning standpoint, there can be so much value there. So let's take this dollar, we'll call it $1.70. It's moving around, of course, as the market moves. But this $1.70, so what does that actually mean, like in totality? Well, let's clear away from the order. We know it's $1.70 to roll that up. If I look at my strategy right now, I put on the strategy, this vertical, for 386, right? It's $10 wide. So this is $10 wide. So this is the width of the spread. If I subtract the 386, which is what I paid for it, that's going to get me to my maximum profit on the strategy. If Tesla goes down and the options expire out of the money, I hold it all the way to expiration. Of course, I'm not going to do all that. I'll manage it early, all that kind of stuff. But just to understand kind of the nuts and bolts of what's going on, this is really helpful. So my maximum profit here would be $6.14. Okay. If I then do the roll that we just looked at, where I pay another, $1.76 it was, I guess? If I pay another $1.76, what that essentially does is it increases this number, which is going to decrease this number. So it increases my 386 by $1.76. Oh, I'm sorry. I misspoke. It decreases the, wait a second. Okay. So man, I need some banana daiquiris or something. Let's start over. We've got like 90 seconds. I totally misspoke on like all of that. Ah, man, that's a train wreck. So let's go back in here. Maybe we'll do it right this time. Man, it's a good thing we're not live and we can kind of edit this out later. So I've got a $10 wide, brutal. I've got a $10 wide vertical spread. I sold it for 386. So that's all correct. This 614, this is not the most I can make. That's the most I can lose, right? The most I can make is 386. The most I can lose is 614. Okay, now I do the roll for $1.76. This $1.76 is going to decrease the most I can make and increase the most I can lose. That's what I was going for. So I only took like 3 minutes of your lives that you'll never get back. So if I take my 386 and I subtract $1.76, I'm left with essentially $2.10. This is my new net credit on the position, which is going to lead to a greater maximum loss that is now $7.90. So that is the big gotcha. That's the big risk, Sparky Dog and everybody else, for doing something like that. That's why we typically don't do that. Did you totally mess up? I don't think so. But, it's probably just a learning experience for next time. It's going to change your risk return profile for this trade in an unfavorable way, but it's not like the end of the world or anything like that. I think it'll be fine. If we made it through PPI this morning, like you're going to make it through this Tesla short call spread. So guys, I got to run. I'm totally out of time. Man, I appreciate you guys. I appreciate you guys so much. If I can ever do anything to help you, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody? Big merger. That's right. Dick's Sporting Goods. They went after somebody who they think is a good synergy for them. We'll talk about what's going on there. UNH just can't stay away from the negative news. That's right. It is really not good. It's really not good for them right now. Is it an opportunity, though? I guess we'll see. We'll talk about it. And finally, one of the biggest companies in the U.S., just as when we thought tariffs were over, they think it still could be a problem. So we'll talk about those three things and more. Take a look at what little bit of earnings we got, and I will glance around and see if there's any great trading opportunities that I really like right now. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I am your host, Jamal Chandler, fresh off of going back to school. That's right. Back to school. Back to school in a different way, though. I was at a high school this morning, local area high school, talking to some kids about options. My good friend who's a teacher there, Vince Doran, invited me to talk to his class. And look, I got to tell you, the future is bright for options. It's interesting because we all see these graphs all the time, but talk about the utility of options and how many people are trading options. And, of course, right now, a lot of it is 0 DTE. That makes up more than 50% of index options right now. It's big, of course, but I got to tell you, talking to them about the right way to trade options, ways to express an opinion, I mean, I feel invigorated. It was pretty awesome. And they had really good questions, too. I mean, really good questions, along the lines of the questions that you guys often ask in the chat. I tell you, it was something else. But it was awesome to be there. Thanks to Vince, thanks to Enzo South High School for having me today. It was pretty awesome. I got to tell you, it was great. So, let's get to the slides and see what's going on here. Dick's Sporting Goods, big purchase, right? They bought Foot Locker, $2.4 billion deal, a little bit of combination of using some debt to buy and cash. This is an interesting one. Now, theoretically, it seems like it totally makes sense, right? I mean, if you've listened to me in recent months, I've talked about Dick's Sporting Goods quite a bit because I find it fascinating. I still have a young kid who's playing sports, and he's in middle school. It's going to be a while. We're going to be high school, all this stuff. We're always buying gear. Every time I go in there, there's adults with kids, or they're buying stuff for kids. I mean, I feel like more often than not, they're not necessarily buying stuff for themselves. It's usually for a kid. It's fascinating. And then they do have a shoe department. It's pretty small, but there's always a shoe department. Well, now they're going after shoes. Dick's is one of the main sort of sellers of Nike shoes, and then also Foot Locker is one of those big ones too. So now you got that combination, which seems like on paper should just automatically work. But I tell you, it's interesting watching the stock today, watching Dick's stock. It's not doing well, and that's letting you know that all the shareholders don't like the deal for a lot of different reasons, I guess. I mean, it seems like a no-brainer for Dick's. I mean, they can afford it. It's not that much of a purchase. It's $2 billion. Dick's Sporting Goods is like, how much is it? It's like a $14 billion company, I think. And yeah, I mean, you're paying $2.4 billion, which is a little more than 10% of your market cap for access to shoes and international. I mean, it's an interesting deal to keep an eye on. But the point here is that a lot of these smaller companies are starting to get snapped up, I would think, over time in this space. And it seems like Dick's Sporting Goods is going to be just more of a sports conglomerate. I mean, especially domestically. International, I can't speak to how they do sports. I know they do. I mean, obviously, soccer is huge and all that, but how much are people buying gear? I mean, I really don't know. In the U.S., I mean, there's every sport, right? It's lacrosse, it's hockey, it's basketball, it's baseball, it's football. I mean, it's everything, and you need shoes for all of those. So could be somewhat interesting. I was thinking about maybe taking advantage of this dip here in the stock, but it's kind of a nice little dip. I was looking at it, but I don't know. I didn't like the risk to reward, and I might see if it. I tell you what, if it falls again tomorrow, it still looks interesting to me. But if it falls, I might do it anyway. I don't know. I still might do it anyway. The 170, 160 put spread looks like possibly a do to me in June. That could be one. I could probably go out to July. What did I say? The 170, 160 put spread. That's possibly a good way to get in the trade. I think I might do that. We'll look at it later at the platform. Stock's actually a little lower on the day. It's just off. It's like $2 off the lows. I might do that when we get to the platform. I'll think about it. I'm glad I cleared out my platform early in the week to sort of clear my head for new trade. It's like the July options are pretty wide, and that's the only thing that sucks. So I don't know. We'll see. But again, interesting buyout today. UNH, another situation where you're talking about big moves in the stock. Now, we just talked about it the other day about the CEO leaving the company. That's honestly never good, right? When a CEO leaves the company in the middle of the year or whatever, amidst during their earnings, and they just it just was not. It didn't seem like it was a good situation. On top of that, you hear today that there's a DOJ probe into a Medicare fraud potentially, right? And so that's also really not the good news. And of course, the stock tanks on that. And it's just been a rough year overall for the stock, right? I think it could be somewhat of an opportunity. I think there's worth dipping your toe in at this point. There's been a series of bad news, and obviously everybody's scared and they're running for the exits. I decided to dip my toes in. I sold a put today. Just straight up put earlier in the day, and so far it's working. I will definitely keep a close eye on this one, though, because, again, it's been like bad news after bad news. Obviously, the unfortunate situation that happened late last year with the CEO, and then it's almost like Boeing in a way, honestly. It's kind of fascinating to watch this. It's almost like Boeing more recently. It's just been bad news, bad news, bad news. And at some point or another, Boeing stock would rebound sometime, then more bad news. And so I don't know if this is going to be the beginning of that, but it seems like a good area to try now with this real bad news out and what the stock has done today. And I mean, again, I'm keeping my eye on not just UNH, but also the whole industry. Humana has also struggled too. Cigna's been another one. Elevance, ELV has been some of the other. It's kind of been somewhat of an industry thing. And when you introduce the fact that more recently has been talk about changes to Medicaid, which I still don't even remember the difference between the two. I'm not old enough. Medicaid, Medicare, I know they're kind of similar. I don't know how much Medicaid business UNH does. I don't know, but I tell you what, I decided to sell a put. Seemed like a good opportunity. We'll get there soon and see how it goes. I sold. Oh, somebody said I sold. And again, this is it's on the. I did it on the follow trader page. You can see it. I sold the 210 put early this morning when stock was around. What time was that? I sold it. Stock must have been like I sold it way earlier this morning. Stock was probably around 260 and change. So stock's bounced about $10 since I got it. We'll see. Finally, Walmart. All not so great reactions on all these stocks that I'm talking about today. Diggs, UNH, and Walmart. Walmart had earnings today, and the biggest thing that came out of the earnings was for them to say, we might be passing off tariff costs sooner or later. I'm surprised the stock's not down more, but that is not exactly the kind of news that customers want to hear, especially when everybody thought that, people are lightening up on tariffs. Here's the thing. I don't know how much tariffs are really affecting companies and our economy just yet. Because again, at one point in time, they were really high for a lot of goods out of China. Now we've dropped them. There's been a big fluctuation. You know what I mean? Like even this morning, in the last couple of days, we heard about the inflation reports, CPI and PPI. Tariffs are supposed to be inflationary, yet they haven't really been around long enough for us to take inventory on what they've done to the economy. So when you look at CPI and PPI, were they really are they really something that takes into account the state of our current economy when they're really kind of backward looking? I don't know. And I think you're going to see more of this. And again, Walmart is saying tariffs, but tariffs in what form? The 145% tariffs that we had on for like 3 weeks, or the 30% tariff that we're going to have going forward? I'm guessing they're talking about the one going forward. And so overall, I think you're going to have to wait and see how this really affects the stock. I was long this at one point in time. I'm out now. I'm glad I am. We'll see what the stock does. If it does tank, I think at some point or another, maybe jump back in. But for now, I'm going to stay hands off. Leftovers. What are the most important factors when buying a car? Let's move to the next slide. What's up, guys? I see you in the chat, and I will be. There's a bunch of different questions in here. I'm going to get back to all of these. I'm going to jump back in and see. I'm going to start, and I see James Bond. You seem like you were the first question. Is that it? No. Is that the first one? No. Yep, James Bond. I'll come back to that. I'll be up there. So, leftovers here. This is a chart showing the share of prospective car buyers in the U.S. saying that these characteristics are especially important to them. I have a 2010 Ford Edge. Paid off. Don't care about it. It's nice that it's paid off. The car is old at this point. But it's nice having a car you don't care about. I've had this before, and then I've had new cars, and then you care so much about them, and then you park far away from everybody else, and you don't want to be close to any other car. And it's kind of nice to have a car you don't care about. All that said, I don't know. I mean, maybe within the next 6 months to a year, maybe I buy a new car. I don't know yet. So that's why I thought this was interesting, because I don't know, what do you care about? Fuel efficiency is number one. 53.2% of the people say they care about that. Safety is 53.2% as well. So it's kind of half and half in a way. And safety is definitely important. It's funny because I was talking to a friend of mine recently about a car I was looking at, and he said, look at the crash ratings. And honestly, I have never looked at crash ratings on any different car. I mean, if you crash, you crash. It is what it is. I try not to think about crashing. I drive like a very defensive driver. I assume everybody on the road is an idiot. And I've told my kids this when they were learning to drive. Assume everybody on the road is dumb and they're not going to automatically stop at a stop sign. Or I can tell you now, even when I'm going through a intersection and the light is green, I'm still halfway worried sometimes. You never know what idiot is paying attention. There's so many distracted drivers. Never mind. You know what? Forget it. I'm not going to go there. Back to this. Fuel efficiency is clearly the most important thing for a lot of different people. I don't know if it is for me. I guess, I say that because I think people who are driving, if you're buying a truck, you're not paying attention to fuel efficiency, right? So why do you care about that? You probably care about safety if you're driving a truck, and that's why you're getting a big truck. Low price, obviously, is number 3 on the list here. High quality. I would say high quality is most important to me, I would say. Suitability for everyday use. Whatever. High driving comfort. I would say the driving experience is definitely important to me. Believe it or not. That sounds dumb to say compared to safety and all these other things and fuel efficiency. But if I'm getting a car, I'm getting it because I want to be driving. I want to be comfortable in the few times that I'm driving it, or, because I don't drive a car a ton. It's not like I drive. Well, I do drive every day, but only not that far. It's not like I'm driving hours on end every day. I drive at most 30 minutes, which to work and from work. That's probably the longest drive I do every day. Other than that, everything else is like 10 minutes or so. So the few minutes I'm in the car, I want to be comfortable, I guess is the easiest thing to say. But yeah, these are the things that people care about. Good warranty and customer service. I don't care about that. That only lasts but so long anyway. And then design. Yeah, I am into the aesthetics of a car, not going to lie. Let's move to the next slide. So where are we at here on volatility scale? We've had a huge rally in markets. I guess the bottom happened on, what day was that? The bottom essentially happened on the 7th. We had another test of it on the 9th, of course, that'd be a huge day. And it's been up ever since. What does that mean for volatility? Well, volatility, of course, is faded. I mean, as you can see now, VIX is 18, VIX futures are 1840. VIX itself is 18. And so that's where it gets to this metric. I look at this all the time, something I bring up on the show. Longtime watchers of the show understand this metric. It is the VVIX over the VIX, or the vol over volatility itself. And it's an interesting thing that you can look at different time periods. I always put this going back to 2017, because 2017 is one of the highest we had seen. And one of the highest in this chart means low volatility. 2017 was a very low vol year. And so you can see that this metric was measuring upwards of 10 at the time. Again, VVIX over VIX. The average over this time period is about 5.8. So you can see currently we're at 5.25. So we're basically right around back towards the average, which is fascinating. I mean, again, just the speed at which this thing kind of corrected. I still can't believe it. Our corrections are really fast over the last couple of years now. Have you noticed? Except for 2022. Except for 2022, our corrections are really fast. And yeah, we're almost right back at average, which again, as we bounced in markets, we're at 5,900 and change. It's just phenomenal, but phenomenal. Let's move to the next slide. I thought it would be interesting to look at what's going on with bonds and stocks these days. We've seen such big changes over the last couple of years. I would venture to say there's been some of the biggest changes between the S&P 500 and bond yields, that is, over the last few years. So again, over time, there's mostly been a long-term time. There's mostly been a high correlation between yields and the stock market, right? Because typically bonds themselves, treasuries and stocks are sort of moving in opposite directions most times. Usually there's a high correlation between bond yields and stocks. And we saw that at the beginning of 22, as soon as they started raising rates, that correlation changed. Rates were going up and stocks were going down. Then it reversed a little bit again in the beginning of 2023, reversed back down for looks like most of 2024. And then basically towards the, I think after that August turnaround, that big nasty unwind in August, things started to turn positive again. Then they turned negative again. Now it's positive again. So this is all, when you talk about rolling correlation, this is a true rolling correlation. We always look for a correlation of close to 0.5, right? That actually means you're doing something. And it seems to be trending there right now. That's been the interesting thing to watch more recently, have been yields going up, stock market going up. I tell you what, I haven't really made sense of it yet, but I'm not going to go against it as of right now. Again, you got to trade what you see. And, I will say these correlations haven't lasted long. They seem like at most 6 months that this correlation stays one way before it changes another. So will we see this thing change again? I mean, again, this correlation looks like started changing sometime around March. Will it be till September that it stays like this? I don't know. Let's move to the next slide. The gold to silver ratio is the only one thing that still stands out a little bit weird to me, because usually when this thing is above 100, there's some strife going on and there's a war going on. And you could say there still is a war going on with this tariff situation, right? Geopolitical concerns. So even though gold is kind of pulled back from its highs, there's still a big difference between gold and silver, still above 100, that ratio. And so I would keep an eye on that. It's just one thing that remains, again, because you can look back at the COVID time and you saw it was above 100, but then you saw it started to fade and it dropped. Let's just see if this thing is going to drop anytime soon. Let's move to the last slide. So for earnings, we got AMAT, we got Kava, which again, I don't think I've eaten at a Kava yet, maybe we got it at work one day and I just don't remember. And Take Two have earnings. PPI unexpectedly falls in April. So it seems like producers are able to manage any potential impact from tariffs. But again, what does that mean? Does that mean the 2-3 weeks of 145% tariffs from China? Or I don't know. And then options expiration for May is tomorrow. Number of S&P 500 stocks above the 50-day moving average is 69%. That is doing well. Let's move to the platform. Questions, lots of questions. James Bond IV. Hi, Jamal. Are you doing anything with crude oil? Decent IVR? What kind of strategy in this market? Good question. I had a crude oil trade. Could be worth putting another one back on. I had a really good one. I had, I would have to go to July now. I had basically something like this: $2 wide, 54, 52, and then I had like the 70, 72. That's what I had for a while there. $670 debit. I think this might still work. Crude has been kind of stuck in this range here. You haven't seen it jump towards 70 in a while. You could almost even go 68 if you want. And again, it's all about the pop. This is a 60% pop here. 68, 70, 55% pop versus 68% pop. I don't know. Was down towards, it never got down towards 54. I think we can feel safe with that. I'm going to go with a 69.71. It might be worth putting this on again now that it's faded back down right now. You think? We could try that. Yeah, I'll try that. See if I get filled there. We'll try that, James Bond. That's what we're going to do. Let's see. Mac Lovin. I'm trying to build a long position in Lily Leaps. I'm thinking about buying the 2027 700 calls. Okay, let's take a look at that. Lily. Jan 27, 700 calls. So, I will say, well, you're going to do the poor man's covered call. Okay, you're going to sell the July. So which July? So one of the things I will say, if you're going to do the, anytime you do a poor man's covered call, you don't want to, you typically want to sell something within 6 months of the option that you buy. And I know that's not sexy, but it's kind of how it goes. And I don't necessarily know how well this works. This is $160. You're collecting $95, potential $160 gain. So what's that? $65, $6,500 you could do. I would almost say that you do this. Again, if you want to sell, which one do you really want to do? Do you want to buy the Jan 2027, or would you, again, this is not a leap, but you could buy more near term and sell. But again, you'd have to sell more near term, and I don't necessarily know if you want to do that. That's a little close. But the point of the moral of the story is often, I think in our mechanics, we always talk about selling something about within 6 months of the option you buy. So keep that in consideration, because I think yours is a little bit, again, you're looking at selling the July, which ones? July 850s? So you are going to sell, okay. Are you going to, you said the July 850s. There it goes. The July 850s, right? And so you're selling those against this, which is really far out, this 700. You're still paying quite a bit, like for this situation here. I personally would do sort of a long option. If I'm buying 2027, I'm going to sell something within 6 months of that. And then, you could obviously tailor it in that case. If you're going to be long this Jan 2027 700, you're going to be, let's just say, the June 2026. That case, maybe you don't want to sell the 850s. Maybe you want to sell the 900s, right? Because the trade you were going to do before is like 15 grand. This trade right here is like 10 grand. Gives you a little bit more room, and you're $200 wide. So you could potentially make, if it does bounce like that, you could potentially make a lot more, right? You have a little better earning potential. So that's kind of how I would do it. You can choose to do whatever you want. Questions, more questions. What else do I see? You guys, am I missing anything? I'm not missing anything. Yeah, that's mostly it. Like I said, I sold a UNH put today. If this were just one piece of news, I probably would be scared to. If this were just the news today and the stock had been tanking, but Stock's been taking a beating for a while now, going back, and we know what happened in December, and then this here was some bad news, and then I think this was earnings, maybe. No, I don't remember what this was. Was this the first? I can't even keep up anymore. Point being, is this has tanked quite a bit. Feels like a decent entry point, and again, I decided to sell a put against it. I've been lucky so far that it bounced. Sold that put for 1160. So up a nice little chunk of change as of right now. Going to keep a close eye on this position, though, because like I said, a lot going on in energy, a lot going on with Medicaid and all that kind of things. Something to keep an eye on. I did do also a little Tesla call here heading into the weekend. I feel like sometimes on Friday some names jump. And so I just wanted to test my theory. Nothing crazy there. If you saw that on the follow page, that's kind of what that's about. It's not a huge deal. Coin, just when we thought coin was going to really make a move and get bought up with these S&P 500 funds heading into the S&P 500, and man, that was the good big news. But then some news came out from some situation from 2 years ago. I don't even remember all the details behind it. So that turned around and tanked today. We'll see. Can markets hold on for a, fourth day in a row of positivity? We'll see. We'll see if it can hold on. We got 22 handles right now. We got about we got about 45 minutes almost to the close. We'll see if markets can hold on. But yeah, the Walmart news I think is kind of interesting. We'll see if more companies are going to come out and say that kind of thing. Dick's Sporting Goods, again, they don't seem to love this. I was looking at possibly selling a put spread in here. These are very liquid. These Junes are very liquid. When I looked at July, at least when I looked earlier, there was a weird offer on these options, but oh, yeah. I'm going to stock back down. 170, 160, 61% pop, 365. I'll do it for 360 because I know I'll get filled. Let's try that. Oh, my God. These options, they're impossible. So I'm trying to sell this put spread here. We'll see how it goes. It's interesting. I mean, they don't seem to love this deal at all. AMAT. Am I playing AMAT? Yeah, Dick's is just down like that because they clearly don't like the deal. I'm not sure exactly why. Some people are, who knows? I don't know. I thought it was a pretty synergistic deal, but whatever. AMAT, I am not playing AMAT at all. At least I hadn't really looked to do it. I got it. What's the expected move here? $9 and change. Yeah, I don't know. I got to look into this. This stock is just here reaching the 200-day moving average. If they say something good, we could see big moves off of it. AMAT is, who is the other comparables in the group specifically? I know it's semiconductors, but let's see here real quick and who's had earnings and how they performed. ASML, AMM. How did ASML perform on earnings? They already go. I would look at some of the other comparables. KLEC. I know this is supposed to be a good environment for semis right about now, especially more recently. So, maybe this one is worth a play. Again, I'd like to buy ahead of earnings. I wouldn't be opposed to either just outright buying these 182s or 185s, or going with the typical trade that I do for earnings. The calendar spread could be one I choose to do, folks. That's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. I'll see you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hello, everybody. Tonight here, and what have we got so far? I think, if memory serves, I think out of the past 19 trading days, we've had 17 up ones. This is the 17th. It isn't a bad day in my little world because energy is having a nice tumble, and that's been kind of a focus of mine. We'll look at a couple of charts related to that. But it is kind of annoying because we started the day nice and down. Red all over the screen, but for whatever reason, from 7:30 to now, it's just been bleep. So bullishness still rules over the land. Let's jump into the charts, see if we can finish up by the bottom of the hour. Here's the spider, and like I said, this line's kind of meaningless, and we'll just kick it to the curb. There's the only meaningful line in this chart, and this is true for a lot of charts these days, is this long-term mid line of the channel, which is a ways off. But yeah, we're kind of in at least the same zip code as lifetime highs. But I listen. Yeah, 17 out of 19 days up, but I'm liking this market a lot more than I did a few days ago. So yeah, I still think we got a good stock pickers market on our hands. Here's the diamond. We're getting close to the highs we saw on Monday. Should we push past that? The next and kind of last meaningful resistance point is that March 26 peak, but we'll leave it there for now since we haven't done that quite yet. Now, again, United Healthcare is very much in the news. They have lost it's approaching 60% of their value. And as I said last time we talked about this isn't some obscure pink sheet. This is United frickin' Healthcare, a Dow 30 component, like Microsoft, like Goldman Sachs, like Apple. You know, this is one of the giants in American financial scene, and they've lost the majority of their market cap. Lots of accusations swirling around, fraud. So, you know, they used to be very much in the news because one of their executives was gunned down in cold blood, but now it's more in the news because it's getting wiped out. So quite the debacle there, and of course, one of the reasons that of late, the Dow's been sort of lagging a bit. Although weirdly, boy, the Dow must be really strong in the other 29 components today. It's actually beating percentage-wise most of the other things. But United Healthcare dragging it down to some degree. Here's the IWM, which is a bit of my obsession these days. This one is relatively strong. It's up about 0.5%. The key for me is to stay below this dashed line. But we've talked about this, and now I'll show you one more chart related to that a little bit later on in the show. Here's EFA, which continues to confound me. I have a small position still in this. I think I'm inclined toward a no position in this. It's annoying. You know, even when the market was down hard early today at the open, EFA still just shrugged its shoulders and kept marching on to a lifetime high. So you got me. That is just a beast. Talk about tilt for a little bit. Bonds are finally showing some strength. The poor things have been beaten down. It actually might be an interesting place to get long bonds because they are so squished at this point, and over the course of even the past year, they are near the low end of where they've managed to get beaten down. If I were to buy this, which I'm toying with, I would set my stop below this bar here. I think that's a reasonable safety net. to say should it cross below the low of April 11, then I'm out. But it is quite, it's a little bit more data for you there. It's quite low relative to where it's been cycling about for a while. Because it's up today, interest rates are down, and in turn, interest-sensitive items are strong. So I got stopped out, still at a profit, but stopped out nonetheless early today on a couple of these creatures. One of them is XLU. If you saw my show yesterday, saw me kind of wringing my hands about XLU. That hand wringing was justified because it was strong right from the get-go. I got stopped out right quick. Still kept some profits, and I would be in a loss now were it not for that. So yay, stop loss orders. But this is just blasting higher. And the other one that I scurried out of was IYR quite early today, and it's showing plenty of strength as well. So the one sector that really saved my bacon today was energy. Every day for some number of days now, I've been mentioning this right triangle pattern, the failed right triangle pattern. And this is USO, not a fantastic way to look at the crude oil market, but it'll do for our purposes. And we've gone slicing through this, and there, that line, that's resistance. That's the lower boundary of the right triangle. And we peaked on this a couple of days ago, sank a little yesterday, sank more today. It's off the lows, but I really like the look of this longer term pattern. And so in turn, XOP down a bit more than 1% today. XLE, which has kind of a mind of its own. It doesn't always fall lockstep with XOP. It is up a little, about 0.25%. The key on this one is not to violate that price gap right there at 86.71. Now, also, and you've probably heard very much in the news, is and I didn't know if it was a proposed merger or if it's been finalized or what, but sports related. Dick's Sporting Goods, DKS, looking to acquire Foot Locker. Very bad for one stock, very good for the other. DKS is getting hit hard. It's down $32, over 15%. I suppose because the market sees this as perhaps they're overpaying for it. It's not a good strategic decision. Regardless, it's been beaten down to a level that was seen about 14 months ago, near the base of this pink zone that I've drawn. And Foot Locker, the target, is having a grand old time. They're up 85%. I'm delighted to report, as much as I like to short stocks, this was not one of them. Massive pop on this one today. Interestingly, just as a chartist, I find this kind of cool. Check out this price gap. This is a major, and I actually drawn this line beforehand, but it just has tagged it beautifully. The price gap took place between December 3 and 4. Yeah, it looks like an earnings-based price gap. And instantly, whoosh, we went up and sealed that. If this were news based upon like great earnings report or something, I'd be very interested in shorting it, but not on a takeover. No thanks. Yeah, that's kind of silly. So, but just kind of mildly interesting that gap got sealed up on such big news. Semiconductors, also a great interest of mine. I started to tiptoe back into this zone yesterday, and with one particular one the day before. So SMH is incredibly red right now. By that I mean incredibly, red, not incredibly red. They're only down 0.81%, but red nonetheless. And so I've got this line anchored at 249.44. This has gone very far, very fast. And my belief is that all the factors that drove them down in the first place have not disappeared. And it wasn't all just the trade war. It was the prospect of maybe this AI thing is not going to completely take over the world. So yesterday I did get short SMH. NVIDIA I'm not touching, but it's a crucial thing to keep an eye on because it must not violate this level here in order to keep its own bearish disposition intact. 143.43. No position on it. It looks lofty, but I guess because there's so much emotional baggage attached to NVIDIA, I'm not going near it. But I was short AMD. That's having a nice tumble, down almost 3%. Also, I was short Broadcom. I think I mentioned these yesterday. AVGO, this is sinking a little bit, 0.5%. And as I said a couple of days ago, got into microchip MCHP. I don't mention it here, but I also earlier today added Micron to the mix, MU. So, yeah, semiconductors looks frothy, to say the least. Just to mix things up a bit, Mr. Permabay here loves to show short positions, but, let's look at a few interesting long ideas with more speculative issues, and we've seen most of these before. It's been a while since we followed up. Let's just thumb through them. Here's Roblox. Good day, another green day. This had based for years and years in that green zone. In the midst of that green zone, a lot of accusations, a lot of chatter, a lot of ugly rumors. I guess they didn't amount to anything because the stock's just doing great. TMC, the metals company, which, as I recall, has this really cool technology which kind of just scrapes the surface of the seabed and for valuable minerals, something like that. And their stock's doing pretty good, although sometimes they talk about kind of the personality of a stock, the history of a stock, how it expresses itself. The one thing to be kind of cautious about here is it's kind of played this game before, where it had this base and broke out, and then it just, sputtered into nothing. Could happen again. I mean, we've only got a data set of one there, so it's not a lot to go on, but just wanted to say that in passing. Same idea here with Rivian. Rivian has again and again and again and again formed bases, gone launching off, and then it just runs out of the proverbial gas. But this is having another go at it, trying to get some meaningful, persistent bull market of its own going. Toast, down a little bit, but it has broken cleanly out of that big bullish base, fell hard, tagged the support, and went into launch mode again. One we've mentioned a lot here, which has done quite well. It's EXEL. How do you say this? EXEL. Lord, people. Interesting company name. I can't say it, but EXEL. I can say letters. But this is near lifetime highs, and it based very nicely there in the green zone. And one last one, Comstock Resources, CRK. Kind of a little bit of a sloppy cup with handle there. Let's just envelop that a little bit better. Yeah, that makes more sense. Okay, it's not so sloppy now. It's actually quite nice. So we got a cup with handle pattern there. We've broken out of that, and we're up about 2%. So that's looking sharp. Let's just wrap it up. As I say, semiconductors, here's the SOX again. I think this is very vulnerable to another downturn. The Fibonacci's are lined up just squeaky clean on this. That blue Fibonacci, 23.6%, that's my resistance. So that's looking real good on the SOX. The Russell, mentioned earlier, RTY, same idea. Fibs are looking good, blue lines resistance, and we've got a nice topping pattern right here. So here we are, like so. This is the you are here kind of moment that I believe we're in the midst of. And finally, in case you didn't get the memo, fear has left the room. There's the VIX. There's the trend line. Anchored all the way back here to last year. We are right down at that trend line again. So people are cool. So bears can sneak out of their caves if they dare. All right, week's almost over. Hard to believe. I'll see you tomorrow. We'll get it done. Thanks. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Tomorrow is your big day. Are you going to get all your shopping done tomorrow?
What tomorrow? What's tomorrow?
Tomorrow's Saturday before Mother's Day.
Oh, yeah. We got that. This is.
Oh, yeah. Yeah, I'm not I've set the bar low. I'll go to Trader Joe's this afternoon, pick up a car, and I'll be done.
Wow.
By this afternoon, and then by Saturday for sure, it's so picked over. You actually are like, you have to cross out, love your son and put husband there. There are no more cards.
No, the only card that's gonna be left for Tom, it's gonna be like, to my strong black queen.
Tom, how was your weekend?
My weekend?
Yeah.
Pretty good. I didn't really do anything. I worked at a coffee shop a lot.
He worked a coffee shop. Like, what do they trust you with? A broom?
Oh, no, they don't trust me.
No, I think he's more of a greeter.
If they need something, I'll go get it.
Like in the back?
If they need something.
No, like if they run out of milk or something?
Yeah, like
they
that.
must run out of butter every day. Like, Sosnoff, we're out of butter. Sounds like, I just bought 4 pounds yesterday.
Oh, that's how they get rid of
I'll go get some.
That's how they get rid of them?
How's your TV doing, Tom?
I don't watch
you're going to put Tom into the conversation?
I only watch sports. I stopped watching TV.
He's got other things to do like TikTok.
I got other things in my life that are more important.
TikTok.
His TV doesn't work. That's what it comes down to.
I have a TV that works.
Where is it?
It's not in the bedroom where you eat.
Yeah, there's no way. Where's your TV that works?
Big screen.
In the bed? No, it does not.
It does.
In the living room?
Yeah.
No, sold.
Thomas, you look off a little bit today, Sodnoff. What did you do? Did you forget something at home?
Don't you dare start.
I saw things in the office yesterday, and I was just like, what is even happening?
What'd you see?
I saw Beth holding a phone, pointing it at your hands, while a very nice Indian man asked you questions through a phone. What was going on, girl? You got a bum flipper?
Yeah, I either got bit by a spider or I ate something weird. I don't know.
Be so for real. Where were you that you weren't in the woods where there's spiders?
I know.
So, but your hand's like swollen and
Yeah, it was
puffy?
swollen. My hand was swollen, so I wasn't sure what it was.
Is it gout? It's gotta be gout.
That's what I thought, but he said probably not.
Oh no.
Yeah.
So they're gonna have to.
Like,
you're in trouble now, Sod.
Yeah, you have viewers that care about you? Don't they send you like
medicine?
Veterinarian, don't they send you like horse pills or something?
Yeah.
But did you wake up like that, or did you go to bed like that? Because if you went to bed like that, wouldn't you be a little alarmed?
Actually, he did go to bed like that.
I
was
did.
talking about it yesterday.
Yeah, it's from 2 days. It's the second day, but it's. Listen,
You think this is from rancid hummus?
Could be. I have a tolerance for pain that's a different level than you.
Oh my God.
Get the full scoop by checking out the archives at tastylive.com.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the closing bell here, my friend. And what a closing bell it's going to be. A little bit of a, I don't know, back-to-back weird days, at least for me. Even the S&Ps are up 20. They were down 20 for most of the morning, rallied into the afternoon. NASDAQ is down 33. It was the leader in the clubhouse at one point, but it is no more. It's the only red on the board for the equities at the moment. Russell up almost $10, and the Dow is your leader in the clubhouse, up 285 on a percentage basis. Volatility in by 30 cents after going over $20, signaling a little bit of after 20. Going over 20, not $20, going over 20, signaling a little bit of weakness. It's back under at 1950. Bonds today traded all the way under 112, 111.29. They're 113.05. That's $1,000 or more higher than where they were off of their lows. Bitcoin 103.3, been kind of going steady for the last couple of days, sideways. Oil down $1.35, about 30 cents off of where it's been for most of the day. Gold up 44. But Sadnoff, this is the tale of a couple of different equities. On the upside, you got Netflix up 24 and change, and Costco up 15. And then on the downside, you got the usual suspect, UNH, Sadnoff, down $34, well off its lows of $249 It's 273. IV rank of 136 is still high in there. Coin's been weak all day, down 21. Tesla's down 5 or 6. Reddit's down 12 after catching a bid yesterday. Baba's down almost 11. It looks like it's these prices, they just seem like the bears are winning, but not reflected in the indices or volatility.
Well, Baba, you just mentioned the earnings plays. Baba hasn't bounced, hasn't moved all day. It opened down 8, it went down 9, 10, 11, and just sat there all day. I had a small earnings trade on in there, and I adjusted the calls down this morning. It is a very small loser. I don't know. What do you think here, Baba? Do you do anything?
I think you abstain. I know you like to play it. IV rank at 25, probably going to contract a little bit. I mean, if you want to go with a little bit on both sides, you can. I went into oil. I went into oil today a little bit.
I rolled the calls down a little bit in there, but we didn't lose any money in Baba, barely any, tiny bit. And in Walmart, stock down 70 cents. It was pretty much a non-event. Those were the 2 earnings plays last night. Are there earnings plays tonight?
No, sir. Today
but didn't you say AMAT?
Listen.
Wasn't it AMAT?
I will look for you one more time. Hold on, my friend.
Well, it didn't do anything today, so it doesn't matter. But it didn't move the whole day. But I thought yesterday you said
Baba
AMAT.
had earnings. Walmart had earnings. AMAT has earnings after the close.
Yes.
AMAT, Carvana, and TTWO.
Yes, I only have an AMAT position on. I wouldn't trade TTWO just because it's not not the most liquid stock. AMAT you can trade for sure, and Carvana you can trade for sure if that's what turns you on. CVNA.
Yeah, AMAT IV rank of 30 is not that great, and CVNA has an IV rank of 11. So
yep, not pretty. Not big at all, but it does have some pretty good volume. It has fair markets, but has big volume. I'm going to pass on Carvana because of the low IV rank. It's only traded 2.7 million shares. I don't think it's a decent earnings trade. AMAT, on the other hand, has traded 6 million shares.
Sorry, Tom. I said Carvana. It's Cava. I apologize. CAVA.
Oh, okay. That makes
Never
more
mind.
sense.
I apologize. I was wondering why that IV rank was 11. I apologize.
Cava. Again, same exact volume, 2.7 million shares. An IV rank of 45, which makes more sense for an earnings trade, but a fraction of the volume, fairly wide market. Stocks mid-range, I guess, perfectly mid-range. My viral TikTokers suggest that the new Kava sandwich, the chicken shawarma, quite delicious, but
this is your Mandy in the car or whatever her name is?
This is a different one. This is a different Mandy, but a guy. Suggests that the new Kava chicken shawarma is excellent. That said, my last 2 trips to Kava were both grossly disappointing, and I'm going to pass on a stock that trades 2.7 million shares with 20-cent wide markets. I don't have an axe to grind in Kava. I don't know if you do. I don't have an axe to grind in there.
I don't know. I have not. No.
So I have a small AMAT position on. Earnings continue to be just fine. No harm, no foul in earnings. This is a market that is. This market continues to be all about UNH and nothing more. And this is a market that, for me today, that was 100% of my efforts, and it was not a good effort.
Sure,
it was quite.
No, I know.
It was quite a challenge. Down when it traded 250 on the opening, I finally had to do something. Like I bought stock on the opening at 265. I didn't do anything when the stock got down to 250. I'm like, all right, I got short puts, I got long stock, I got short put spreads, I got ratio spreads. I don't have good anything. I'm going to. I sold some calls. They have gone against me, and unfortunately, let's just do this really fast. UNH. They haven't taken much premium out. IV rank is 135. If you're wondering why it's so high, it's because the we don't fence it in until the nighttime. So we'll cap it at 100 on the close, but right now it's 135. Like it'll show up in our records at 100. So you can't go over 100 or below 100. Negative 100
or below
I mean, sorry,
zero.
you can't go below 0 or over 100. But during the day,
if UNH closes here, let's just say with a 56 monthly implied volatility, and it opens with a 56 monthly implied volatility, this IV rank will be 100 tomorrow.
So when the stock was trading for 250, 24 points lower. 24 points lower.
Yeah.
I sold the 300 calls at $10. They're $14 now.
Yeah.
They're $14. So I'm down $4 on them. When the stock was trading $10 lower, 264, I sold the 250 puts at $19, and they are trading $5 lower. So I ended up scratching that strangle somehow. I didn't take it off though, but I ended up scratching the strangle. So the bottom line is everything I came in with today is exactly what I lost. Like, in other words, my adjustments were scratches. It's a complete debacle.
Which is not the goal.
No, not the goal at all. And it's a complete debacle in there just because of the size of the down move. I mean, it's only down $33, $34 right now, but it was down, another $25 lower. So we're down almost 60 on the heels of being down 62 days ago. And I don't even care about UNH. It's like a stock that I could care less in the whole world. I almost cared less about UNH than I cared about GameStop. Now I have on
I hear you.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 19 strikes. And this is a stock I don't care about at all. And so,
so you care a little bit more today than you did yesterday.
Yes. And I don't exactly know what my beta weighted deltas are in there, but I think it's giving me all my long deltas.
I'm sure that's where it's getting a lot of your long delta. Yes.
I mean, it's probably.
And it's not going to run with the market, right? Like it's going to be a beast of its own.
Oh,
so,
no, this thing.
Like you have beta weighted delta. That's something like I would almost take that beta weighted delta out of my position by looking at it.
I have to go figure it out. I don't know what it is.
Right.
I don't know what it is off the top of my head. Like what's 1,000 deltas in UNH equal to? Like, I don't know. You could tell if you actually go on the trade thing, you put 1,000 or do 100 delta. Do 100 delta, see what it equals to.
Yeah. Well, here UNH. You can also look at it from a beta weighting standpoint, can't you?
I guess.
I mean, UNH's correlation is only 11, Sadnoff. It's pretty light. So maybe you're not getting a lot of delta from there. Did that just blow your mind?
No, it didn't blow my mind.
Are you sure?
Yeah, I'm pretty sure. I think I am getting I think I am getting a bunch of deltas from there, but whatever. We'll figure it out later. I guess my point is I'm now in a stock that I have to figure out how. I literally have to figure out. I can tell beta weighted deltas.
It's right there. It's not that much.
Beta weighted deltas. It's 3 for every 10. It's 30 for every 100.
Okay.
I just checked it out. You just can set it up on the trade page. It's pretty simple. So if you have 1,000,
would you consider that a lot of delta or a little delta?
No, just to adjust my own delta. So for every 1,000 UNH deltas, it's 300 SPY beta weighted deltas. That's what it is.
Okay, so I go back to you again one more time with the same question, asking you to answer it. Would that be considered a lot of beta weighted delta?
No.
Thank you. It took some time, but we got to the same answer that Beck gave you 4 minutes ago.
Yes, but at least now I know the answer is right. Anyway, so as the day goes today,
that's savage.
They did take some premium out today, and We have a lot of winners today, but biggest losers were gold and UNH. That's it. GLD and UNH. And I could not recover from the UNH debacle at all. I've got some work to do over the next couple of days. Tony, I need UNH to go up $50.
50 would be great by expiration. 20 is great by expiration. I'd like it to be up 100 so I could be out of it tomorrow.
What is the expected move in there for the next week?
Would you like to take a guess?
Yeah, I'm not looking, so I'm going to guess.
Okay.
100.
Okay. Now we're going to go till a week from today.
Let me just see what
Friday.
I just want to see what the implied volatility is in there. It's about 75, right?
Yeah.
It's a Dow stock. It's a Dow stock with an implied volatility of 75. I'm going to guess, the expected move for 1 week from today. I don't know. I think I'm off, way off. I'm going to say $55.
Yeah, you're off. $26. You were giving too much early weight to it. You were kind of pricing it like you would a short-term option in SPX.
Only $26 for the next week?
The next 8 days, yeah.
Oh my God, that seems really low to me. Then there's Then there's a lot
when you're looking at the type of moves we've had.
Then there's a lot of juice in here.
You rank a 135. There's a lot of juice. Do you go into the shorter dated options? Now let me make your position a little bit bigger for you.
No, I can't handle any more pain. No.
Come on, Sosnoff. Fortune favors the brave.
Yeah, I know. I was a little too brave already to start today.
There's that $26 move right up there. You see the 8 days, $26.
Yeah. No. Fortune favors the brave. But I wasn't brave. I was dumb. There's a big difference.
Yeah.
Expected move tomorrow morning in the SPX for the SPX expiration tomorrow morning.
You want to know what the expected move is for that?
Can I guess? I don't know.
Sure.
I'm not looking at SPX right now, but just based on the volatility today, the fact that there was a pretty heavy contraction, I'm going to say 27.5.
You're right there. For the AM, you're right on. $27 exactly for expiration.
I didn't look. That's for the AM. Yes, for the AM.
Then you are 100% straight on AM. $27, $39, only 13 more points for the full day of May 16th. You can see that right there on the Tasty Trade platform. There's the 0 day 27.08. I gave my friend the 8 cents. And then the 1 day is 38.91.
So remember, if you have an SPX position on and it expires tomorrow, you can't, if it expires tomorrow AM, you can't trade it anymore. And it's unhedgeable. But the last 4 years have been up big. And over the last 27 years, 17 up, 10 down, going into tomorrow morning. I'm not saying that's what's going to happen. I'm just saying the last 4 years have been up big. So,
got it.
I'm not playing it with any directional bent. Biggest turnaround today was gold, down 60 to up 40. Everything else, and bonds down a handful to, up almost a point at one point. I would say the brightest spot today for us was the bond market, closing over 113, considering it was under 112 this morning. And the notes were up huge today. We're out of those. I would say that most of the NASDAQ stocks were incredibly weak today, even though the NASDAQ is up on the day right now. PLTR, Amazon, Apple, Coinbase, Meta, Google. I'm just looking at a quick list. Microsoft is unchanged. Netflix was your big winner, but NVIDIA, Tesla, Baidu, Baba, Intel, almost everything feels like it was lower today.
And Apple too. Apple down $1 and change.
Yeah. NASDAQ stocks were very weak today. And UNH
weak relative to a nothing move on the day. We've had a couple of days here with some complacency, Sosnoff.
Yep, and UNH closing on its highs of the day, I guess. I guess that's a good thing. But I got to tell you.
We're not closed yet, but sure.
I know, but I got to tell you.
Down 33.
Anybody that tells me that was an easy scoopy this morning, I'm going to slap you.
I was talking to my son. He thought it was an easy scoopy.
Yeah, well, he's full of crap. That's all I can say.
I was just giving him a shout out there because you beat him up all morning. That's all.
I didn't beat him up.
I used his name in vain. We really didn't talk about it, but it sounded good.
There was no easy scoopy today in there. If you bought him on the lows and you bought him at 250, you deserved everything you got from that trade because that was not an easy scalp. Not at all. And yeah, that was my number one source of emails today. That was my number one source of pain. That was the number one discussion topic. It's
really, you didn't get a lot of emails about my option trades today podcast where I traded a little bit of oil in there. Sosnoff caught that oil real good, up 5 or 6 cents already on a strangle in a day, which is $50 or $60 per contract.
No, I got only one. It said, "How do I turn this podcast off?" There's no off button. Control-Alt-Delete and it plays it more. I can't turn it off. I can't get it off. It just keeps going and it repeats. And I can't turn it off. What do I do?
Nice. Not nice.
I can't even make the speed faster, so it'll end faster.
Beth, I sent you that email, right? How do you turn this off?
Don't bring me into this.
Oh.
That's okay. I know it comes from a place of love.
Yeah. Yeah. All right. Now, so what's supposed to, tomorrow's expiration, the whole story.
Yeah.
What does a new subscriber do? You want to make a call on, there's no real earnings plays. You want to make a call on expiration, UNH, or volatility here? All three. What do you think? UNH, expiration, volatility from here on out next couple of days.
Well, UNH, the bottom's in because you sold some calls down there, so that painted the bottom there. So
I literally sold the low.
I know. Let me get you on film when you do that. Say it one more time.
I literally sold the low.
UNH bottom has been made. The high in volatility has been made too. So that's a little bit of my position talking, and again, a little bit of my position talking, and taking a little bit of inside information, knowing what Tom did. Volatility, I actually think it's going to be green tomorrow on a very complacent day, much like we had today. So I think the E-mini S&Ps are going to be inside that tight range of around 25-ish handles for the whole day. I know they may have a 40 handle move up or down, but I think tomorrow will be much like today. And you don't have a lot of volume in the E-mini S&Ps trading today too, Sadnov. 1.1 million going into expiration, not a ton.
Very surprising low volume. I think part of it has to do with a lot of option volume and a lot of activity in UNH. I mean, it traded 116 million shares, and it's really considered more of a Dow stock. So I don't really trade Dow futures, but I'm guessing that that's where a lot of the activity was. And for some crazy reason, the Dow futures are up huge today.
They also have a dividend too, which should help people that do have dividend. UNH daily volume, Sadnov. Would you like to make a guess at it? Average daily volume.
I would say.
You just told me there's 116 million trading today. What do you think the daily volume is?
3.7 to 4.8.
You know what? Not a horrible guess. It's 8.4, but still.
Okay. That's more than I thought.
Yeah, 116 versus 8. That's a lot.
Yeah, and huge option volume. And I think that might have taken a little bit away from the S&Ps today, because that's where a lot of the traders lived most of the day in where the action is. And before you think that that's crazy, it's not like all of a sudden everybody loves UNH. It's not like all of a sudden everybody wants to trade United Healthcare. It's just, it's not like all of a sudden everybody has this massive interest in United Healthcare. That's where the noise is. And traders are attracted to noise. So whether it's UNH, or HNU, it wouldn't have made any difference. Anything that's trading 110 million shares, that's that's 15 times its normal volume, and it's down $35 or whatever, it's going to attract interest. That's what it is.
Sure. 1.5 million UNH options today so far, Saz.
Yeah, and they traded like water, just so you know. It was
and this is typically a stock that, can have dollar-wide markets anytime during the day because nobody gives a crap.
UNH right? Tomorrow and next week. What's your call?
UNH, I already gave it to you. UNH, bottom is in. So volatility high is in too. So you can forget about this. These big moves are over. It's going to grind a little bit higher. Volatility is going to be green for Friday on a day when the market might actually be up small.
UNH IV rank is 137. We are going to hopefully get lucky and make a little bit of money back. This is not the whole thing. You can't make it all back, but you can make a little bit of money back if it drops back down to about 9.
I just want to make half back, Tom. Give me half, and I'll go play in another sandlot.
Hoping it drops back into the 80s or 90s. We'll make about half back if it happens. And I could use a rally up to like 293, 295.
Oh, you're asking for everything now. Volatility contraction and the move you need.
I am asking for everything. You
get a little piggish.
Yeah, I think it get a gap up maybe $10, and we'll see what happens from there.
Mm-hmm. Mm-hmm.
All right, on a completely different front.
What do we do every Friday, Saznoff?
Oh yeah, tomorrow is what's your assumption? I'm sorry, tomorrow's Fast Market. tastylive.com/Fast Market. That's tastylive.com/Fast Market. Tony and I will be putting on your trades tomorrow. Don't give us any UNH trades. We already got enough. tastylive.com/Fast Market. We would love to see what you got in the offering here. This was, definitely a challenge.
These are viewer submitted trades, right?
100%. We won't look at them in advance, so we'll just see what we see tomorrow and send all those trade ideas into us. Like we said, tomorrow's morning is expiration, May expiration. It's an early one, which probably means that May might be a 5-weeker. I don't know. I like to think the market's going to go the way of expiration tomorrow, so we'll see. That's how I'm going to play it. If expiration's higher, I'll play a little higher next week. If expiration's lower, we'll play a little lower next week. But towards the end of next week, we have kind of a long weekend. It's the Memorial Day, 3-day weekend. So plus Friday will be a little slow. So I'm thinking it's kind of like a 4-day weekend. So you got to be not careful, but just aware.
Sure, it's good to know. Like we've always shown, there's no way of knowing when volatility is going to come out or keep it in. Like I'm saying that I think that the volatility futures might actually be green tomorrow. So you never know, right? I mean, it's something to be aware of.
Yeah, I agree. Agreed.
From this day, though, I mean, we've had a nice rally in the market, and we've been going sideways the last couple of days. Somebody said that earlier in the week that's going to happen. By the media, one of the most disrespected rallies we've had in some time. Oh, sorry, Saznoff, you can't get a word in edgewise because there's the bell. I apologize. We'll just leave it on that high note. NASDAQ turns green on the close, up 21. Even the S&P's up 28. Russell up 13. Dow up 293. UNH closed at 274 and change, only down $34. Saznoff, we're going to take a quick 90-second break and come back. Sound good to you? Overtime after this. Peace.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies? Excuse me? I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Oh yeah. Tasty Nation, good morning.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac World, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Oh, yeah. Tasty Nation, good morning.
And we are back. And no, your eyes do not deceive you. This is a whole other cast. It's a whole other day. It's a whole other show. It's still called Overtime, though. I'm Ilya Spivak in San Francisco. That's Thomas Westwater, Thomas, and Mike Butler there in Chicago, with a very special view on what's going to happen in these markets now that today has passed and given us all kinds of confusing things. Gentlemen, how goes it?
It's going well. Markets are just churning, it feels like. But it's delivering us into the weekend. So who are we to complain?
Help me to understand what happened here today, because as macro nerds go, I was reading the slew of economic data that came out today, and there was a lot that there was to chew on here. What stood out to you guys, and why do you think the markets ultimately didn't care about this flood of information?
I think
at least as far as stocks go, I should say.
So the retail sales came in, they were light. It affected the market a bit. You also had the PPI in there. The home sales were weak. But I think this was something that was already priced in. We knew that the impact of tariffs was going to have some effect on consumer spending. We saw imports get pulled forward, and then we get this retail sales data. It's slightly soft, so that's reflecting the consumer more than manufacturers. So you're seeing that, consumers are a little weary to spend right now. But I think that the market is expecting these talks to go well, that we're on a path of resolution now, and that now in the future, the expectations are that this spending is going to return. We're going to get some uplift in the economy, pending that these talks go well. We have the 90-day pause on the China-U.S. tariffs, the rate's down to 10%, whatever it is from China. 30%, something like that. So I think the market is still looking for optimism where it can. And absent a negative headline outside of economic data, if we get a headline that says, trade talks deteriorate, China, tells the U.S. to go, walk off into the woods, then it would impact the market more. But I'm putting walk off into the woods. There's other phrases you could say, but I think that's what's going on.
Walk off into the woods is a new one that I've heard.
Yeah.
But it
I like it.
It gets the point across.
As I was sitting there waiting for where Thomas was going to go with that, I'm like, okay, this is going to be poetic, and it did not disappoint. Well played.
We don't want the FTC on us.
That's right.
this is sort of where this becomes very interesting for me, because if you look at where we're sitting as far as the S&P here as just a kind of barometer of overall risk sentiment, this is the direct underside of this range where we were consolidating going into the beginning of the year and sort of waiting for what the policy wins would ultimately give us. Obviously, we did not freak out back here when the election actually occurs around the idea that there's tariffs and there's this and there's that. The markets don't actually freak out on that then, ostensibly because they go, you know what? Conceptually, this isn't scary. Let's see what it looks like in practice. And then in practice is where we see the growth fears begin to emerge. Here, this is as the business confidence and consumer confidence data starts to roll off negative. Then, of course, we have whatever last month was, this kind of idea that in the U.S., we're going to do our absolute utmost to cut our nose off and to spite our face and basically attempt to extricate dollars and treasuries out of the foundation of the global financial system. So sort of like dig a tunnel for the foundation of the house to leave and leave everything else just hoping to stand. Obviously, that freak out has now passed, but we are basically back to the starting line here, where the demarcation point is for we're afraid about growth or we're not afraid about growth. So it's a very interesting spot. And the thing that jumped out at me today was this move in the bonds. And this was across the curve today. I mean, obviously, we're looking at ZB here, but ZN rallied, ZT rallied, interest rates were lower across the board. Does that tell you anything here?
I think, the PPI data, the retail sales data, it boosted the Fed cut bets a little bit. If you're looking at market trackers like the countdown to FOMC. So a slight, strengthening in rate cut bets, pushing yields down. The move in yields is a little more than I would expect, just on that data alone. So I don't think that fully explains it. I'm not sure what exactly is happening there, but a pretty significant move in yields today.
Yeah. So as I was reading this data and sort of trying to figure out what happened, and Mike, I'd love to hear what you're seeing here from your vantage point, but the thing that jumped out at me was that you had this massive move lower in yields. I mean, we can see it here, and we can see how it happens basically in line with where this data starts to occur. The data appears right around here. The markets take a little bit of a second to digest it, and then yields go screaming lower and bonds go up. So the interesting part of this was that Fed policy odds in their aggregate, so this year and next, actually came in a little. But how much easing was priced in for this year increased. So the market's really cemented around 50 basis points for this year, which they weren't quite so sure about yesterday, but they wound back a little bit from next year, which is interesting. Now we're only looking at 30 basis points for next year instead of another full 50. So it's a curious sort of mix where the markets seem to go, they'll need to cut sooner, but maybe not so much. Powell also spoke today, and it wasn't really a policy speech. It was more like academic, long-form thinking, but they're revising their framework, and they'll have a new one for next year, ostensibly, and by the end of the year, we'll know what the update is. But the progress report was they're probably going to jettison average inflation targeting. So this idea that they came up with 5 years ago that they're going to allow for inflation to overshoot or undershoot if it is following a period of the opposite. So if inflation is structurally too low for a long time relative to target, they'll let it overshoot for a while. And if it's too high, they'll let it undershoot for a while. They seem to be saying policy is going to have to be more reactive and more fast acting. And we're not going to tolerate deviations as much. We're walking that idea back. So they're seemingly setting themselves up for a situation where they're not going to perhaps cut as quickly if inflation is sticky here. And so despite all of that, yields come in sharply, and Fed policy odds move to sooner cuts, not later. So I thought that was a bit curious.
Yeah, I think
Mike, what are you seeing out here?
Yeah, it's interesting when you have well, first of all, the E-mini S&P futures have gone up every day except for 3 days since April 22nd, almost a month straight of just green bars. And yeah, there is still a lot of uncertainty under the hood, like we're talking about, but I've been keeping my eye on the FedWatch tool, and almost exactly like you said, 2 weeks ago through December, or through the December decision, there was a 75 basis point cut priced in. Now they've taken that out and they've moved it to a 50 basis point cut being priced in by a much larger probability. It was 30%, 30%. Now it's almost 40% for a 50 basis point and 30% for 75 basis point. But to your point, the June decision was significantly higher of a percentage to stay where we're at 425, 450. And now they're pricing in a larger probability of getting a 25 basis point cut in June. But if that doesn't happen, it's much more probable that we get that 25 basis point cut in September. So literally, like you said, the probabilities have shifted almost exactly to your point. And I think that's why you're seeing a recovery in the E-minis, which I feel like is natural given the decisions and the discussions that are being had. But there is still plenty of volatility in the interest rate environment.
It's an interesting thing because, and I'm going to nerd out here for a second, so apologies ahead of time. But if you look at the internals of these reports today, let's take retail sales first. Obviously, people were expecting a slowdown. They were expecting a flat number. They got 0.1%. So at face value, it was even a little bit better than expected. But the real interesting thing is what happens from March to April. In March, we had this giant revised 1.7% surge, which is a lot for a given month. And when you look at what happened there, it was almost completely driven by an almost 5% rise in motor vehicles and auto parts. And of course, it lines up with when those tariffs come out. So you get the sense that consumers are trying to front run the auto tariffs, basically buy as much as they can before those happen. But what do we have in April? We have Liberation Day. Everybody freaks out. Then a few days later, the president says, well, good news. Here's a 90-day front-loading window before the worst of this goes into effect. So you'd think consumers that were minded to front-run tariffs would front-run tariffs because they were just spooked with these large numbers, and now they've been given a mulligan, essentially, to say, go buy stuff that's not so expensive. Here's a 90-day window because now you know what's coming. Okay. They don't front load, though. Retail sales don't go up. So what's going on with consumers here? Okay, let's take that thought and take it over to the PPI report. Here, we have the first month-on-month decline in wholesale inflation in a few years, and the largest one since COVID. So you go, okay, what's going on here? And it's not the goods side. It's not like the price of goods fell. Obviously, with tariffs, you wouldn't expect that. It didn't rise a lot either, so perhaps that's still in the pipeline. But the real story was the decline on the services side of inflation because margins shrank by 1.6% for costs related to basically running the supply chain. So costs of shipping, cost of warehousing, cost of getting things from port to store, essentially. And that tells you that businesses are eating rising input costs. They're not passing them on to consumers, which helps to explain the relatively normal CPI report earlier this week, and also seems to suggest, well, if consumers are being insulated, why in the world aren't they stockpiling stockpiling and front running since they know what's coming. So it paints you a story of consumers that are reluctant and could be more so were businesses not shielding them. And it also makes you think that all of the import surge and inventory build in the first quarter GDP numbers, which obviously skewed that report a lot, that might be stuff that sits in warehouses if consumers don't want to buy it. And then it's going to end up looking like a bad investment. So in a year when everybody has to roll over their 5-year COVID money that they borrowed at zero and now have to refi basically this year and next. So you crown all of this off with jobless claims numbers that give you the highest 4-week average since October. And you go, okay, wait. So companies that are eating input costs instead of passing them on to consumers, they're probably not going to be enthusiastic about hiring. And then consumers don't get the hiring, so they don't consume. And if they don't consume, then you need to eat their costs more. And you get a kind of vicious spiral here. So you already got the weakest contribution from household consumption in almost 2 years in the first quarter. What happens when that occurs in the second quarter? Or worse, let's say. So that's where my head is going here. And obviously stock markets don't really care because it seems like they embrace this idea that sooner rate cuts are coming and maybe there's a kind of balance there. But bond market seems to have gotten a little bit of energy behind it, thinking, there's something that's brewing sooner than we thought. The Fed's going to need to wake up here.
Yeah, I mean, I think those are all good points. And if you're a retailer or business and you expect the tariffs to be short-lived, you don't want to raise your prices because all you're going to do is lose market share. So if you stomach it for a while, you eat those margin costs for a little bit, and you expect the tariffs to be, taken off, you're going to do that. But at the same time, consumers are pulling back on their spending, so that hurts the margins even more. So if the tariffs go awry with these talks and they go on longer than, say, the 90-day pause, then I think you could bring the recession fears back onto the table. I think right now what investors are expecting is just some moderation in growth, a little bit of sluggish growth for 2, maybe 3 quarters, and then we get back on track. I think with the market being forward-looking, it's why sell here, especially if the Fed is going to come in and gently cut rates, get us back on path. Trade gets back on path, everything like that. And then all of a sudden, you're past the rain clouds that have formed. So I think it makes sense that, we're still moving higher. The economic data definitely hit the markets early in the day, but you saw it was digested quite well. There was obviously no shock to the market. For the bond market, that's my thing too. That's why I'm wondering why yields have dropped so much. And it's also another thing you have to bring up is Congress is going through another tax bill right now. So bond traders are watching how that's developing quite closely. Now, if you do tax cuts and you have no way to pay for them, if you're not the U.S., that's led to catastrophe before. We look at 2 years ago in the United Kingdom, Liz Truss, the whole lettuce thing.
The lettuce thing.
Yeah. Earlier this year, you had people calling for, the de-dollarization is finally here. The global regime is changing. But, it looks like this tax plan is going to move forward with tax cuts without, subsequent one-for-one funding. I think that's pretty positive thing for the bond market. It shows you, pretty objectively that we are not actually at that point where you are getting, this shift away from the U.S. as an actual safe So I think that's pretty notable there. I'm not sure it explains the move today, but that's just something to consider in the backdrop.
Mm-hmm. Yeah, and I think when you look at the cyclicality of the E-minis and NASDAQ, like any kind of equity space, obviously markets are moving way faster than they did many years ago. So you're going to have these kind of knee-jerk reactions to the downside and in recovery mode to the upside. It is still surprising to me that we've recovered this much. I would have been less surprised if we kind of chopped around that 5,500, 5,600 level. But we could easily get back there if something comes off the table like we're talking about. So from a tradability standpoint, there's still plenty of products out there that have been beaten up that if you wanted to buy and get long, you could at much lower levels. But from a downside perspective, volatility is as low as it's been in the past couple of months. We went from backwardation to contango. There's over a point of contango now between the K and M contract. So if you're looking for near-term hedges or even just hedges in the equity markets to play for something falling out of it from a relationship or talk standpoint, it's now cheaper than ever to do that as well. So it's very tradable still. We've had this period of calm the last couple of days, but even though volatility is back in the teens, I think you'll still get some spikes in volatility. You'll still see two-sided action because let's not forget what we're dealing with. We're dealing with very volatile situations where things can fall out of bed very quickly. And if they do, the markets are going to react that way. But right now, to Thomas's point and yours too, Ilya, it's like there's still some churn that seems like it's baked in going forward. We're getting a better picture of the interest rate environment with more probabilistic outcomes from what I've seen, because literally the last couple of months through this, it's been really baseline. If you look further out on the curve through the end of the year, it's like we might be at 75, we might be at 50, we might be at 25. Now it's starting to form this narrative of we're probably going to be at this point, and it's growing in probability, which speaks to the bonds and rates. But from a tradability standpoint, you can still do a lot of things here. Even if you don't believe that the equity market's going to sustain, you now have a very cheap way to play to the downside at higher prices.
Yeah, that is certainly it. If you want to take the kind of exposure, which admittedly I took way too early, and just straight up buy put verticals, it is the cheapest that it's been. Certainly in sort of the recent weeks.
Yeah, and why not do that at least as part of your portfolio? So when you do get those red days, you're at least insulated. Even if you're playing a bullish thesis, you have a hedge in there, here and there, and you can do that tactically.
I mean, absolutely.
But you look at the
things like SPY, things like the Qs, things like IWM. Although that one's a little bit thinner, they give you smaller sizes and cheaper costs than, let's say, even MES or MNQ. So you could find some very cheap hedging opportunities here. To your point, Thomas.
Yeah, and I think IWM is probably one of the better ones to do it on, because if you get these trade fears coming back into the market, it's the smaller companies that don't have these margins to outlast a prolonged trade war. So I think it's a really smart move to play if you are doing those, buying put spreads, especially as a hedge against a more bullish portfolio, to do that on IWM.
One thing to keep in mind about IWM that I learned recently is to just stick to the tasty methodology and roll over your positions once you get to let's say 20-21 days to expiration, because liquidity starts to really dry up as you get closer to expiration. For example, I have a part of my vertical that I was trying to roll with about 5 days left, and for some of it there was just no bid, and so now it's just a thing that sits. And I mean, obviously you can essentially assume it's going to expire, worthless trade around it if you have capital to just sort of put on what you want to have on and then let that thing just kind of sit in inventory and fall away. But if you don't have that kind of capital, or if you've committed it elsewhere, it can hamper you a little bit if you start to kind of press it closer to expiration, because liquidity in this thing is a little bit thinner than, let's say, SPY.
Yeah, and one other thing in the market today, we had a big move down in crude oil.
I was just, what a segue, Thomas. I was just about to ask you.
Yeah, so I mean, this one's interesting because you have the U.S.-Iran talks going on, which the market is really focused on. Trump just had a visit to the Middle East. There's a lot of players on the table mediating these negotiations now. Iran's producing around 3.1 to 3.5 million barrels per day, depending on the source you look at. The interesting thing is they really don't have that much capacity to increase production more in the short run if these tariffs are lifted. So I'm wondering if the market is overconfident in how this will actually affect the global supply of crude oil. That being said, now you have OPEC very inclined to keep on rolling back these voluntary production cuts. You could say they're doing it for multiple reasons. Better U.S. relations with the U.S. right now, try to punish U.S. producers, get Kazakhstan and Russia, Iraq back into, enforcing their quotas. They do it through that. They've done it before that way. So there's multiple reasons. Another reason is they just want to eat the pain right now and finally take these voluntary rollbacks off the table. It has to be done at some point. Why not now? That's probably just as viable of a reason as any other reason. But the fact is they're doing it. They're going to, from all signs, it looks like they're going to continue to do it right now out into June, July, August, most likely. So, oil trading just above 61 right now. We got back above near the 64 mark. We were all the way down as far as 55 just earlier this month. So, you've had a good amount of volatility in the oil market. I churned my position into pretty much an iron condor today. I'm 56, 58, and 63, 5, 64 at 32 days out. It's getting to the point where I'm going to take it off soon. I'm going to give it another week, see how I think we're getting to the point in these negotiations where you're going to get more material substance over the next week. And while I said that it probably ultimately doesn't impact the oil market that much right now, it seems like that's what the market is focused on, is these negotiations. So I don't know. You also had the EIA. They reported a surprise withdrawal in inventory, or build in inventories yesterday. So, we have supply building. You have crack spreads that are still strong. You have refinery utilization rates that are strong, but not as high as where they've been. So refiners seem reluctant to pull back on moving crude oil through right now, even with some fear among traders. They're still moving the oil into products. So it still seems like the oil market is going to remain somewhat strong over the short term. What does that mean in terms of trading? I think we remain above 60 for a bit. I don't know if we get back into the 70s necessarily. I think a lot of this economic moderation is going to kind of kneecap that, along with more OPEC supply. So I think you get to these points where you take advantage of the volatility, you try to pick a range, and whether that's selling a put spread, selling a call spread, if you think that range isn't going to be broken, or putting on an iron condor if you're more confident in that. I think that's probably the way to play it right now. And if you look at the technicals, you have pretty good levels to carve out, technical ranges that you can trade around.
Yeah, crude has been a darling for many years. We've talked about this before, but it's nice when you have a product that is truly a two-sided vehicle, where you have shifts higher, you have shifts lower immediately after. And we've seen that from the beginning of April. We've had a range between 65 and 55, 10-point range, both sides. If you were short, you had opportunities to get out. If you were long, you had opportunities to get out. So we're almost always in crude, micro crude specifically for me. I like just buying the contract straight up. I have a covered call on right now with the long contract and a short call at 65. So kind of just taking advantage of the IV in that range and seeing if we get a bounce here. But yeah, it's been a great trading vehicle, especially the micro, where you can get much smaller than the bigger contract.
It's an interesting thing because technically you look at this and you go, okay, so you have a situation obviously where OPEC starts to give you this idea, oh, we're going to get rid of these voluntary output cuts, we're going to boost production. And Thomas, obviously, what you're describing here is exactly it. They want this friendly relationship with the U.S. They obviously understand that the administration has a different perspective now. The president is in fact there currently, and so you have this sense that, okay, this is the time to do this. If ever we could negotiate for a security blanket, especially if you're Saudi, this is it. And so you have that gap, and then the market goes, yeah, but you guys never follow through. You guys never manage to have the kind of discipline that you need to get your membership to actually meet output quotas. In fact, these guys haven't met their output quota since they developed output quotas in 2014 for the whole outfit, the OPEC plus outfit. So the cartel and its friends, as it were. So the market looks at this and goes, yeah, okay, right, sure, whatever. And then oil goes up and runs into this 64 level, which we can see is a very clear kind of middle axis in whatever this range is, from 71 to on the top side to like 54 and change, 55 on the bottom. So we come off there, and the thing that grabbed my attention today was, if you look at, I have an 8-hour chart here. If you look at the sort of architecture of this rise, right? Higher high, higher high, higher low, uptrend classics. You break through it right here. Now, it's very preliminary, very kind of early to say, and I didn't act on it today, but it gives you the sense that maybe you're in for what is the next oscillation in this. And directionally, it's not the greatest at 48 IV to be buying put verticals, but it's also not very expensive, especially if you look at something like, let's say, USO, which is very, very cheap. So when you look at this and you go, well, are we going to get maybe a wiggle in this direction now? Maybe around some of these negotiations that are taking place in the Middle East. Maybe the headlines give you enough. It's still probably going to be something that's going to have to be a real commitment from Saudi by themselves, maybe with some assorted help from the Emirates, maybe some other like very Saudi close places where there could be consensus. I guess you could also, Thomas, to your point, get some sort of an Iran walk back and some of that supply coming back on. Would it matter? Probably not. But it could give you a shorter term wiggle within this range. Do I think that's going to give you a breakdown lower? For all the reasons that you've just outlined, Thomas, probably not. But headline-wise, there could be not so much an investment, not so much a set it and forget it kind of a thing, but maybe just a trade to look back toward the downside. And the kind of signs of weakening consumption that we saw earlier today, they sort of comport if that becomes the focus, because we have consumer confidence numbers that are coming out here to kind of finish the data outlay for the week. and they're expected to be absolutely awful. They've been absolutely awful, and they're expected to stay absolutely awful. The inflation expectation component has been the main reason, obviously, around the tariff fears. 6.5% was the one-year inflation expectation in the last version of this report for April, and now we're going to get the sort of first look at the May edition. If everything that we're seeing in the PPI today, the retail sales today, if all of that gives you a defensive consumer, and you know you already had a defensive consumer in the first quarter, now it starts to look like you're getting a defensive consumer into the second quarter. And the consumer confidence data would give you the first kind of real look at May, sort of as it's happening. Then you'll get the PMIs later, and sort of the picture will start to crystallize. By the way, the latest PMI numbers, absolutely awful, showing the U.S. economy is basically stopped. It's basically at a standstill. Like once you peel away all of the distortions from imports and inventory building, actual new economic activity, whether you look at the ISM or S&P Global, has basically stalled. And obviously the big question is, now that you've had a 90-day kicking of the can on both the reciprocal tariffs and the China tariffs, so now you have cliffhangers in July and August, you'd think, okay, well, probably you get more front running because businesses just got another window to do what they did in the first quarter. But then if consumers don't buy it, this imbalance starts to get exacerbated. And now you're really setting yourself up for recession classic. Overcapacity, disinflation, discounting, job losses, falling consumption, sort of very, very kind of regular business cycle stuff. Not a crisis, not anything spooky like 08 or COVID or anything like this. Just a regular old recession. And of course, the trouble with those things is that those things are non-linear. You never quite know what a recession might kick up. Because as long as there's growth, you paper over all kinds of things. If people are confident that there's money to make tomorrow, though you might have lost it today, things are going to be okay. Confidence will hold up. But if they're not, if the growth part of the story falls away, well then maybe tomorrow money isn't on the table as readily and things get defensive. What's interesting about crude oil in this context is you get some chatter about maybe increased supply, and maybe the markets even believe it for a while. If you then with that get a growth spook, this could be telling you that crude is at the very least interested in revisiting the bottom of this range before maybe whatever else. And I'm curious how all of this comports for you guys when you think of the dollar, because this thing has been very weird. If you look at the overall index here, obviously it's not really going anywhere. But if you start to pull apart the internals, say you look at the euro, and you can see here the euro really doesn't do much of anything here the past several days. But if you look at the yen, which is a much more bonds kind of facing thing, as bonds start to go up and as yields come in, so too does the yen. It starts to go higher, which again is sort of recession-y in its look. Last thing I'll say here, and I'm curious to your thoughts, the sectoral breakdown today, very interesting. The only S&P 500 sector that is down today is, drumroll, consumer discretionary, which really fits into what we're talking about here. Consumer staples, on the other hand, up, which is defensive. Utilities up. Real estate up because ostensibly lower rates and rate cuts are maybe finally going to help unlock the housing market. But the only red on the board today, consumer discretionary. Thoughts?
I think Tesla hit the discretionaries today. I'm not sure if Tesla was the cause or just got dragged into it, but it's heavyweight on discretionaries. I think, yeah, it's with the margins and the PPI data, retail sales showing that there's less spending. So if you're a consumer and you're trying to tighten up your balance sheet for your household, you are pulling back on that discretionary spending. And you consumers, the staples have to stay strong because they're staples. You have to have them. I mean, I don't think it gets more complex than that, really. I think that's a simple explanation.
Yeah.
That's
Trying to tell me people aren't going nuts buying Royal Caribbean cruise tickets right now?
I mean, if you look at the data if you look into the data this morning, hotels and flights were actually really weak. Yeah.
Yeah.
I mean,
yeah.
It's maybe a good time to bargain hunt on those getaways.
Yeah. I mean, I can see it. It makes sense that people would be weary after enduring what we just endured, right? It's kind of like everybody got the shock and the big move down in the equity markets that most people are passively long. If you have any kind of retirement account, you're likely affected by that. And now you are kind of maybe a little freaked out. You want to wait and see, take the wait and see approach versus just diving in head first. Makes total sense. I would be remiss if we didn't talk about gold, though, on behalf of Chris Vecchio.
We do have to talk about gold. Because
this is a big intraday move today, too.
And it does have to be on behalf of Chris Vecchio because I ran away from my long position earlier this week as we broke down this band right here. So I essentially jumped on right around here. Basically on the same logic that Chris had, that this was this, and that you're just stair-stepping up. So you had a rally. Here was your level. You rallied. You corrected. Stair-step, higher. Pull back, stair-step, higher. It worked for a hot 2 days here. And once it took out the stair-step back on the downside, I was out. But what a reversal here today.
Yeah, getting back above 3,200 is what stopped me from selling my call spread in GC. So I kept that on, still in a little pain there, but I don't know. I'm really conflicted on gold. Obviously, earlier this year, very bullish. Technically, we have dissolved a lot of the strength, but I think moving under 3,000 would be a lot more concerning. If we could hold 3,200 and this early April swing high, I think we could reestablish a trend here.
Yeah, I actually agree. Just as I'm sort of, I look at the 8-hour chart in oil and I go, did this thing just roll over? Against all odds, what is this thing saying? Here, I look at the 8-hour chart and I go, did this thing just have a false breakdown? Did it just shake me out of my long position and then come right back in? Damn it. And so as I look at this, it makes me actually want to be a buyer tomorrow because it seems like there's a very, very clear line in the sand here where it comes through and goes, have I broken down? Psych, I have not.
Yeah, it's a chart where it brings up the conspiracies, and it's not even really a conspiracy that the big players have flushed out the weak players. They've reestablished at better prices, and now we move into that next phase, extending the prior rally. Yeah, I'm going to hold my position here. I think it's, like I said, my confidence is a little lower, but I'm still going to stay long.
And this has been a vehicle very similar to oil, where recently we've had very volatile moves and two-sided action. So we've been trading diagonal spreads and GLD, still very low IV for what it's been doing. But if you're in the futures market, I really liked the broke wing butterflies. So into these big rips, I'll sell a broke wing butterfly above the market, and then if you get the move down, you can remove the risk and have the free shot to the upside on. So that's what I've been kind of trying to do in terms of legging into a position into these rallies that we've seen recently. And luckily, we've seen complete reversal on both of them. Both of these sustained week and a half long rallies have both been reversed, these recent ones at least. So as long as we have two-sided action, I think you can do a lot of stuff and express your opinion and have opportunities there.
And I mean, the IV here is actually decent at 50 and change. So if you sort of took a broad view and said, here's the top of my range, here's roughly the bottom, so somewhere between, let's call it 3,000 and 3,500, and I'm just looking for it to kind of oscillate broadly, not too far away from those bounds. You have plenty of confusion in the bond market, which is the flip side of this. You could have that here. My sense is that it's a really interesting mix within the dollar today, and that sort of starts to tell you some interesting things. So bonds go higher, gold goes higher, yen goes higher, stocks kind of meander. S&P ultimately resolves higher, but we can see NASDAQ here essentially does nothing. So just stuck. But what I thought was especially interesting, the Aussie ends up looking weak. And so you get this kind of risk on, risk off dynamic out of currencies where the risk part, the Aussie, it doesn't sell off. It's consolidating in a range. It still hasn't even given up April's gains, which, by the way, tells you how weak the U.S. dollar is here. Stocks have absolutely barnstormed higher, but the dollar hasn't unclenched at all. Neither have bonds have completely corrected and sort of shaken off their holy moly moment. But dollar hasn't come back. But the Aussie is weaker today. Yen is stronger. It's almost like we're turning into some sort of a lower growth, lower rates kind of a vibe. And that's extending basically everywhere except equities, where you just have this kind of uneasy, wait, do we like lower rates? Is lower rates good? Do we not like lower rates? Is that bad? Are these lower rates for the right reasons? Maybe the Fed can do what it needs to do if it cuts sooner. And maybe that sort of makes for a shallow and short downturn rather than a longer form one. That's sort of how this starts to look. Unless tomorrow the consumer confidence numbers disappoint, which I think would land on a stock market that's kind of uneasy here. If it was shrugging today off, you'd think it would be rallying. But it didn't seem to know what to make of all of this.
Yeah, it feels like equity markets drift higher for obvious reasons, but there's certainly still turbulence under the hood. That's the gist of it, at least what I'm seeing. But yeah, I feel like this kind of feels like a little bit of a calm week before something happens. And you'll naturally see that when you have calming volatility, lower volumes, like this feels pretty natural. It doesn't mean that everything's over. Like, I would be shocked if we just had 20-point moves to the upside for the rest of the year. It wouldn't make sense that would happen. So just be mindful that this is a calmer period, but things can certainly flip in a day's time.
Yeah.
Yeah.
I like the yen because if we get back into a fear-based environment, you think bonds go higher, that's going to drive U.S. yields lower. At the same time, Japan reported good inflation data earlier this week. So that gives the BOJ more ammo to increase rates. So I've put in an order for a call spread on the yen today. It hasn't filled yet, but the yield premium for the 10-year U.S. versus Japan is under 3% again. And ultimately, that yield premium, U.S. versus Japan bond yields, really drives a lot of the price action in the yen. So I think the yen is a pretty good play here. We had a really big uptick in the yield premium in the U.S. versus Japan in early April. We haven't really come under that too much yet, but today could potentially be the start of that.
There's an interesting, and yes, I mean that's absolutely that's absolutely something I agree with, and I'm still holding yen on. So I think there's more, and begrudgingly holding bonds via TLT verticals as well, because it seems like we're finally going to get to go that way. Maybe it's been a while. Let's get to regular recession mode. Stocks and dollar lower, bonds and gold and yen higher. That would be nice. It'd be nice to get back to some level of sense out here. The interesting sort of last thing that jumps out at me is, and Thomas, you wrote about Canadian markets today. If we take a look at the ETF here, we can see very strong upward push today for Canadian shares. What's going on here?
Yeah, I mean, we're up 20% since the April low. That pretty much mirrors the U.S. performance. So, you know, we're trading it like the U.S. and Canadian economy is back into a good trade relationship. At the same time, you have a new government, the Liberal Party. They are set to unveil their economic agenda later this month. I think it's May 26th or something like that. But it just appears to be some confidence broadly. You know, the market's going up, so of course there's correlation there, U.S. Canadian equities, but there seems to be some confidence in this new government for Canada. There seems to be, like, the market believes a trade deal is going to get hashed out rather quickly here. It's interesting that EWC rose today despite crude oil being down 2% today, because the Canadian stock market is pretty heavily weighted towards crude oil producers and downstream companies. So that was a little interesting, but I think it just speaks to confidence in the backdrop. At the same time, you have Canadian unemployment at 6.9%. So you know, it's not, the market's confident, but there's still risk, of course. I think it just speaks more broadly to trade measures, having more confidence in negotiations, things like
that. At the risk of being marked off as a perma bear, we might as well, before we end here, mention the one long-term equity holding that I have on the long side, which is Brazil, and Brazil doesn't do terribly great today, but this is one of those big macro ideas where you seemingly have what was a long-term decline here that has now been overtaken, where we started to set a bottom and break higher. So I bought a 240-day call on this, basically, that expires at the end of the year, with the idea that I'm just going to have this and hold it, because if we are in fact reshoring and all of this fire and fury is more about bringing supply chains closer to home, boxing out China and ending up with more regional trade, which is the kind of thing that you would expect coming out of that conversation you just had, Thomas, about Canada, that ultimately the idea isn't to break the link, much like the transition from NAFTA to the USMCA was about more free trade, not less, ultimately. It ended up being exactly the same as NAFTA, just expanded the number of goods covered to digital markets. That all of this is probably good for Latin American markets and countries. And so the place I am long equities of all places is here.
I like it.
With that, overtime is out of time. We could keep going here for a while, but I suppose we'll call it. Thank you, gentlemen, for sitting in. You are, of course, always welcome to join us and offer your insights. Do come back. We're going to take a really quick break, and then I'll be back to drone on about the macro with copious charts on Macro Money. Don't go anywhere.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and Tasty Live does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Stock markets do not know what to make, it seems, of today's onslaught of U.S. economic data, but the bond market is making up its mind. A fire got lit under the bonds today by the economic news flow, it would seem. We're going to unpack what that means and what it might signal for what is happening next, because, of course, we have economic data coming up to cap off the week in less than 24 hours that might put all of this in very sharp relief and tell us a story about U.S. consumers that gets stock markets leerier than they've been in recent weeks. So let's take a look at what's going on here, break it down. Here is the S&P 500. We can see here it is somewhat higher today, but ultimately doesn't make a whole lot of headway, dips lower, ends up a little bit higher, just a touch relative to the highs hit earlier this week. If we take a look at what all of this kind of breaks down to, we get a rise of just 0.4%. Today, in weekly terms, of course, a very strong 4.5% rise. But the close today at 59.34, only a touch higher than the high that we hit just on Monday or on Tuesday, rather, of this week at 59.27. So not quite an inside day today, but not exactly screaming of conviction either. But where things did get very interesting indeed was in the bond market, where we had a broad-based decline in yields and a broad-based rise in bonds. In fact, the largest rise in bonds we've seen in a while. We're looking at the 30-year. Here's the ZB continuous contract, and we can see a very strong up candle here today. That's right there. And this extends across maturities. So we get interest rates lower at the 2-year maturity, at the 10-year, at the 5, at the 30, a broad-based move higher in the bonds and a broad-based move lower in rates across the curve. Still more interesting, the move there registers unevenly in the Fed policy outlook, where on the one hand, we've come down to less of a dovish perspective here than even the Fed itself has argued for since December. We have 80 basis points that are priced in for this year and next, cumulatively. And the changes that happened today on net seem to maintain that perspective. This, of course, has been the normalization we've seen playing out from these panic lows at 137 basis points. This basically follows what we've seen from the stock market. So right here is mid-February, where the market is maybe only anticipating 50 basis points this year and next together. Then we have a situation where the view seems to get worse as economic data weakens, and you see this in stocks. So you get a shift that starts to happen in stock markets right here. That's this move that, of course, we see in the S&P. Not surprisingly, that gives you a dovish adjustment in Fed policy expectations because the spook seems to follow alongside growth concerns. You then exhaust at the April low the worst of the panic, and things start to unclench. And of course, this week, as we continue to recover on stocks, the unclenching continues. But the interesting thing in bond markets today lines up with a cementing probability for 2 rate cuts this year. So while the outlook for next year has meaningfully weakened in the sense that it's become less dovish, the tally for rate cuts next year has significantly wound back. For this year, we've really cemented around the level that the Fed itself has argued for, and the probabilities shifted today. We were only looking at perhaps 47 basis points, or even as low as 44, priced in over the course of the week here so far. We're now at 51 basis points, so we've really cemented that the 2 cuts seem to be coming, whereas for next year, we're at 29 basis points, having been as high as 38. So it seems like about 10 basis points here shifted up in the trajectory. So the markets seem to expect sooner cuts and are surer of their arrival. So what gave us this curious response, and what does it mean? We begin with the retail sales data. This was a very important check-in on the health of U.S. consumers. And what we end up with is an outcome that's slightly better than expected, a 0.1% versus a flat result, which was the consensus forecast. But nevertheless, a very steep slowdown from the preceding month's revised higher 1.7% rise, which you can see was the strongest 1-month increase in retail sales since going all the way back here to early 2023, late 2022. So, needless to say, a very significant cool down. And when we look at the internals of the report, they don't necessarily scream positivity. Notice in the red here is the component breakdown for the March numbers. That's last month. In the blue is April. That's the data we saw today. Notice there are no big upside spikes in the blue bars here. And the red bars, that big 1.7% spike, seemingly powered by a 5.5% surge in the motor vehicle category. That's cars and auto parts. And of course, we've talked about this before, and we covered it in detail yesterday. This largely seems to front-run the auto and auto part tariffs introduced by the White House. Now, of course, what did we see in April? The president unveiled so-called Liberation Day reciprocal tariffs, which spooked the bejesus out of markets and obviously showed consumers that the prices for imports across a whole vector of countries is going to be much, much higher. But then on April 9th, after some consternation in the bond market, the president walked it back, at least partially. Said that there's going to be a 90-day pause on rates above a new floor of 10%, which, of course, is already a 5-fold increase relative to an average tariff of 2% before this announcement. And that's this rally right here. So consumers start April with, oh no, much higher tariffs, and the markets reflect this. And then, oh, there's a pause in the worst of this for 90 days. And that cliffhanger now is in early July. China is initially exempt, but after the deal this weekend that gave us this surge right here, we now have a 90-day pause in tariffs above 30% for China. That's a major climb down from the 145% rate before this weekend's apparently friendly talks in Geneva, Switzerland. So We're in a situation then where consumers might have been expected to do another bout of front running because they were just shown scary tariffs and then said, okay, now you get a window to buy whatever you want before these hit. Go ahead. And one might think they would do the same thing they did in March, which is see the higher costs immediately on the horizon and try to buy whatever they can before those hit. They did not do that here, although one would think the narrative encouraged them. Then we get producer price index data. This is wholesale inflation, whereas earlier in the week we saw consumer price index data. That's retail inflation, essentially. And here, what you saw was very surprising indeed. A decline month on month of 0.5%. Now, first of all, that's the first decline since going all the way back here, essentially a year and a half. But the magnitude of this decline is what's really striking. This 0.5% drop is the biggest since back here at the onset of COVID, where supply chains obviously were in full lockdown mode early in the year. So this is telling us a story that's quite interesting. And when we actually get into the breakdown of these numbers, produced helpfully here by Bloomberg, we can very clearly see where the change came from. So here's that 0.5% decline. If we strip away volatile food and energy prices, it is still a negative reading, albeit a more modest one. We can see that goods prices rose, as you might expect in a trade war. But the big turn here happened in services. Services had a dramatic pull down on overall wholesale inflation. And when you look at where that came from, the culprit seems to be a 0.7% decline under the surface, powered by a 1.6% decrease in margin for trade services. Now, what trade services is in this context is the cost of moving goods through the supply chain. So you get the goods into port, or you get them into the factory. You then, once they are in whatever state of doneness that they are, ship them to their next spot, either to be finished or to be sold. So the cost of moving wholesale inventory through the U.S. supply chain, from ports to warehouses to store shelves, that's what the trade services component here is. And of course, the cost of tariffs would appear there. The drop in margins then in that space would suggest that companies are eating higher goods costs and not passing them on to consumers. So here's the goods costs, they're rising. And companies are saying, instead of us passing this on to consumers and maybe driving those consumers away and losing market share, we're going to eat this for a while. We're going to bite the bullet and see what happens next. But what it also means is that consumers were insulated from a good bit of the tariff increase, which, on the one hand, explains how the CPI report this week was so refreshingly normal. For consumers, goods prices, core goods prices, barely budged. All of the inflation was still in services, and there it cooled a little bit in line with a trend that's been developing for quite a while. Now, what's particularly interesting then is, why didn't consumers front run incoming tariffs in retail sales? They were being insulated by businesses from the price increases that are already occurring. So why are they so anemic and why are they so defensive, if in fact they are being shielded, at least for now? Then a third piece of data appears, jobless claims, which tells you that while the changes week on week in initial and continuing claims were not especially different from expectations and didn't really break any ground in trend terms, the 4-week initial jobless claims average, that is new applications for unemployment benefits averaged over a 4-week period, to give you a sort of sense of where the monthly trend is, that jumped to the highest since October of last year. And we can see it's been building steadily since the beginning of the year, suggesting that there are cracks appearing in the labor market. Now, this makes for something of a vicious circle when you put this in context of the other data that you saw today. Weak uptake for labor tells you consumers are going to be defensive. They're probably not going to be as enthusiastic to spend, even when, as we just saw, they got the green light to front-run incoming tariffs, and businesses have shielded them from price increases to goad them to keep consuming. But nevertheless, they pulled back, perhaps because they see what's happening in the labor market and have become belt tighteners in that context. Now, of course, that kind of retrenchment tells businesses they need to keep eating the price increases and pushing them into their own margins. And that, of course, makes them more reluctant to hire, because that's not exactly the time or the position that a business would feel confident about increasing payrolls. And so, to the extent that this dynamic feeds on itself, it creates a negative feedback loop for the entire economy and for consumption writ large, which, of course, is very interesting indeed for a start to the second quarter. We'll see a first look of what it appears to be in the month of May, as we get this update of U.S. consumer confidence data that's incoming here over the next 24 hours. And we can see the expectation is that it holds near these 3-year lows that we hit in April. And largely, we can see that this is being driven by this massive surge in 1-year inflation expectations, no doubt reflecting worries about these tariffs. As a matter of fact, we can see consumer confidence was declining from the beginning of 2021 as inflation was heating up. We can see those inflation expectations rising. Then, of course, at the beginning of 2022, the Fed starts cutting rates, so inflation hiking rates rather, so inflation expectations start to cool. You actually start to see inflation come down. Consumer confidence improves. It peaks as inflation expectations round the bottom. And as we get into now the meat of the trade war, they surge. In fact, they surge so dramatically that they are now above these COVID melt-up highs. And the expectation is that you're not going to get very far away from those things in this most recent survey. And so you start to get the sense that you're getting a weak consumption backdrop in the second quarter. Consumers aren't confident. There's no uptake from them, as even these tariff cliffhangers create an incentive for front loading, and even as businesses act as shock absorbers on tariff cost increases. That, of course, is an ominous sign that consumers are this defensive. Because what we saw in the first quarter GDP numbers was, in fact, the weakest contribution from consumption to the overall GDP pie in close to 2 years. The last time it was that small was the second quarter of 2023. So once you strip away all of this noise, the surge in imports from front-running the tariffs by businesses that are stockpiling inventory, which you see here in the investment component, because they're not shying away from front-running these tariffs. If they can build up big inventories, that's less of a difference that they have to eat for as long as those inventories last, and they have to restock them at the higher tariff rates. So washing all of this out of the equation, episodic though it is, the bedrock here, consumption, is weak. And if we look at how much each of these components accounts for the total, we can see exports and imports are somewhere down here, sub 20% of the total. And when we net them out, we end up with an overall contribution to GDP somewhere in the vicinity of 4.5%. By contrast, consumption accounts for 68.5% of GDP. So as this goes, everything goes. And the story for the first quarter was weakest consumption in almost 2 years. And the story today, out of the retail sales and PPI and jobless claims numbers, are perhaps weaker consumption again in the second quarter. Tariff impetus or not. And of course, that is a very worrying sign indeed, because already the PMI surveys are telling us that the U.S. economy, which last year was quite buoyant indeed, we can see here in the PMI numbers, these are of course centered around 50, which is neutral. Above 50 is growth, below 50 is contraction. The further above 50 you go, the faster the growth. The further below 50 you go, the faster the contraction. And so you have here the U.S., which was dramatically outperforming last year relative to the other big economies, the Eurozone and China, the other major engines of global growth. So we've talked about extensively before. The three big influences here make up a whopping 58% of global GDP, and the remaining 42% are mainly vendors to the three. And so it's really these three that matter in terms of overall global growth dynamics. We can see they've slowed down to basically hug this 50 line. And while Europe and China were going there and have been this anemic basically since early into the middle of last year, the U.S. was strongly outperforming until at the start of this year. It's now converged back to this standstill zone. And if in fact we're going to see weak consumption out of the U.S. in the second quarter, well then this in fact is telling us a story of a real downturn. Not only in the U.S., but globally. Because if all three of these things are in standstill mode, well, then there isn't very much growth to go around. That would, of course, help to explain why today's data created a pullback in yields. It would explain why a sense of urgency emerged in Fed rate cut expectations, even though it hasn't moved out further into the outlook. And as we look at what stocks do next here, especially relative to this consumer confidence data, it starts to raise the question that maybe this growth-based sell-off has room to return here as markets decide whether their resolution of the headline risk has also resolved the economic risk, or if in fact the economic risk is the thing to be worried about now. And that is Macro Money for today. We're here Monday through Thursday, right after overtime, a show I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. That makes this the last show of this week, so Macro Money will be back on Monday. I'm also on Futures Power Hour Mondays and Fridays with Chris Vecchio. I am on with Victor Jones for The Price of Truth on Tuesdays, on with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What is going on, everybody? Welcome back to Risk and Reward with Gus and E. Volatile days in the market, still heading to higher highs. When will it be over? I don't know, Gus. We got some things to talk about. United Healthcare scandal. Biggest talk, biggest headlines right now. With that underlying, options are still trading right now, but we'll get into all of that here in a moment. Before we do, Gus, what's going on, brother? How we doing? How we holding in there?
Yeah, UNH,
almost the end of the week.
UNH definitely talk of the town. I'm having a great week myself as far as my personal portfolio is concerned. Just been taking exits, slowly redeploying some capital in some creative ways where I'm where there's perceived value. So yeah, feeling good as a whole. Big day today for me. Kind of just got big right at the end.
Yeah.
TNA took a nice little ripper to the upside there at the end and put some IV into my options to make my P&L on the day look a little bit inflated. But it's that's fine. That's fine.
Yeah, I'll
Never
take
hurts.
it. I'll take it. Yeah.
Yeah, it was like one of those funny situations when you'll see your P&L shoot up $200 because there's one little weird spike in IV, but it just happened to happen on the last second of the day. So now I get to look at it overnight and feel like I'm
that's
great.
That's nice.
Which is fun.
Yeah. Hey, no. Well, you put the position on. I know it was all the long deltas we were talking about on Tuesday, right?
Yeah, I don't think Yeah, actually, my Alibaba risk of the week, I got short Alibaba on Tuesday. That was my only short position in my account, which I have now exited half of. I'm still holding the other half, hoping for a max profit. It just continued to work down throughout the day today, so not particularly concerned there. But yeah, good day. I'm long everything, and the one thing that went down, I was short.
Know.
So I'll take it.
That's yeah. I know. I mean, I know we'll get into the market. We'll get into the platform, do a little bit more of a recap on what's going on. But yeah, I know Nvidia. That was the one that I got short on so far for Tuesday. Nvidia's still been kind of rallying a little bit with the overall market. So I just couldn't believe. Like, I put on a long position on QQQ yesterday, and I didn't even really want to put on a long position. It was just more of the buys, but it's like, I can't believe we're still heading to higher highs. Like, this is the overall market where, I mean, just a month ago, I mean, I think we were the beginning of April, I think we were trading down underneath 20,000, I think somewhere around there. But just in the blink of an eye, it always feels like you said on Tuesday, they always say the market moves down like an elevator, but it's been feeling like it's been the opposite as of late, at least. But we're going to get into some of the market news today. We got UNH, United Healthcare. Did you see this coming, Gus? I mean, it's like whenever we see or hear certain news topics come out, it's like, you know what? That makes a little sense. I know the CEO stepped down, and then I know there was more sus things that was going on with United Healthcare just over the last 12 months. Does this catch you off guard at all?
It's not surprising. I certainly wouldn't say that I'm surprised. I wasn't shouting from the rooftops that I think the UNH CEO is going to step down or anything like that. But given the way the last CEO departed the company, I am not surprised by this one, taking his money and hitting the road, I suppose. But yeah, it has been just this crazy shakeup. I mean, it's down almost 60% on the week now. And yeah, it's really been a spectacle.
Yeah.
Lots of money. Lots of money lost, lots of money gained. If you were short UNH through all of this, congratulations. I've seen some insane screenshots on social media.
I wouldn't doubt.
Yeah, I saw a guy on Reddit this morning who went $720 into $250K on.
Wow.
He had like 2 contracts.
That's
of
a return.
Like 590 puts or something like that, naked, and it's gone absolutely ballistic. So it's quite something.
Yeah, especially I'm curious about the short interest on UNH too. I know with all the controversy with UNH over the last year, especially, I think that drives a lot more opinions, and people will start putting money behind those opinions. So because people feel very strongly of one way with United Healthcare, I'm curious about the other positions that worked out really well with people to the downside, because I know a lot of people feel, United Healthcare rubs them the wrong way. So, maybe that influenced some traders' opinions on their overall bias. And if it was to the downside, they definitely caught a massive move. But I didn't see it coming at this point. I did get on a UNH position today. So defined risk, of course,
same,
just because. Did you? Yeah, it almost felt like you had to. You just had to take a stab at it. So we'll get into that here in a moment. But if you were not aware, United Healthcare Group has been getting crushed. And like Gus mentioned a minute ago, about a 60% decline, over 50%. I mean, since mid-April, reaching about a 5-year low. And I know we went to a low at about 248 roughly. But this can be attributed to multiple factors. I know the scandal or the potential fraud that could be going on right now was kind of the straw that broke the camel's back. But we already had a lot of controversy over the last 12 months. So it can be really attributed to a few things. Number one, the criminal investigation. The U.S. Department of Justice has reported that they were doing a criminal investigation from last summer on UNH with a lot of fraudulent potential practices going on over there. So it's a lot of unconfirmed news right now, but have you ever seen unconfirmed news affect and underlying the way that it's affected United Healthcare without having like official rulings on exactly what's going on right now?
Yeah, no. I mean, the answer is simply no. It's become such a spectacle, and like you said, I think that it's largely driven by sentiment, by the fact that a lot of people do not like United Healthcare and would like to talk bad about them and would like to see them fail, which has become an even more prevalent topic with the murder of the previous CEO and everything surrounding that. And there's some people who are on Luigi Mangione's team and all this good stuff. So yeah, I think that because And I mean, and it's funny, but this is just how the market works, because people want to see it go down. It's going down, and that's the that's basically what we're seeing.
The market moves off of vibes. Yeah.
The closest thing I can think, like the closest comparison that I could make, is the way that for a minute there last year, Boeing was moving down every single time the like most routine issues would come up. Yes, a door blew off of a plane. That was a serious situation. I don't mean to make light of it, but then
he's like, yes, of course, a door blew off a plane. What's the big deal, guys?
But
What's the big deal? No, go ahead.
After the door blew off the plane, suddenly it launched the media into this reporting frenzy on every single aviation incident that happens ever. And I remember one time reading a story about a plane had to land because a wheel fell off of it at LAX, and that is something that would never make national news if a door hadn't blown off 2 weeks prior. It was all just in that reporting cycle that everybody was freaking out about aviation. So I think that's like the closest recent comparison that I could draw, is Boeing was taking big sentiment dips like that, but it was nothing like this. It was not this fast. This is crazy.
No, I mean, that's a really good comparison. And I mean, back to the wheel, maybe it happens more often than we've seen it on the news, but maybe because it popped up on that headline, it's like, we never see headlines like this. Like, this can't be normal. This doesn't usually happen. So yeah, definitely get a lot of a reaction. And it's almost like we talked about the other day, the market and a lot of these underlyings are moving off of vibes, are moving off of just kind of, I feel like vibes is a pretty good word to use for, market sentiment.
Yes.
Right. So CEO resignation, right? Like we just talked about, CEO resigned. And I mean, just before a lot of this criminal investigation news was coming out. So maybe he knew about something beforehand. We could do we can take context clues and take that for what it is. But just a lot of controversy overall. And then the financial outlook withdrawal. I mean, I know with the insurance industry, especially with United Healthcare, I believe there's about I think I was reading around $125 billion in fraud surrounding United Healthcare. It doesn't mean it's inside of United Healthcare, but whether that's outside sources hacking into the databases, taking information, whatever it is, but just within that industry, especially with United Healthcare. So I'm just curious to see how things are going to pan out. But based off of how the underlying is looking and based how we're positioned right now, depending on the news that comes out, hopefully it's going to be like a sell the news kind of, maybe like a sell the news kind of reverse play we're getting into right now, because maybe we get a little bit of a pop once we do get a little bit more clarity on the situation. But either way, extremely sold off. Premiums are pretty juiced up right now. So it was a good opportunity to take. Anything to add before we hop over to the platform right here?
Yeah, I think you make a great point right there. This is a very interesting opportunity to be contrarian and try to get long on this. They are still one of the largest companies in the world. They're still the largest insurer in the world.
The largest.
They have all of these things going for them. And is a 60% dip in share price for your CEO stepping down, pulling your forward guidance, and potential fraud too much? I think it might be. I still think it might be. Just
a little bit.
Like, say we're in a world where this fell 30 or 40% on this news. No one would be saying this thing has more to go, because I think that would maybe be a justified amount. So yeah, I do think that this is a stock that we'll see return to those 400, maybe even 500 levels in the coming 24 months or something like that. So yeah, there is interesting opportunities that present themselves, and I picked up 5 shares myself.
Yeah, 100%. Those shares, they've been working out really well for you. I know that long delta, especially into this week, boy, I know those have been paying for you.
They have.
Yeah. Oh yeah. But I do have a few positions on right now. We got some expiring really soon, actually. So we do have the UNH position. That was from earlier today. I was going back and forth on this one, just figuring out how we wanted to position ourselves. I ended up going with the at the money put spread that I sold. So I sold the 250, bought the 240. It was a $10 wide, collected about 438, so almost 50% of the credit received. So went a little aggressive on that, but also reduced the risk a little bit by being able to receive an additional, roughly in $1 worth of credit from what we typically get for a $10 wide, which would be about 330 something. So we did that in UNH 36 days out. This one was a difficult one for me. I wasn't sure which expiration date to choose, but I really liked 36 days out, June 20th. Not too far out, but also gives me a little bit of wiggle room for the first few weeks with all the uncertainty. And then we got SPY, sold an out of the money call spread on SPY the market has been going on an absolute tear. So this P&L has actually been transferred straight into Gus's over here because the market's just been working against me. It was SPY and QQQ. So we got a couple of positions on in there. And then we have the QQQ position. The one down here, the put spread that I covered today was into the rally today, so I closed that one, but I do still have a short call spread on in QQQ that expires by tomorrow. So unless we go into World War III by tomorrow, most likely this is going to expire in the money, like legitimately, like unless we get some insane random news that can tank the market that much, then these ones are going to be expired in the money. So we'll keep an eye on it. And then NVIDIA, this was the risk of the week. It really hasn't gone anywhere. We're down a little bit on it, but we haven't gotten too much movement. Overall market's been floating to the upside, so NVIDIA has been following suit just a little bit. And we're going to stay patient there, but this is what's new for the portfolios so far today, Gus. Not as much green action like yours. We don't have too much, or we don't have as much long delta in here right now, at least.
Yeah, I certainly, I have certainly been taking your money on that one. This QQQ, especially, I have a long QQQ position open right now specifically. So we really are. There really is some transfer of funds happening there. But yeah, outside of that, only update I have outside of the UNH shares, which I already mentioned, I picked up some Rivian leaps yesterday. I picked up 2 naked calls, both on the September 18th, 26 cycle, 491 DTE. I bought a 12 and a 20 call. I gave my pitch about Rivian when it was the risk of the week 2 weeks ago. I have an article on Luckbox about it, but the more and more that I read and research into this company, the more upside that I think it has in the next 365 days, maybe 18 months. They just got everything going for them. They're tariff proof. Almost everything that they do is domestic. They're rolling out their R2 line, which is going to make them much more competitive with Tesla into 2026. I think that the continued forward guidance that comes from that is going to do a lot to pump their share price up early into 2026. And I just like it. I wanted more exposure than what shares could offer me here, and more potential upside than what shares could offer me. So that's why I went for the leaps. And then I got one in the money, and then one at 20, which is out of the money, but by no means outside of reason with how this company has moved in the past. And I think that we are entering Rivian's 2 years right now is what I think. I don't think they're going to dominate these 2 years, but I think that in 20 years, when we look back at how all of these companies came to be, it's going to be 2025 and 2026 when Rivian really took off and asserted themselves as a big player in the EV space. So plenty of upside room. And I mean, what if it's like, I would be great if these things are just in the money by the time that expiration is creeping up 491 days from now. But I mean, what if it goes to 60? You know, like there is. I feel like there's crazy potential.
I mean, I don't even 100%. I don't even think that's, I know we like to be realistic, quote unquote realistic, but I don't think that's too far fetched either. I think even beyond 60 is definitely possible if it catches a little bit of headwind, especially with just the EV sector as a whole. I mean, Tesla starts taking off. Maybe we get another hyped up EV sector. You never know. So within the next 490 something days, you got some time.
491. Yeah. So we'll see. But
491.
Those are actually already up handsomely as well. Things are moving. So today was a good day, but gonna be a lot of exposure to Rivian for the next year-ish for me.
100%. Let's check out Tesla quickly just to see what the leader of the EV space has been doing as of now. I know there was a lot of headlines with the Tesla and was it Qatar? Were they in Qatar where Elon had his Tesla truck out there? And I think I've seen a couple headlines of that where it was a little controversial too, where they had Elon's Teslas out there in the Middle East. I can't remember exactly where he was meeting.
Everything has been Qatar this week that I've seen, like everything political. I haven't seen anything about Tesla specifically, but that's probably right.
Okay, yeah, I know when Donald Trump was being escorted, I think in the very front, it was like a red Tesla whenever they were out in Qatar. So that was probably another photo op, but there was a little bit of controversy that made some headlines. But I was just seeing how Tesla stock responded off of that. But I mean, I even think whenever we see something like that with Tesla, for example, right, a photo op with, leading the presidential, driving down the road, and it more progress that Tesla makes is going to be only better for all EVs for the most part in the space too, because clearly Elon Musk and Donald Trump are buddies. Clearly, they're getting great photo op opportunities, great business opportunities, this, that, and the other. I think when you're friends with somebody that is in such a powerful position, like you're friends with the president, that whatever industry or sector that you're in, regardless of your opinion, I feel like you might, if you're going to put your money behind it, I would lean a little bit more to the EV space, especially when, somebody kind of has ties with somebody that's in such a powerful position, especially with California not going to be producing gasoline-powered vehicles past 2030, I think it might be. So there's a clear change in terms of how we're going to be using transportation with a lot of these vehicles. So regardless, I like Rivian. It seems like we're early. And I mean, we're sitting at 15 right now. It seems like we're pretty early in the EV space as a whole.
Yeah, I think that there's interesting plays to be made on and I don't know, there's a lot of angles to consider with Elon politicizing himself a little bit, because on one side, anytime any company politicizes themselves at all, you immediately eliminate half of your potential customers. That's the way of the world. But on the other side, we're in possibly the most divisive political time we've ever seen in America, straight up. I mean, it is, people are at each other's throats. And so because of that, that also means that now I think that conservatives are going to be racing to buy Teslas at clips that they never would have before. And simultaneously, you have people on the other side of the aisle who are going to be switching away from Teslas pretty aggressively, which flushes money to Rivian and these other companies. So I think it's really interesting to see the balance of this and how it's all going to shake out if a very passionate one side can be a better business model than trying to appease everybody, and how that whole calculus is going to work. But that is also part of my Rivian equation, is that I just think over the next 4 years, I don't think that the division is going anywhere. And I think that there is going to be a pronounced switch to Rivian from Tesla among many people who are upset by Elon's affiliation. So there's maybe an angle there as well.
That's a really good point that you bring up, because of the dislike for Tesla, it's creating an opportunity for other runner-up EV companies, if they're ever deciding between two choices, a Tesla or a Rivian or whatever else vehicle it might be. But at the same time, I think it is interesting, just with the marketing tactics of Tesla right now and just the EV companies as a whole, you're going to have it kind of divided, but at the same time, when you divide such a large percentage of people, even that half might be a massive amount that you already have because it's on such a large scale. So I don't know, interesting times just to see how things are playing out right in front of us. We'll see where the EV sector goes, but Tesla's still been really volatile. Rivian, it's got to be early. I've seen another Rivian the other day. I think they have those little pouches like behind the second. They have like the little slot on the side of their car. I think they're marketing something like that. Really good for like camping and going on adventures type vehicles, but they've become a lot more popular.
Yeah, definitely on the up and up, and EVs as a whole are only going to be on the up and up, I think. So, it's just a lot of upside. I mean, it's a similar line of logic to what I say about gambling and weed stocks sometimes. As with that line of logic, is I will say, if something is not legalized everywhere yet and is going to be legalized everywhere, then there is clear upside from that reality. And EVs, while they're obviously legal everywhere, it's sort of the same situation where wide-scale adoption of EVs has been slow and it's just starting to take off. We're still kind of just at the tip of that iceberg. So it feels to me like as long as Rivian is smart with their finances and their marketing, they have no choice but to grow, just because the number of people driving EVs and interested in that market is going to grow. So
really good point.
Yeah, Trevor in chat, Gus reads Wall Street Bets. I do read Wall Street Bets. I will take this quick time to shamelessly plug our subreddit, r/tastylive. I have been put in charge of spearheading some activity on r/tastylive, and we would really love to get the community more involved. So please, everybody, go join r/tastylive, contribute, post something. I'm responding in there to everybody pretty much every single day. So if you guys want to hear me yap or do some yapping yourselves, you are more than welcome. Please come hang out with us.
100%. I know we were talking about Hum a little bit here too. Decent premiums. This isn't a terrible trade idea. It's been absolutely beaten down.
Yeah, this Humana is one that I used to trade pretty often. I don't know why it's fallen out of favor with me, but when I was first getting into trading, and then into 21 and 22, I was trading the shit out of the stock. I would do it a lot.
Yeah. I mean, you can get $1.60 for selling the 30 Delta right now. We're not all the way at the expected move, but we're pretty close. We can do that for a 66% pop. I don't hate it. I mean, new lows today. It's been getting absolutely killed. But I don't hate it. The premiums are pretty solid. Decent liquidity too.
Yeah, it's not bad. They're loosely insurance, right? Is it? I don't really know what Humana does. The closest affiliation I have with Humana is that my house, the entire time I was in college, the previous tenants did not do a change of address with the post office, and I would get these gigantic, thick Humana packets for them once a week, and I was always throwing them away and thinking about how wasteful it was, but I wasn't going to open them or do anything with them. Obviously, they're not for me, so what are you going to do? But yeah, Humana, they be mailing packets. That's my experience with Humana, is that they send packets in the mail.
Okay, well, I wonder if they have adjusted or adapted their marketing strategy, because if they're still mailing things out, maybe that's why we haven't heard about them in a while. And maybe that's why they're making new lows. Regardless, I don't care. Premiums are pretty juicy right now. Appreciate
do they know that Gmail is free? Somebody tell them that Gmail is free to use. They're allowed to. We don't really send paper mail much anymore.
Yeah.
But
we'll see what we get there. This is what I'm going to be looking at. So maybe we even add this to our watch list as we have a couple minutes left here.
Yeah. What else we got going on? I'm looking for
sectors.
Anything else I was eyeing today? My Match.com position has been slowly appreciating, but the recovery there has not been as rapid as I had hoped. But I will tell you what I was exactly right about is DoorDash. DoorDash rocketed out of that poor earnings call. I don't know why it even went down in the first place. It was why I bought it. But yeah, DoorDash, big, right back up, V-shaped recovery. I'm like right at the bottom of that most recent big red candle. So yeah, I actually exited the last of my shares today. I was targeting 200 and it was at 198. And I was like, that's good enough. So got out on those DoorDash shares. Still have a vertical open. I just needed over 170 come August 15th. I was giving it like plenty of room in case it needed room, and it did not need room. It's back in a week.
That thing is ripping to the upside. I mean, we're near its highs over here on DoorDash. So 214. DoorDash is one of those companies I'm like, man, how did nobody come up with this 10 years ago? Or how did I not think of DoorDash? You know what I'm saying?
I was just reading about the founders of DoorDash. They started it at Stanford because they wanted to get noodles delivered from this place, and they couldn't get their noodles. What I heard. Or no, cookies, rather. Cookies. It was a bakery.
Yeah.
They wanted to get cookies delivered, and they couldn't, so they started a company to deliver for the cookie place, and here we are.
I actually think they're revolutionary in terms of opening up people's minds a little bit. Like, I feel like it's one of those business models. It's like, deliver my food to me. I don't want a stranger handling my food. I feel like it's one of those things. It's like, okay, that business model was extremely successful. How else can I be a little bit more convenient for people? And then I feel like people dip their toes in the water with trying a little bit more things. But I feel like the food was the pivot point on that, because I mean, a stranger handling your food, I feel like I'd rather put my credit card in the internet in 1999 than have a stranger bring me my food when it's the first time I'm hearing about that idea.
Well, yeah,
so
and especially when DoorDash was in kind of its infancy. Like, now restaurants have the infrastructure set up to deal with DoorDash. Like, you never get a DoorDash that's not like sealed some way. They have stickers or whatever. Different restaurants do different things. Sometimes if you order from a mom and pop place, they just staple the bag, but like things like that. But at the beginning, I mean, it literally was just like some guy pulling up to McDonald's and putting in your order for you and then bringing your stuff to you. It's like, you don't know what's going on. You don't know what they're putting in your drink or taking fries out of your bag.
And it might even be secured. It's just like the thought of it originally, like when it's first brought up, it's like the thought at face value. It's like, why would I why would I let a stranger pick me up? Like, I grew up learning the complete opposite. So one of those things.
Yeah, it's just funny. I mean, it's the way of the world. Basically everything that we use now, I can look around this room and point at things, and everything seemed crazy and stupid sometimes. So it's pretty impressive.
Oh yeah.
LOL.
100%. Well, that's gonna.
Yeah, I guess maybe
1999. That's what I'm.
Well, when did I'm not gonna speak on this. I don't know this credit card acceptance timeline here. I was about to talk out my ass. I'm not gonna do it.
I mean, either way, whenever that was, I mean, it was just, look, I wasn't at the age to where I had a credit card in 1999 anyways, or early 2000s for that matter. But even I knew, like, that's sus. Even I knew at that age. So, anyways, anything else to add before we hop on?
Were you born in 1999?
98.
Oh, old head, Unk.
Hey, bro,
Unk over here,
you know
bro.
What?
This guy's birthday starts with 19, y'all.
Hey, I was gonna make a joke when you were saying 1999. I was like, I don't know, Gus. Were you born yet?
I wasn't. I'm 2001. So yeah.
Oh. Yeah. That's crazy. That's crazy.
Well, you got the chance to do the 3 centuries thing, though. If you make it to 2100, you can do 3 centuries.
Oh, I'm right on the edge.
Yeah,
I'm right on the edge.
Well, that's the thing. You can live if you live until 2100. You live in 3 different centuries then, because you catch the very back end. So you got that going for you. I don't.
Yeah, I mean, we got an 89. Wow. I mean, we're really going back now. No, I'm just kidding. Well, that's going to wrap it up for today. That's going to wrap it up for today's segment. It's going to wrap it up for today's segment. Thanks for taking the time to hang out with us today. We'll see how these UNH positions play out over the course of this next week or two. So we'll be managing that, but we will be back next Tuesday for another Risk of the Week. Be sure to check out the subreddit and get some conversations going on there. Talk about managing this position. Maybe UNH will be a bigger topic. So that's going to do it for today. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmy.
I took 5 lessons for cases when all I knew what to do was
right together, spin it around. Yup. And you want to clap. And then like strut, down, strut.
like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Oh, yeah. It is Thursday, May 15th, or so they say, a little bit after 5 p.m. Central Time. The best time, you know what that means. It's time for Tasty Live's evening show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And while there are less incentives over the last few days, I would argue, than perhaps 4 or 5 weeks ago, they are still giving us some things to chew on. More on that in just a bit. Before we get there, we're going to say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, do yourself a favor and go get them. But if you want to be part of, boom, this little guy on your screen, this little chat box, there's only one place you can do it. Head on over to Tasty Live's YouTube channel on the evil Google YouTube. Head on over there, subscribe to the channel, and you too can place your thoughts, both appropriate or otherwise, eternally on this stream forever. So get on over there, start bashing your phalanges, your metacarpals, maybe even your skull against the keyboard, create random ass characters, and spoof the Google algorithm into putting us in front of as many people as possible. Deprogramming the world one little view at a time. Shout out to everybody in the chat. I see all of you. Look at you guys. You're ready. You guys are ready for today. I think you guys have had a decent week, if I had to guess. Victoria, how are you? Catan, great to see you. Theta, absolute beginner. Emmett. Brian, the YouTube goat. Edward, how are you? Did I already say loan? If I didn't, I said your name twice. Go buy a lottery ticket. Donna, how are you? Bobby Lewis, what's happening? Adam Green, great to see you. Logan. John, what's up? Great to see all of you. I would sit here and just shout you out for 60 to 90 minutes, but I am contractually obligated to do something else. Nobody's talking about inventory bloat from front-running tariffs, which could cause deflation. Come on, Vic. Yeah, nobody's talking about the bullwhip effect either. Kind of similar idea. I'm telling you, you know what will get you in trouble every single time. You got me going off right away. Right away, you threw a bomb in my show. You know what kills people? There's two things. I was thinking about this the other day. I was thinking, if you could give somebody sort of an edge, it's not alpha in a way, but just like if you could distill some nuggets of wisdom, whatever, if I've been able to acquire any nuggets of wisdom at all. But if you could distill some very important ones and just kind of give it to somebody, it's not like buy this here. It's none of that. It's just very simple nuggets. What would they be? And the first one is avoid linear thinking. So try desperately not to fall into the trap of recency bias and then linearly extrapolate what has happened yesterday to straight out into the future.
And as simple as that sounds, so many people do it. So many purchasing managers do it. So many CEOs do it. So many traders do it. Politicians do it. It's so common for people to take what happened yesterday and straight line those events out into the future. That would be number one. If you can avoid doing that, think of each new day with a new possibility, with its own probability distribution. You're probably in a better space than a lot of people. And then the second one, it's much more simple. I actually think it helps in so many other parts of life. It's when you read something or when you see something. It has to do with the availability bias. I go, if you read something or see something in the news, something like this, the first thing you do is you ask yourself, why am I seeing this? So of all the things that happened in the world on a one-day basis or on a 1 hour basis or over the last 3 months or year that could have been reported on, that could have been deemed important, that could have been deemed newsworthy, that could have been assigned the report, assigned to a reporter, that could have been placed in the news article or the magazine or on the website or in your feed. Why am I seeing this? I think if more people ask themselves that question before they sort of process the information that was coming in, I think, I think things would be different when you look outside the window. It's a weird thing, Somebody asked me that question.
Park City dwelling in Utah does not have room service, but it's
Paul, what are you doing over there, bro? Hit mute. What are you doing? I love you. That's my sign to move on. I think Paul just played me off on my opening monologue. No, but I think just asking yourself why you see something is so important. So those two things, the availability bias and recency bias. Let's get going, my babies. S&P 500 up 0.2%. This very interesting slow grind higher over the last couple of days, and it's a similar pattern. Be careful with patterns because they mean absolutely nothing. Just because I say this pattern doesn't mean it's tradable in any way. It almost do you a disservice for me saying it. I'm going to say it anyway. Markets start off a little weak in futures, maybe an hour before the open, something like this, maybe 0.5%. This is the last couple of days, right? You're down anywhere from 0.25% to 0.5%, and we end the day positive by some decent amount over the last couple of days. It's like this continuous pattern. Same thing happened today. Not as much to the upside. NASDAQ, again, only up 8 basis points. This is kind of similar to yesterday. Dow Jones ended up 0.2%, a little bit of a reversal. Dow Jones weighted down yesterday, obviously, by UNH. UNH, opened somewhere around close to 280, got as low, maybe in the 260s, got down to 240, ended the day at about 275. I'll talk about that one just a little bit. Raise your hand, classmates. Raise your hand if you couldn't help yourself but to YOLO into a United Health position today. I'm one of those people. And the Russell was up 0.5%. The VIX volatility index, my babies, 1783. I almost can't believe it. 1783. It's a cold game, bro. This is the linear thinking, 5 weeks ago to 60 VIX, you talk to somebody and they were linearly extrapolating those events, and the story that they would have told you was the story of 5 weeks ago linearly extrapolated out over the next 3 months. They would have told you that in a very short period of time, your store sales are going to be empty, that we're headed into a deep and painful recession. It's not just some people in the comments, man. This is Goldman Sachs and JP Morgan I'm talking about, that fall into this same trap. 5 weeks later, you're out of backwardation. Bonds are at 113. Gold has come off of its high. Bitcoin's still above 100,000. None of that shit made sense to the person who is linearly extrapolating the events of 5 weeks ago into the future. But here we are. VIX at 1783. Vol term structure has completely normalized. And now, I get the distinct pleasure of coming in here and probably being wrong for a little bit. That's probably not the way to cultivate and maintain an audience, but I believe it is going to be true to a slight extent. So I think when people come in here, they're not going to hear a super bullish story right now from me. I'm going to explain that matters, right? Because every day you come in here, I imagine, you just want to share people's points of view, express your own and hear other people's. At 5,900 and change, there's individual stocks, United Health being one. I might take a small individual short-term bet or longer-term bet, start to create a longer-term position. But I don't see a ton of value here. I do see the opportunity for additional positive news headlines, and in the absence of substantially weaker hard data, this could be a headline-driven market all the way up to 6,000, and who knows beyond that. But I don't see a bunch of risk and reward here. So here's what happens. In this moment, it's the guy who's saying this shorter term moving average is above this other moving average. He's the one, or she's the one, that's going to stay in market here. They're the ones that are going to continue to take upside risk, and they're not really going to change their opinion until you get the roll, right? Until this thing gives up 3% in a day, and then they go, okay, I'm out. So I'm not overly. I told you guys I'm not overly bullish. I'm not overly bearish. I just don't see a play here, and I could see us being a bit extended and giving up a decent amount back to the market. I could see hard data that starts to come in a little softer. Or much softer, but I could also see the market looking through any softness in hard data. In the same way it just looked through GDP, I could totally see the market starting to look through any problems with hard data. So I'm not waiting with bated breath on some ISM number or PMI number or anything like that shows weakness, because I kind of think that's going to be a sucker's bet for the next 3 months, because the market already knows. The market already knows we pulled forward a lot of spending into the first quarter. The market already knows on a quarter-over-quarter basis that's likely not to be the case in the second quarter. And so, I would just be careful. I also think if I had an incremental dollar here, I ask myself, at 6,000, would you be a buyer? And I'm talking about as a trader, not an investor here, right? At 6,000, am I a buyer? Not a ton. I can't see myself getting superly. I can't see myself being very excited about the price here. I might get more upside. There might be another 100, 200 points. Who knows? Maybe more. Maybe we've completely changed the dynamics of how to think about this market. But because I know myself, it's easier for me. This is the wildest thing. It's easier for me to push the button when everybody's freaked out, because I know I'm getting a better equity risk premium, a better number there, a better value for pressing the button. When everybody's chill, bro, I know I'm not getting a good price. It might go higher, but I know I'm not getting a good price. What a beautiful term structure. Can you believe it? Can you believe it? You know what I totally underestimated? I felt I had a decent read on the U.S. administration and their incentive structure. I think I said something on April 3rd. It's like you're either headed for war, this is headed for hard conflict, or you're headed for a deal. And this guy has made campaign promises. He doesn't want conflict. It's not going to reflect well on him, and his base is not going to go along with him. It's not what they voted. So you kind of know what the incentive structure is. They have to do a deal. The only question is, how much pain are they willing to take before they do that deal? But what I didn't fully wrap my mind around, and I'm really thankful for people like Michael Cow, who's at Urban Cowboy on Twitter. What I didn't fully wrap my mind around was China's incentive structure to do a deal as well. And so, yeah, I thought the back and forth, the tit for tat between the U.S. and China was actually going to drag on for longer than it did. I know we're still not out of it. In fact, I think there's more of this back and forth in a negotiation. I don't know if it ratchet up tariff expectations go up higher. But if the rhetoric between the U.S. and China turns sour, who knows how that changes how to think about risk in the market. But yeah, I didn't have a good handle on the Chinese incentive structure. But luckily, there are smart people like Michael Cow who helped to elucidate me on things like this. Hold on, let me pause for a second and see what you guys are saying in the chat. TDS vol panic with MAGA vol suppression rally. Yeah, unfortunately, you know what's actually, son, I think it's actually probably a good thing. In a weird way, a bunch of people, they probably got taught a lesson in this first 100 days. It's the same lesson that I think a bunch of people learned in 2016. But I think the scar tissue wasn't there. And so a bunch of people are going to be a lot more honest going forward. I can already see it. I can already see a bunch of people who kind of over-rotated, and I think they're going to be a lot more neutral going forward. And I think that's a good thing. And number two is I think it's a lot of people. Like I see a bunch of names here that aren't here anymore every day. And it's unfortunate, and I miss those people, and I wish them the best wherever they went and wherever they go. But there are a bunch of people that came in here and they straight lined what was happening 5 weeks ago. And they were certain of it. And anyone who had a differing opinion from them in this chat, they would undress them. They would talk about how unintelligent they were, how they couldn't see it. And unfortunately, those people probably had to deal with two things at once. They had to deal with a portfolio that probably got absolutely smoked, and probably an ego that's searching for answers right now. And this could have just as easily went the other direction, right? We could have been at 4,900, and a month later we could be at 4,200, and I could be thinking to myself, what did I get wrong? You know, what did I get wrong in what I was seeing? But it didn't go that way, right? I don't know. So I don't know if maybe we just got lucky. Survivorship bias put us on the side of the coin that, got a little lucky here, or maybe, just maybe, sort of a bit more neutral stance, a bit more objective stance, and trying to understand the incentive structure of the world around us, instead of leaning into straight line thinking. Perhaps that helped us through a really weird, ugly, nasty, very unpredictable time where the distribution goes wide. And I'm not so certain. Everything tells me that we are through the woods, right? 6,000 in the S&P, VIX term structure normalized, bond vol down, VIX at 17, MAGA 7 rallied hard. everything tells me that sort of this has turned the corner into something new, and I'm sure we are into something new, but that new sine wave that we're on doesn't necessarily come without volatility too, or without the potential of a left tail move. So I don't want to get too, emotional in either direction. I'm totally unemotional about this, man. We're just looking for opportunities, and opportunities come in other people's linear thinking, honestly. Let's see here. Let's get some more of your comments. UNH, so you guys did jump in. Learn D-chat. I think this is very important. Sometimes I want to show you guys something. What's cool about having being on Twitter and having a few people that follow me is it becomes sort of this interesting contra. When I say something that everybody likes, I go, this is probably wrong. And when I say something that everybody hates, I go, there's something worth looking into here. This is probably directionally right. And that's not always true, and you have to be careful with it, because that type of thinking can just lead you to doubling down on bad ideas. All right, get this out of there. There you go. But I said this yesterday. I go, UNH is the type of oh, no, this isn't the one. But it is true. UNH is the type of company that will disappear a whistleblower and a key witness. That's my long investment thesis on UNH. Joking. Where is the... Oh, yeah, this is what I said. I said, this is me buying all of your UNH tomorrow. And it got a ton of engagement. A ton of people liked it. And I was like, uh-oh, this is not the bottom. This thing's going lower. And that's okay, because I just started a very, very small position. And I think this could get ugly. But that's kind of the whole thing. That's kind of the whole linear straight line thinking, right? This thing is down 50%, could cut in half another 50%, could get even worse than that. So I start to, I think a couple of people were like, buy it at 220, buy it at 180, and that will be very smart. It will sound very smart if we go down to 175 and rally. It won't sound as smart if we go down to 125. And it won't sound as smart if we never get below 200. And because you don't know, my whole thing is, if they're going to give me a massive discount, I'm going to start accumulating a position. Now, this could get so bad, not because of the fraud investigation and, the potential for Congress to make United Health Group like this scapegoat of just gigantic fraud throughout the industry, in the same way like Purdue Pharmaceutical. You think Purdue Pharmaceutical was the only person hawking opioids through that whole period of the opioid pandemic? They pretend to do something about the Sackler family. They make them sacrifice a couple of $1 billion in their wealth. The rest of it's sheltered somewhere. Nobody goes to jail. But it does seem like they're gonna make this. Somebody's got to pay the sacrifice to the gods here. You get one scapegoat to make the pitchforks happy, and it seems like UNH could be that company, and it could be. We could get massive reform to the PBMs. And if all of that happens, 275 is not going to look cheap. But we don't know. And that's the whole point. But D-Chat says, learned my lesson years ago with Tyco and others. UNH is going lower. And the reason I think that's I want to say this very clearly. I start my position in UNH with that mindset that it probably is going lower. And that's why I start my position small and I build into the accumulated size that I ultimately want. It's called just diversifying your entry point. I don't know where it goes, and I very much believe the potential to go much, much lower is there. But today, at least, I'm on the hook for a couple of UNH deltas. All it takes, Grumpy Mike, all it takes is a tweet. Soul Train says, Vic, they said recession, not deep, long recession. Love the point, but I think that's true. I think some said regular garden variety recessions. Some said we're headed for a deep, painful recession. Some people straight lined out to the 1930s depression. I mean, I'm not saying that was the average of what people were saying. It was probably the exception. Shout out to Trading Places. What a movie. I'll do a couple more here. We'll keep moving on to bonds. tastylive Victor, thanks for sticking up for us this morning with Tom. That was fun. That was every once in a while, every few months, we do that boomer millennial discussion, and it's fun every single time. It's fun. He knows. I think parts of him, you know, he'll say that stuff. Just because he knows it gets under people's skin, you know. And if every other business owner would say, I'm not gonna take an adversarial position against the millennial because it will negatively hurt my business, and he goes, no, I'm gonna piss him off. I'm gonna piss him off a little bit. Like every other person is trying to go after the what's the word for it? Not yet rich. What is it called? No, I can't remember what it's called. But it's basically the millennial high income, not yet rich, right? Henry or something like this. They're trying to go after that segment. Meanwhile, he's being like adversarial. But he's a genius at creating engagement. He doesn't mean it. He knows you guys are out there slanging him. I'll do a couple more here. Son, that line, TDS vol panic with MAGA vol suppression rally, that is so genius. Catan says linear thinking. Black-Scholes was made on linear thinking. Sort of. You'd call that? I don't see. I kind of get what you're saying, the concept. And I do think. I never thought about this until I read Nassim Taleb. Is it Taleb or Taleb's book, Black Swan? I never really thought. This has been a long time since I learned a lot of this stuff, you know. And I suppose I knew this, but in the book, he talks about how, you know, all of these risk desks are basically, we have all these complicated risk models. And at the end of the day, we've sort of forgotten that they're all based on these gigantic assumptions. That as fancy as the math has become, at its core, this was only a model to attempt to explain reality, and it is not perfect. It is an imperfect reflection of risk. It's the best we have, but it's imperfect at its core. And I thought it was a really good book, but that was the thing I took away most from that book. It's probably not the thing that most people took away. But that, for me, that concept still sticks in my mind. Oh, and I think that's what you were talking about, Catan. Yes, I see it later. I guess that's why long-term capital, I think you meant, long-term had that event in the late 90s. Yeah, he talks about that in that book too, actually. That's one of his points. Oh, this is a good one, and then I'll move on. Linear Data Trader says linear thinking, but also people demanding you think in black and white terms too. You must have a strong opinion on any issue or people are pissed. This is the truest thing. And it's a gigantic red flag, you know? And you see it a lot lately, and it's really, especially on the internet. The thing that I love about markets, and when you talk to people in markets, I don't need, and people are used to this because in their everyday lives, there's a lot of debates. And when you're in a debate with someone, and people do this on the internet, they want to win. They want to win the argument. But in markets, it's like you can have your opinion and I don't have to agree with you. And I'm going to put on my bet, you're going to put on yours. And the markets are going to prove us correct. I'm not going to sit here with you and tell you why you're wrong and get upset that you won't agree with me. The markets are our outlet to express the opinion and just move on. And so what I find interesting sometimes is a market participant that cares more about you demanding that you accept their opinion. That person's on tilt. That person's probably on tilt because nobody cares. If you've been doing this for a while, I could care less. I'll listen to people here all the time, and they have a completely different point of view, and I go, okay, we'll see. You know, when I say, or you take the over, the under on 4 cuts this year, back a few weeks ago, some people said the over. I go, oh, that's interesting. And they laid out their case for why. And I said, totally plausible. I'm going to take the under. Here's why. We'll see what happens. And you move on. Demanding allegiance to your ideas. It's a thing that the internet has created and sort of nurtured and encouraged. And I think one of the greatest things about markets is it helps you avoid all of that stuff. My wife asked me the other day, she goes, hey, do you think I should start trading? And I go, no matter who asks me that question, no matter who they are or what they do, how old they are, how much money they have within a reason here, the answer to that question from me is always yes. And it has nothing to do with making money. It has everything to do with helping you understand who you are, what you're afraid of, what you want, what your deepest desires are, how to mitigate against that emotion when it comes to decision making, how to learn to make decisions, quick decisions, how to measure risk and reward against each other, and have a probabilistic outcome of expectations. I think trading makes better people, as crazy as that sounds. If you're lucky enough to find a place who are like this, who are thinking about trading in terms of probability distribution. If you're in a place where people are tarot card readers, and I'm going to give you my levels and all this other stupid shit, you're probably going to do some damage to yourself. But if you're in a place like this, that's thinking about the world in terms of probability distribution, I think it makes you a better human. I think it makes you a more informed citizen. I would never say no to that question. And then we opened an account. She lost 30% of our net worth. No, I'm just kidding. I'm just kidding. Bonds, my baby's at 113 and a half of a point. We got a little rally today, huh? We got a little bit of a rally. Is it a head fake? We're back at those 111 lows earlier today. And what did we get? Something like a point to the upside. Not necessarily, but a decent little rally today. Do you believe them? Is anyone out there like me crazy enough right now to go long the long end? Because everybody out there is saying, and I'm probably just I get absolutely murdered. I'm telling you, I think I'm being too cute on this trade, but I can't help it. That's why I'm doing it really small. But what's supposed to happen now that all the risks have dissipated, what's supposed to happen now is the long end lifts because the market starts forecasting growth and inflation. That's what's supposed to happen. Nobody's, as people's recession calls dissipate and they don't see recession as their baseline right now, and they move it out of their distribution over to the left tail. What's supposed to happen is they're supposed to take more risk. They're supposed to sell bonds, and bonds have to find a higher yield in order to attract capital away from risky assets back into the bond market. That's what's supposed to happen right now. But some part of me, again, this is the too cute part of me, thinks that a lot of these deals could come with sort of this tailwind to restored confidence in the dollar as the global reserve currency, because that, in some ways, 5 weeks ago, people were even questioning that as the bonds as perhaps something you might not need to be as fearful of as an asset in your account. I don't know if that's true. But I do think, Michael Cowell put out this, I think he used AI to go through this $600 billion investment commitment in Saudi Arabia to basically distill it down to these key points. I'm not going to read all of them, but at the top line, I think this is really interesting, right? The total investment, $600 billion Saudi commitment to U.S. assets. And what's so interesting is when he went out there, he labeled it as, he's trying to get $1 trillion in his Middle East trip, $1 trillion of total capital. And he got 600 billion in a chunk. The bullish implication for the petrodollar system, I thought this was a brilliant way to lay this information out. But major USD recycling, sustained demand for U.S. financial assets. And I think that's the right way to look at this. So this is 600 billion. He wanted $1 trillion out of all these visits. I think we'll get new trade deals that come in. And so some part of me thinks that maybe the right way to look at this as we go through and make these deals are about restoring confidence in the in sort of in a place in the U.S. financial system, in a place where maybe 5 weeks ago, a month ago, maybe even 2 months ago, the market didn't necessarily have that confidence. I don't know if that actually matters. This is the biggest thing. I think I might be too far out on a ledge talking narrative here. There might not be enough there when all is said and done with these deals. And what might matter more is that the budget that's being put forward is, what's it, 6 trillion, something like this, of potential deficit spending. That might matter more, and we see the long end lift. We shall see. We shall see. The twos I'm out of too. And you can see on the curve, let's take a quick look at the curve. We went from a flattening 65 basis points. We came into about 47 to 48, 47 or 46 basis points. We flattened a little bit. And the last couple of days, you added two basis points to that. So at least in the very, very short term, some of that move seems to have ceased, that flattening. In the Fed funds futures, not much has changed from yesterday to today. A lower probability, though, in July. They are really taking those things off the table. June is clearly off the table, at least as of today. July is off the table as of today. It seems like they've baked in September with a 50-50 in October. and then pausing in October and December. Absolutely wild. It's wild how fast that happens, isn't it? Just not last week, just 2 weeks ago, recession was in the middle of people's distribution. It was their base case. We were talking about 4 cuts. People were certain, but some people were actually betting that we would end up needing more cuts than that in 2025. And now we're talking about 2. And even those 2 are kind of iffy, you know, with October being sort of a month that they may pause and wait a bit. And then who knows, once you pause, you know, once you pause, it's always possible that a 1 month pause turns into a 2, turns into a 3. I am absolutely fascinated by how quickly that picture changed. It's one thing for equities to turn around, because that's what equities do. It's another thing to see this fast of a repricing, a changing in the pricing of the policy path. And what changed, really, you know? What changed? And I talked about this with Chris yesterday. I talked about it a little bit with Tom today. I think sometimes a retail trader has an edge. Sometimes a retail trader has an edge, and this is what no one will ever say. Very few people go on television and defend the retail traders in the way that they deserve to be defended. There aren't many. There are people that go on TV and they do make a case for retail, but they don't do it themselves. They don't press the button. They're not balls deep in all of this stuff. So they don't make a great case. You know, they're not the greatest representatives. But in this particular case, if, you know, a institutional trader comes and he gets tapped on the shoulder and they say, hey, you need to puke that position. Or you need to deleverage. You need to degross. You need to take your positions down. And you may love your position, and you may know that he's got to make these deals. It doesn't matter. You know? You need to take your position size down by X dollars or X percent. And you just got to do it. Whereas the retail trader maybe it's going to take more variance, more swings in the portfolio, maybe not, depending on how they trade, and they can hold their position a little bit longer, assuming they're not massive, they're not on leverage. And I think this is one of those times where the retail trader had an edge. It paid. Not only did they use the edge, but they bought into it. You know, they bought, what did you crazy degenerates buy? You bought like what was the number? You bought like $5 billion on April 3rd, something like that. Then you were buying crazy triple leveraged long stuff after that. I saw all these reports from Bloomberg. People are buying crazy triple leveraged long ETFs. And then at the end of the day, you guys got paid. You know, you take a little bit of risk. You don't think linearly, extrapolate today's actions and activities, today's fear out into perpetually into the future, and you get paid. Congrats to all of you. This is the other thing, is that this curve is not really changing, man. This has been a pretty boring trade, and you can tell when our opinions are changing. 114, 113, now I want to get long. 117, now I'm lightening up. You can tell like the ranges for how we're talking about, thinking about trading bonds, they're shrinking. They're getting smaller and smaller on a directional basis. You know, vol spiked for a little bit, and you could sell vol and get decent premium. That's not always my game. But and you can tell that not just in the individual instruments, the tenors themselves, but just the whole curve. We had a bit of a flattening from 65 to 45, but it's just grab a Snickers. We don't seem to be going very far. And I read this today, the higher for longer. You know, how many of you thought that higher for longer meant like, what are we, 3 years into this? Huh? I know they've cut a bit, but like, did you think we'd be still at these kind of levels 3+ years later? I did not. Higher for longer did not. I had no idea. And we're only talking about 2 potential cuts. I guess if I could ask the question to you guys, the question at the very beginning when they were raising rates is where to raise them, because we knew they were going to raise them somewhere, stick them, and then keep them there. And if you go too high, then you create a lot of pain in the economy too fast, and you risk a credit event. If it's too low, inflation becomes entrenched. You don't have stable price increases to the upside. You're going to get a bunch of rabble-rousing people in the streets. So it's important that you try to stick that number as best as you can. And I guess in hindsight, given what you know right now, which is not full and complete information, you probably need another few years to really make and maybe even a decade to make that call. But as of where we stand right now, 5.25. Did they make a good call? Do you guys think 5.25 was a good place to land and then start sort of changing policy from there? I'm curious. You know, people at the very beginning, when they stuck them at 5.25, they would see stuff like, Fartcoin going up by some crazy amount, and they would make the meme, they would make the joke, jack rates to 8% now, or jack them to 10% now. What do you think? Sleepy, you buy puts and calculate your lambda value. Bet they won't cut if gold keeps ripping. Explain that. Explain that, Trev. Donaski said, yep. Donaski says 600 billion from the Saudis and 300 or 400 billion Boeing aircraft order from Qatar equals roughly $1 trillion. How about that? Boeing has been an absolute sick, so sick. Such a sick move. They shouldn't cut until stocks get cut in half, says Son. I don't know about that, bro. If you're not going to cut until stocks are cut in half, why not just Volcker this thing? Why make it slow and painful? Just get it over with. I don't get the logic there. I closed out, as I said before, God, I got lucky on this thing. I closed out the euro. It's had a little bit of a rally over the last couple of days. So I've got nothing here. No, it's very rare that I'll take a position in a currency. And if I do, it's either the yen betting on increased volatility, or it's the euro. I want neither parts of either. I'm still leaning a little bit long Bitcoin here. The miners are starting to get cheap again. Make miners cheap again. The gold doing, nice little, weird little rally here today. Good for Ilya, I suppose, but I think maybe good for Chris as well. I can't remember. I think he's a little bit long here. So good on them. I've got nothing on in gold right now other than those long miners, which we collared up, and a little bit of a recovery here. I don't know if they got cheap enough to want to buy some more. So I haven't. I really wish they would just murder this one. Can you do me a favor? Can you guys just get in your Reddit chats and spin up a gamma squeeze to the downside on Palantir. You all go raid this thing with downside put buying. And and get this thing down back to sub 100, please. You know what I think is more likely? I think it's more likely that, and if, we might be there. I don't think they were there just yet. I think we're more likely to get to a price that I want to short Palantir before we get to a price that I'm able to buy it again. I think that's probably the case. I'm probably going to have to short it before I buy it. And I try to think about the scenario. Where what would hurt Palantir right now? Like, is there a tweet? Is there a piece of legislation? Is there a war escalation or de-escalation? Is there what is the thing that, other than price alone, right? Other than the cure for high prices is just high prices. Other than sort of the sudden realization that the valuation is too high, what is the thing that hurts them in terms of either headline or legislation risk? Vic, do not fade me, bro. Thought we were brothers. What's your position, Soul Train? I can't remember what it was. Were you the yen? Do you have the yen position on? I'm not fading. I told you, I got nothing on. Believe me, I've tried with the Palantir puts. Alex Karp's footprints are all over my back. I would never. I said this before. Sometimes you get companies, and I could be wrong, and I just go, I'd rather be long than short. And I don't know that I want to be short here. Palantir could do this thing that Rivian did. Right? There was this moment in time where Rivian was worth more than Volvo. And it had made like a couple of thousand cars at the time. And Volvo makes millions of cars a year. And it was basically at a time just after Tesla had just taken off and gone on this massive gamma / short squeeze when they were added into the S&P 500. And so it sort of seemed like this giant Me Too trade. People were trying to buy any EV, direct EV exposure, and just hoping that would be a cheaper alternative to buying Tesla, which had already made the move. And so they were just buying anything. What was the guy's name? What was the hydrogen guy? Went to jail, just got pardoned by Trump. Trevor Milton, got taken down by HF. And then this one was another Me Too thing. And then at some point you go, I'm shorting this. This doesn't even this is a good company. To be worth more than Volvo right now makes absolutely no sense. I suppose Palantir could get to that level of pricing. Who knows? Maybe we're there right now relative to their own revenues. Chris he wasn't saying to short it, but he was making that case the other day of what they're worth relative to their revenue. But that's what always happens when you have an explosive growth company. When you have an explosive growth company, the valuations are going to go crazy. And if you're a value investor, most of these explosive growth companies are never going to look interesting to you. So you're always going to miss out on these things. So every once in a while, you got to put tape over your eyes when it comes to valuation and a unicorn bet. I just don't know what happens. Ukraine resolution, Gaza resolution, Iran resolution, which you're kind of seeing some or a lot of that already. Is that necessarily net negative to Palantir? I don't think so. They're not like a pure defense company. Palantir risk is government and AI. I don't disagree with you there, Bobby. But again, actually that's probably where it is. if you start to see the administration talk about a decrease to defense spending, and that was whispered a while ago, and that created some negative price momentum for Palantir, I think that could hurt. That ended up not being the case. Defense budget is not really being cut in any meaningful way. Captain says Palantir will win if it's always in people's mouths as a positive. Son says M2 is cooked. You're a monetarist, son. M2 is cooked. All this froth is going to circle the drain. You don't need a stock specific reason for portfolio. That's actually a really good point. That's probably the best point. Do you follow Steve Hanke, son? He's probably the one guy I listen to the most when it comes to thinking about how maybe sort of that group, that world thinks about M2. To me, that guy's the only one making sense, and nobody thinks that way anymore. Nobody speaks that way anymore. Everyone thinks M2 doesn't mean anything anymore. So I think listening to people like that keeps me sort of grounded in reality. Everyone else doing these weird equations to explain what's happening in the world. I'm like, bro, just like we need to go back to gold. We need to. We need to go. But when you're, I don't know which one of these two things is true. Either the monetary system has become so complicated, you can't know it. It's unknowable. It's this beast that has become its own beast. Or it's actually really simple, and everything else is just there to make it seem complicated. I sort of think the latter. I think it's actually pretty simple. I leave room for the idea that that might not be true, but it's probably my preferred mental model. That money is actually relatively simple, and we make it seem complicated, but it's simple. It's always been simple, and it will always be simple. And the only thing that changes is the distribution of that money, and the distribution of the money changes how the game is being played, because it changes the game theory of the incentives of game theory within the game itself. So you change the distribution, you change the way the game is played. And I actually want to talk to Tom about that. When it comes to efficient market hypothesis, I do think that the way I think about price changes if you tell me 90% of the wealth is in 10% of the hands, and those 10% all know each other. They went to the same schools, they live in the same neighborhoods, and they all have similar vested interests. And I go, okay, well, that's going to change the way I think about how they'll play the game. Right? Because if that distribution gets smaller and smaller and smaller, the smaller that distribution gets, you go from 10%, 1%, a couple of thousand people, couple hundred people that happen to see each other when they go to Davos once a year. And then I go, well, in Prisoner's Dilemma, what happens if all the sharks that are supposed to be competing with each other, what happens if they stop competing? How does that change the way I should think about price? How does that change the way I think? If a small group has acquired the claim on future resources in the hands of a very small group, and if they compete, this is the way I should think about price. But if they stop competing, if at some point they go, you know what, we'll have a better outcome amongst ourselves if we start some level of cooperation amongst us, and the group is small enough to do that, then how would that change the way you thought about the game? How would that change the way you think about price every day? Mark, that's a really good point. You just described FinTwit. It's all the same people shilling their Substacks. All the same thing, and then they go on each other's podcasts. They are all clowns. If they were so smart, they wouldn't have to shill subscriptions and would be on a beach. In fairness, Mark, a lot of those people are on a beach somewhere. There's a part of me that sort of, people say that a lot. You know, if you were so smart, you'd be on a beach. I think a lot of those people were so smart, they stopped working for somebody else and they trade for themselves or their own family office. And when you trade for yourself or your own family office, it's really, really boring. You know, it's really boring. It's 6.5 hours a day minimum staring at a screen by yourself. Most people don't do it for 6.5 hours. They're looking at futures and they're looking at currencies. And when you do that, Twitter comes along and you start to express your opinion. You start to read other people's opinions. You create this community of people that are doing the same degenerative activities as you are, that care about the subject matter that you care about just as much as you do. And you guys, you know, there's a value to what you know. And if there's a value to what you know because you've been doing this for 15 years or 20 years, or you're in an institutional position, or you're a PM, and there's value to what you know, you're monetizing it every day in the marketplace, and there's an additional monetization. I don't sell subscriptions. I've never done it. I'm not knocking anybody that has. But I think, you know, monetizing your own knowledge, I don't always think that that's a red flag. You know, there's a lot of people's minds that I get access to for free on Twitter. And then there's a lot of people's minds I might pay a little bit to get their more deeper, nuanced thoughts on subjects. And I feel it's a fair exchange. I feel that the money that I exchange for their time and their point of view and perspective is worth it. Do I think by subscribing to somebody else and paying them a couple of bucks that I'm going to somehow get rich by following their calls? No, because that's not the way I look at it. I want to know how other people are thinking through problems, because I'm deathly afraid of my own confirmation bias. I'm deathly afraid of the Dunning-Kruger effect. I'm deathly afraid of many of these types of things. So getting access to the way other people think about problems, it does have a monetary value in some cases. That said, I think you're 100% right in pointing out the groupthink that happens in certain aspects of FinTwit, but just in algorithms in general. I agree with that. All right, let's keep cruising here. Still no position on crude oil. You know, still none on energy at all, other than just getting long energy stocks as they get cheaper and cheaper. You know, people were calling for the $50 oil, which I can understand. I'm seeing calls for like $40 oil now, and I don't know about that. I don't know that I'd put that in the cards. 50, okay. And we even got down there. We touched the number, not for long, but I can totally get that. $40 oil? That would be wild. If we get to $40, I miss my damn car. I moved out to Singapore. I'm not driving. You guys, if they get crude oil back down to $40, I'm going to be so pissed off that I don't get to go drive around for next to nothing, paying next to nothing in gas. Not getting paid on silver. Didn't get hurt today, but not getting paid. I think this is going to be it's going to end up being a lesson to me. It's like, if you have an opinion, and that opinion is gold will increase in relative value relative to gold, that the gold, I don't know why I said it that way, that the gold silver ratio will go down into the 90s, then just play the gold silver ratio. Don't try to get cute because you got greedy and now you want to buy upside silver calls because you'll get more money trading it that way. I think this will end up being a lesson to me, but I'm still long silver. We'll see what happens. Let's see. The degenerate trader says most people subscribe to copy trades. All you have to not reading the rest of that. I don't know. I've never understood. I think I just have a really big ego, you know, and I'm very competitive. And I think this whole game, part of it, the kicks for me, is I want to match wits with other people. So to me, every day I sit down, it's a game of matching wits with the market. To me, it's a competition of ideas. You have a set of ideas, somebody else has a set of ideas. The market is thinking one way, and the way to make money is to envision an outcome, and not many people agree with you, and that outcome becomes true. And to me, that's I love the thrill of that competition. And then that competition also comes with sort of a monetary reward. And then depending on how you structure the risk and reward and the heat that you take en route to being right, if you're right, also that's part of the game. And I love everything about this, man. I love the competitive aspect of it. And I think doing this just to copy somebody else's idea, I don't even get that. I don't understand it, because the part of coming up with the idea, of expressing the opinion, of then coming up with the trade construction that matches, and then playing the game, going in the arena and playing the game. That is the whole thing. So what reward? I mean, I get it. You know, some people just want to see the number go up. But to me, this is the game is so much deeper and richer than that, you know? And copying somebody else, and if the number goes up, I just go, what do I didn't learn anything. And if this person leaves, I'm screwed. I need them now. Especially in the middle of a trade. You open a trade that somebody else put on, what are you going to do? What if they go on vacation? What the hell are you going to do then? Let's see. Oh, Mark Bender is just throwing heat today. I'll do a couple more. Well, I've got a few more topics to cover before we get out of here. Human nature. I'm going to read some more of Mark Bender because he's on fire. Human nature is the only thing that matters. It always repeats. Amen, brother. Markets can only go up because that is human nature. We all look for the positive and always move forward. Okay. Where's the rest? It just disappeared on me. Wait, that is completely wrong. Thinking you just described mainstream media, because they glorify that dude who called the GFC in 2008, Michael, whatever his name, Michael Burry. I think that's who you're talking about. Yeah. But again, like, as long as you get to places like this, then you go, oh, that's survivorship bias. That's why that guy's on TV. And I see what that is. I understand it, even if other people don't. And, you know, it's not a big deal. that goes back to what I said before. You ask why you're seeing something. If you always ask yourself, why am I seeing this? And you can answer that question at a deeper level than other people. You have better context for framing. And I think, in a way, you do this long enough, you don't have to watch the news anymore. You know, the number is your news, and you know, to a large extent. And I get what Tom says when he says this sometimes. You know, I get why all those floor traders, they go, I stood in a pit and I could tell you what the news said based on how the number moved. I understand that point of view and perspective. There was a time when I go, I don't get that at all. How are you not glued to a screen somewhere? But I get it. All right. A couple of more topics. Here we go. Not a bunch of the data today, at least to me, was sort of rather boring and uninspiring. Retail sales, especially. I'm not sure what Ilya has to say about it, but to me, I don't think there was a ton here. Consensus at 0.1%. Maybe the core was a touch light. But to me, I think retail sales is one of the worst reports. Non-inflation adjusted retail sales. I think it's one of the worst reports that comes out, especially in a world where everybody's trying to understand inflation and its impact. I can't do much with that. The housing market index was another interesting one, though. 34 versus 40, very quietly. And this has happened. We've seen this flattening in the curve. We've also seen very, very quietly a little rally in the home builders. And a significant one at that, from 85 up to 100, $15 rally. So, my babies, the question here, is it time, to use a Lion King reference, is it time to start building some positions in these home builders? Or is it too early? And I think if you tell me you think long end rates are going to 6, then it's way too early. It's too early to buy anything. But if you tell me we might get a rally in the long end here, a sustained rally in the long end, maybe for the next quarter, then these start to become interesting. KB Homes, Pulte Homes, Lennar. Some part of me really wants to start nibbling. But the problem is you just can't look at these home builder charts on a 1-year basis. You almost have to look at them on weeklies. Because they went on a 2-year rip. There's a straight 2-year rip. Everyone, in 2022, when rates got jacked to 5%, these things went to the floor. And then it went on a 2-year rip. So if you only look at a 1-year chart, you're going to miss probably half of this move. So you have to look at a multi-year chart, and you kind of have to put these on weeklies. It's not the worst price. $60 to 180, 120, 60, 120. We're just under mid-range for this whole move. Let me see what you guys are saying. Is it too early? Son says short gold calls against silver puts. That's interesting. Son says anything housing related is going to go insane. You buy housing against tech shorts, long end rates are going to 3. I think that's directionally right. I don't know if it happens like right away, But I think that's 100% right. I think it's just an inevitability. I don't know how we get there through natural market forces, whether it's yield curve control. I don't know how it happens, but I tend to agree. And that's why I keep looking at these things. That's why at first, when they started cutting in September, I thought long end rates are going to lift, but it takes forever for home prices to move. That's going to create less of home affordability. These things are going to drop. But I also think this game ends. It always ends the same way, and it's going to end the same way here. How much time is it going to take, and how much pain to get there? I don't know. But I agree. I'm watching these not because I want to bet against them, it's because I'm looking for the right time to start betting on them. Yes, if I'm pronouncing that correctly, I hope I am. If I'm not, my apologies. Do me a favor and send me the phonetic spelling. But yes, I appreciate those very kind words. That's my point. Once you follow these FinTwit, Mark Still firing. Once you follow these FinTwit dudes for a few years, you can stop following all of them because you realize they all basically stick to their own themes that don't change. I would say not all of them. I think there's a handful. I think there's a handful that I think are much more dynamic in the way that they think. I think there are a few that you have to be careful about understanding their incentive and sort of frame up their points of view alongside their incentive. But I think there's a lot of valuable opinions out there. It's like, I'm going to give you an example. Look, the people, the guys in the logistics that 2-3 weeks ago that were on Twitter talking to each other logistics people and explaining the situation in logistics, were just explaining what they saw on the ground. And their opinion is valuable because they have the subject matter expertise. But people take that and they extrapolate it out to something else. They extrapolate it out to the grocery stores are going to be empty in 4 weeks because the time it takes these containers to get from China to LA is 30 days. So you have 4 weeks past Liberation Day and store sales are going to be empty. It's like, well, you took some good quality info, you added a bunch of assumptions on top of it, and you turned it into a bad output and a bad expectation. And there's no understanding that, there's a guy that's also political pressure. If I'm running logistics and all of a sudden my business drops 40% and I've got a big platform, I'm going to use my platform to push this issue up towards the top of people's email inbox. And that you have to understand, that there's a political play there too. And I just think sometimes people take stuff and they don't frame it correctly. I don't think it means the original information is of little value. I just think it has to be framed correctly. The person's incentive structure who put this thing together, this piece of information to you, has to be framed correctly. All right, I'm going to move on. Well, I'm going to go to my last topic here. If you guys throw me some symbols that you guys have found that you think are interesting for whatever reason. I do this very rarely, but I find sort of the stuff that I'm looking at, it's very like I haven't been like exposing myself to a lot of new ideas lately, outside of sort of the ballpark that I stay in. So I'm sort of curious to break my own sort of little bubble that I've been in and ask you guys, what other symbols are you looking at? What industries are you looking at? What themes are you looking at?